India is gearing up for a high-stakes general election 2024, which is expected between March and May. But before that, come February, the Finance Ministry releases a budget document pretty much every year. However, the central government will only be releasing an interim budget instead of the regular full-year fiscal statement. In fact, Finance Minister Nirmala Sitharaman recently confirmed that the Feb 1st budget will solely be a vote on account.
I'm not going to play a spoiled sport, but it is a matter of truth that the 1st February 24 budget that will be announced will just be a vote on account.
Now, what exactly does the finance minister mean? And confused and want to know what the difference between a vote on account and an interim budget is? Then I've got you covered. Now, it is normal parliamentary practice that during an election year, the government does not present a full budget. Instead, it prepares an interim budget for the rest of its tenure and leaves the task of framing a full budget to the incoming ruling party that will go on to form the government. So here's how one can tell the difference. An interim budget is similar to a full budget but only has projections for the next few months, whereas a vote on account can only be passed through the interim budget. An interim budget gives the government the temporary permission to meet its expenses as well as revenue until the new government is formed. On the other hand, a vote on account is passed to meet those essential government expenditures like salaries or ongoing expenses before the elections are conducted. An interim budget is valid for the expenditures occurring between March 1st until that new government is formed, whereas a vote on account is normally valid for 2 months but can of course be extended. More importantly, an interim budget can change the tax regime, while a vote on account cannot impact the tax regime. This means that an interim budget cannot include any major policy announcement but must receive a nod from the majority in the parliament. So that's that. Now, did you know there have been 14 interim budgets that have been presented till now? Remember, a full budget will be presented sometime in July after the formation of a new government.
इस नए संसद भवन में जो पहला सत्र हुआ था, उसके आखिर में इस संसद ने एक बहुत ही गरिमापूर्ण फैसला लिया था और वो फैसला था नारी शक्ति वंदन अधिनियम। और उसके बाद 26 जनवरी को भी हमने देखा किस प्रकार से देश ने कर्तव्य पथ पर नारी शक्ति के सामर्थ्य को, नारी शक्ति के शौर्य को, नारी शक्ति के संकल्प की शक्ति को अनुभव किया। और आज बजट सत्र का आरंभ हो रहा है, तब राष्ट्रपति द्रौपदी मुर्मू जी का मार्गदर्शन और कल निर्मला सीतारमण जी के द्वारा इंटरिम बजट एक प्रकार से ये नारी शक्ति के साक्षात्कार का पर्व है। साथियों, मैं आशा करता हूं कि गत 10 वर्ष में जिसको जो रास्ता सूझा, उस प्रकार से संसद में सबने अपना अपना कार्य किया। लेकिन मैं इतना जरूर कहूंगा कि जिनको आदतन हुड़दंग करने का स्वभाव बन गया है, जो आदतन लोकतांत्रिक मूल्यों का चीरहरण करते हैं, ऐसे सभी माननीय सांसद आज जब आखिरी सत्र में मिल रहे हैं तब जरूर आत्मनिरीक्षण करेंगे कि 10 साल में उन्होंने क्यों किया। अपने संसदीय क्षेत्र में भी 100 लोगों को पूछ ले, किसी को याद नहीं होगा, किसी को नाम भी पता नहीं होगा जिन्होंने इतना हुड़दंग हो हल्ला किया होगा। लेकिन विरोध का स्वर तीखा क्यों ना हो, आलोचना तीखी से तीखी क्यों ना हो, लेकिन जिसने सदन में उत्तम विचारों से सदन को लाभान्वित किया होगा, उनको बहुत बड़ा वर्ग आज भी याद करता होगा। आने वाले दिनों में भी जब सदन की चर्चाएं कोई देखेगा तो उनका एक एक शब्द इतिहास की तवारीख बन करके उजागर होगा। और इसलिए जिन्होंने भले विरोध का किया होगा लेकिन बुद्धि प्रतिभा का दर्शन कराया होगा, देश के सामान्य मानवी के हितों का कंसर्न दिखाया होगा, हमारे खिलाफ तीखे से तीखी प्रतिक्रिया की होगी, उसके बावजूद भी मैं अवश्य मानता हूं कि देश का एक बहुत बड़ा वर्ग, लोकतंत्र प्रेमी सभी लोग इस व्यवहार की सराहना करते होंगे। लेकिन जिन्होंने सिर्फ और सिर्फ नकारात्मकता, हुड़दंग, शरारतपूर्ण व्यवहार ये जो किया होगा, उनको शायद ही कोई याद करे। लेकिन अब ये बजट सत्र अवसर है, पश्चाताप का भी अवसर है, कुछ अच्छे फुटप्रिंट छोड़ने का भी अवसर है। तो मैं ऐसे सभी माननीय सांसदों से आग्रह करूंगा कि आप इस अवसर को जाने मत दीजिए, उत्तम से उत्तम परफॉर्म कीजिए, देश हित में उत्तम से उत्तम अपने विचारों का लाभ सदन को दें और देश को भी उत्साह और उमंग से भर दें। मुझे विश्वास है, आप तो जानते ही हैं कि जब चुनाव का समय निकट होता है तब आमतौर पर पूर्ण बजट नहीं रखा जाता है। हम भी उसी परंपरा का निर्वाह करते हुए पूर्ण बजट नई सरकार बनने के बाद आपके समक्ष लेकर के आएंगे। इस बार एक दिशा निर्देशक बातें लेकर के देश की वित्त मंत्री निर्मला जी हम सब के सामने कल अपना बजट पेश करने वाली है। साथियों, मुझे विश्वास है कि देश नित्य प्रगति की नई नई ऊंचाइयों को पार करता हुआ आगे बढ़ रहा है। सर्वस्पर्शी विकास हो रहा है, सर्वांगीण विकास हो रहा है, सर्व समावेशक विकास हो रहा है। ये यात्रा जनता जनार्दन के आशीर्वाद से निरंतर बनी रहेगी। इसी विश्वास के साथ फिर आप सभी को मेरा राम राम।
Finance Minister Nirmala Sitharaman will be presenting the interim budget on February 1st, and we will see her carry that iconic red bahikata which carries an iPad with the budget 2024. Now, from a shabby Gladstone briefcase which carried the budget papers to the transformation into the digital era and the tradition of carrying and showing the budget in that red case goes way back in ages. So have you ever wondered where this tradition really came from? Well, we have you covered. In this video, we will tell you about the journey of the budget papers from the traditional red briefcase to now in its digital avatar in the Bahikata. Budget is one of those key events happening in India's executive calendar, and with this, the most discussed topic often is the Finance Minister's red pouch that she poses with outside of Parliament. But this was not the scenario a few years ago. The journey of presenting the budget begins during the pre-independence era, when the British finance ministers used to carry a Gladstone box to the Parliament, and the Brits then handed that over to us. The briefcase is known as a Gladstone bag, as back in 1860, William Gladstone, while delivering his speeches, used to take way too long, and it made him move those papers into that suitcase to carry those long speeches. In Britain, the budget briefcase is passed on from the finance minister to the others, while in India, the different finance ministers have been taking different ways in presenting that, either a briefcase or a bag. In 1947, after India's independence, the first finance minister, R.K. Shanmugam Chetty, continued this legacy and carried the leather portfolio bag to carry those documents for the first union budget. Between 1970 and 2019, Indian finance ministers carried different hand-bound briefcases to carry this budget document. And in the year 2019, when Nirmala Sitharaman presented her first union budget, she became the first finance minister to ditch that colonial legacy and use the Bahi Khata instead. In 2021, the Bahi Khata made another appearance and went paperless by turning digital with a Made in India iPad. The digital Bahi Khata was the government's move towards digital India. While the Bahi Khata signifies India's cultural heritage, the tablet represents the country's aspiration towards becoming an Atmanirbhar Bharat. The finance ministers all set to present the interim budget FY25, and we will see this digital version of the budget once again in continuation with the trend. The Union Budget 2024 is just about a week away, and the run-up to the budget is often an exciting period for individual taxpayers as well as the corporates, as they look forward to this annual exercise that happens with hopes of a tax SOPs as well as rate cuts is what they're expecting or have on their mind. So what would Finance Minister Nirmala Sitharaman's Bahi Khata have in store for us? To discuss individual taxpayers' budget wish list, I have with me today Preeti Kulkarni from Moneycontrol's personal finance team joining us. Preeti, thanks so much for speaking with us. Well, let me first up get to what can we expect from Budget 2024. The last one, well, this is the last one ahead of the general election, so we could have some kind of announcement. But individual taxpayers and income tax, could we see some kind of changes come around there?
So, Stacey, as you know, in December, Finance Minister Nirmala Sitharaman had already said that no spectacular announcement should be expected, as this is just a vote on account. But if you recall, in 2019, the then interim Finance Minister Piyush Goyal presented the interim budget, and he did announce certain key measures, the chief one being the tax rebate on incomes of up to Rs 5 lakh. So in this backdrop, some taxpayers and some tax experts are still holding out the hope that taxpayer-friendly measures could be announced. So their wish list includes an increase in standard deduction, which is available to salaried taxpayers from Rs 50,000 to 60,000 or even 75,000, and also an enhancement in the basic exemption limit under both the tax regimes, the new and the old. So this will account for the inflation that we have seen. And one issue that came up during our discussions with chartered accountants is that the deduction of up to Rs 2 lakh on home loan interest, this is acting as a key hurdle in the path of the switch to the new regime. So many people have already taken housing loans and they are enjoying the tax break on interest paid. So even if they find the new regime simpler, it is simpler, this reduction tilts the scales in favor of the old with exemptions regime. So this is why some feel that the tax deduction on home loan interest should also be extended to the new tax regime.
Right.
But at the same time, there are others who feel that the government now is already looking past the old tax regime. And several changes under the new regime were already announced last year, increase in basic exemption limit, tax slabs and so on. So this year, in fact, there is no need for any changes, and in fact, they would welcome stability in tax rates, rules and structure.
Right. You did mention stability, but there's always that hope that there could be some bit of change. One other term that often comes up in our discussion is that of long-term capital gains tax. There hasn't been much that has come on that front. Could we expect something to hear from Nirmala Sitharaman this time around?
See, last year, in fact, non-equity funds, that is funds with less than 35% of their assets in equities, lost the long-term capital tax gains advantage and indexation benefits. Now, at the moment, all capital gains on such schemes are added to taxpayers' income and taxed accordingly as per the slab rate. So this has had an adverse impact on debt funds inflow. So the industry, the mutual fund industry, feels that the indexation benefit should be restored. Also, different asset classes such as equity, debt and property have different capital gain tax rules. So simplification of these rules is also on taxpayers' wish list this time.
Right. So, of course, we hope to hear some bit of simplification. I'll get to that details, because there have been different quarters that have been asking for different kind of, compliance made easier or simplification. But before that, let's get to a particular class, and that I'm talking about is senior citizens, because there's often they are considered when this whole budget exercise takes place. So what are they hoping, or what are you hearing on ground from, the senior citizens of our country?
Well, like every year, they too have a wish list ready. And one of the long-standing demands that has been around for a long time is around medical expenses. Now, senior citizens, that is people over the age of 60 years, can claim tax reduction of up to Rs 50,000 under Section 80D on health insurance premiums paid. And if their children are paying those premiums, then they can also avail of this tax concession. And if senior citizens do not have a health insurance policy, then they or their children, for that matter, can claim a similar deduction on medical expenses that they have incurred as well. Now, there should be no reason why they can either claim tax reductions on premiums or medical expenses. Ideally, it should be both. As we know, health insurance policies cover hospitalization and daycare procedures, of course, and not routine medical expenses, pharmacy bills, and which is why both should be allowed. And that apart, insurers and also financial advisors we've spoken to feel that the deduction under Section 80D should be raised to Rs 1 lakh, particularly for senior citizens, from 50,000 to 1 lakh, because post-COVID, health insurance premiums have shot up, and because healthcare costs, as we know, have gone up as well. And many individuals, and in particular senior citizens, have seen premium hikes of over 15 to 30%, some even more. And then there are others who have voluntarily enhanced their health insurance covers, which again means that their premium outgo is now higher, and 50,000 is just not enough.
Right. So we can keep our fingers crossed to hear something, at least for senior citizens, if that limit is raised to about 1 lakh is what
Under the old tax regime.
Correct. Under the old tax regime, what we're hoping for is from 50,000 to that medical expense at least be increased to 1 lakh rupees. Well, like I was saying, we were talking about simplifying a couple of tax rules that are there, or at least getting the procedures and compliance that has been a headache. What can we expect on those lines?
Well, this is an item on the wish list that could actually find a place in the interim budget, because simplifying and streamlining procedures and eliminating hiccups will not have revenue implications as such for the government. So one example pertains to the issues that NRIs have been facing since last year. Now, many were unable to file income tax returns on time due to inoperative bans. But while the income tax department issued clarifications and did spell out the detailed procedure to update their residential statuses and to resolve the deadlock, some hiccups still remain. In the case of many NRIs, even now, tax refunds are still stuck. Instead of having to reach out to the local income tax offices, tax experts feel that the government should put in place a process which allows NRIs to upload their address and citizenship proofs online to complete the tax filing and tax refund process. And in addition, they feel that the government should also enable e-verification of tax returns through foreign mobile numbers, tax payment without Indian bank accounts, and permit tax refunds to be credited to overseas bank accounts. All this pertains to NRIs, but it will ease compliance and help a lot of people.
Okay, so then to just sum it up on what at least the personal finance front has in terms of their wish list from the finance minister. One, we want an extension or at least an increase in that standard deduction. We want that. Then we're looking at the medical expenses for senior citizens, that having some bit of increase. And finally, ease of compliance is what we're at least hoping to hear from and iron out those issues that we've faced so far. So that seems to be the bucket list from the personal finance front on what we could expect come 1st of February when the finance minister presents her interim budget.
We have moved, madam, from a discretionary-based administration to a policy and system-based administration. From favoritism to transparency and objectivity in decision-making.
This was the first time when the union budget was presented on the 1st of February, a major shift from the year-old tradition of presenting the budget on the last working day of February. As India's election year comes closer, Finance Minister Nirmala Sitharaman will announce the interim budget from the new Parliament building on the 1st of February. But have you ever wondered why it is announced on this very day? Or why was it changed? In this video, we will give you 3 reasons why the union budget is presented every year on the 1st of February. Before 2017, the union budget was presented during the last week of February, and then Finance Minister Arun Jaitley changed the date from the last working day of February to the 1st. The primary reason was to get rid of the colonial era practice. Arun Jaitley announced that the budget would no longer be tabled on the last working day as it used to be done during the British Raj. Another important reason to change was presenting the budget at the end of February meant that there was lesser time to implement the changes by the next financial year, which is the 1st of April. So to give more time to implement the policy changes and new provisions, it was decided that the budget would be presented on 1st of February every year. But apart from changing the date, Arun Jaitley also put an end to the 92-year-old British tradition of presenting a separate railway budget. He merged the railway budget with the union budget in 2017.
The government will also take an initiative to ensure that there is a separate discussion on the railways expenditure each year, so that there is an element of detailed parliamentary scrutiny and accountability.
Even the timing for presenting the budget was changed from 5 p.m. to 11 a.m. Now this change happened back in 1999 during the Atal Bihari Vajpayee government. The reason being, it allowed more time for analysis, discussions and debate. Presenting the budget at 5 p.m. was also practiced during the colonial era. But unlike India, other countries including US and UK do not have a specific date on which the budget is announced. UK has a practice of releasing budget as per seasons, such as spring budget, autumn budget, while US's federal government releases the budget every year through a document that includes economic and accounting analysis. Only India has a practice of releasing budget on a specific date, followed with a budget speech and discussion in the parliament. Since the Modi government took over, few practices of presenting the budget have been discontinued, including changing the date, merger of the railway budget, Nirmala Sitharaman presenting India's first ever digital bill in 2021 on a tablet, and shifting from a red briefcase to a red cloth bag to carry budget-related documents.
Hello and a very warm welcome to Moneycontrol.com. The countdown to the interim budget has begun. In less than 24 hours from now, the Finance Minister Nirmala Sitharaman will present the country's finances and set the vision for the government. As the Prime Minister Narendra Modi articulated this morning, just a little while ago, that Finance Minister will present the budget with Disha Nirdeshak Baatein. What are the imperatives for this budget? What are India's vulnerabilities at this point? And should the government continue with its capex push or opt for fiscal consolidation? To understand what's working for India and what isn't, I have with me Samiran Chakrabarti from the Citi Group, Mr. D.K. Srivastava from EY India, and Mr. D.K. Joshi from CRISIL. But before we go to our guests, let's quickly listen in on what the Prime Minister had to say this morning regarding the budget.
एक दिशा निर्देशक बातें लेकर के देश की वित्त मंत्री निर्मला जी हम सबके सामने कल अपना बजट पेश करने वाली है। साथियों, मुझे विश्वास है कि देश नित्य प्रगति की नई नई ऊंचाइयों को पार करता हुआ आगे बढ़ रहा है। सर्वस्पर्शी विकास हो रहा है, सर्वांगीण विकास हो रहा है, सर्वसमावेशक विकास हो रहा है। ये यात्रा जनता जनार्दन के आशीर्वाद से निरंतर बनी रहेगी। इसी विश्वास के साथ फिर आप सभी को मेरा राम राम।
Thank you. Well, let's move on now to my guests, Samiran, Mr. Joshi, and Mr. Srivastav. Let me begin with you, Samiran. What is the sense that you get with Disha Nirdeshak Bate? What are your expectations from this budget? What's the sense that you're getting?
So thanks, Shweta, for having me on the show. I guess there are two issues that the finance minister will have to deal with, and it's actually not a case of or but and. So there is an issue of doing more capex, which has been the trend of the last few budgets, and then there is an issue of fiscal consolidation, which the last few budgets have done in a very credible way. So this is one of those times when, although it's difficult, but the finance minister will have to contribute to both these things. The tricky part is that this is also a pre-election budget. So to what extent there will be some element of populism that feeds into this complicated equation is something that we have to see. I personally don't think that this budget, being an interim one, a vote on account one, will have lots of new policies in it. It would more be a recap of all the achievements of the government over the last 5 years and what policies have been put in place already. We will hear more about that, the success of those policies. But coming back to the basic question, it's going to be a budget of both capex and consolidation.
Interesting. Mr. Joshi, to come to you, as Samiran said that this is a pre-election budget. Do you think, are you getting a sense that the government might go for some measures to boost consumption? Because that's something that, India has been struggling with at this point. And what are the big numbers that you will be watching out for?
Well, first, thanks for having me on the show. I don't think government will give a consumption boost because if you look at their fiscal strategy all through, I think they have resisted consumption, direct consumption boost to the economy, and I think they have moved more towards capex. I think as Samiran was pointing out. So now I think whether they will be able to increase the capex at the same rate as they did last year, I think that's going to be a key question because the math behind reduction of fiscal deficit, I think we'll have to lean on reduction of capex also to some extent. I think even though I believe that capex will still grow faster than GDP, I think that's what the budget is going to do. I think as far as the need for some welfare scheme is concerned, I think that probably is more in the rural areas and because the agriculture hasn't done well. So it's a possibility that you might see some support for rural economy, whether it comes as direct transfers or it comes in the form of a social safety net. I think that's what we'll have to watch out for because both have different implications. But I would say that I think the government will maintain its fiscal thrust on increasing the productive capacity of the economy, which is focus on investments, although they'll pull back a little bit. Consumption, big consumption support, I don't think is going to, I don't expect it to be the part of the interim budget.
Okay. Mr. Srivastav, thank you so much for joining us all the way from Mysore. I think that's where you're joining us from. I want to ask you about this note that was put out by the Department of Economic Affairs, which said that the economy is expected to grow at 7.3% for this fiscal and at about 7% for 24-25. So if we were to look at the context, the economic context in which this budget is being presented, it does give us a sense that things are going very well at a time when globally economies are growing between 2 to 3%. We're talking about a 7% growth. If you could just share some perspective with us on, what are the vulnerabilities for India at this point and what are the positives that are working for India?
Well, thank you very much. I think that the review paper that has been brought out by the Ministry of Finance indicates a medium-term growth path of 7% in the presence of continuing global challenges. And this can be achieved only by ensuring that domestic factors contribute significantly to growth, so much so that they can overcome the negative contribution of net exports. Now, to be able to do that, the budget will have to maintain a thrust on growth, and that is to be domestically driven. It is better to drive it through investment prioritization rather than giving a fillip to consumption expenditure, because we are short of demand, and that demand is better, which is if it is to be financed by additional liabilities, then it is best to create capacity and additional assets. So between the two routes of stimulating consumption or investment, I think it is the investment route which is more relevant for India at the moment. At the same time, they have to indicate to the rating agencies and the policy watchers at large that India is well on its way also for fiscal consolidation. Now that we have missed the FRBM targets ever since the COVID shock by massive margins. We have not been able to restore that fiscal consolidation path. In fact, the budgets had not indicated any convincing path as to how to bring it down to the FRBM debt target of 60% or 3%. So I think a balance will have to be established, a path will be shown, and investment prioritization will continue to be the focus of the budget.
Okay, let me bring in Samiran. Samiran, considering now that India has been listed in the bond indices, clearly India's numbers are going to be under greater scrutiny. In terms of transparency, what would you like to see the government do? Because, you are constantly interacting with global heads of companies and global investment firms and so on. So what according to you would make for a good vote on account?
So, Shweta, let's put it this way, that the worries on India's fiscal are much lesser now than what it used to be earlier, despite the investors understanding that the general government deficit of the country is quite high compared to the peer countries with which we are compared with. And similarly, our debt to GDP ratio is also very high. But given the specific nature of financing that we have, of almost the entire fiscal being financed domestically, I have really hard of investors being concerned on the extent of fiscal. In fact, the kind of demand for these bonds that we have seen in the last couple of years from some of the captive buyers like banks, insurance companies, pension funds, etc., have been far in excess of what the historical trends would have suggested. So the key question is that what Mr. Srivastav was also hinting at is that if we can credibly show a path towards fiscal consolidation to 4.5% of GDP in the near term on the central government fiscal deficit, and to get the debt to GDP below 80%, then there is a strong case for looking at a rating upgrade for the economy. That will be a big kicker, because the country premium that investors would typically ask for, that country premium would be relatively lower. But in the short term, just the process of getting fiscal deficit down and debt to GDP down, I think that's going to be good enough for investors to keep their trust on India's fiscal number. And
what's the magic number? Yes, sorry. Go on, Samir. Finish your point. Yeah.
So just one small point is that this government has also shown a lot of fiscal transparency by bringing in off-balance sheet items into on-balance sheet. That's also another aspect which investors give a lot of credit to the government.
So what's the magic number that you think the rating agencies would want to see?
I mean, we know that in a very mathematical way, 5.2 is what the government should be targeting this year. But I think a number 10, 20 basis point here and there from that number would not be that bad an outcome given that we are in a pre-election year.
Right. So, Mr. Joshi and I were having a chat only yesterday, and he had mentioned that this budget will have something to give manufacturing a boost. This morning, a notification has come reducing the import duty on mobile phones from 15% to 10%. So, I want to bring in Mr. Joshi here. Mr. Joshi, you mentioned that manufacturing, PLI schemes, these schemes could get a further push in this budget. Now, since this is a pre-election year, in terms of a push towards social sector schemes and push towards manufacturing, which area do you think is the government likely to focus on, and what would you like to see the government do?
I would say that the manufacturing is more important because we have been trying to push manufacturing for so many years, and the manufacturing share in GDP has hardly risen. Now there is renewed vigor. So far, I think, and this is the age of industrial policy. Countries are coming with their own industrial policies to support their own manufacturing, be it advanced countries or emerging markets. And I think here, what we have done in PLI has so far managed to prop up investments in segments like assembly type operations, which is electronics or maybe pharmaceuticals. But the real big capital intensive segments like auto, specialty steel, and photovoltaic cells, etc. I think there the movement has been slow. So you need to push that faster, because I think those are so far only the less capital intensive segments have succeeded in PLI. So the transition towards more capital intensive segment will require more support from the government. I think it could be ease of doing business, but it could also be maybe extending some of the benefits ahead to some new segments, I mean.
Okay, let me go across to Mr. Srivastava. Mr. Srivastava, you heard the Prime Minister say that the interim budget in which the Finance Minister is likely to do some Disha Nirdeshak Baatein. What would you like to see the Finance Minister spell out in terms of a vision? Clearly, the government is expecting to come back into power in the general elections in 2024. When we talk about Disha Nirdeshak, what according to you would be a good Disha for the government to look at the moment?
Well, I think as far as the overall target is concerned, the objective is increase in per capita income and then eventually becoming a developed country. But that, of course, is the long-term goal. I would like to see the government to recognize that there are certain constraints that are arising from the global conditions, and there is a cost that is to be borne as we choose more and more capital-intensive techniques. Infrastructure spending is also capital-intensive. And the more we choose capital-intensive methodologies, employment situation will come under challenge. So I would like to see the government to recognize not only the possibilities and potentials, but also to lay out a realistic direction by recognizing some of the challenges that the Indian economy would also face as we transition towards becoming a developed economy. One challenge is, of course, on the employment situation. The other is fiscal consolidation in the presence of demand for higher and higher social sector spending. And it is establishing a balance between the objective of growth, the objective of employment, and the objective of supporting lower and middle income groups. That kind of balance should be indicated by the budget.
Right. Let me take this thought forward with Samiran. Samiran, what according to you are the key vulnerabilities for India at this point?
So it's if I take a step back, India's economic cycles, if you see, in those economic cycles, typically the demand side used to move first and hit a ceiling on the supply side because the supply side would not have expanded as much, resulting in higher inflation, higher current account deficit, that sort of macro vulnerabilities. This time around, we are seeing the reverse of it. We are seeing a situation where the supply side is expanding much faster, but there appears to be a problem of the demand side growing. I think that's where the key challenge is, that how do we get this demand side growing in line with the supply side? Then we will have a more credible and a stable equilibrium, which will make sure that we have a more sustainable long-term growth strategy.
Right. So this is my question to all three of you. This has been a perennial problem, whether it is private investment, whether it is subdued demand, and while we've had several versions of K-shaped recovery, whether it is K-shaped or not, the fact is the demand has been subdued. So while this government has not specifically put money in the hands of the people to boost demand, when it comes to this budget, in terms of a balancing act between continuing with the capex push, fiscal consolidation, and giving demand a push, which lever, according to you, should the government go for? Mr. Joshi.
Well, I think I would first bat for fiscal consolidation because, as Dr. Srivastava was also pointing out, I think we've also committed to a path which brings down the deficit to 4.5% of GDP by 25-26. So first preference, I think, on to be on that path to give comfort to everyone that we are on fiscal consolidation path. Second is, I think, within whatever means you have for spending, I think the focus on the capex, because capex would increase your productive capacity, and I think it also makes it easier to fiscally consolidate over the medium run, because once your capacity goes up, your growth goes up, and we all know that with higher growth, fiscal consolidation always becomes easier. So I think that's the order of my priority.
Okay, Dr. Srivastava.
Well, as long as we are financing investment demand by borrowing by the government and the public sector entities, I think it is better to focus on creating demand through the investment side. Export demand is also going to be weak. And therefore, again, the direction is quite correct in terms of emphasizing investment boost. And as long as India continues to remain deficient in infrastructure, it will add to capacity and it will add to supply, which is fine, because investment also adds to demand and also adds to capacity. But there is also the issue of making sure that a lot of vulnerable sections of the society and a lot of issues with creation of employment are also attended to. For that purpose, we have to then boost to some extent social sector spending. This interim budget, we may expect that not much substantive things may be done, but maybe, as the Prime Minister said, we may have certain messages and indications of directions. And there, again, the choice would be in terms of putting additional disposable income in the hands of people, or again, is directing expenditure such that even it creates assets in the hands of households. For example, this scheme of rooftop solar panels being put is actually going to add capacity and therefore would add to demand as well as supply side. So I think we are at a juncture where we have to establish a balance between boosting demand and boosting supply.
Samiran, your thoughts?
So, Shweta, this is one of those things where the ideal answer is not this or that. The ideal answer is this and that. But in an ideal world, fiscal policy should play, according to me, only a redistributional role, which means that whatever taxes we are collecting from the rich, that should just be spent on the poor, nothing more, nothing less. But because we don't live in an ideal world, we are now forced to think of fiscal policy as the main driver for capex in this country, which ideally should not be the case. It should be the private sector which should play that role. And because we are forced to do that, the problem is that we are unable to reduce the fiscal deficit number. If you look at from pre-COVID to post-COVID, the only difference that has happened is that the public capex has doubled as a percentage of GDP. Everything else, all the items have come back to the pre-COVID level, except that amount. And that's why our fiscal deficit is still much higher than where it was pre-COVID. So just to summarize, I think we don't have a choice at this point of time. We have to do all three. But in an ideal world, I would rather want fiscal policy to play a redistributional role.
Fair enough. So, for a country like India, where the public debt of over 80% as in proportion to the GDP actually adds to India's vulnerabilities. So, are we close to that number? As in, are we? Is it that we end up spending so much on capex that we have to cut back on education and healthcare and other such crucial social spending? Samiran.
So, I mean, the maths is very simple. That if we are growing our nominal GDP at more than 10%, and if our fiscal deficit is less than 5%, both these conditions are necessary for the debt to GDP to start falling. At this point of time, we are definitely meeting one condition, but may not be meeting the other conditions. That's why we need to get our fiscal deficit to GDP ratio below 5% if we want this debt to GDP number to keep on falling. As long as it is on a declining trend, I think the absolute number does not make a big difference.
Okay, sure. Samiran, I know that you have to leave, so please feel free to log off. Thank you so much for joining us. I have one more question for Mr. Joshi and Dr. Srivastav. In the budget, in the last budget, the assumption of economic growth was 10.5% in nominal terms. Now, this year, according to the advanced estimates, growth is likely to be at about 8.9%. So, what is the growth number that you will be looking out for, which would actually, mean that which would actually translate into a feel-good factor and translate into more jobs and generally a sense of greater well-being in the economy? Mr. Joshi and Dr. Srivastav.
Well, I think if you're asking an abstract question, I think we have to grow above 7%. I think to grow the size of the cake, which we can also redistribute through policies. But I think coming back to the budget assumptions, I think we are factoring in a real GDP growth of around 6.4% for the coming fiscal year. And nominal somewhere between 10.5 to 11, I think some in that range. So we expect, I think, so last year it was an unusual situation because the WPI had fallen so much. I think that led to deflator being very small and so the nominal growth was weak. I think in the coming year, we'll have a different scenario where real growth will be lower, but nominal growth will be higher because WPI inflation will be higher than what it was last year. So clearly, I think I would say between 10.5 to 11% growth is a good number to go by. And I think that is also is going to support your fiscal consolidation.
Okay, Dr. Srivastav, would you like to comment on this, please?
Well, I think the combination possibly that the government will go for is 7% real growth and 4% IPD-based inflation for FY25, which might give us 11% plus for nominal GDP growth. That, in fact, would be a very good message for the policy watchers at large, because this year, the tax buoyancy has been pretty robust, particularly direct tax buoyancy. And I think the assumption may be close to 1.2 or so for the gross tax revenue buoyancy. And therefore, at 11%, we might get maybe 13.2 to 13.5% growth in gross tax revenues. That will enable the government to sustain growth at 7% plus in real terms and still bring down the fiscal deficit from 5.9% to, let us say, about 5.2, 5.3%. That would be a good directional change.
Okay, very quickly, Dr. Srivastava, I also want to get your thoughts on the social sector schemes. Now, what we are hearing is that Pradhan Mantri Kisan Yojana might see a push in this budget again. We might see some other schemes getting a push. In your view, should the government go down that path, considering there is pain in, especially at the at the grassroots economy level?
Well, my sense is that as long as the schemes are existing and it is only a budgetary expenditure that is to be announced with respect to those schemes, then some incremental increase can definitely be allowed, including the Krishi Samman Nidhi and the extension of the free food supply scheme and so on. It is, in fact, budgeting for some new scheme which might involve considerably large expenditure is not something that would be warranted in an interim budget. I think the budget will be used more for messaging and directional indications rather than making large expenditure commitments on additional social sectors.
Okay, Mr. Joshi, any indications on what's the tone and what's the direction or the Diksha, as the Prime Minister termed it? Could this budget really, what would you like to see the budget put forth?
Well, I think I would like to see their commitment for medium-term, uplifting the medium-term growth trajectory, both in action as well as in their communication. Because I feel that increasing your growth is equally important. I mean, if our growth was weak right now, I think our fiscal problems would have been much, much bigger. So I think we need to push growth. I think redistribution will be easier, I think, if you are also able to grow your economy faster.
Okay, Dr. Srivastava, last question to you. Mr. Joshi has said push growth through this budget. How can the government do that, considering the private sector continues to lag behind when it comes to investments in the economy? Anything that you think the budget can do to give that final push or that nudge?
Yeah, that perspective that we have is IMF came with its revised numbers yesterday, and it is indicating 6.7% for FY24 and 6.5% for FY25 and 26. Whereas the economic review by the Ministry of Finance is indicating 7%. I think 7% plus would be quite ideal under the circumstances, because global condition is so posing such a significant challenge. So I would like to see 7% real growth. I would like to see inflation at about 4%. And that would allow us, with a buoyancy of slightly higher than 1, enough fiscal room to actually also show a convincing path of fiscal consolidation.
All right. So the message is loud and clear for the government, for Ms. Sitharaman, who will be presenting the interim budget in less than 24 hours from now. Stick to the path of fiscal consolidation. India's numbers are under great scrutiny. In fact, they've probably not been put under this much of a scanner as they will be tomorrow, considering India has made it to the bond indices. So thank you so much to Mr. Joshi, Dr. Srivastava and Samiran for putting the context so clearly for us and laying out the priorities for India's economy at this point. We'll of course keep tracking the budget and all the stories related to it on Moneycontrol.com. Thank you so much.
Coming to the fiscal deficit, first of all, what is your projection for the year? And before that, actually, you can tell us the projection for the year, and do you see any fiscal pressures mounting going into this year?
Right. So FY24, lots of moving parts, some positive, some negative. On net, we think the government will meet the 5.9% fiscal deficit target. There's been some disappointment on disinvestment. The expenditure numbers on the revenue expenditure side are on the higher side, but direct tax collections have also been quite strong. So we think that should be able to offset some of the negatives, including the lower nominal GDP growth we have seen in FY24, which basically sets us up for FY25. This, of course, being an interim budget, but also importantly, the pre-election budget. We do think that the big focus for the government in this budget will be on the specific, electoral categories. So, we're looking for more allocations to come through on rural, on agriculture, for farmers, for women, for youth, as I mentioned, low-cost housing. So some of these specific segments could get more allocation. Capital expenditure has already been ramped up quite significantly over the last 2-3 years. We do think that the momentum on CAPEX will be maintained in FY25, but at a slower pace compared to the last 3 years. And therefore, on net, we think FY25 fiscal deficit target should be brought down to around 5.3% of GDP, so about a 60-odd basis point in terms of consolidation, with the objective to get to the medium-term target of 4.5% in FY26, or at least as close to it as possible.
On 1st of Feb 2024, Finance Minister Nirmala Sitharaman will present the Modi government's 11th budget, this including the interim budget in 2019 being an election year. And through these years, 3 finance ministers have presented the budget, including the late Arun Jaitley, Piyush Goyal, and this being the 6th one for Nirmala Sitharaman. Let's take you through some of those highlights and big changes that came into being in these budgets so far. The first thought that comes to anyone's mind when one refers to the budget are the personal income tax rates. In 2020, the government decided to introduce the new tax structure that slashed income tax rates and reshuffle the income tax slabs.
In order to provide significant relief to the individual taxpayers and to simplify the income tax law, I propose to bring a new simplified personal income tax regime wherein income tax rates will be significantly reduced for the individual taxpayers who forego certain deductions and exemptions.
These slabs were revised once again in 2023 and 24's budget, making the new tax regime the default one, but also giving taxpayers the choice to choose between the new and the old. As of today, the rates under the new tax regime are absolutely no tax for income up to 3 lakh rupees. Income above 3 lakh and up to 5 lakh will be taxed at about 5%. For income above 6 lakhs to 9 lakhs, the income tax slab is applicable at 10%. And for income more than 12 lakhs and up to 15 lakhs, the income tax is at 20%. And for all those who have taxable income above 15 lakhs, it is a 30% income tax rate that is applicable. Now, taxpayers are always looking for more exemptions and avenues to cut down on paying their income tax. In the first budget after coming to power in 2014, the Modi government wanted to encourage more people to park their savings and hard-earned money within the banking system. And they went on to raise the annual investment limit under Section 80C from 50,000 rupees to 1.5 lakh rupees. Now, Section 80C is the most popular and favorite section among taxpayers, as it allows them to reduce their taxable income by making some tax-saving investments or incurring eligible expenses. These include investments in provident funds, payment made towards insurance premiums, as well as equity-linked saving schemes, and even if you have a principal sum on your home loan. Hopes are high that in budget of 2024, it will raise this limit to about 2 lakh rupees, or further include more instruments under these exemptions. Well, that was the part on direct tax. Let's look at the big reforms that we saw in the indirect tax segment with the introduction of the Goods and Service Tax or GST in 2017.
We are in the process of making history with the launch of the Goods and Services Tax. At the midnight hour, we will be launching one of India's biggest and most ambitious tax and economic reforms in history. The GST may be a destination tax, but for India, it will begin altogether a new journey.
With its motto, One Nation, One Market, One Tax, GST aims to bring unity and benefits for all stakeholders by consolidating those multiple tax laws into one single system. And in the 6 years of its being, it has reshaped the economy, pushed for digitization, while also reduced the number of frauds. The GST Council has managed to fit over 1,300 goods and 500 services under the 4 tax slabs, which is of 5%, 12%, 18% and 28% under the GST. The tax base has more than doubled since the implementation in 2017, and the monthly GST mop-up in December was close to 1.65 lakh crore rupees. The council members regularly meet on rate rationalization
Morning, British.
Hello and welcome to the Budget Live Telecast. I am your host Nikki Mirchandani and with me is my colleague Santosh Naya. It's an exciting power-packed day and we've had an exciting lineup of guests from morning 7:30 a.m. to 8:30 p.m. Without any further ado, let's talk about the not-so-interim budget. This budget is important for 2 reasons. First, the government is in election mode and so the budget is likely to be a political statement. Second, most opinion polls are predicting the current government will be back in power. So it's likely that the interim budget will be presented under the assumption of the policy continuity after the elections. Well, history suggests that the union budget's influence on the short-term market performance is declining. That said, volatility has risen since 2019. It hit a 12-year high in 2022. Well, 2023, beg your pardon there. Expectations are important in determining what the market does immediately after the budget. But Santosh Naya, the senior colleague, is here to lay down the expectation from this budget. Morning there.
Hi, morning, Nikki. So the expectation is pretty much simple. The one big thing that the market is looking forward to from this budget is that the government will step up its capex push. Now, those expectations are also slightly tempered by the fact that the government has also made it clear that it would like to focus as much on fiscal consolidation as much as it would like to push for growth. So expectations are slightly tempered out there, and there's a reason why market is hoping for a big capex push. That is because investments from the private sector have been a little slow in coming. The government has been doing much of the heavy lifting till now, and that's likely to continue for some more time. So clearly, higher spending on capex means that stocks mainly from the capital goods, steel, cement, engineering sector, these have been the sectors which have really done well in the recent rally, because of which valuations are also now beginning to look a little stretched. So The whole thing is about whether these companies will be able to sustain their earnings growth. Already we have seen very strong earnings growth over the last year. Now the expectations are that they should be able to sustain, but that again depends on how much push the government is going to give for capex. So that's one big expectation. The second is that because there was a precedent in 2019, there's also hope that the government will try to woo the middle class by tweaking some of the personal income tax rates. So that indirectly could give a bit of a bump up to.
Do you expect that happening in the interim budget, or you think that is something for the big budget event? I mean, sure, this is more of a.
There is no pressure on the government really to woo the middle class at this point in time. All opinion polls, as you also mentioned clearly, show that the government is returning to power in a big way. So there is no pressure as such. So remains to be seen. But we had seen that in 2019, where they had tweaked the tax slabs a bit. Lastly, I think the market is also looking forward to something in the rural sector. That's been one area of slight concern. The recovery has been a little slower. Things appear to have bottomed out, but they could do with one big push. So some kind of higher spending, higher allocations. So that is also something that the market is expecting.
I think it's also, and I'd like to add to it, a bunch of brokerage reports, at least they've been pointing out the ease of the livelihood, which could include in the form of jobs, which could include in the form of healthcare, or the ecosystem that we are functioning. Is that also one of the parameter, let's just say the theme that some of the brokerages are working with? But let's take a fair share of, or the note of global hand over there. To make some sense of the global event. Also, we've been joined by a special guest out there, but let's first start with the global cues out there. Well, for US markets, they ended in lower after Fed has left in the rates unchanged for the fifth consecutive time, this time around, not in a hurry to cut down rates anytime soon. Some losses have come through in the global markets, especially the US markets, which have ended with sharp cuts there. GIFT Nifty at this point of time is indicating somewhat flatter start coming in for Indian equity markets after some fair bit of gains that we've seen in the previous session of trade there. But overall, if you look at the trend, I don't know if you've looked at the historical data and the way it behaves, that usually in the run-up to the interim budget, or let's just say the budget, if the trend is that the markets have been on an uptrend, there is very little chance that the likelihood of they performing well in the month after the budget has been delivered, that becomes a little lower. The probability reduces a little bit. Only two occasions in the last 15 to 20 years this scenario has played out, where both in the run up to the budget and post budget we see that gains coming through. But of course, this is more in terms of the historical data analysis. Let's not forget that this is also going to be a budget which just comes ahead of the general election. So that's that. But global setup, how does that look like?
Well, clearly there is some disappointment. Now the Fed has indicated that it's in no hurry to cut rates. The market was factoring in a rate cut starting from March, but that clearly does not seem to be happening for now. You saw the disappointment in the way US markets reacted yesterday. So it is at this point evident that you can't expect a rate cut in the US anytime soon, and because of which it's likely that the rate cut back home also could be delayed to some extent, because RBI has been repeatedly indicating that it would not like to preempt Fed when it comes to cutting interest rates. But the only difference, Nikki, I would say here is that the Indian market is not, so for instance, the interest rate is not such a big deal breaker at this point in time. I think the bigger worry for Indian markets, if at all, is that you have valuations which are looking a little stretched, although on the positive side you've got a lot of money still waiting on the sidelines. Sentiment is quite positive, and the economy is also doing pretty well at this point in time. So there are plenty of positives, but more than interest rates, it's more than interest rates, it's rather it's the valuations which are a concern, I would say, Nikki.
Okay, clearly, we are going to toss across to our global guest in just a jiffy, but there it is. We are actually now being joined by our Delhi team, and Shweta is here, the deputy editor from Moneycontrol, to take us and talk about the essence of this interim budget, especially because it comes right ahead of the general elections there. Morning there, Shweta. How are you doing?
Good morning, Nikki. It's looking like warm and breezy in Bombay, but here Gaurav and I are pretty. It's been a chilly morning today, and I think, but the election budget today could bring us some surprise, Gaurav.
Well, you never know. Given the fact, so far as interim budgets go, there have been a few surprises. While it has been said that it's a convention that generally the government, outgoing government or the government that is getting into an election does not announce big measures during the budget. But if you look at the last 4 budgets, interim budgets, for instance, since 2004 onwards, there have been a few surprises. We generally tend to forget all of those. In 2019, the PM Kisan scheme was announced and the standard deduction was raised, so there were tax changes that were brought about. But in 2014 also, Mr. Chidambaram's last budget, the interim budget, union excise duty was cut from 12% to 10% on some capital goods and consumer goods. And it came with a sunset clause until June 30, 2014. And the next full budget was presented probably a week after that. And then union excise duty also was cut on small cars, motorcycles, scooters and commercial vehicles from 30% to 24%, on SUVs from 27% to 24%, large cars from 24% to 20%, and on mid-segment cars likewise. So, and it was again, it came with a sunset clause.
So the Modi government has always used this opportunity to present a statement. They've made a statement, like you pointed out in 2019, when Mr. Goyal presented the budget, they had something for the middle class, they had something for manufacturing, they had something for the farmers. That's when a very crucial scheme was introduced. Now that everything's going well for the economy, Gaurav, you look at the numbers. We're looking at over 7% growth. You look at the equity markets. You look at our tax collections. When the economy is firing on all cylinders, do you think Ms. Sitharaman might go out on a limb right now and announce a feel-good budget, where there is something for everyone, but the economists, however, are hopeful that the government will stick to fiscal consolidation? So in terms of political compulsions, Gaurav, at this point, they've won state elections. How would you look at the situation?
So yeah, it's a good question. If you compare 2019 with now, the interim budget to interim budget, the things are very different, dramatically different now. In 2019, they had lost 3 state elections, Chhattisgarh, Madhya Pradesh and Rajasthan.
Right.
This time they have won all the 3 state elections. So they're on a bit of a high. Bihar also, we know what has happened. They're on an expansionist spree, so to speak, electorally. In 2019, they were in a mode of defense. That is, they were trying to defend the election. Right now, they are trying to expand politically and electorally. So that's a massive difference. So the pressures on them, on the government or on the finance minister to come out with any kind of freebies, quote unquote, is much less this time than it was last year. And also, please remember in 2019, when in the interim budget, when the then finance minister, Piyush Goyal, announced the PM Kisan scheme, it came on the back of something that the Congress had done 2-3 weeks ago, which was the Nyaya scheme. And they said that if voted to power, they'll come with a comprehensive welfare scheme called the Nyaya scheme. Obviously, that did not happen because they were not voted to power. But what did the government do? That the government announced the PM Kisan scheme. So it was kind of a counterattack that the government is more concerned about welfare economics, which it feels is more economically viable, rather than throwing, just throwing handouts. And which is why I don't think this budget, the interim budget for 2024-25, is going to be very high on freebies. As I said, the pressures are far less. Electoral and political pressures are far less this time, given the conditions that they find themselves in in the wake of the the victories in the state elections. And also, India stands out as an engine for global growth. And that is why the government, in my view, this budget is going to make a distinction between a long-term policy making as well as annual budget making. And that's going to be a very distinctive change in the attitude towards budget making, because I expect that the finance minister is going to expend a lot of time in her speech, one, on giving a glowing account of what the government has achieved and how the country has progressed over the last 10 years. That is a given. But she's also going to expend a lot of time talking about 2047, which is when they're going to set the goalpost. So that's a long-term ambition. And policy making, then what effectively she does, is that she trains the lens on the hour hand of the clock rather than on the minute hand. The minute hand is like the annual budget making, but the hour hand, which moves slowly, is where all the action needs to be, focused on. And that is why annual budget making progressively, if this government comes to power or whichever party comes to power, progressively is going to get increasingly decoupled from policy making, freeing up mind space for policy making from budget making activity.
Absolutely. So, yesterday we heard the Prime Minister who said that this is going to be a budget where the Finance Minister is going to present a direction for the government. I think that was very crucial, and he said that we are going to stick to tradition, which means essentially that this would be a vote on account, which essentially comes down to presenting a statement of accounts on government's earning and expenditure. So that's what even I've been picking up, that the government is probably going to put out a direction because they are so sure that they are coming back into power in 2024. Having said that, Gaurav, since infrastructure has been a big focus area for this government, railways is now part of the general budget, and we know that the BJP's showing in the southern states has not been that strong.
That's right.
Do you get a sense that the southern states might actually get a mention in this budget?
I think, well, some of the schemes that the government is going to talk about, there could be some schemes that would be specifically focused on jobs, and it could be continuation of existing schemes, or it could be small new schemes that could be announced. But the big bang schemes, the government will set it aside for the full budget that's going to be presented sometime in July after the elections are over and the new government is in place. But the point that you mentioned is on the direction. This is something that the emphasis is going to be on. And this government has been very unrelenting on two things. One, it has walked the talk on fiscal discipline. I expect Nirmala Sitharaman, if a trade-off was to be made between containing expenditure and fiscal consolidation, she'll be on the side of fiscal consolidation. Because this has been a standard, regardless of the 2 pandemic years, or the two and a half years of pandemic years, the government has been absolutely unrelenting on fiscal discipline. And I expect fiscal consolidation to remain as focused as it was. Even if capital expenditure, the growth in capital expenditure, last time we saw how it went up by 33% up to 10 lakh crore, it will go up from 10 lakh crore. Much of these probably will change again when the full budget is presented in July. But having said that, the government is going to signal its intent that 2 things. One, on infrastructure creation, that large amount of borrowing will happen only or largely to fund asset creation, which is going to unleash economic multipliers, and they're going to continue on that path. That said, albeit I believe that the capital expenditure, the growth in capital expenditure could slow down a tad, although in value terms it will go up. And fiscal consolidation, I wouldn't be surprised if there is a 70 basis point cut in the fiscal deficit to ensure that the government meets its medium-term glide path of 4.5%.
Because currently government's numbers are going to be under greater scrutiny than ever, considering now India has been listed on the bond indices. So that just puts more. So we've been talking to people, and everyone's saying that the transparency with which India puts out its numbers is going to be under greater stress. So Gaurav, at this point, politically speaking, the government is riding high after the Ram Mandir inauguration. We've seen the state election results and so on. In terms of messaging, Prime Minister Modi now wants to reach out to the first-time voters who are going to be coming in, to the youth. Also, job creation is an issue that has been highlighted even in the document that the government put out.
That's right.
So, Manrega might see an increase in allocation, but there is also demand for another scheme. However, liberal economics say that government should stay away from the business of getting into the business of creating jobs.
That's right.
What's the sense that you're getting?
So, if you look at over the last 10 years, one of the major pluses of course has been the government's focus on infrastructure and asset creation. But one of the biggest minuses, and critics have been broadly right, that a large part of this growth may have become as jobless growth. So the armies of young people joining the pipeline of hopefuls are not getting the jobs as probably they would deserve, or the economy should have churned out by or spun by now. But those have not come about. So I would assume that the key word in this budget is going to be Viksit Bharat, and the Prime Minister has signaled it very clearly that Viksit Bharat 2047 remains an achievable milestone, and we need to march towards that. And there are going to be 4 what are called the Amrit pillars for achieving the Viksit Bharat milestone. These are called acronymed as GYAN. GYAN, G stands for Garib, so poor. Y stands for Yuva, so youth, which is essentially addresses the jobs. And A for Annadata, which is the farmers' constituency, and N for Nari Shakti, which is women. So the political messaging is going to come from governments, trying to achieve massive milestone of turning India into a developed country by 2047 by calling it Viksit, but these are going to be the primary vehicles of achieving
Well, women have been the centerpiece of Prime Minister Modi's policy making, and they've made a very concerted effort to reach out to women. Let me hand it back to you, Nikki and Santosh. Of course, we'll keep tracking the political pulse from New Delhi, but for now it's over to you from what the markets are looking at. Sometimes markets know a lot more than we do.
Clearly, thank you for that, Gaurav and Shweta. Thank you so much for taking on the time. We are again going to toss it back to you in just a jiffy. But clearly, a lot has happened on the fiscal front in the past year. Some better known than the others. While the upcoming budget is an interim one, the government will release the final budget after the May national elections. The census, of course, trickling down. The final budget could also follow on the similar lines. That's the trend that has been played out thus far. It sets the stage. The state budget will follow, taking cues from the central government in varying degrees. The interim budget will also give a signal, apparently, on the fiscal consolidation intention of the central government, but bouncing back to the markets. That's where the action is and all the limelight would be, right? So trade setup, we are looking at FIIs and DIIs, actually looking at being the buyers there. But let's first get into our conversation on the global front and toss it across to Peter Cardillo, who's the Chief Market Economist, Spartan Capital Securities LLC. Morning there, gentlemen. Thank you so much for taking on the time and joining us, and apologies for keeping you at the sidelines for just a bit.
But all right.
All right. Santosh, what do you want to
Yes, so some disappointment there from the global markets, because the Fed now making it clear that it's in no hurry to cut rates. How do you see this playing out on both the equities as well as the bond markets?
Yeah, there's no question that the markets were disappointed, but we saw the Treasury yields come down, actually. The 10-year actually closed under 4%. Even though there was disappointment by the Feds, I think the reason for that was that yesterday morning we had the ADP indicate that the private sector grew 107,000 new jobs last month. And that obviously was well below consensus. Of course, that would have to be confirmed when we get the official data on Friday. But no question about it that, the Fed does stick to its plans to make sure that inflation is well anchored and possibly moving slightly under 2%, their target rate, before they pull the trigger. So Mr. Powell was quite clear when he indicated that there'd be probably no rate decrease in March, and it looks like perhaps June. And of course, that's all data dependent.
Peter, so the latest development, does that change the outlook for emerging markets?
Well, I think, the outlook for emerging markets depends on what happens here in the States and in Europe. Here in the States, obviously, there's a big gap between the Eurozone growth levels and the U.S. growth levels. Now, I personally still think that we're probably going to see a mild recession this year. And if the Feds should elect to go beyond June without decreasing rates, then there's a good possibility that we could be headed for a more steep recession. And that would negatively affect the emerging markets. The global markets are intertwined. And what happens here in the States generally is perceived by the emerging markets.
So, Peter, from your global perch, how does India appear when compared to some of the other emerging markets? What are the big positives and what do you see as the concern areas?
Well, look, no question that the Indian economy is doing well. And of course, the stock market as well. And they're racing probably for third place in terms of economic growth, that is on a global scale. Of course, you previously were talking about the election budget in India, and it seems to be quite rosy if they can achieve what they are indicating that they would like to achieve. So, sure, can India escape recession if the US falls into recession, or if the Eurozone falls into recession? There's a good possibility of that.
Right, Peter, one more question from my end. 2024, of course, will pose a major test of democratic rule. Almost half the world's population is set to vote in the national elections. How do you see India amidst all of this? That's A. I'd want to understand, are you expecting any sort of big bang measures coming in for the interim budget, or you think it's going to be a political statement or a stop-gap arrangement?
I think it's probably both a political tactic and a stopgap. So the question is, in any country where there's elections, you always have the politicians giving the best shot and putting out the most rosy scenario as possible. The question is, will it come to fruition?
All right, Peter, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation with us. It was indeed a pleasure chatting with you.
Thank you.
All right, clearly a lot has gone down for the markets and we're looking at gains coming in. The trade setup looks to be a little iffy at this point of time. We're seeing, however, FII and DIIs lending in some support for the markets. FIIs have bought in equity to an extent of 1,660 odd crore, and DII too have been on the buying side to an extent of 2,542 odd crore. Well, India Wix is closed in at 16.05, which is down by as much as almost 0.34%. And what is new, or what is in the ban, at least in terms of the trade setup, is sale is what we're looking at. And apart from that, what still remains in the ban is Z Limited. Overall, if you look at how we're looking at for the market's perspective, we just need to dip in and see if Deven Choksi has joined in just as yet for us. Of course, a whole lot of lineup of guests there for you guys, but just to see how the market has been stacking up thus far. Any interesting trend, Santosh, that comes to your mind? How different will this interim budget be from the previous one? Any testament to that?
Well, that's obviously a hard call, but clearly the sentiment this time, what is different between this budget and the previous ones, is that market does not seem to be having very high expectations. It's not like a make or break thing for the market like it used to be in the previous year. That's because the economy is in good shape. Market is also cognizant of the government's limitations, especially that it also has to manage the fiscal consolidation path while also pushing for growth at the same time. So things are pretty much in good fettle. There is a lot of liquidity in the system. Interest rates are high, but so far the corporate sector has managed to deal with it quite well. Earnings growth has been decent. There have been some disappointments in the recent, in the last quarter numbers. We saw some high profile disappointments, especially from HDFC Bank and also a couple of other names from the chemical sector. But broadly, the overall story still looks good. And as I keep saying, the only tricky thing here right now is, Nikki, valuations. So. Right. That is something that investors will need to be mindful about. Of course, we had a very good run last year, and conventional wisdom would suggest that if you had one good year, it's unlikely to repeat. But at the same time, I would think, Nikki, there's still plenty of steam left in the market.
Okay, plenty of steam left in the market. That's clearly the word coming in. But of course, I think most of it, people would like to figure out if there is just, it's a nature, the interim budget in nature is a vote on account where the budget is passed without a discussion in the parliament, only to enable the government to meet its expenditure up to the election. That is why traditionally, at least the interim budgets have refrained from announcing any major changes in the policies or new schemes. I don't know if that's going to be the trend that will be playing out this time around. But of course, we need to get a handle of what kind of strategy also can one look at when it comes to an important day like this? And to join us and take the discussion forward, we're being joined by Jay Patel, who's the research head at Investment Securities Limited. Morning there, Jay.
Good morning, Nikki. Good morning, Santosh.
Good morning, Jay.
All right, Jay, what is the strategy that you would recommend to our traders here? I mean, would you expect them to be on the sidelines, or would you expect them to kind of go a little gung-ho on the markets and lap up those positions? And if yes, which are the themes per se or the recommendation that you have in mind for us?
We seeing today's budget, interim budget, particularly the most of the move have been already discounted, and particularly since last 3 days we saw great volatile sessions, particularly in the range between 21,450 to 21,800 zones. And also this government is little recognized for not taking everything for budget, but announcing pre and post budget. Just for an example, the solar rooftop, the scheme which was announced on 22nd January after the Ayodhya Mandir inauguration. So particularly this kind of move hasn't been just relative to budget. So I believe today the day would be like gun and go. I don't think there would be much volatile session, particularly in today's trade, because traders are already traders and investors are already discounted the move, particularly on railway sector, defense sector, and I believe infrastructure sector. So capex would be definitely on focus. Yesterday, we saw PM Modi announcing Nari Shakti theme. Basically, we can see textile sector move can be possibly see in upcoming elections. But today, I believe there can be a dull session, basically because I advise traders to keep on the sidelines, particularly till 1 p.m. in today's trade, because we need to listen to the budget fully and do not anticipate anything in advance. I believe the sectors which can be on focus may be railway, defense, fertilizer, infrastructure, and definitely the upcoming textile sector and hotel sector. So for the theme, I have identified 2 stocks which can be in and out for the budget, particularly from the mining space and from the metal space. I believe Hindalco would be something I would focus in today's trade, because apart from budget, Hindalco is also performing well. If we see just on the chartically basis, Hindalco just in yesterday's session, it ended on day's high, and particularly the support has been taken at around 34-day and 21-day exponential moving average, and we can see a bounce back from that point. So 579 would be something yesterday's close. We can start buying at that point, and at the upside range, we can see 590 to be kept as a target point, and subsequently 620 zones. And for the stop loss, we can keep 539 as a stop loss. Hindalco could be something which can be seen as a outplayer in a particularly budget section. And second would be Dreamfolks Services. If we see Dreamfolks chart, the stock has been performing well and taking a strong support since last few months, particularly at 555 zones. So I believe there could be a bounce back from these zones, and we can see the stock climbing towards 6110 zones in very short period of time, and we can keep a stop loss of we can keep a stop loss of around 539 in here also. So Dreamfolks would be something I would keep as a focus, and the stock can be a good bounce back opportunity.
Well, Jay, I wanted to pick your thoughts on financial sector stock, banks in particular, which have been under pressure over the last few trading sessions. What is your take on Nifty Bank, which has seen a lot of weakness in the last few days?
So if we see Nifty Bank as a chartically, I believe the stock can, the index can perform well after it climbs above 46,500, because there is a strong congestion zone of moving averages, and particularly the RSI in overbought zone PCR ratio also indicates the bounce back. But since today is a budget day, and we can see the FOMC meeting overhang can be seen on Bank Nifty side, because the FOMC meeting they Jerome Powell announced the rate cut are unlikely in March. So I believe that can be overhang in banking sector. So I believe the range could be around 46,500 to 45,000, which we saw in last 2-3 trading sessions. So I believe the range, if we break above the range, then only we can see a long position, because the currently market is trading near its resistance zone. So I believe there could be a sell on rise opportunity at 46,500 zone. So kindly remain sidelines till the level is broken up above.
All right, Jay, just be at the sidelines with us. We're just going to cut across to, or let's just say go across to Deven Choksi, who's the MD at DR Choksi FinServ Limited, who joins us right here. Morning there, Deven. How are you doing? And traditionally, interim budgets have refrained from announcing major changes in the policies or new schemes. You think the interim budget will be any different?
Yeah, Nikki, good morning.
Good morning.
Well, I guess I think the vote on account budgets, they, in this particular situation, if one has to look at, in last 10 years, our analysis says that this government has not waited for the budget day to make any big bang announcement. In fact, I think they have been making regular announcements during the course of the year on various subjects. And that is what is more important about. In earlier era, I think we used to have, I think, one day in which I think all the goodies will come out of the bag. That is not a situation anymore now. My reading says that I think the government has already laid down the roadmap. They have a roadmap for 142 lakh crores to be spent by 2030 on infrastructure. They have a roadmap to improve the medical infrastructure. They have a roadmap in place for increasing the yield in the agricultural sector. They have a roadmap in place for taking various social reforms, including the Citizen Amendment Act, among others. I think so. Each of these reforms have already been taking place on a regular basis. So this budget is only going to be showing some amount of allocation of money towards respective areas. The expectations out here would be that what would be the amount allocated to railways. Last year it was 2,40,000 crores. Will it be increasing to 3 lakh crores? Will it happen in the quote on account budget, or will it happen in the regular budget? So this could be, I think, the gameplay which one would like to look at it. But otherwise, broadly speaking, all the numbers per se are fairly well known, and market has fully discounted those numbers as I see it. I think one of the other important point which I believe would be interesting to watch out. This year the tax collection, the gross tax collection, is happening between 33 to 34, 35 lakh crores. And given the strength of this tax collection, my reading says that the government will probably project at least 10 to 15% growth on this tax collection on a year-over-year basis, at least for next 3 years. Given that situation, we believe that in 4.5, 5 years' time, the size of the tax collection is getting doubled. So we are talking about 70, 75 lakh crore tax collection 3.5, 4 years from now. And given that kind of possibility, government may allocate significantly large amount of money towards spending in the economy, be it in the tourism, be it in the area of agriculture, be it in the area of industry, under PLI schemes, and so on and so forth.
Devin, hi, Santosh here. So is there anything negative, that negative surprise that the market is fearing, anything that it would not want to hear in this budget?
Hi Santosh, good morning.
Morning.
Well, I don't think that the market is ready for listening to any kind of negative, because frankly speaking, there is nothing which can become negative at this point of time. All equations are working absolutely very positive. Even if the government tightens the fiscal deficit measure, it will not happen in the vote on account budget. I think it has to happen somewhere in the regular budgets, wherein they may bring down the fiscal deficit from what currently 5.5 and above to close to 4.5, I think eventually over 2-3 years' time. And that is where probably one may doubt whether the government will spend enough. But as I explained, I think government has already laid down the roadmap for spending. In this situation, I think the spending would happen largely through public-private partnership, as that is what I understand. And given the trend that the global investors are being attracted into the country with a large amount of inflow of money, about $130 billion we have been attracting on a yearly basis. So in my viewpoint, I think that this is not going to be seen any negative, even if I think they tighten the fiscal deficit related subject. Other than this, I don't think that major negatives are being seen. On the contrary, I see when the full budget comes and the next 5-year terms of this government starts, they will probably, I think, significantly stay focused on the public sector enterprise, and they will lay down the roadmap to increase the value of public sector enterprise from what it is currently at this scale.
Clearly, Devin, negative reaction post-budget in the recent year post-GST implementation any which ways has been very, minuscule out there. But according to you, what could move the needle for the markets in that case?
Again, Nikki, I think there is nothing which market does not know or market does not expect. I think the market is expecting the government to continue spending. Say, for example, Prime Minister has made an announcement of spending on 1 crore homes for the solar panel on the rooftop. Now, apart from the capital cost, I think being incurred on this, and I think the funding being arranged for this particular capital cost, you look at the numbers which can translate the economy. Assume that I think one household, I think, would end up saving 1,000 rupees per month kind of electricity bill. 1 crore household, I think, would end up saving 1,000 crore rupee kind of electricity bill per month. So in a year, I think it would be 12,000 crore worth of saving per household. Overall, I think across all 1 crore household rather. So in this kind of a situation, I think this 12,000 crore rupees would find its way in discretionary spending, it find its way in the non-discretionary spending, and along with this spending, the government would end up collecting GST of average 12%, say for example. So I think 1,500 crore worth of GST would get collected. So in my viewpoint, I think such kind of programs which the government is putting across, these programs are in itself are having sufficient amount of push as far as the market is concerned. And in my understanding, because of these programs, you are going to attract a lot of new money into the economy because global investors, when they see this kind of programs being announced, they would be ready with money back to put money into the country because that is where probably they see return on their investment. So I think it's a win-win for the government finances. It is win-win for the individual's balance sheet as well, if I have to look at it from both angles.
What is your assessment of the latest quarterly earnings season?
Well, I think third quarter is normally a quarter in which I think some disappointments takes place. But overall, if you ask me, I think by and large the companies have actually performed based on whatever the projections were made in respective categories. Now, if you say that I think oil marketing companies of public sector enterprises have performed relatively better, the answer is yes. They had to perform better because I think they could withstand the steady oil scenario in the global market. So this quarter has been extremely favorable to them. If you look at, I think the outlook given by the IT companies largely, I think it has been positive. So that remains, I think, absolutely convincing. Auto companies, I think you cannot be seeing better performance than what we have seen in this particular quarter and likely to see even better performance in the coming quarters because of the higher amount of demand and the discretionary spending which is happening. Banks have by and large performed well, including, I think, their provision in the books pertaining to non-performing assets. So that subject also has gone well. And most of the engineering units, the capital goods segment as well, have been performing well. In some pockets, I think you might see, I think, some amount of slower growth or slower performance or lower performance. But by and large, I think the companies have been performing well in the situation in which we are currently. There is nothing which is called a complete disappointment. Let me put it in one line.
You think there could be more of a sector-specific announcements, especially those relating to the rural economy, the housing sector, the salaried class? What's your expectation of that?
You're right. I think the housing sector definitely would remain in focus because the government has been very successful with implementation of rural housing. Now the rural housing program is likely to get extended to the main cities. Whether it would happen in this vote on account budget or it will happen, I think, subsequently in the next budget, I think the full-fledged budget, that will be a guesswork to be made. The other areas where probably I think we would have a situation when renewable energies in particular, where the higher amount of allocation is likely to take place. Mind well, in the sign-off meeting of G20, the Prime Minister has secured $5.9 trillion worth of funds towards the renewable program of developing economy from the developed nation. Assuming that India ends up attracting 10% out of it, say $550, $600 billion worth of money that they attract over the next 5, 7, 10 years. I would think that is a significantly large pool of money which will get plugged into the renewable programs that the country is talking about. And over there, I think the green hydrogen is going to be an interesting area to be talked about because it will basically demand the higher amount of solar panels, the wind farms, and at the same time, energy getting produced out of it will be used for the process of electrolyzer for converting, I think, the water into the hydrogen, and that is a green hydrogen process. Should this particular program accelerate, I think the country as a whole is going to benefit significantly. On one side, implementation of green hydrogen. On other side, I think bringing down the cost of electricity through green hydrogen for the end user is going to be most keenly watched out. In fact, my understanding is that green hydrogen could bring down the electricity cost to 1/4 than what it is currently. And that could be a big game changer going forward. So overall, I think we are absolutely very convinced that the government is going to spend money where I think the program is going to yield maximum of benefit to across inclusive benefit, as I would call it, to across sectors and the industries and the users per se.
All right, Deven sir, thank you so much for taking out the time and having this conversation with us. It was indeed a pleasure. Chair, coming back to you, and just 30 seconds to you here. Strategy to play markets today and of course for the next 1 month. Quick 30 seconds before we toss it over to the Delhi team.
So strategy would be to go long on the market, particularly after today's budget session. Do not jump into the budget right away, but I would suggest 21,800 if taken out in today's trade. Definitely go long in the market and wait for 22,300 zones to kick in. I believe Nifty as well as Nifty Auto can be a good bounce back opportunity, particularly in after the budget session. And for the 1 month, I would believe there could be a good upside momentum in particularly battery companies, Exide, Amar Raja. There could be a good opportunity at this point of time. Also, SW Solar, the renewable side, I believe Swan Energy, Borosil and SW Solar could be something on the renewable side, would be an tempting opportunity for in coming 1 month. And on the defense side, BEL could be a good opportunity because it is currently at support zone. And I believe defense sector definitely could see a good budget allocation, particularly from upwards towards 15% from the total budget. So I will believe defense sector could be on focus. Also, if we look at housing companies, housing finance companies, likewise LIC Housing Finance and Kenfin Homes, can be seen as a good opportunity because government is pushing for newer homes, and if we can see many new homes coming in around the cities. So definitely Kenfin Home and LIC Housing Finance could be something to look over at with falling interest rate in coming quarters. So I believe these sectors could perform market before Lok Sabha election.
All right, Chair, we are going to leave it at that. And thank you so much for taking out the time and having that conversation with us.
Thank you so much.
All right, let's actually go across to our Delhi team. Shweta Punj is waiting on the sidelines and has a very important guest, Amitabh Tiwari, who's a political strategist and commentator. Shweta, feel-good budget, political masterstroke, or a concrete roadmap for the financial year?
Right, Nikki, I would think all of the three because, you know, the government is presenting this budget after being on a high with its state election wins, plus you have the exuberance around the Ram Temple. Let's go across to Amitabh Tiwari to get a better sense of what we can expect. Mr. Tiwari, thank you so much for joining us. So, you know, what's the sense that you are getting? What's the big messaging that Modi government would like to bring out with this budget since they're so confident about winning the 2024 election?
I think one of the most important messages is continuity of the policies. The government has been focusing on infrastructure creation, and it believes that infrastructure is likely to have a multiplier effect on the economy, thus generate jobs and also lead to reduction in the unemployment rates. So I don't think the government or the Prime Minister Modi's central government is going to fall into the trap of cash doles and income support schemes, which some of the BJP governments, state governments have had to do because of pressure from the opposition or let's say in competition with the opposition. So here, if you see in any election, there are three key voting segments. One is Kisan, one is Yuva, and one is Mahila. So I think the PM Kisan Nidhi is due for an inflation adjustment. It was 6,000 rupees way back in 2019. So this could increase to, I don't know, perhaps 9 or 12,000 rupees just to take care of the inflation and to keep a big block, which is the farming community, happy just ahead of the Lok Sabha elections. For youth, I think the focus could be continued focus could be on skill upgradation, skill development programs. We could see some new policies with respect to startups, so that the young people become job creators. And for Mahila, there has been an out of budget announcement of creating, I think, 1 or 2 crore Lakpati Didis. So that could be integrated into this budget. We could also see some schemes or incentives for self-help groups or Anganwadi workers to strengthen the income base of the rural women.
Right, Amitabh. So, this last 2019 budget that was presented by Mr. Goyal had something for the middle class, it had something for the farmers, and like you're suggesting right now that we might see a push again this time for the farmer community. So that's one community that has been a little unhappy, and the promise of doubling farmer incomes hasn't really panned out. Plus job creation, that's another sore point, and that was something that was highlighted in the document that was put out by the Department of Economic Affairs in the Finance Ministry. These two aspects, Amitabh, anything else that you see coming out in this budget that will specifically cater to this?
See, of course, the Kisan Nidhi would cater to the farmers and would definitely neutralize some of the agri distress. For youth, I think we could see more push on the performance link incentive or the PLI schemes in the manufacturing sector, wherein India could now see, or the government could give more thrust to, or try to attract more manufacturing from corporates or industries which are sort of leaving China after COVID, and we could see more schemes, PLI schemes sort of for many more sectors, because manufacturing is likely to give more push to employment, because this is one of the big or major challenges which the government faces, and without a significant manufacturing push, it would be difficult to generate significant employment, because agriculture is not that income generating for people who are already part of the agriculture value chain.
Right, Amitabh. Okay, very quickly, one last question for you. Do you see any state-specific announcements, considering the BJP has been trying to make inroads into the southern states and they are making progress, but do you see them going down that path?
There could be some state-specific announcements, like for Telangana, where the party believes that it has a good chance, or even some other states, maybe Tamil Nadu, Kerala, Andhra. We could see some announcements, but this government does not follow this policy if we've seen in the past. However, one thing which we missed, or I missed to tell, is that whether the government makes the new tax regime permanent, or it still feels that there is some time, and we continue with both the tax regimes. For the middle class, there has been a lot of demand for increase in standard deduction or increase in the ATC limits, and we have to see whether the government has the fiscal headroom to implement or keep happy the middle class ahead of the significant budget.
All right. Okay. Thank you, Amitabh, for that perspective. Of course, just a little over an hour to go before the finance minister presents the budget, and we'll get a sense then, of course, of what Prime Minister Modi is thinking as he goes in for the big general election in 2024. Tossing it back to you, Nikki and Santosh, to get us a market mood check.
Thank you for that. Clearly, the lineup is interesting, and joining us next is Sogato Bhattacharya, who's the economist at Axis Bank here. Morning there, Sogato. 3 key monitorables for you this interim budget. I'd also want to understand if, talk about the fiscal consolidation.
Hi, good morning. So thank you for having me on your show. So that's probably the most important thing that markets, economists, etc. will be watching for. The top line first is the growth projection. How much do they consider would be the possible economic growth? Like last time, they would have missed the target. They had projected a 10.5% growth. The National Statistics Office says that nominal growth will be about 9%. So that's one. Second, based on that growth, what will be the fiscal deficit? This government has shown a significant amount of focus on fiscal consolidation, fiscal discipline. So from the 5.9, which I think they will miss slightly to around about 6% for FY24. Do they take it down to about 5.4, 5.3%? So that's number two. The third is the projections on tax revenues, which has been very, very buoyant in FY24. So what kind of direct and indirect tax projections do they consider in the budget based on a 10.5, 11% nominal GDP growth? And the fourth aspect will be the allocations of expenditure between revenue expenditure and capital expenditure. Remember that CapEx has been a very large focus. 10 lakh crores last year, this year, FY24. Will they increase that even further to 11.5 crores? And fourthly, amongst capital expenditure, Finance Minister has already indicated 4 focus areas that she will be looking for: women, youth, farmers, and the poor. So what kind of programs, what kind of expenditures is allocated to them? So these are the broad areas that people like me will be looking for in the budget. And then, of course, what are the growth drivers, etc., that they will be looking for.
Hi, Shogato. Santosh here. One question on the rural economy. Now that's been one area which has been still trying to shake off the after effects of the COVID pandemic. Do you think it's likely that the government could lay a little more emphasis there, considering that this is also an election budget?
Hi, Santosh. No, you're absolutely right. That the rural area, the rural economy, not just agriculture, the broader rural economy, has been underperforming, and as we have seen in the commentaries of the FMCG companies, etc. So that's an area of concern. Remember that our focus, the government's focus, is on increasing our economy from about $3.5 trillion to about to double it to $7 trillion. And to be able to do that, you will need a sustained growth rate of 7.5, 8% for the next 10 years. And to be able to sustain that kind of growth without the rural sector rebounding, it will be very difficult to pull the entire economy along. So number one, I think in the initial stages, they might increase the social safety net, the PM Kisan Yojana from the individual farmer allocations from the 6,000 rupees per year to maybe to 9,000 rupees, as has been speculated in the media. So that's one part, an immediate security net and try to increase their incomes. But other than that, other than off budget, I think you will see, and particularly if there is a continuity in government after they post the elections, you will see multiple other focus areas. Maybe the farm bills will not be positioned exactly as they were before, but there will be significant initiatives in the farm sector to try to revive the farm economy. That's a given. And there will be other allocations to farms. Drone farming, fertilizer subsidies is yet another major area that maybe an allocation to fertilizer subsidies will be increased. So these are some of the areas that will be attempted in the farm sector.
Shogata, any take on what fiscal deficit target do you think the government is likely to set for FY25?
So, Santosh, I'm working with a 5.4% a fiscal deficit target. So typically the government has also indicated that they will try to reduce it to by 0.5% every year. But it's steep, remember, because the target for FY26, the year after this, is 4.5%, and currently we are about 5.96%. So that's a very steep drop over the next 2 years. But my sense is that they will not probably try to contract spending too much, because that will might lead to a slowdown in growth, which is not good for other fiscal the fiscal parameters, tax revenue buoyancies, tax collections, etc. So that might hurt growth. So I think they might slip a little bit on the 4.5 target And my sense is we are working with that. I'm prepared for a couple of basis points here and there for a 5.4% fiscal deficit target for FY25.
Mr. Bhattacharya, apologies there for getting your designation and organization name incorrect, but
Yes.
straight up first to you. I want to understand the divestment proceeds currently are at a poor 14.5% of the budgeted estimates. Help us understand that and also talk about the moderation of subsidies, any expectations around that.
So disinvestment is something that has been a perpetual problem. I mean, for a long period of time, that's been an issue. So I think they will seriously miss the target this time around, the 61,000 crores. But they might actually make up for some of this through much higher dividend payments, dividend and royalties from, as you know, viewers know, the public sector undertakings have been doing very well. And particularly banks, public sector banks. So the dividend payout will be much higher than budgeted. So that's one. So they will make it up for it this time. The Reserve Bank of India has given a much larger than expected dividend for this year. Problem is next year. I mean, you guys are the experts on this. So my guess is, given the global environment that we are seeing, an expectation of slowdown, China not doing well, other geopolitical issues and things, I'm not very sure how much equity markets will, how well equity markets will perform. So that will have a little bit of an effect on the dividend payments that are coming in, and even for the disinvestment. I mean, without a strategic sale, some of the disinvestment, offloading of stocks in PSUs, that might have a bit of an impact. The bigger problem, I think, is the dividend from RBI. This year's RBI, almost a 1 lakh crore that the RBI has given in dividends, it generated from the forex numbers, the FX numbers, because of the value, I mean, the rupee declining. So that hasn't happened. I mean, the rupee has been fairly stable at around 83 to the dollar. So that will constrain RBI's ability to pay too very high dividends. So from a lower than expected disinvestment target and the inability to offset that with dividends from RBI, banks and other PSUs, that will be a bit of a constraint on the non-tax revenues that the budget will need to work with.
Sure. Go ahead.
Sorry, Shaukat, the one question on the interest rate outlook. Now, the Fed has said that it's not going to cut rates anytime soon. That's the signal that they are coming out from there. So, do you see the RBI also taking its own time to go easy on rates, or do you see it likely to preempt the Fed?
No. So you're absolutely right. So I mean, I don't see any immediate feature, any immediate prospect of a rate cut either from the Fed or from the RBI. I think the Fed, the ECB, the European Central Bank will cut much before the RBI. Look, India is humming along. I mean, we are waiting for the GDP numbers. I mean, people are the chief economic advisor's report speculates about a 7% growth. So really, there's no need for a rate cut as of this point in time. Our average forecast for the CPI inflation is 4.8% for FY25, 5.4 this year, average over the year, 4.8%. So my guess is that if there is any prospect of a rate cut, that will happen late in FY25, maybe in the December policy review meet, or maybe after that in the fourth quarter. But remember that market rates will come down significantly before. If they are targeting a 5.4% fiscal deficit, and say they are assuming about 70% coming in from market borrowings to finance this deficit, so that will be a very positive in terms of the demand and supply the match between the government securities, the total supply that the government will issue, and the demand. Remember that we are getting into a bond index in sometime in FY25, plus any prospect of a rate cut at any time. I mean, I'm not saying any immediate feature. Immediately makes the bonds more attractive to investors. So I think from a 10-year perspective, from a 15-year, 30-year bond perspective, I think this is very positive for the bond market. And you will see that the entire interest rate, the yield curve, begin to come down.
All right, Mr. Bhattacharya, last question that I have for you in my mind is about the job creation or the women empowerment. Any themes typically that you think would be in focus?
So jobs is a major problem. I mean, this is a problem now throughout the world. I mean, and for India in particular, this is a major problem given the young and the number of potential workers in the system, and economic conditions are not favorable for jobs. So I think you will probably see some allocations for the production-linked index for the incentive PLI schemes, more in potentially job-creating areas like apparel, footwear, toys, leather, etc. So I'm quite sure that you will see, whether in this budget or later on post the budget, more PLI-linked schemes. And for women, for including more women in the workforce, and that's important. So one thing is the female labor force participation rate has increased very significantly over the last 2-3 years. So it's gone up to almost 37% from the low 20s at some point in time. But Finance Minister, again, as I said, indicated that women will be a major focus area for the government and will show up in the budget. We'll see what kind of schemes, the outlays for women-centric schemes, Finance Minister lays out on the table.
Bhattacharya, we're just going to leave it at that. And thank you so much for taking on the time and having this conversation with us.
Thank you so much. Thank you so much.
Thank you, Swagata.
All right, enough and more ground needs to be covered. And straight up, let's go across to Shivangi Sarda, who's the analyst equity derivatives at Motilal Financial Services Limited. Good morning there. How are you doing?
Having me on the show. I'm doing great. How are you all doing?
All right, it's a power-packed day clearly for us, an action-packed day. So we have an interesting lineup, including yours. Let's just start about what do you make out of the strategy essentially that the traders could now take up to? Do you see some amount of follow-up gains coming in after the previous session of gains that we've seen on the last street? That's one question. B, I'd want to understand what kind of strategy you think investors or the traders are better off at this point of time. And third, do you also see some amount of traction building in 1 month post the interim budget, typically the trend which has always acted as the reversal thus far historically?
The last question is very intriguing, but I'll go sequentially. So we've seen that, Nifty has moved by around 3,000 plus points in the last 14 weeks. And this has been a continuous rally that we've seen. And recently, it took took support near its key retracement level. So overall, we've seen that any support-based buying is very strong over here. So we have been seeing that, even though it's consolidating in the last 30 odd sessions, but then again, declines are being bought very strongly. So major trend of the market remains positive. And of course, it's budget, it's event, and, all things are lined up. So it's obviously wise to remain hedged. So, but then again, we've seen that major trend is positive. So one can, bias himself towards the positive side. So we are expecting the momentum to continue for 22,000 and then 22,222 for an immediate basis. And then downside, we can see support at 20,800 zone. So it's always advised to stay hedged. But then again, the overall trend is positive. Now, the one interesting data point over here is that the FII's long-short ratio is now at around 25%, which recently fell from 70% to 22% in the January series. So in the last couple of weeks, we've seen that the FII's long-short ratio has, fallen, which indicates that they have lightened their position. And this is one indication, or that, we can look at it this way, that this is a kind of a reversal side over here. Whenever the FII's long-short ratio touches its, bottom zone, the index has moved quite well thereafter. So the next 1 month, which we are looking at, the next post-budget, is looking quite positive because of the overall trend technically, also the data points, and also the FII's long-short ratio point of view. So overall, everything looks quite positive from here onwards. Of course, there would be sector-specific action which one should focus on.
Shivangi, hi, Santosh here. What is the kind of strategy you would recommend for someone looking to play the Nifty Bank?
So, for Nifty Bank, we have been seeing that it's underperforming from the last few series. We've seen that rollovers are also quite, decent from the last two series. But then again, from the last 4 weeks, the index has not been able to, surpass its crucial levels. And there has been underperformance across the private and the, PSU space. The good part now is that some of the PSU space are picking up. The private space, which had fallen quite a bit, is now seeming to stabilize right now. So for Bank Nifty per se, one can look for a strategy which is more hedged. For example, if one is going for a positive strategy in Nifty, say for example bull call spread in Nifty, one can go for bear put spread in Bank Nifty, just in order to remain hedged in the indices, because Bank Nifty is kind of underperforming and as compared to the broader market.
Shivangi, also the general feeling in the market is that PSUs have now become overbought. They're looking quite stretched. Does the derivatives data also seem to back that up?
So looking at the PSU space, of course, we've seen that some of the pack names have performed and they are stabilizing. The more hit was seen by the private space, I believe. So even though the PSU space has been consolidating, but overall the trend remains quite resilient over here. So some of the names which are looking quite attractive is SBI, PNB. So these names are, if we look at it technically and derivatives data wise, these stocks have remained quite resilient. In fact, if we look at PNB, it has not been affected by the fall in the Bank Nifty at all. So there has been a very clear run up over here in PNB, which looks quite positive, because once Bank Nifty stabilizes, this stock is only going to get more strength. So the PSU pack is still looking quite positive and strong as compared to the private space. We've seen that heavyweights have taken a little bit of a hit in the last 1 month. But then again, ICICI Bank is one such stock which is still looking positive on the private space.
Right, Shivangi, the market has fallen on 2 out of 3 occasions in the 30 days post the budget. The probability of such fall, typically historical data suggests, rises to 80% of the market has risen almost 30 days preceding the budget, which is also the case. Only twice in 30 years has the market been up both pre and post budget. What's your assessment?
Of course, this budget, we're not expecting much of a, move. Of course, volatility will be there. It cannot be ruled out. We've seen India VIX has also spiked above 16.5 zones. So volatility will, of course, be there. But then again, this is the election, the budget before the election. So we're not expecting such a major, major movement over here. Of course, the stock-specific action looks quite positive. But then if for the 1 month point of view, as I said, the trend looks quite positive. And seasonality-wise, we've seen that January's month has not really played out quite well for Nifty, but February has comparatively been stable. So overall, it looks quite positive here onwards.
All right. Any specific stock recommendation for our viewers on this important day?
So, first on my radar is from the PSU pack, SBI, which is looking quite positive. This stock has, recently surpassed its falling supply trend line on the daily scale, and it's managed to hold near about 640 zones. Continuously, we've seen that this stock is forming higher highs, higher lows, and supports are gradually shifting higher. So, of course, the buying interest is intact in the entire PSU space, and this is going to add as a tailwind to the stock. This stock is also, held on to its 50 daily exponential moving average. So, looking quite positive from here, and we are expecting a target of around 670 here with a stop near 625 zones. Now, the second pick on radar would be from the defense space. Of course, this space cannot be ruled out considering the theme So HAL is on my radar. This stock has, continuously remained resilient, and we've seen that, this is one stock which has really planned out quite well in the last entire year, and continuously good amount of volumes are being added. The stock is trading in a range from the last 14 to 15 session. This halt over here will only take the stock higher. So expecting a good run up over here, and this should extend towards 3100, 3150 zones with a stop near 2940 levels.
All right, Shivangi, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation with us here. Clearly, it's going to be a volatile day because we're also looking at weekly expiry, Santosh. So, by virtue of that, any which ways, some volatility is expected to play out. And with interim budget adding to the spin, I'm sure market is up for clearly some amount of volatile moves out there. But let's actually now navigate our conversation to yet another exciting guest on the show. Feroz Aziz, who's the Deputy CEO at Anand Tarwati Wealth Limited. Morning there.
Good morning, Nikki.
All right, Feroz, interim budget read-through between the lines, big bang reforms. What's your expectation? Read-through will hold the water for the main budget. What's your expectation?
Yeah, my expectation is, of course, it's going to be a little sops from an individual standpoint. From a economy standpoint, that's categorically clear. Capital goods, income tax rebates, some degree, because the income tax collections have been very robust. GST collections have been phenomenal. The indirect tax and direct tax both have had a growth of almost about 20%. I think far more than your budget. Deficit is well in control. So you're going to look at manufacturing, the PLI scheme getting a little more push. The FDI ease of investment is going to be even a push because you're expecting about $100 billion to come in the next few years. So all these will be the theme. But I think you don't expect too much in terms of decisive moves, in terms of the government taking very, very large steps in an interim budget. Like I was overhearing the kind of changes you see in a 1 month basis. But if you look at interim budgets, the volatility after 1 month, the market moves have been negligible. 2019, 1 month from the budget date, markets were flat and ended where it actually began. So a lot of expectations, but more so from a directional theme perspective for what's in store if the government were to come back.
Santosh?
Well, and how is the overall market setup looking at this point? Because it's an interim budget, market expectations also not running very high. We've seen a very volatile trend over the last couple of weeks. So at this point, what exactly is the sentiment in the market?
Good morning, Santosh.
Good morning.
I think from a perspective of the market, I think, of course, any move is called volatility. Ironically, the volatility or the realized volatility of Nifty, which is measured as the standard deviation on even an Excel sheet, throws up very, very low numbers. A movement of 200 points today is just about 1%. 200 points on a base of 15,000 was a percent and a 1.33%. So what happens is the sense of the volatility looks larger, but on a larger base. If you do mathematics and put it on Excel sheets, the standard deviations realized by Nifty are significantly lower than S&P 500, which I think is a far deeper index. Point one. Point two, if you look at how the market is placed today, how there are several parameters to measure what the market is placed as. If you look at derivative, FII long and short position is a great barometer to what's in store for us. If this budget was coming when the FII long short position was favoring long 85%, I would be worried. If it is at 68%, I'm not as worried. So if you're in an overbought zone and if little negative news comes, the market reacts adversely significantly. That's point one. Neither are we overbought or neither are we oversold. So events becomes far more subdued in not amplified situations. That's point one. Point two, if you look at synthetic futures are nothing but a call and put combination of the same strike, where you buy the call and sell the put. That's the future long position. If you look at the premiums on the 1st of February, which is today an expiry, like Nikki was mentioning, the premiums to spot yesterday's close was almost flat, which implies there's not too much expected by the street from the budget. Till yesterday morning, there was a 30 rupee premium, which is far more than the implied value of premium of cost of carry which implied that in the morning at levels of 21,600, the market was bullish, but a 125 points move left or not too much of bullishness for today. Having said which, markets go wrong when they're predicting events. They are better predicting businesses than events. But the premiums were negligible on synthetic futures of 1st Feb, which is a reasonable data to look at in terms of a sharp up move. Seems unlikely from a market perspective, but if there's some surprise in the budget, you may still see a reasonable move.
Feroz, what is the sense that you're getting speaking to your clients at these levels? Do they want to buy more, or are they happy taking some money off the table?
See, Santosh, when you look at a business like ours, we basically, you deal with HNIs, which are about 9,624 HNIs, families we deal with. Their behavioral patterns over a period of time are dictated by you. If I was in a retail business where I was handling 3 lakh clients, the trend is more apparent. So coming back, like in the country, if you look at, and if you look at equity mutual funds as a proxy to client behavior, it's a little saddening to see. If you remove the SIP number of this year, which is 1,41,000 crores, the net addition is only 1,12,000 crores in equity mutual fund, which implies that the lump sum entry and exits have been minus 29,000 crores for this financial year, which is a very, very saddening thing, because markets have rallied, but people have sold. So I think the kind of sharp moves which we have seen, especially after October 26th, which was the expiry, from 18,850, you see markets move to 22,000 as well. The believability of the levels is low. That's why you've seen reasonable outflows from the HNI fraternity largely. And they've missed out a reasonable portion of the rally from an external standpoint. But Anand Rathi clients have, in the same period, bought 3,500 crores. And hence, I'm not a great guy to ask you or tell you the trend, because you're dictating the trend in the small subset you end up managing.
Feroz, any technical indicators on the mood of the markets ahead of the budget?
Yes, see, if you look at technical indicators, I've tested 16 technical indicators for their predictive capability, and I've been reasonably disappointed in terms of their predictive capability. The only item which has great predictive capability is the FI long and short position. Once it crosses 80% is when you see moves on the opposite side. So I think the technical indicators, all the ones which have some degree of credibility from a backtest perspective for predicting Nifty, I think they're more or less in the mid zone rather than the extreme zone. So no clear indication. But having said which, the kind of liquidity which FIIs have been pumping in December, close to about 60,000 crores, and the trend will again, I think, resume after the budget. So I think liquidity will drive the market. And if you look at the small cap index, we've been positive in spite of the entire street being negative on the small cap, especially from an investment standpoint. All fund managers having gone negative on small cap from September. Small cap has continued to outperform about 10-11% from September as well. I think another couple of months of outperformance on the small cap on the back of FII entry in the small cap is something which people should watch out on. It's not normal, the kind of FII inflow in the small cap stocks. Not the really tiny ones, but 5,000-7,000 crore companies have had FII inflows, or the number of FIIs have been unprecedented. And that's why you see that kind of moves and alpha. Yesterday also small cap outperformed by 1% You have the top weights of the small cap, NSE small cap 250 index having moved 3-4-5% in spite of the valuation concerns, which the domestic fund managers have been highlighting for the last few months.
Aziz, you just made a point about net inflows into equity being negative if you take out the SIP numbers. But the SIP numbers also clearly indicate that there are more people coming into the market than more people going out. Wouldn't that be the case?
Yes, absolutely. It's the segmentation. See, every universe which is as large as 4-5 crores, you will have to segment it. So the lower strata of India has been coming in a more disciplined fashion. The higher strata, unfortunately, ideally the smarter money should be the richer money. But I think it's the other way around. If you look at the same trend happened in FY21, the HNIs removed 1,22,000 crores, or the lump sum inflow outflow was 1,22,000 crores negative, whereas the SIP number was about about 96,000 positive. In spite of that, we had seen an outflow of that kind of quantum. So you're absolutely right. There is money coming in. I'm just trying to highlight from which strata of India is the money coming in, and which is coming on the back of education and goal-based investing. What is coming on the basis of opinions and short-term profit bookings, which is the large lump sum monies seem to not have the stomach to stay on for longer periods, which I think needs a lot more education in the higher strata, unfortunately.
Firoz, one last question from my side. Now, the fund managers are saying that much of the inflows that they're getting right now is largely into small cap funds. There's a clear bias towards that, whereas not enough money is coming into the large cap schemes, which is where the stocks, the valuations appear to be far more reasonable. So what do you make of this trend? Is that a cause for worry that there is too much concentration on just one side of the market?
I think, see, what happens is these English words hide a lot, like reasonable valuation. If you look at NSE Small Cap 250, the levels are about 15,000 or as of yesterday, that's when it crossed 15,000. And if you look at the earnings have not been too disappointing. If you look at valuation in terms of trailing on the NSE Small Cap 250, they're about 20-21 on an aggregate basis. And at the same time, you have stocks which are more than 100p, about 30-35 stocks in NSE 500 are greater than 100p. They're about 160 greater than 50p. Being very generic with respect to a large universe, as much as 250 stocks in NSE Small Cap 250 may not be fair. So there are stocks with 10p, there are stocks with 100p, and that's why a diversified universe, I think a fund manager still has potential to pick businesses. If you look at a Nippon Small Cap, which I think is managed by Samir, has about 190 stocks, and at 40,000 crores, he's still been able to beat the index on a longer period of time. So because a larger canvas is given by the investor to the fund manager, I'm not too perturbed, and generic statements on larger universes may not be fair to make, and that's when you miss out opportunities because you're colored by the headline number rather than the nitty-gritties, and the devil seems to be in the detail.
Thanks for those insights, Firoz.
Firoz, I have another question there for you. One trend typically which has been playing out in the last couple of interim budget is simplification of tax. We've seen that playing across for capital gain tax. You've seen that for GST. Do you expect the continuation of that in this interim budget? If not for this budget, do you see that happening in the final budget?
Yes, I personally think if the government were to come back in the next few budgets, this is the logical thing to do. If you read between the lines and the themes what has been adopted by this government over the last few budgets, like you rightly pointed out, Nikki, you have another method of income tax filing, which is on the direct tax side. The income slabs have been simplified. You have business taxation simplified. The GST, which is definitely a big step in simplification of indirect taxes. Capital gains is something which is far more complex. If we have to be the third largest economy, capital gains can't be as complex as they could get because it's a three-dimensional matrix. I'm solving for STT, non-STT paid, equity, debt, real estate, gold, all have different kind of taxations. Their periods are different, their rates are different. So you're almost looking at a four-dimensional matrix to understand what's your actual tax liability. Simplification is easy to do in this case, and because there are only 4 or 5 asset classes you have to solve for, not different people. So I think that will certainly be on the cards, and I'm sure that's being discussed, but I think interim budget may not be the appropriate time to implement that simplification, which is a crying need.
More of sector-specific announcements. Are you looking something from the rural economy funds, housing sector, salaried class? Which themes typically are you looking at? Sectors that you think would be in focus?
See, sectors several, but I think what I would expect when the tax collections are buoyant is a change in the Section 112A limit of 1 lakh exemptions on equity taxation per financial year per person. That can definitely have headroom for a movement upwards to really impact the lower strata, because SIPs are coming from the coming in smaller amounts by people who are not in the highest tax bracket. So if you gave them a little swap in terms of swap and in terms of giving them a higher limit of exemption per financial year of capital gain, that will help. Definitely the new tax regime, I don't think any inclusions of exemptions are possible, because that's a clean method, but standard deduction still is something which they introduced last time. If they have to give a clean way of giving a happy quotient increase in a budget, which is an interim budget, then standard deduction is something which I would logically tweak. When it comes to kind of sectors which will benefit, I think healthcare, agriculture will definitely be two focuses. 24% of our GDP comes from agriculture. I think there is a lot of headroom in terms of push to these sectors, healthcare and agriculture. I would be keenly watching these two.
All right, Feroz, we're just going to leave it at that and just wrap up this edition. And thank you so much for joining us from Santosh and myself and from the entire team who puts this piece together. Thank you so much. Well, clearly, Santosh, what do you make out of it? There's a trade setup. Let's look at that. Any specific trend that you can pick up? FII and DII trend that we've been seeing, some amount of buying that has come through, some rally already that is, taken through the markets. You expect investors now to be on the sidelines on the important day. How are you looking at it?
Well, there is a reason to be slightly cautious on big event days, and we've already seen that some kind of profit taking over the past couple of weeks. So in that sense, the feeling of market being overbought, which was there till about a couple of weeks back, that clearly is not there. We are seeing some bit of profit taking in mid cap and small cap, which actually, if you ask me, Nikki, is a fairly healthy thing for the market. It's good that markets head into big event days slightly lighter than heavier, because otherwise then the chances of a disappointment are much higher.
Fair point. Also, in terms of themes and stocks, Santosh, that you think one needs to watch out for. Of course, we've spoken about it enough and more with our guests, but something like an economy-facing stocks, be it in terms of L&T, be it in terms of NTPC, be it in terms of some of the infra bets. What's your take on that?
Well, clearly, the focus today will be mostly on all capital goods stocks. We could also see some bit of focus on engineering and steel, cement, because these are typically the sectors spent. And with capital goods right now, the stocks have had a very good run over the last year, but as some of the portfolio managers have been saying, this is very clearly a sector which is coming out of a long down cycle. Right. So, and even when the cycle has peaked, it's very hard to say when. Because of the order backlog in the system, you'll continue to see earnings being strong for many quarters.
All right, clearly that's the word coming in. But what I'd also want to urge to our viewers to go across to our website and read this extremely well-written story, 15 budget-sensitive stocks to watch out for the day. But with this, it's a wrap on this edition. Let's toss it across to Stacey, who's standing by with more details.
Well, thanks so much for that, Nikki, and to all our viewers, a very good morning, and thanks so much for joining us live on this broadcast. It is the election budget coverage that we're calling it, and the Finance Minister is all set to present her 6th budget on the floor of the House, the 11th month for the Modi regime. Now, expectations are flying high. The word out there is that there will be focus on youth, women, farmers, and the poor. That's going to be some of the focus areas, at least, that we're picking up that the government would want to look at. And of course, a modest hike, one would say, in the capex, expected anywhere in that 15 to 20% hike is what the street is hoping for. And that could perhaps then go on to boost the economy further. But the question on everyone's mind, of course, for the Aam Aadmi, could there be any kind of reliefs, any tax sops for the middle class? Well, we cannot rule that out at the moment. But more importantly, at this hour, it is the Indian equity markets. And that one, we are seeing at least the cues that we're getting from the global setup is maybe we might take some positives from this budget in anticipation of that. We are looking at the GIFT Nifty a bit positive at this point, but we will be discussing all of that in details and more with a battery of panelists, ace market gurus, economists, political analysts, all of them right here. But first, let me take you through some of the top headlines this morning. Now, it is D-Day for Finance Minister Nirmala Sitharaman as she will present her last budget before the 2024 elections. All eyes will be on how the Finance Minister treads this tightrope between fiscal prudence as well as populist policies. In some relief on cards for the middle class, well, we will hope for that and see what the FM delivers in her speech at 11 a.m. And stocks cracked on Wall Street after Fed Chair Jerome Powell cautious hopes of a rate cut in March. Although he did hint of cuts at some point in the year, the Nasdaq was the worst performing index, losing over 2%, where we saw the Dow Jones and the S&P 500 both slip about 1% each. And Asian markets also opened lower after that weak handover from Wall Street, where Fed has played down those chances of a rate cut. The GIFT Nifty, however, is indicating a slightly higher start for the Indian markets. And RBI has imposed major restrictions on Paytm's payment bank for persisting non-compliance and continued material supervisory concerns. He stops fresh deposits as well as credit transactions from the 29th of February and also tells the bank to clear all pipeline transactions by the 15th of March. Paytm says that it expects a 300 to 500 crore rupee impact on its EBITDA from the RBI's restrictions. Well, yes, we have all of that lined up and a lot of guests to tell us how exactly we're going to, look at the trading day today. And joining me for that is N. Mahalakshmi, our markets editor. Mahalakshmi, let me just straight up ask you the first thing that comes to your mind. What is that one thing you're hoping for that the FM will be talking about today that you want to hear from her?
Well, I think the fiscal math really, because there are no big expectations. People do fear that there might be some kind of populist policies and some kind of expenditure out there. I don't think that is really a big worry. The market already expects that. So I don't think there could be disappointment on that side. On the contrary, I think there could be a bit of a surprise because it's amply clear that this administration is going to come back in elections. I mean, there could be a 1 to 5% chance that something else happens, but so far it doesn't seem to be the case. In which case, how does the finance minister really prioritize, and what does she do? I would think that given the election scenario, it is more likely that they will do 50-60% of what they are expected to do next year, this year itself. So that there is, the general, business community, foreign investors, even important constituencies in the voting class approaches this with positivity. So the number you are asking me, what is the one thing you will look for? A 10.5% nominal GDP growth, a 5.3% fiscal deficit for next year, and capex growth. You talked about 15 to 20%. I think that's a bit of a stretch. I would be happy with a 12% capex growth. If we are able to do that, and within this framework, if we are able to maneuver expenditure in a way that you're able to give something to augment rural income. We all keep talking about populist policies, but what is it really? If you're able to do it in a way that you are able to lift consumption, it's a positive thing, I would think. Yeah. Second thing is, I would look for what is she going to do for the real estate sector, for the housing sector, because that is really vital. Because if you look at the complexion of domestic growth over the last 1 year, real estate has been really, has been a really important piece of that. And you don't want this piece to really fizzle out. And for that, it will be imperative to, focus a little on that sector. So an interest rate reduction being hiked or some more allocation in PM Awas. Mm-hmm. So those are some of the things I would watch out for. But mainly the big picture, 3 numbers that I talked about, within that, however you spend, it's fine.
It's fine. Right. So 3 big numbers to look out for, and we will hope that, it comes somewhere closer. I think the estimates are quite roughly about the same for most of the brokerages that we got also. But let me also introduce our guest in the studio. We have Rohit Srivastava from India Charts joining us. Today is going to be about markets, not so much perhaps the reaction after whatever the finance minister has to say. But when it comes to how the charts have been, at least so far, if you look at the benchmarks and if you talk about the Nifty specifically, are we likely to see, that big upswing? In fact, when I was just walking in from our makeup room, I heard people say that, maybe it will be a slow start, but we might even touch 2,500. Am I 25,000? So, of course, that would be something that we would want to see eventually. But what are you reading of, what are the charts telling you at this point?
So I think the path from here to 25,000 needs a lot of things to change in the macro space, not just domestic, but also internationally, which is why today this combination of a Fed meet overnight and running into the budget has, really got us all thinking what's going to happen next. So I think in the short term, we are going to pay attention just to the trade setup and sentiment, which...
Sir, in fact, we're just getting those visuals there, which you can see on your screen, the finance minister with her typical red Bahi Khata with that tablet, that she's going to continue that trend that she had started back in 2019 is when she got the Bahi Khata, then going on to introduce the tab in 2021. That's where we have finance minister with her A team. That is pretty much all the secretaries from the finance ministry. You have TV Sobnathan, you have who's the revenue secretary, you have Tuin Kanta Pandey, who is the Deepam secretary, and all of them walking now towards Parliament. This is a mandatory photo op that we see pretty much every budget that she comes out with. But that red, this transition that we've seen over the years from the briefcase that it used to be called, a Gladstone red briefcase, then turning into the Bahi Khata that Nirmala Sitharaman instead got in her first budget, and now this tablet that we are seeing in her hand, which of course has that all-important document, the digitization push, and perhaps what we're going to get to hear much more in the budget speech as well. We're hoping that there will be some kind of allocations, because it has happened in the past where that has been quite important for her to, give that digital push and have that Make in India be quite a priority for the government. So that's Nirmala Sitharaman. They're taking off with her team. They will be reaching Parliament after that, and that's when she will start a speech at 11 a.m. So those first looks you're getting there of that budget Bahi Khata in the finance minister's hands. Well, those visuals quite telling, and we will be waiting to see, how and what really entails in that. But let me go back to Rohit, because we had to cut him off for those visuals. Tell us what the charts are reading. Yes, you said we're too far from 25,000, but what are we expecting, and what are those headwinds that you were talking about?
Yeah, so the path won't be straightforward, because while we know all the positives, for example, the expectation that, the Modi government will be back in power, the expectation that the Fed will start cutting rates in the macro space, these things are starting to get priced in a big way, which means that in the near term, you could very well get the markets correcting. It's also seasonally seen that between Jan and March, we have often seen the markets pull back a bit, and that might give us a better entry point for the path from here to 25,000. And so sort of we've seeing that rollover throughout January, where we've seen more weakness maybe in banking, a little less in Nifty. But the broad market has been extremely strong. I think that's where we really need to see that pullback happen, and then we can actually say, okay, we've eased back a bit on those on the over optimism, and then we can actually get back to taking the trade from here to 25,000.
Right. So let's talk about the Bank Nifty and how those have, a lot of those components not being those top performers. We saw some bit of volatility there as well just a few weeks before, and so banking stocks, perhaps if we see them perform, is where we're going to see that push come in for the Nifty as well, for the headline numbers. And that's what we're hoping, that that it will be these large caps stocks at this point. But we're almost there at opening bell. We are just seconds away, and we're going to see where this direction, or what is really that trigger, whether it's taking it from what the Fed has done, whether it is the Asian cues that we're getting, or it is just the optimism that we have around the budget that is really going to take this market to the next level, or perhaps see some volatility. But on your screens there, we have the hot board, where we are seeing almost close to 1%, we would say, gains there for the Nifty. In fact, there we are seeing with 0.1%, so 21,700 up 21,750 levels is where we are starting the budget day on. We would say the Nifty 50. We can also see the Nifty Bank there on 46,000. I'm sorry, beg your pardon, that 46,000 above. It's starting the Bank Nifty. Sensex also there, changing on your screens above that 71,760 odd levels there for the Sensex as well. So we are looking at some positive, we would say flat but positive give. The mid cap as well as small cap index also both there in the positive at this point as we start at least these trades. Just a little bit of gains, one would say, not to those high levels, but sectorally, if we're talking about the IT index, they're looking at some bit of pressure. So that one opening in the red at this point. Pharma, another nice surprise because that's the one that we're seeing. Of course, there have been some earnings in the offing, and that one could be a positive for that. FMCG, now this is one sector that everyone's really hoping would get some kind of boost from the budget as well, with rural consumption and some bit of SOPs, if at all. Then FMCG and consumption would be those baskets where you're hoping to get some bit of relief. So you're seeing those stocks there come in the positive at least this morning. Auto also another component there which is opening in the positive. We are seeing almost 19,300 levels there for the Nifty Auto Index. And we'll have to wait and see whether, which are the gainers and losers mostly that are, comprising at this point and helping the benchmarks also. We have Nifty Metal Index there also in the positive this morning. So we're seeing, positives come in from metals, from auto sector as well as pharma. So those are your broadly sectoral gainers, one would say, whereas the negatives coming in from the IT sector at this point, IT pack that we saw in the red. So, Mahalakshmi, we have started off on that positive note that we are hoping, not that big surprise, but of course, it is a positive that we wanted to. What are your expectations from here? Do you think there is enough steam to be going ahead right now?
This is just a wait and watch market, Stacey. This is very typical of a pre-budget kind of a market. It's not really hugely positive considering that we had negative cues from the from Fed yesterday. But then our markets, because today is a big day, everything is dominated by the budget. All eyes on the budget. All traders are viewing the budget. So this is like a somber start, and obviously we have to wait for the budget to pan out to see where we go from here. But let's go to Rohit. Rohit, what are you picking up on your screen? Anything that unexpected is happening?
Well, I wouldn't say unexpected. This is what we would think, like it's budget day, the Nifty, and it's a vote on account. So the Nifty is sort of flat, not reflecting anything as of this moment. The unexpected would be, well, we didn't react much to what happened in global markets overnight. So that could probably be one thing if I say unexpected. We are purely watching levels as of this moment. So I would say around 21,750 is the 66% retracement to the entire fall that we've seen in January. And if we are able to sustain above 21,750, then we actually have a case for the Nifty going back to the all-time high. So that's going to be the immediate level we'll be watching, and we are right there. And could the budget really make that difference at the end of the day? I think there is a possibility, simply because in the history of budgets, one thing which does happen every time is that if the market is down ahead of the budget for the previous 2 weeks or 3 weeks, then it does often go the other direction. You always see it reverse what it has actually been doing, and we have been down for the early part of January. So that is one thing in favor of what happens next.
Right. So Rohit, we were talking about banking stocks, and that's when we hit market open. So, what are you looking at it right now, given the scenario? Earnings have gone and come by, and we've seen private sector bank give, some bit of blips there. We are waiting for SBI over the weekend. But among the banking stocks, what would be your pecking order, and how should one really be looking at them? Should we just go clearly by just the earnings, or is there more? Are they the long-term play? What is your take?
So I think there's been this huge valuation gap play, right? If you look at the big stocks like Bajaj Finance, they've been underperforming no matter what the earnings are, the stock keeps falling. And on the other side, even a bit of growth on the PSU banks actually gets you a fillip on the upside. I think that pattern has not changed. And if we look at the bank Nifty per se, it doesn't actually give you a very good picture, both on the weekly and monthly charts. It looks like it's going to weaken further. All we have right now is, because it's already fallen, I can look at a near-term bump up. Best case, let's say 61% of the entire fall we've seen so far is around 47,100. So I will expect maybe the bank Nifty goes up to there, but it's possible that you do see a resumption of the selling from that level in these banking names.
Sure. Let's go over to Rajiv Radhakrishnan, CIO Debt of SBI Mutual Fund. Rajiv, good morning and welcome to Money Control. So, Rajiv, first things first, what is your takeaway from yesterday's Fed meeting? At least the tone of, Fed's tone really looked like very different from the last time. So, what is your takeaway? And of course, the next thing is expectations from the budget.
Yeah. So, I think the main takeaway, I think even from a market perspective, the single important variable that market were looking at is would there be enough hints for any rate reductions happening in March? And I think that has clearly been laid to rest with the Fed clearly, not giving any indication as to whether they would be moving rates in March. But I think beyond that, what is clearly evident is, which was not probably apparent last time as well, and this time probably a bit more definitively it has come in that the rate hiking cycle is clearly over, and it's just a question of when the Fed would want to move. But at the same time, the bigger debate is would the Fed move as much as the market is still pricing in? So I think that is still open. But the single biggest takeaway is they are not in a hurry to cut in March.
Sure. So at the beginning of this show, Rajiv, I was saying my expectation from the budget is like a 10.5% nominal GDP growth, a 5.2% fiscal deficit for next year. So that leads into a, aspirational 4.5% the following year, that is in FY26. So we are on the glide path clearly, and a capex growth of 12%. What is your math, and what would you be happy with?
Yeah, so I think, from an aspirational number, the best way is that you have an equal consolidation over the next 2 years and go down to 4.5, which is what they had indicated earlier. But I believe the broader consensus in the market today is consolidation to 5.3, 5.4 for this year, and then move into 4.5 over the next year. So in terms of overall, expectations, we're looking at the net market borrowing number, slightly similar to what we have seen in this year. So about, 11.4 or something is the broader estimate of net borrowing, which should be okay from a market perspective. But I would say even at a fiscal deficit of target of say 540, what is eventually important from market angle is to what extent is that financed through market borrowing. So that is something. So right now the estimate is 65% of deficit would be financed through net market borrowing, which roughly gives you about 11.4 odd on net borrowing. So any number which is higher than that. So for example, last couple of years, the small savings collections have been a material part of financing the fiscal deficit. So, if in this coming financial year, if the government were to budget a lower number from small savings, so effectively what that would mean is that a larger percentage of the deficit would be financed through market borrowing. So that can be a negative at the margin from a market perspective. So if you have net numbers around 12 trillion, which is roughly equating to something like 70% of financing of deficit through market borrowing. Maybe at the margin it could be negative, but overall, I would say from the other question on capex, I believe, yes, it won't be as high as what was budgeted last year, but there should be a marginal growth probably in line with the nominal GDP at least for next year. The overall theme would be, the fiscal consolidation exercise, because today you do not want to be in a situation where large government borrowing. So we need to look at both center and states put together. Large government borrowing should not be crowding out private sector investment. And I think today, when you have a reasonable amount of confidence on the way tax revenues are growing, and with 10.5% nominal GDP growth expectation, I think clearly the consolidation of the fisc should be, I would say it should move in that direction. So a faster pace of consolidation probably would be ideal from an overall market perspective.
Sure. So this net borrowing number, Rajiv, what is your concern? I mean, why should we have? Why are you saying that is even a risk? Because that seems like it is by design that they're hiking this small savings number, right?
Right. So most of these estimates, as I said, are based on about 65% of the deficit being financed through market borrowing. Now, the issue with small savings is, of course, it is actually indexed to government security yields, and the government actually resets it every quarter. But we have seen that over the last few quarters, you haven't indexed it lower because the rates have been slightly higher than what would have been the rates if it had been properly indexed to the government security yields. So that is one, it can go. The government could still retain the same rates, but why that can be a potential source of, I would say, risk is purely from the fact that today, when you look at where the banking system is, so there is clearly a challenge to raise deposits, and deposit rates, of course, they have gone up a little bit, but still small savings remain a competing instrument to increasing bank deposit rates. And the second part is from a government cost perspective, the small savings are I would say a higher cost borrowing avenue for the government. So I believe that can be one angle which might lead to an eventual indexing to the sovereign rates, which can potentially impact the flows into small savings. So tomorrow, as rates go down and if you index it properly, the collections that you get under small savings can be lower than what has been in the last couple of years. So I think that's the point that I was trying to make, that if you have a
fair enough, because last year we had a low-hanging fruit in terms of, the tax arbitrage and debt fund, so that could easily fix some part of the, deposit issue. This year is not an easy answer. So, okay, cool. So, any pressure points, Rajiv, for the economy, whether it is inflation, current account deficit, the fact that now US recession is also not ruled out, so you might have merchandise exports be a bit of an issue. Any pressure points that you see in the economy that may be playing in the mind of the finance minister to come up with something that could actually disappoint? Much as you would want to sort of go into that 5.2, 5.3 for next year, I mean, you have to be cognizant of all these other things. The fact that you need to balance public spending and also look at the consumption basket, which is really not as impressive as one would have wanted it to be.
Right. So I would say from an overall macro perspective, we don't really see too many pressure points, but at the same time, there are challenges. So I would, rather than pressure point, I would say the ongoing challenges would be one, of course, to which the monetary authority is engaged in, is to align inflation to target, and which is what is getting reflected in their RBI's policy stance. From on the other macro side, you have government finances which are robust. So that is something clearly positive. If at all the challenges can arise, one which you really mentioned is how do you actually have more domestic consumption related growth. So and I think associated with that would be the challenge to incentivize private sector manufacturing, and you need to actually have a situation where the private sector starts to invest, because the last couple of years clearly it has been government capex that has taken the lead. But today, given the fact that we need to move towards consolidating the fisc, at some point you need to get in private sector, or private sector capex needs to start picking up. And I think that's a virtuous cycle where you see higher capex, higher income, and eventually that leading to better consumption or higher consumption. So that is one challenge, to incentivize that. And the second challenge from a macro perspective would probably from what happens from external spillovers, right? You did mention about the potential slowdown in global growth. So far, global growth is relatively holding up, but with the full impact of tightening playing out, and in the context of all these geopolitical frictions. So we need to see to what extent that impacts our growth, and the negative impact, if any, will come in through the export channel, right? So that is something remains a challenge rather than a pressure point on the overall macro side.
Okay, I have a couple of more economy questions, but I'll ask Stacey to go to Rohit to get some more market.
Yeah, we'll get into more broader macros, of course, because that's where the triggers will come from. But let's look at what the charts are really telling us, Rohit. If you look at the auto pack, especially today, since those are among our gainers, this one has seen quite a bit of swings, one would say, although we did see Tata Motors being, that shining star all of 2023. Are there any good surprises that we can hope from the auto pack? And, which would be, whether it would be the auto ancillaries then that one should be looking at,
or the bigger, the two-wheeler names or the four-wheelers? How would one be looking at the auto sector?
Yeah, tricky. That's a tricky one because you do keep seeing rotation between each of those segments from time to time. So the near term becomes guesswork. I do think it's best to really wait, for a while before we really take that allocation call. Because a lot of the enthusiasm today will be based on, will something come out of this on some front or the other that can boost the sector as a whole. So I think today you might just see all segments fly. Right. Not just one particular segment.
I'm hoping to hear something on EVs as well. Like EVs is a theme that we could hear the finance minister speak about also. But yeah, that play in the auto part is also quite important, I guess.
That is going to be, I think, the bigger focus, longer term, because it's something we've, I think stopped talking about in the last year. But most of 21-22, it was all about EVs and all the ancillary plays in that segment. I think that remains a long-term place to really bet.
Mm-hmm. So Rohit, if you were to just slice and dice the market and tell us, what are the segments that you see are setting themselves up for disappointment? Can you see from trade over the, like you rightly pointed out, I mean, the mood even up until 5th of January or the first week of January seemed to be very positive. And suddenly you saw a lot of stock-specific volatility come in, a lot of nervousness set in. Over the last 2-3 weeks, it's been like that. Is there something that you can read, like that you have observed in the last 3 weeks, that sets up a certain pocket for disappointment?
So I think there's this thing happening over the year where sectors that became overvalued or have high valuation ratios are actually disappointing. Although hope comes in once in a while, like you just saw chemicals pick up suddenly, in the early part of this year. And people were looking at, okay, is the chemical rally really coming back? And that was an overvalued sector of the last 2 years. And then again, they've given up the most. Then you can go to new age plays, for example, and now you have bad news around Paytm. Mm-hmm. And that segment also hasn't been through its complete downdraft to really take an easy bet in my mind. So these are sectors that are easy targets when we see on the sell side, where there's already been weakness in the past. The harder part is to say whether an outperforming segment now, where the value was, right, like PSUs, where there was value and now they've run up, is that really going to stop? I can see a near-term pause, but then I've been saying that for a while because there's a lot of volume, and when there's a lot of volume, you think that, okay, is this getting overdone? But it's not happening. So the easy answer is what has underperformed continues to underperform. What has been strong probably remains strong, and we'll stick with that.
Okay. Right. So going back to Rajiv. Rajiv, so one thing that will surprise you in this budget and one thing that will deeply disappoint you.
Okay. Surprise would be, if they really look at a much faster pace of consolidation than 5.4 or so, which the bond market is looking at. So, and the other part, which I mentioned earlier, the financing part. So if you have a faster consolidation and more of small savings funding the deficit, then effectively the market borrowing, which you have to manage, will be lower. So that can be a positive surprise. On the negative side, I don't really foresee anything significantly negative. The only issue which I did allude to earlier was if the market borrowing number is, because as I said, there is clearly a logic if they might potentially have less recourse to small savings. So that could be negative from the immediate market angle. But from a material negative impact, given that there's an interim budget, so unlike the last year, probably we may not really see any negative shocks today.
Fair enough. That's all. Rajiv, thank you so much for joining this morning. So coming back to you, Rohit, you were talking about PSUs, right? So now the fact that, I mean, this is a question that really confounds me. So you have these quality banks that have been underperforming for a while, and this quarter, of course, HDFC Bank was quite a shocker. So now all these valuations are, you see a bank at 6 PE and then you have a bank at, 20 times PE. So you can make a case for anything. You can make a case for a bank which was trading at 5 times book, today available at 1.8 times book. You can also make a case for a bank that is at 6 PE and, they have liability franchise that is worth. So on charts, does it tell you anything decisively that a certain pocket is poised better than the other? So you said what is performing is performing, what is underperforming is underperforming. So is that the trend you would go with, or would you bet on a reversal?
So we don't easily bet on a reversal till we actually see it. So we will use our, say for example, I'll put on a monthly RMI, which is our momentum indicator, and try to see whether you're actually getting a reversal at that degree. And that may not happen quickly. So even if something is undervalued, it's possible that it keeps falling till you actually get a momentum reversal on price. And we're still not clearly seeing that, say for example, in a Bajaj Finance, which has been one of the worst performers, or are we really seeing that in an HDFC Bank or a Kotak Bank? They have reached critical supports. I mean, I can say HDFC Bank, when it bounced back, was at the 40-month average, which is like, okay, great. This is the last 3 times it was there, it went up. So should we really say that the worst is over? But it's been flat for so long that you want to wait for a much more better confirmation from the indicators as well, telling you that this time also it's going to repeat what it did in the past. So that's where the clarity is lacking, because they failed again and again, and you don't want to be on the wrong side of it, saying it early that okay, this is ready to move again.
Right.
In fact, I wanted to ask, because we've spoken about so many other sectors, one name that is not coming out is still the IT pack, and that one, we've been hearing from right from the earnings saying that we have to wait a couple more quarters to see any kind of. But what has really, could there be any kind of tailwinds now to take this forward for the IT pack, or we're just going to have to wait it out for them, or should one be playing the mid-cap IT space instead of the bigger large-cap names?
So again here, the easy answer is mid-cap versus large-cap. Yes, it's the mid-cap. But the hard answer is you can't just look at what they're doing in domestic earnings. Like even the moment you look at IT pack, you start looking at what is happening to the global economy. Is it going to continue to remain strong? And actually, it's not been strong. A lot of the US rallies on the back of liquidity and hope of lower rates. But at the same time, as we heard, Powell state last night that they're going to really wait. And will waiting on higher rates lead to a further slowdown? And then does that become a pressure point for IT? So I think that pressure point has not really gone away. We have seen a relief rally because there was too much selling, but that doesn't change the risk to the IT sector. So I think that's not going to be an easy trade, and we are going to remain circumspect there for quite a while.
Sure. So we have Nilesh Shah joining in from Envision. Thank you so much, Nilesh, for joining this morning. So what is your expectation, number one?
Well, I expect this budget to be again a kind of a mark of continuity. I think this government has been on the path of fiscal consolidation in a very difficult and a challenging environment. And I would want this budget to kind of reaffirm that path. And two is a continued focus on infrastructure. I think last year's growth, where India grew significantly above the world economy, is primarily because of the government's massive hike in allocation to the infrastructure space. Yeah. I think it was a 33% hike in the spending. Infrastructure spending is now 3.3% of the GDP versus 1.7% 10 years ago. Yeah. So that's kind of doubled, and I would want that to kind of continue. Because this time, what we are seeing on the infrastructure space is real, it's tangible, it's transformative. And I would want that to continue, because that would create more jobs, better manufacturing activity, it would improve efficiencies, and create jobs for both urban and rural households. So I clearly believe that infrastructure is the panacea right now for India to sustain a high level of growth, and that focus should continue.
So what is the number you're expecting? Because right at the start of this show, I said I would be happy with 12%. Stacey says 15-20%. So
on the infrastructure side?
On capex spend total.
I think it should be bare minimum 20%. I think 12% is not a bad number, but if you have to sustain the momentum, and I clearly believe that over the last few years, a lot of projects have been in a trial mode. And I think some of these projects have been hugely successful, and it's time for them to now further expand the scope of those projects and truly take them pan-India. And if that is to be done, it is going to require a lot of investments, and the government will have to be the Pied Piper or the anchor investor in most of these projects. And so to that extent, my view will be that I think it should at least be a 20%.
So a 10 lakh crore becoming more like 11.5 lakh crore kind of
Yeah, absolutely.
number.
I think,
12 lakh
Mahalakshmi,
crore
this is
kind of
one
number.
space where I probably think more the merrier.
No, that of course, but
No, in the sense that I wouldn't,
20%
no, I
growth.
wouldn't grudge it, because why I'm saying is because I think the multiplier effect of that spending is huge versus just kind of distributing money, okay, in the hands of individuals and households. Versus that, I clearly believe that this path of investing in infrastructure, I would not call it actually as a spending, but an investment in infrastructure, the payoffs of that are significantly larger. And that's why I probably think that I would want that number to be closer to 20% rather than 10%.
Absolutely, absolutely.
I would just want to ask him that because it's a really tight rope that we're going to have to walk. It's a interim budget. It's also coming ahead of an election. So there could be that chance of going towards that popular side. Yes. And you said you would rather have the FM put in money into the investment into infra rather than the welfare schemes. But there is another whole argument saying, that side also needs it the most. The rural economy is the one. So what would be that argument if there are measures taken to, push
and
that?
more importantly, to achieve a 20% growth on investment spend, and then, in an election year, with a fiscal glide path that, leads us to 4.5% year after next, isn't that going to be a challenge?
So I would think that, this administration, this government has not necessarily been very populist just because of an event. Okay, we saw it even during the COVID period.
Correct.
I mean, everybody in the world was just kind of throwing dollars in the hands of individuals, but this government actually didn't do this, and that actually has helped us to stage a much stronger recovery versus the rest of the world. So to that extent, I think the underlying DNA of the government or the thought process is very different. I don't think it does anything which is transient or ephemeral. It does this as basically more like a continuum. So there have been welfare schemes which have essentially been rolled out and executed extremely well. I think that is something which will continue. It's more a question of that the extra money that you do have, where do you allocate? And when you put that extra money into infrastructure, it doesn't mean it has to come at the cost of the welfare schemes. The welfare schemes continue. Putting more money in the hands of households is a good idea. But I clearly believe that if you have to essentially kind of stretch yourself, stretch it on the side of infrastructure. Number one. Number two is, even if you stretch right now on the welfare or the populism side, keep in mind elections are just 2 or 3 months away. It's not something which is like 12 months away. So no matter what you do for rest of the year, it may not entirely necessarily help you for elections apart from the announcement part of it. Whereas the infrastructure part of it is going to kind of will keep helping you throughout. So that's one. And two is, you right now have an economy which is vibrant. I mean, the GST collections are clearly a manifestation of the vibrancy of the economy. When your GST collections are growing north of 10%, you are going to receive a lot of capital flows from international markets because you're going to be part of bond indices. You've now become the second largest EM nation in terms of the MSCI allocations. And then third, post-elections, who knows, we might be up for a new round of divestment and privatization, which will give you a lot more money for spending or investment.
Right.
So to that extent, I think the stage is set.
So we'll come to the point on divestment, but before that, what will surprise markets, what will disappoint markets?
I don't know whether in this interim budget there's a room to do it, but really I think if the so-called double taxation on dividends, if that's done away with, it's wishful thinking for me as an investor.
Right.
And I would want this. Finally, it'd be good to leave more money in my hands. So I think that is something which I think will surprise if that happens, because I think this has been an annual kind of a request or a demand, so to say, or annual wish list.
Multiple times we have gone back and forth, previous regime, this regime, every 2 years.
Yes, so it's always part of our annual wish list.
Right.
So to that extent, expectations are low, but if it happens, I think that's going to be not just a surprise, but it essentially it will be an elation. Let me put it this way.
Right. On the contrary, would you expect the buyback tax arbitrage to go away? Will she address that? Because that is also something that has propelled buybacks in the last.
But I think
years, right?
what I don't think any incentive in favor of buyback should be withdrawn, because buybacks are a good thing. They essentially is a more capital efficient way of allocating capital. It shrinks the equity base, and if earnings keep growing, finally your earnings per share keeps growing, and therefore valuations tend to get better. So buybacks fundamentally or conceptually are more rewarding than dividends. So I don't think that you should plug the buyback route.
No,
and neither should you.
Think about it from the finance minister's point of view. From an investor's point of view, of course, buyback is a wonderful thing for companies, for promoters, for investing shareholders. But from their point of view, there is an arbitrage. There is an arbitrage between dividend taxation and buyback taxation. Is that something the finance minister, because if you see through and through, at least this finance minister has constantly been looking at arbitrage opportunities and trying to plug them. The dividend, debt fund arbitrage, the insurance arbitrage, all of it, like every year there is something that comes to plug an arbitrage.
So the way I would put it this way is that first of all, the tax on dividends itself can be construed to be double taxation. Okay. So I'm just saying if there's a case for removing that double taxation, where is the question of plugging the arbitrage between dividends and buyback? Okay. So I would honestly take it that way, and clearly I think there's a fundamental case for buybacks to be more attractive. So if this propels, and so if for example, if I were essentially part of the decision-making body on behalf of the government, not that I am, I would honestly put the case that way, saying, okay, fine, so don't pay out dividends, right, and keep doing buybacks. Please keep doing buybacks if that is more capital efficient.
That is also happening, right, automatically in the market.
Yes, so I think maybe it is the way of maybe the government or the administration nudging you, saying, please, if you think buybacks are more attractive, keep doing buybacks. We're not stopping you. The challenge is more for those companies which are already at, say, 72, 73, 74% ownership, which cannot do buyback because then they will be breaching the public shareholding norm.
Correct.
So that's where it is.
True. Okay, from today's perspective, what is it that you talked about 20% allocation to capital budget or capital spending? Obviously, the market has also been, very bullish on certain segments that, could get a greater allocation. Where do you think the spending will go? For example, railways has been, really rallying on expectations that railway budget will see the biggest expansion or allocation this year. Where would you put your money?
I think it's going to be railways and defense. These are the two big areas where I think the spending can go. The rest I probably think will be more of kind of BAU because there are several entities. So obviously power, energy sector calls for huge amount of investments, but then there are a lot of individual companies which are anyway doing that. So I think the focus of the government should be in terms of areas where there is really not so much of private sector participation and where it is totally contingent upon the government itself taking the lead. And so to my mind, it is going to be areas like railways, defense, maybe nuclear energy. There's already been a huge talk about solar power, solar rooftops above every household. I think these are some of the areas where bound to see significantly higher outlays, and that probably is the right thing to do.
Sure. Rohit, so today if you see sharp moves in any of these sectors, let's say all the buoyant sectors, railways, power, defense, all of this, will it be an opportunity to buy into strength? Will it be an opportunity to sell into weakness?
Well, it's always good to buy into weakness and sell into strength.
Yeah, that's from an investor perspective. But you said, buy into strength, continue to buy into strength, and don't bet on reversals.
Yes. So that what that really means is that the process is to focus on the strong sectors. It doesn't mean that you buy it at a higher and higher price. Of course, when we do position sizing, so now that takes us to a very, very technical thing that we do. Then we do execute adding positions to an existing one when it starts showing more strength. Okay, so now that is a different angle that, okay, I own an X amount of shares. It confirms to me by moving up that, yes, I'm right. So I add more to it because, well, I'm right, rather than buy something which is down and then hope that it's going to turn around. So that definitely is a strategy. But if you're freshly investing in a sector, then definitely your starting point should be good, which means it should be on the way down in a performing sector. When it pulls back is when you really make the entry.
Okay, so any disappointment today you're a buyer?
Yeah.
Okay, Nilesh, coming back to you, Paytm 20% down. What's your take?
No, I think clearly the business is challenged right now. This is a reality that all regulated businesses, while they continue to have a large opportunity to address in terms of business potential, but regulatory changes, regulatory actions always are a challenge or a risk for the business. I think the kind of circular which is out there is reasonably damning in terms of what Paytm can do or cannot do going forward, and it surely is going to put brakes on their business. And I think they'll have to really work hard to kind of resolve these observations and become compliant as soon as possible. Otherwise, it will be very damning because there is lots of competition out there, and if they essentially don't mend all of this, basically competition will kind of walk away with the business opportunity.
Yeah.
So I think it's going to take some time. I'm not entirely sure if this can just be resolved very soon. It is going to take weeks and months. They have been having these kind of challenges maybe over the last year or so. Probably this is the second or the third instance where they've had such regulatory action. So it's going to take a while, and it's going to take even a longer while for the investor confidence to come back.
Right. So this is a no-go zone
right now, yes, because right now it looks like a bottomless pit. Right now it looks like that.
Correct.
So and Alakshmi, these are growth stocks. So it's not about saying, okay, fine, I can't do additional business.
Yeah.
The challenge is if you don't grow, there is really no case for owning this.
Correct.
Okay, then because there are many other attractive opportunities in the overall gamut of financial services, lending, credit, payments. There are a whole bunch of businesses you can go out there and buy, which are way more attractive on optical valuation parameters. So you'd probably want to go there if there is no growth here. And right now, it's not just the growth which is going off, but who knows, even the existing core business is vulnerable and is at risk.
And how do you size up the entire, banking pack? Because this is, every year we see at least 2-3 instances of something, a very harsh step by the RBI. I mean, not the Paytm itself, it's not the first time, but you also had this kind of instance in Bajaj Finance. You saw this earlier in, several other cases. Is this escalating the kind of risk that we see also given the environment? Is there some heightened risk perception, or would you not read it to it like that? You would say this is very stock specific?
No, I think this is pretty much business as usual. I think the regulators will always want to be vigilant, okay, because our banking industry, our credit industry, or the overall financial services space has grown quite meaningfully over the last 5 to 10 years. I mean, this essentially is what, some 100-200 lakh crore kind of market. That cannot essentially just be dealt with the way you probably would have dealt in the past. Not that it was being dealt not in such a kind of a vigilant manner. It was always. But I think it just requires
it's only in the last 1 or 2 years that you've seen, for example, HDFC Bank credit card thing. In several cases, it's like you have lapses and you are stopped from doing business in that area or something like that. I mean, I don't recall that being the case, a lot.
So Mahalakshmi, I think it's also a case of the size and the scale at which you are operating. I think when the size is small or nascent, maybe you are okay to kind of let people learn, saying okay, fine, no problem. But when you really become so big and you're like kind of a systemic risk, I think it is the responsibility of the regulator to basically try and plug it or stop any of those non-compliant things at the earliest, unless it poses a massively significant systemic risk. So I think that's where probably the regulator is focused on, saying is that this cannot just go on. Somewhere the brakes have to be applied, and so to that extent, I think it's perfectly fine for the regulator to kind of really take a more kind of more aggressive stance.
Sure.
Right. Well, let's get waiting on those visuals to see the finance minister finally entering the Parliament building there, and we'll wait on those visuals. We've already done with the photo ops, so it's pretty much going to be this. But a quick market wrap also that we'll get where our markets and what they're currently doing. We did address the top gainers and losers there in trade. We are seeing Maruti Suzuki, Eicher Motor, pretty much M&M, Hero MotoCorp, all of your big names there from the auto pack. And here you're seeing the finance minister there entering Parliament with that Bahi Khata in her hand, with that tablet that holds the budget, Interim Budget 2024. She will be addressing the House at 11 a.m. But yeah, a lot of photo ops that happened before this, as tradition goes, with her whole team there in tow. This is, the final step, one would say, because she is there at the gates of Parliament there, from where she's going to then go in and address her 6th speech. This is for delivering a budget speech, but also the 11th one for the Modi regime as a whole. This one, Nirmala Sitharaman, changing those traditions, going paperless, and now going to be reading it from the tablet. We'll have to wait and see how long this speech will really take, because there have been different numbers that we go by, the longest one being, there, but Nirmala Sitharaman. This one being an interim one, we are hoping that it would perhaps be quite short and, maybe just all that we are hoping for and want to hear will be the ones that are going to be addressed there. But Mahalakshmi, we are perhaps going to, hear from her soon. She, of course, meets the cabinet first, and then we're going to hear her speech only at 11 a.m. But right now, if you're looking at the markets, the stage is set, we could say. What could, really change from here, or if you'd want something to change from here, what could be those factors?
Well, that is, we have to wait for the finance minister to utter the words, and that's what will set the tone for the market from here on. But Rohit, looking at the charts, again, any surprises in the first half an hour of trade?
So far, it's dull, open to close. Open to current prices. We've barely seen much of a movement. 30, 40 points. It's just roaming around there.
So on your charts, how do these oil marketing companies look? Tell me about some of the, government-regulated companies. HP, BP and all have been rallying quite a lot. Does chart tell you a story?
Yeah, they have been underperforming for, I think, the last 2 years. And when you start seeing fresh performance in a particular segment, it is a sign that something new is happening. It's very similar to what happened in the segment probably after 2014, where we actually saw it outperform, and then there was a long lull. So I think it looks like we have started another phase up for the OMCs, which might not be over and is likely to probably stay that way, for months, maybe even a year or two to come. So it will remain a focus area. Of course, you have to get the entry points right because it's already moved up. But I don't think the trend is really complete for the segment.
Sure. What is your take, Nilesh, on oil marketing companies? After a long time, it's come back. Now, crude seems to be not a cause for a change, not a cause of worry. People are expecting a slowdown, recession, this, that, and the other. And therefore, somehow the geopolitical risk seems to be, put behind. At least it is not top of mind, and it's not top of, or it's not dominating all conversations. Does that set the stage for a sustained bull run in oil marketing companies? Does something fundamentally change for you?
So I don't think there's anything fundamentally changed. It's just that there's obviously a huge positive sentiment for all PSU stocks, and clearly, obviously, they are a very important part of that basket. Two is that crude, of course, has kind of not spiked the way one probably would have thought in context of the geopolitical risks which are surrounding us. And so to that extent, again, it is kind of a relief. And third, optically, probably in the entire PSU pack, the valuations have been on the lower side. I don't exactly know, but they're probably in low single digits or mid single digits in terms of valuation.
Correct.
So clearly for the classic value investor, this would surely be a huge kind of attractive zone to be in. But I don't think anything has changed fundamentally because the challenge...
I'm asking this only because, at different points in time, if you look at history, every time crude stabilizes at a certain level and you don't have, significant under recoveries. There's reliance, the refining margins are rising, marketing margins are stable. That makes a case for privatization or stake sales, very real, at least for some time until oil comes and, spoils the party again. So, and this story has been playing out for last 20 years. Every time you have this conversation, then crude goes here and there. And the reality that, this cannot be left to private hands and government will have to intervene takes over, and then it doesn't happen. So this time, because, we all think that this is a reform-oriented government, will they be able to push through? Are we really closing in on that point? Because crude is getting settled at a certain level. Will that set the stage for ownership change?
No, I don't think so, Mahalakshmi. So far, it's not been. I think the last it was on the menu of privatization or divestment was way back in 2002, 2003, 2004 at the time of the first NDA government. So after that, it's never come back on that list, and very unlikely that it's going to be there. I think one can kind of get a sense of privatization only when, first of all, the retail prices themselves are decontrolled. Today, still, I think whatever, partly or substantially, the retail prices are still decided by the government. Okay, so these are still administered prices. So till that doesn't go away, I don't think there's a case for privatization. Number one. Number two, I still think that in the government's minds, probably this is still a strategic sector. This is not a sector which is not important to the economy or not important to the nation or not important to the common man. So I clearly think in that entire wish list or the prospective menu of privatization, this would still be way down below, not there at all for now. You still have many other sectors and many other companies which can first be privatized, rather than go down to the HPCL, BPCL. So I think if somebody is trying to kind of buy into them, hoping that there would be privatization, I think one should not be basing the premise on that. Unless, post-May, there's a complete change in the thought process and we are in for a huge surprise, then that's a different matter. But the way I see things today, I don't think these are yet on the menu of privatization or divestment.
So this is purely a buy cheap, sell cheap kind of stock?
Yeah, I don't know about the sell cheap part of it, because that you'll only have to ask the guys who's buying it cheap. But yeah, but buy cheap for sure, and at least waiting for the prices to go up significantly, so that at least the seller in his mind thinks it's a fair price and not a cheap price. Nobody sells when he thinks the price is cheap. He always sells when he thinks the price is either fair or more than fair. So yeah.
Yeah. Okay. Cool.
Well, it is just 1 hour to go for that budget announcement to come. So we have a whole big host of panelists, big voices that you're going to hear right here on Money Control. But a quick market recap for you all. The Sensex and Nifty, both of them now trading slightly in the green, whereas the Bank Nifty and the mid-cap index, those ones have turned a bit in the negative at this hour. But we still have an hour to go before the Finance Minister reads out that budget. And we'll be getting you a whole host of big voices there for you coming up next. We have right from market veterans, economists, political analysts, all of them lined up for you on the shows ahead. So do stay tuned right here on Money Control, because that's where you're going to get all the big voices. On 1st of Feb 2024, Finance Minister Nirmala Sitharaman will present the Modi government's 11th budget, this including the interim budget in 2019 being an election year. And through these years, 3 finance ministers have presented the budget, including the late Arun Jaitley, Piyush Goyal, and this being the 6th one for Nirmala Sitharaman. Let's take you through some of those highlights and big changes that came into being in these budgets so far. The first thought that comes to anyone's mind when one refers to the budget are the personal income tax rates. In 2020, the government decided to introduce the new tax structure that slashed income tax rates and reshuffle the income tax slabs.
In order to provide significant relief to the individual taxpayers and to simplify the income tax law, I propose to bring a new simplified personal income tax regime wherein income tax rates will be significantly reduced for the individual taxpayers who forego certain deductions and exemptions.
These slabs were revised once again in 2023 and 24's budget, making the new tax regime the default one, but also giving taxpayers the choice to choose between the new and the old. As of today, the rates under the new tax regime are absolutely no tax for income up to 3 lakh rupees. Income above 3 lakh and up to 5 lakh will be taxed at about 5%. For income above 6 lakhs to 9 lakhs, the income tax slab is applicable at 10%. And for income more than 12 lakhs and up to 15 lakhs, the income tax is at 20%. And for all those who have taxable income above 15 lakhs, it is a 30% income tax rate that is applicable. Now, taxpayers are always looking for more exemptions and avenues to cut down on paying their income tax. In the first budget after coming to power in 2014, the Modi government wanted to encourage more people to park their savings and hard-earned money within the banking system. And they went on to raise the annual investment limit under Section 80C from 50,000 rupees to 1.5 lakh rupees. Now, Section 80C is the most popular and favourite section among taxpayers, as it allows them to reduce their taxable income by making some tax-saving investments or incurring eligible expenses. These include investments in provident funds, payment made towards insurance premiums, as well as equity-linked saving schemes, and even if you have a principal sum on your home loan. Hopes are high that in budget of 2024, it will raise this limit to about 2 lakh rupees or further include more instruments under these exemptions. Well, that was the part on direct tax. Let's look at the big reforms that we saw in the indirect tax segment with the introduction of the Goods and Service Tax or GST in 2017.
We are in the process of making history with the launch of the Goods and Services Tax. At the midnight hour, we will be launching one of India's biggest and most ambitious tax and economic reforms in history. The GST may be a destination tax, but for India, it will begin altogether a new journey.
With its motto, One Nation, One Market, One Tax, GST aims to bring unity and benefits for all stakeholders by consolidating those multiple tax laws into one single system. And in the 6 years of its being, it has reshaped the economy, pushed for digitization, while also reduced the number of frauds. The GST Council has managed to fit over 1,300 goods and 500 services under the 4 tax slabs, which is of 5%, 12%, 18% and 28% under the GST. The tax base has more than doubled since the implementation in 2017, and the monthly GST mop-up in December was close to 1.65 lakh crore rupees. The council members regularly meet on rate rationalization exercises as well as in extending the scope of GST to bring in more businesses under the reform. Lastly, let's look at the Insolvency and Bankruptcy Code or IBC that was brought in 2015 by then Finance Minister Arun Jaitley and passed in Parliament in 2016. The IBC was brought in to strengthen corporate insolvency law and also set the ground for timeframes to resolve these corporate insolvencies. As per data from the Insolvency Bankruptcy Board of India, IBC has rescued 2,622 companies, 720 through resolution plans, 1,005 through appeals and reviews as well as settlements, and 897 through the withdrawal plans. This up until June of 2023. However, the falling recovery rates and the increase in resolution time has dented IBC's success. Finance Minister Nirmala Sitharaman will be presenting the interim budget on February 1st, and we will see her carry that iconic red Bahi Khata which carries an iPad with the budget 2024. Now, from a shabby Gladstone briefcase which carried the budget papers to the transformation into the digital era and the tradition of carrying and showing the budget in that red case goes way back in ages. So have you ever wondered where this tradition really came from? Well, we have you covered. In this video, we will tell you about the journey of the budget papers from the traditional red.
Well, hello and welcome back to this live stream where we are getting you an extensive coverage on the budget, counting down to the Finance Minister's speech. Just about an hour left for the 6th budget speech from FM Sitharaman. And of course, remember, it's an interim budget, therefore no big bang announcements expected this time around. But nevertheless, the government is expected to focus on measures that will help India continue on its growth path towards the $5 trillion economy. At the same time, thrust on social welfare schemes may be high on the agenda. Well, the key to watch out for will be how the government really strikes a balance between fiscal responsibility as well as populist measures. Well, markets are really torn between a balanced budget or a go out and spend budget. If you look at the markets, well, they have started on a positive note, not doing much, but we are defying global cues, and the Nifty above that 21,750 mark, around that 21,800 1,800 mark at the current juncture. Bank Nifty in the red, whereas mid-cap index also trading with losses this morning. But of course, I'm joining in Mahalakshmi, who's already been there with you guys. But ML, you've been speaking to a battery of experts, right? Till now, what is the sense you're getting, in terms of the big numbers to watch out for? For fiscal deficit, 5.3 to 5.5%, is this the consensus? Is this the sense you're getting that the government may roll out? Given the fact that you have spoken to a battery of experts already.
Yeah. So based on all the conversation that we have had since morning, also the brokerage, estimates of the street, a 10.5% number on the nominal GDP and about 5.3, 5.4 on the fiscal deficit. And about 15 to 20%, Nilesh Shah from Envision said he was expecting a 20% growth in capital expenditure.
Okay.
But that's a number you have to really watch. I mean, is it going to be, I would be happy with that 12%. A lot of people may be disappointed, but 15 to 20% it is. That is what the general expectation is. If you are able to do something with 15 to 20% capex budget, a 10.5% nominal GDP growth and a fiscal deficit target of 5.3, 5.4, I think the markets should be happy, unless there is, some other negative surprise in the form of taxes or, a securities transaction tax. People have been, SEBI has been concerned about, the volume of transactions that's happening on the derivative side. If there is something that has changed there, then you could see a knee-jerk reaction in the markets. But by and by, I don't think we are expecting too much from this budget. As long as the path is clear that capex spending government will continue to do, and some populist measures, if they are steered in a way that makes it look like we are going to perk up consumption for this year, which also a key concern for stock markets also, that rural consumption is not picking up, the markets will take to it positively.
All right, that's the view then. Of course, that's the sense ML is getting from all the guests that we have spoken to already. But let's also bring on board, our next set of guests. Joining me is Madan Sabnavis, who's the Chief Economist at Bank of Baroda, as well as Andrew Holland, who's the CEO at Avendus Capital Public Markets Alternate Strategies, joining in this morning. Madan, great to have you on the show. Let me come to you first. How tricky would you say it would be for the government to balance out, a populist or a fiscally prudent budget? Do you think, it will be tricky for government to dole out populist measures, without straying away from the fiscal glide path?
Yeah, actually, I think the critical element will be what will be the overall size of the budget. Okay, because last year we had 45 lakh crores. Prior to that, we had 39 lakh crores. So to my mind, in case the government is targeting something like 50 lakh crores, that is a 10% increase over last year's total outlay, I think it will be possible to balance all the things which you have been talking about, that is the capital expenditure, social welfare, as well as going along the path of fiscal prudence and reaching that number of 5.4%. So I think the critical element will be that 50 lakh crores, because if I'm going to increase my budget by 5 lakh crores, I can do all the allocations. In fact, we are also looking at capex being something like 11.5 lakh crores. So I'm increasing it around 15%. And you can also keep following the trend growth rate and things like NREGA, the PM Kisan, the rural housing, I think water, the Jal program. So I think all these programs can be accommodated in case you have this much of space. So the size of the budget, to my mind, is very important. Because we have seen on the revenue side, tax revenues have been fairly buoyant, and we can expect similar things happening in this year too.
So, Madan, are there any pressure points that you see in the economy at this point in time, whether it is subsidies or inflation or the current account balance, anything that will make the finance minister spring up a negative surprise?
No, actually, I think the two concerns which I have, they are concerns which were there in 2019 before the pandemic also, was private sector investment as well as consumption. So we keep getting differential pictures at different points of times, and we jump to certain conclusions saying private investment has revived. But the fact is that it's not broad-based. Private sector investment has been concentrated in infrastructure-related sectors. If you look at the consumer-oriented industries, I don't see too much of investment taking place. If you look at the commentaries of these companies in their quarterly results, I think you get the same kind of picture. In terms of consumption, I think there's a case of saying jobs have not been created in the right way. Getting more Swiggy delivery boys, getting more construction workers doesn't really push up consumption to a significant extent. So we need to have meaningful jobs which are created. And to my mind, this is not within the realm of the budget. The budget cannot do anything. It's a statement of account of the government. It has to come from the private sector. It's a slowly evolving process. So what the government has done is giving direct benefits to make sure that people are able to live. Maybe you have a more decent living in terms of getting food, access to health, water, housing, so on and so forth. But finally, it's a private sector which has to click to make sure that we create these kind of jobs.
So, sure, we also have Andrew Holland from Avendus Capital. Andrew, good morning. Any specific measures, Andrew, you expect in this budget that could cheer the markets? Any specific opportunities, any specific pocket of stocks, and what measures do you expect in this budget that could sort of bring some cheer?
Yeah, well, actually, I heard what your consensus is, and I'm not going to go too far away from what you've been saying. Capital expenditure up by 10%. I think the key for the government in this budget is what I've been boring to keep saying, it's the continuity. But if that coincides with a private capex pickup, which we still really got to see across many different industries, that's really the key for the kind of the multiplier effect across the economy to really kick in the second half of 2024. And that would be aided by two other things, which are outside of the budget. One is obviously the interest rate cycle globally is going to start heading downwards. We heard from the Federal Reserve yesterday. It's not a matter of when, it's if, it's when. And secondly, with the bond, with India being included in the bond indices, we're going to see a whole lot of inflows into the bond markets, which I think, again, will push down yields here. And that could be the extra kicker that private companies need to start their capex cycle as well. So if it's a combination of government capex, but also seeing that the private capex by companies is starting to pick up, I think that's what the economy will need to get the extra push and to really kind of justify the valuations we're seeing in the markets at the moment. So no doubt, railways, defence, renewables, all going to see some money. Will they move towards extending the PLI to other industries? That would be interesting to see. And I think the other part would be, any move towards kind of increasing exposure to affordable housing. We've seen the top end of the market move. I think we need to see the kind of lower end as well start to kind of pick up a little bit more from where we are today.
Right. Coming to Madan then, Madan, we also had the bond inclusion, in the JP Morgan index this year. So we are looking at a gush of liquidity in the bond market, inflows in excess of $20 billion expected. So can the market, in that sense, stomach a higher borrowing figure? Can it take a higher borrowing figure in its stride?
No, I think it's a very good thing for us, because if we're going to see this quantum of money coming in, I think currently, if you look at the banking system, you look at the liquidity problem, which is there, we are in a deficit. It's primarily a case of saying that our deposits are not growing, credit is growing, investments are growing, that is investments in government securities. But tomorrow, if we have a situation where there is substantial amount of FPI interest which is shown in government securities, and the load which is there on banks will definitely come down. And I think this will be a positive way, purely from the point of view of the banking sector, that we will have less of these deficit issues, because the government securities, the government borrowing program can be partly financed by the FPI investment which is coming through. So I think that is the positive sign which I see. Besides, on the current on your capital account, you're seeing more dollars coming in, and the rupee stabilizing to a very large extent. In fact, there could be pressures of the rupee appreciating rather than depreciating in the next year. So the RBI will be quite busy buying up dollars rather than supplying dollars. So on the whole, I think that's going to be something which is very positive, both for the banking sector as well as for the external account of the country.
So, Madan, one question, you talked about private consumption, and private consumption has actually been the weakest part of the, GDP. And the other thing we keep talking about is private capex not picking up to the degree that you would want to see. Now, the two things are linked, right? I mean, private consumption is not picking up, and that is one of the reasons, one of the reasons why private entrepreneurs or businesses are not willing to add capacities. Probably there is no confidence that aggregate demand will go up substantially for them to sort of, take that leap of faith. Also with, global uncertainty and US recession not being completely ruled out. So will it not be imperative would you think it will be imperative for the government to do something about consumption substantially in this budget to ensure that, we fasten this process of fix consumption so that private capex can, start to roll out as well?
No, I think we all would like the government to do something, but I think the ideology of the government in the last 5 years, at least the second tenure of the Indian government, has lived too much on the income tax front. So one thing is to say that if you lower the income tax rates further, there will be a case of additional income which is available with people for spending. But if you actually see the kind of cumulative inflation we have had in the last 4 or 5 years, it's been quite substantial. And even the kind of, if you look at the kind of tax cuts or the tax advantages one has if you shift over to the new income tax scheme, it really doesn't compensate for the higher inflation. And the government cannot give more because then your revenue starts getting affected. So today we have a situation where your tax revenue, both the direct as well as indirect taxes, have been very buoyant. Even though the economy has been growing in the region of around 7%, we did have times when the economy grew at 8 to 9%. But now we're talking of lower growth, higher incomes, more buoyancy has come in, probably because of better collections. But I think the government will not be in a position to actually give away more. So if you see the kind of things that the government is doing, okay, you're increasing the PM Kisan scheme. Instead of 6,000, you give 7,000. Will that actually make a difference to consumption? The answer is probably not, because it's something which has not kept pace with inflation. We need to bring down that CPI inflation. And we should remember, even when we say that inflation is coming down, prices are still going up. So if you look at the last 3 years, cumulatively 25% inflation. So actually my real income has come down by 25%. So therefore we are seeing that people at the higher income groups are spending. But when it comes to the middle class, it comes to the lower income groups, we're not seeing the same kind of thing. So I don't think the government can do anything given the constraints which you have in terms of the commitment on your expenditures and the limited buoyancy which you're going to see in future in terms of tax revenue.
Fair enough. Andrew, do you see any specific measures related to real estate or housing? Because that has really been a very buoyant part of growth. And, real estate also has a high multiplier effect on the economy. So it makes sense, at least theoretically, you can make a case for, some boost to the real estate sector that can have, a multiplier effect on the growth.
Actually, before I answer that, I beg to differ on this consumption story. I think it's more company specific that it is, people not spending money. And I think, if you look at the companies which are doing well, it's all because of, premiumization within the industry. And you've seen that, and something I talked about to you before, beverages. I mean, just look across, alcohol and non-alcoholic. It's those companies which are geared towards that, move up the premium brands, which are benefiting the most. And whenever you get to a per capita GDP of $2,500, then people's spending patterns start changing, and that's why when you first asked me about hospitality, it's going to be an area which is going to continue to grow and grow over the years. So in that respect, I'm a little different in terms of the consumption. Yeah, I mean the government could reduce personal tax, and that would help at the fringes. But what I think they probably need to concentrate a little bit more is getting the rural economy just moving slightly ahead. And affordable housing could be something that I think the government would look at, because as you rightly say, it shouldn't be the top end of the market. It's got to be towards the bottom end of the market. Get affordable housing going. It'll get increased jobs. It will increase spending at the lower levels, and everyone will start to move up the curve in terms of their spending going forward. So I think that's probably the thrust that I would expect to see from the government, is put it into something which will have a multiplier effect across many different industries, not just one.
Madan, do you see any possibility for the finance minister to actually increase the interest deduction on on home loans? Because that is one trip that today you see prices, especially in residential, you clearly see that there is demand only at the luxury end. Affordable is just not happening. And that is because the fundamental equation in terms of affordability is not really at levels that can create a huge boom like we saw from 2003 onwards, where the EMI versus rental equation was so attractive that it made a lot of sense for a lot of people to go out and buy take those home loans, save on taxes and build homes. Is there a case to do that? Is there room for government to do something like that, a substantial increase in interest deductions?
Yeah, there is definitely room for increasing the tax deduction on account of the interest you pay on a home. But I don't think it's even if it happens, it's not going to be to a very large extent. I mean, giving another 50,000 rupees is something which could definitely help. But I still do believe that when a person buys a house, you buy a house because you require a house. And it's not primarily on account of the tax benefit which you're getting. Tax benefit definitely helps. All of us are better off in case we are able to save a little bit on tax on account of the interest which is tax deductible. But that may not be a motivating factor. I say this because what we have seen in the banking sector is that even though the interest rates on mortgages have actually gone up, we haven't really seen any kind of a slowdown in credit, which means that people borrow money because you want a house, not because the interest rate is high or low, because you generally believe that maybe in your span of 15, 20 years, interest rates will go up certain times, come down certain times, so it all evens out in course of time, so therefore it happens. Now, this said, on affordable housing, I have a different view. I'll just quickly come to this. When we talk to some of the real estate guys who are into this particular business, they say that it's no longer as feasible as what it was earlier, because you have these constraints on what could be the cost of a unit. The cost of inputs have gone up, and it becomes a bit more challenging for them to meet this commitment on affordable housing.
No, the question I was about to ask you is, Madan, people do evaluate, the differential between rent and what is your outgo, right? I mean, if that differential is huge, I mean, it makes no sense for you to go and buy a house. And now, of course, rentals have started going up in the last 1 or 2 years in cities like Bangalore and Bombay, etc. Rentals have really gone up. So that differential has come down somewhat. But if that equation really changes, then obviously there will be a lot of people who don't have their first homes. For the case will be much stronger for that populace to really move over to start buying residentials. Right now, you don't see that demand, because all the demand that we see in real estate is really coming out of, people buying real estate as an investment.
No, I agree. There are all kinds. I agree. There are all kinds of people. But normally, when you're buying a house, you want to buy an asset. So if I want to buy an asset, the interest which you're going to save in terms of tax, which anyway is not going to be that substantial. So you just think of me, I'm putting 1 crore rupees in buying a house. Will another 50,000 interest which I'm paying, which probably, let's put a 30% tax rate, of 15,000 per annum, which is around 1,200 a month, will it actually make a substantial difference to my decision on buying a house? I think that's the issue which I was placing before you.
Okay, fair enough. So you don't expect anything related to housing real estate in this budget, do you?
It could be a tokenism. There could be something done, but it's not something which is going to create an upsurge as far as the real estate industry is concerned.
Sure.
Coming to Andrew now. Andrew, in terms of PSU banking rally, the smaller ones especially have run up quite a bit. And recently there was chatter about, a merger of some smaller banks, which of course was denied by the government, right? But do you expect the government to lay down some kind of a roadmap for PSU bank mergers going forward in this budget? Or do you think that could come only in the full year budget?
I don't think it's going to come in this budget. I think it would, if it's going to come, it's going to come in the kind of July budget after the elections. I don't see how that really helps, set the pace for the economy in terms of what the market's wanting. So yeah, for that subsector of the market, it would be obviously interesting news and positive news seen by the market, but I don't think it's a statement that the government should be would be making at this point. I would have thought the finance minister would probably concentrate on the kind of where they think the divestment might be going in the years ahead, because obviously that's with the markets where they are, that would be another revenue contributor to their coffers and give them extra abilities to spend that money as well.
So on the disinvestment target itself, Andrew, what is your take? What kind of number are you expecting? Because from a stock market point of view, there is a case to be made that, stock prices are so elevated that it makes a lot of sense for the government to cash in on this. I mean, even if they were to do stake sales via the market, this is a fairly good value that you can get out of the market itself. Do you see that number going up?
I don't think it can go down from where it is, actually. I mean, they've really not done that much, to be honest. So if they could really set a feasible target and actually match it, I think the market would be happy with that. As I said, I think, and you rightly said, the markets are giving them a great opportunity to make some divestments without having to kind of sell out so cheaply with a large stake. They can do it over time. And again, it would give us extra kind of revenues to take care of the fiscal deficit too.
Madan, what is your expectation on disinvestment? What kind of number would you look at? Will the finance minister take this opportunity?
See, we haven't really been too successful when it comes to disinvestment because I think all the low-hanging fruits have already been plucked. And there's a lot of ideology which comes in the way. I've always looked at disinvestment as a kind of a balancing item. Because when we never really reach the target, that's when you put it. But I think today the government can be a bit more confident in terms of their revenue flows, in terms of the fiscal deficit number. So I have a feeling that it'll probably get a bit moderated because we should remember next year, if at all there's going to be any kind of intensive disinvestment, it's going to happen only after July or so when a new government is in place. So it could be slightly lower, but not more than what was targeted last year at 60,000 crores.
Andrew, will that be a bit of a disappointment? I mean, if at all we see a high disinvestment number, because one of the concerns with all these PSUs, last time around from 2016 onwards, when they were selling stakes down the ETF route, there was a lot of value destroyed in PSUs, right? So fresh supply of paper is essentially cutting down excess stakes and bringing them down even to 51%. Will that supply create some kind of an overhang? Will that be a negative for markets?
Well, given our expectation, let me put it slightly differently. We're expecting the market to rise in line with earnings growth, which is about 15% this year. Now, if you take all the noises coming from foreign investors, foreign direct investment companies, this will be lapped up. I mean, why wouldn't you want to be one of the fastest growing economies in the world? Yeah, valuations might be challenging, but if you're taking a more than a 1 year view, then these are companies which the markets would want to be involved in, whether it's from defence to railways and so forth. So I mean, I just don't see 60,000 crores is really a big challenge, or shouldn't be a big challenge in these markets. I mean, you're seeing IPOs raising that much money, just 4 or 5 of them in terms of oversubscription. So I don't think they have to dilute at lower prices, or the pressure of stock coming to the market would have a hindrance on the PSUs as an overall basket.
Right, Andrew, we've seen a big sell-off when it comes to the FI community, right? Somewhere around 27,000 crore rupees worth of outflows. But going forward, do you see a reversal in trend, or would you say that the sell-off will continue, especially since the Fed has indicated that early rate cuts are really off the table at the current juncture? So what are your thoughts when it comes to the FI flows, and how is the scenario looking like right now?
See, I think we're suffering from a couple of problems here. One is China. And, if you take a view that, China is going to continue to have its woes, then emerging market funds are seeing redemptions. And so as an emerging market manager, your highest valued market is India and your lowest market value is China. So you're bound to take some money off the table in terms of flows from India. And that's what we've been seeing whenever there's a problem in China. Now, reverse that, let's say China does some stimulus, not just on interest rates, but something to prop up the property market and give confidence to investors and buyers of property in China. Then again, that would probably see more flows going to China in the short term. But the good news would be that flows to emerging markets would come in and India would get their portion of those funds. So that's what I see. I think we'll see, anywhere between $25 to $30 billion of inflows this year by FII funds. Add 30 billion from bonds. You're getting to a large inflow of liquidity into both the bond and equity markets over the next calendar year at least.
Andrew, one last question on Paytm. What's your take? My previous guest said it's a bottomless pit. What's your take?
I can't really comment on individual stocks, Mahalakshmi, but what I would say is this, is that we've seen one side of the equation, and there's a conference call this afternoon at 3:30, I believe. So let's hear the other side and see what action would be taken before drawing to any conclusions of it being a bottomless pit.
Sure. All right. On that note, let's also bring on board, Sushil Kedia, who's the founder of Kedianomics. Great to have you on the show, Sushil. Before we come to what your expectations from the budget are really, I want to get in your thoughts on Paytm as well. Again, the fact that the RBI has come down heavily on Paytm Payments Bank, and of course, the management has also issued some clarifications, and they will be having a conference call later in the day. But what are your thoughts? Where is it headed?
I think Paytm will hit newer and newer lows, and there's no investment case here. There's no trading pattern except that it's a slam dunk sell, but it's going to move circuit to circuit. So those who are stuck, may God save them.
Bye.
All right. On that note, Sushil, let's first get in your expectations from the budget. Talking sector specific at the current juncture, railway stocks, they've already run up quite a bit. Today also they are buoyant ahead of the FM speech. Do you think much of the good news is already in the price, even if they, announce a higher capex figure, higher than what the markets are estimating? Do you think the good news is already in the price, or do you see, some bit of room for, upside from here onwards?
See, the speed with which things are going to move here on all the railway charts. So if any further good news comes, I would expect a climactic move of a couple of days. It's not a time to get into them. Those who have it, they should look for exits if good news comes on any further climactic 10-15% surge up. And if nothing more comes, the sell-off can be very severe in them.
All right.
So good morning, Sushil. So you're saying that markets are poised in a way that, it's time to sell on spikes.
Sorry, I never said that about the whole market. We were talking only the railway stocks.
Oh, okay.
I never said that about the whole market.
I'm sorry, my bad.
No worries. So what would you do with an HDFC Bank now, given the fact that, of course, we've seen a very significant sell-off come in on the stock price after the earnings? Would you, be a contra, would you give a contra call and, perhaps advise investors to look at that stock? Or would you say that, right now, it doesn't really make a case for investments?
See, for last 2 years, HDFC Bank, even my local Panwala bought for a 10-year view. So, the investment thesis of HDFC Bank, the superlative returns it created over 20 years, that's over. Last 2 years, it's been in a trading band. We hit an interim lower level within an interim band within the band. So, some kind of a trading respite at most. The 100 rupee odd slider up with the LIC stake coming in and, the extreme oversold status is at most. What becomes too popular is no longer a great investment destination. That is playing out in HDFC. So for the investors, I would say there are many better stocks in which you will make substantially more returns over the next 1 year. HDFC is not an investment case. It's a trader's delight trading inside a band. And from the lower band, we'll go up maybe another 100, 150 rupees.
Right. What are your thoughts about pharma stocks? I mean, just stepping aside, from budget discussions, but pharma as a pocket has seen a good run. Of course, numbers have been pretty healthy as well. Dr. Reddy's and Sun Pharma, these are the two, large cap stocks that have been doing well, right? So here on, would you say that, the pharma would emerge as a dark horse going forward?
See, we've been maintaining a view for a while where Sun Pharma and Dr. Reddy are getting very close to forming a long-term top. Those two very large stocks within pharma are behaving differently. But there are a number of mid-cap and smaller stocks which have been multi-baggers in the last 6 months. And I think, the sizzle in them will continue. So what is contrary to common sense is what market will often choose to do. And when common sense will be justified, by that time the move would be over. So say if we identify a the Strides Pharma, to be a 5-bagger, and it's moved 3 times from the levels we entered in 6 months ago, and we still expect it to go up a few hundred rupees. or a Biocon when it was extremely unpopular below 200 and we grabbed it with both hands for a move to 500. It's been trading right in a good trend, and I expect the next move to be a 100 rupee further jump up on Biocon. Or say you might even have a Glenmark, sliding up by 20% more. So the juice is still left in the smaller pharma names, and the traders' punters' delight is where the Sun and Dr. Reddy are. And we tend to move and classify stocks with the frameworks we use a little early. So we are avoiding doing any buy trades on Sun Pharma and Dr. Reddy's. Whenever we'll get sell signals in them, we'll trade them on the short side. We'll skip the buy trades on them because capital and mental bandwidth are limited. The capital I would put on a Sun Pharma or Dr. Reddy, I'll make much more and more peaceful returns playing a Laurus or a Biocon or a Star Pharma.
Sushil, on overall markets, what is your view? And what will you take away from markets, or what are you looking at in markets today in terms of parameters, specific stocks to take you on what could be the next leg like?
See, the FMCG stocks like in Asian Paints, Lever, or to an extent even Colgate will keep on, I think, they will make reversals and start going up more. A stock like Bata, consumption stock Bata. So these are the stocks on which, we are noticing patterns for some sustainable moves up. Or say even a tractor-driven company like in M&M, we gave a big buy call on that yesterday. That's headed towards a new high within the auto pack. Say if Tata Motors is in a totally ecstatic trend it has. So any pullback of 50 rupees comes, we'll still play it for 1,000. The large banks, the private ones are deeply oversold, and whether the budget offers anything or not, for the market momentum, the indices momentum to sustain, the private bank index I think will slide up a lot. And while the public is badly positioned on very, very heavy bullishness on PSU banks, like the PSUs that have gone into almost a climactic kind of run-up. So the PSU banks is what we are advising our clients to get out of and take only a trading view of 15 to 20% move up on the smaller private banks and maybe a 10% on ICICI and Kotak types. So, pretty much the market itself is not really positioned to expect too much from this budget. It's a vote on account. But who knows? The grandiosity with which this government has been achieving on all frontiers in the last couple of years, while Nirmala ji may have said, expect no spectacular announcements. For her, it may be, a matter of aesthetics of not granting doles to 200 sectors as happens usually in budgets, but a sweeping one statement like the relaxation of the double dividend taxation or anything relating to capital markets would easily take us towards 23,000. And 23,000 from current levels is only 7-8% move. So within which, the smaller stocks, say like a pack of chemical stocks, say a Navin Fluorine, it's a high beta stock. It can easily jostle up 20% with that kind of a thing happening. So the expectations from the budget are low, this given a vote on account, and the structure of the market is positioned in a way that with this deep drop back to 21,180, the market is positioned lightly. So post-budget at 22,400 or 22,500, and then with some correction, eventually 23,000 is possible.
Sushil, with respect to defense and power, how do you size up these opportunities? These also have run up quite a bit. Are they also in a climatic state, like you said? You talked about PSU. You talked about PSU. Some of the PSU stocks hitting a climax.
Right. So yes, in that sense, most of the defense stocks, the so-called AI stocks, the drone stocks, the hype is done. So selectively within these sectors, one or two picks may be there. Like say today, even MTAR Tech is still very weak today. We've been expecting a reversal on that. It's pressed down even further. We are not giving up. And maybe in a couple of days, a reversal comes in MTAR Tech. Then for your audience, if they see the price in MTAR Tech above 2130, That's when they should take that a firm reversal has happened, 100 rupee, 5% move up. After that, a reversal may be there. So very selective, one or two opportunities in these sectors. And yes, pretty much they are all run up. So, in terms of post-budget market behavior, dal chawal ka bazaar, Reliance going up, Adani going up, Lever and Asian Paints going up, straightforward, simple, good old investing. These stocks go up 10, 12%, index goes to 23,000 and pretty much distributed across the board. All the hype stocks also perk up. But that's where investors need to take exit out of these hypes.
You would say the same thing for power stocks as well?
Most of them.
Sushil, coming to, the government's green push, right? A transition towards green energy. Where do you see a sizable opportunity when it comes to the entire EV as well as renewable energy basket?
See, this whole EV thing, I may be completely wrong. My own personal thesis is hydrogen-enabled cars will be a reality sooner than anybody expects. In fact, 2 days ago only, BMW announced they've cracked the code. So the EV may turn out to be a very high expectation sector, which is already overvalued, and it may perish before we see its true rise. So I would be skeptical right now here and not go by extremely popular opinion.
Sanjay?
In the auto sector are going to be multi-layered. So the overvalued hypes that exist in EV, and one day you might wake up to find out that EV is no longer a viable business. So I'm going to avoid anything that has got a lot of hype.
All right, that's the view then. With that, Sushil, I'm afraid we're running out of time. Thanks a lot for taking out time and joining in. We'll, of course, be touching base with you post the budget speech as well. But, on that note, of course, just about, 14 minutes to go for the budget speech by the finance minister. Of course, the big question, whether or not the government will go all out to woo the rural population, or will the focus be on youth, women, farmers and poor in the run-up to the general elections? But on that note, let's cut across to our political desk where my colleague Shweta Punj is waiting with a guest who will be giving us his perspective as to what to expect from the budget this time around. Shweta, over to you.
Yes, thank you. Thank you so much for that. Yes, absolutely. 14 minutes to go before Finance Minister Nirmala Sitharaman presents the vote on account. Typically, a vote on account is just a statement of accounts on government's expenditure and government spending. But going by this government's track record, we've seen that in 2019, Mr. Piyush Goyal, when he presented the budget, there was something for everyone in it, whether it was the middle class or the farmers or the manufacturing sector. Let me go across now to Sanjay Kumar. Mr. Kumar is a sophologist and he has studied voting pattern behavior. Mr. Kumar, just to get a sense from you, there's so much excitement and a buzz around this budget. We heard the Prime Minister say yesterday that this budget will present an intent of the government. What is your sense that Modinomics 3.0, is this the budget that the government will use to put out a message for the 2024 elections?
Shweta, we all know that elections are just less than 100 days away, and this is a vote on account, and government would try and send out a different sections of voters, but also send out or make an announcement for the promises. So I'm sure this is what is going to happen in this budget. Let us see. We need to wait for another 15 minutes to really figure out what goes on. But I think that's my expectation that first, for especially women, especially youth, and they would also try and...
Right. We are having some trouble with Sanjayji's connection over there. But as he was saying that this budget comes after the BJP is on a clear high. In the 2019 elections, when the budget was presented, it was after the BJP had lost 3 state elections. But that's not the case this time around. This budget is being presented at a time when there is a lot of sense of euphoria, be it around the Ram temple or be it around the macro numbers of the economy, whether it is India looking at 7% growth at a time when globally economies are straddling between 2 to 3 to 4% growth. So that again is a very optimistic number. We have been India is in a sweet spot. That's been that's been spoken about and that's been discussed for a while now. So overarchingly speaking, and from whatever we are picking up from experts, is that this is the budget where Prime Minister Modi will set a vision for his government going forward. It will also be a budget where he reaches out directly to first-time voters and youth. We have to remember that in the economic note that was put out by the Finance Ministry few days ago, one of the big concerns that was highlighted in that note was the quality of employment, jobs. Now we have to remember that when Prime Minister Modi made a bid to come into power 10 years ago, he had promised jobs, and for various factors we find that in terms of supply and demand, where jobs are concerned, India has not been able to deliver as per expectations. Let me come across to you, Sanjay ji, again. Hopefully the network would be better this time. In the state elections that were held recently, or if you were to go back to the last 2019 job election, what were the key issues that dominated voting behavior at that time?
Oh, yeah, Shweta, if you recollect the 5 state assembly elections, I can hear you. If you look at the 5 state assembly elections, one, definitely BJP was in power in Madhya Pradesh. Only one state out of the 5 states which went to poll. Definitely in the achievements of the government during last 5 years, especially welfare schemes rolled out by the BJP government in Madhya Pradesh, especially meant for women. So that was one highlight of the election campaign. But more than that, the strategy of BJP was to contest election or highlight the achievement of the central government. And you would recollect that the BJP contested the state assembly elections in the name of, or with the face of Prime Minister Nirmala Modi. So the idea was, because BJP was not the ruling party in Chhattisgarh, neither was the ruling party in Rajasthan nor in Telangana. So they wanted to first, the twofold strategy, criticize the government which was in power, led by Congress and led by the BRS in Telangana, but at the same time highlight what the central government has been able to deliver to the people, which is being led by Prime Minister Modi. So that was the strategy. Right. Send out the message that if Prime Minister Modi is at the helm of affairs, you can be rest assured that this government is going to deliver.
Right. Sanjay ji, I also want to talk about how women have been at the center of Prime Minister Modi's outreach and policy making. And there is an expectation that Mission Shakti and a lot of women-focused schemes could get a further push, not only because women have been a crucial part of Prime Minister Modi's style of governance, but also because they form an important and a sizable percentage of electorate. And in the last few elections, if you see the voting trends, increasingly women are coming out to vote and they're taking their own decisions.
No, absolutely. I have no doubt that when we look at what is being made, the announcement in this present budget, there would be something for the women. There would also be mention of what this government has been able to do for the women at large in different parts of the country. When I mentioned Madhya Pradesh, so many BJP government aimed only at the women voter. It is not specific of the BJP government at the center. If you look at a different state government, whether it is the government in Telangana or the government in Andhra or the government in any other state, every government now is trying to focus on the women voters. The reason you have already mentioned, Shweta, because women voters are in very large number. Now we see their electoral participation going up. The turnout of women voters have gone up. And also, when the parties are rolling out these welfare schemes aimed only for the welfare of the women, we also see some kind of a shift.
Mr. Kumar, how about the youth, and how much of a concern is jobs on the ground? When you spoke to voters in your surveys, what's been the sense that you've been getting when it comes to the performance of this government in job creation? And maybe we could see a greater emphasis on that. Besides urging the private sector to invest and create jobs, it could be a possibility that the government steps forward in the whole job creation aspect.
But the one thing is very clear. When you talk to the people on the ground, there is a lot of concern or anxieties about growing unemployment. And when I say that there is a lot of concern, any state, whether the state has re-elected the BJP government or not, if you ask this question, what is the situation with regard to employment opportunities, a very large number of people, mainly the youth, unemployed youth, are willing to say that unemployment situation has gone from bad to worse. A very large number of people, and if I want to put a number, a rough number is 70 to 80% of people, 70% of the people, voters say unemployment has gone up, which is to say employment situation has been worse. But that is not shaping people's voting choices, because they think this is a temporal thing. And also they try and compare it with previous government, and they figure out in their mental calculation that this is a situation in different proportions, but unemployment has been a problem right from the beginning. There has never been a situation when we can say that employment was given to each and every youth or each and every person who expected to get gainful employment. So they compare it with the past, and they, even if there is a lot of anxieties about unemployment, but to some extent they feel satisfied. And also, I should mention, government has shifted the narrative, and you can see that the big campaign is around become a job giver, not a job seeker. So government has shifted the focus. When we conducted among the youth, we see that a larger proportion of youth now want to establish their own, what we call startup, your own business, compared to people who want to go for a government job or a private job. I'm not saying that bigger proportion of people want to start their own job, own business, but compared to 10 years back, the proportion of people who say, we should start our own business has gone up.
Okay, well, that's an interesting insight coming in, that a lot of youth are now looking at being job creators rather than job seekers. A fascinating insight, Mr. Singh. I also, Mr. Kumar, I also want to ask you that, we've seen the BJP make a very concerted effort in establishing its presence in the north, and it is a very popular party in the north. However, in the southern states, it continues to push forward, but it has not been able to make the mark that it has been hoping to make. So, do you think in this budget we could see some state-specific interventions?
There is a possibility, because if you look at how politics is changing, or how there is a focus on the southern state with regard to politics. Prime Minister Modi has started campaigning, or he has been visiting the southern state more frequently now compared to the past. Also, if you look at the effort to try and send out some of the ministers who are in the present government to contest from southern state in the Lok Sabha election, just to create a buzz. So that's also an effort. So BJP is the central government led by BJP. They're trying very hard to reach out to the people in southern state through politics. They're trying to send out a message that Prime Minister cares for the southern state. Prime Minister is trying to invest. And I'm sure in the budget, there would be something specific for states like Kerala, Tamil Nadu, Telangana or Andhra, to send out a message that this is a government which, though we keep talking about north-south divide, but this is a government which, even though this government has an enormous presence in the North Indian state, very little in the southern state. But they are trying to treat the southern state with more, giving southern state more importance. So there is a possibility, Shweta, something specific for the southern states may be also rolled out in this budget.
Right. Sanjay ji, we keep talking about how the government has been very fiscally prudent and so on, and this whole narrative between freebies versus fiscal prudence. But the fact is right now that the government is giving free food grains, the government is giving free gas cylinders, and different states, whether it's BJP or Congress run, have got a slew of, whatever you might want to call them, freebies, or you might want to call them incentives, or just generally social sector schemes designed specifically to cater to the common man. So what is the big message according to you from an electoral point of view that Prime Minister Modi would want to put out through this budget?
First, the big narrative, this is a government which cares for the people, especially those people who need support from the government. The free ration scheme has been extended for another 5 years. Something in that respect would be, spelled out in the budget. Also, the three sections of people, women, youth, and the rural people, including the farmers. So I think the government will try and send out a message that this is a government which cares for people at large, but at the same time, it also takes care of sections of the voters, sections of the people who requires more attention. I think this is the message which will certainly be there in this year's budget.
Right. So we heard the Prime Minister yesterday say that through this budget, the Finance Minister and the government will put out its intent for the year. Well, we have the Speaker in the House, and he's announcing the proceedings, the budget day proceedings to begin.
जाने के पश्चात उसे मेंबर पोर्टल पर भी उपलब्ध करा दिया जाएगा। माननीय वित्त मंत्री जी,
Honorable Speaker, I present the interim budget for 24-25. The Indian economy has witnessed profound positive transformation in the last 10 years. The people of India are looking ahead to the future with hope and optimism. With the blessings of the people, when our government, under the visionary and dynamic leadership of Honorable Prime Minister Shri Narendra Modi, assumed office in 2014, the country was facing enormous challenges. With Sabka Saath, Sabka Vikas as its mantra, the government overcame those challenges in right earnest. Structural reforms were undertaken. Pro-people programs were formulated and implemented promptly. Conditions were created for more opportunities for employment and entrepreneurship. The economy got a new vigor. The fruits of development started reaching the people at scale. The country got a new sense of purpose and hope. Naturally, the people blessed the government with a bigger mandate. In the second term, our government, under the leadership of Honorable Prime Minister, doubled down on its responsibilities to build a prosperous country with comprehensive development of all people and all regions. Our government strengthened its mantra to Sabka Saath, Sabka Vikas, and Sabka Vishwas. Our development philosophy covered all elements of inclusivity, namely social inclusivity through coverage of all strata of the society, and geographical inclusivity through development of all regions of the country. With the whole of nation approach of Sabka Prayas, the country overcame the challenges of once-in-a-century pandemic, took long strides towards Atmanirbhar Bharat, committed to Panch Pran, and laid solid foundations for the Amrit Kal. As a result, our young country has high aspirations, pride in its present, and hope and confidence for a bright future. We expect that our government, based on its stupendous work, will be again by the people with a resounding mandate. Inclusive development and growth. Our humane and inclusive approach to development is a marked and deliberate departure from the earlier approach of provisioning up to village level. Development programs were thus provisioned. In the last 10 years, however, have targeted each and every household and individual through housing for all, Har Ghar Jal, electricity for all, cooking gas for all, bank accounts and financial services for all in record time. The worries about food have been eliminated through free ration for 80 crore people. Minimum support prices for the produce of Annadata are periodically increased appropriately. These and the provision of basic necessities have enhanced real income in the rural areas. Their economic needs could be addressed, thus spurring growth and generating jobs. Social justice. Our government is working with an approach to development that is all-round, all-pervasive, and all-inclusive. Sarvangin, Sarvasparshi, or Sarvasamaveshi. It covers all castes and people at all levels. We are working to make India a Vikasit Bharat by 2047. For achieving that goal, we need to improve people's capability and empower them. Previously, social justice was mostly a political slogan. For our government, social justice is an effective and necessary governance model. The saturation approach of covering all eligible people is the true and comprehensive achievement of social justice. This is secularism in action, reduces corruption, and prevents nepotism, prevents Bhai Bhatijawad. There is transparency and assurance that benefits are delivered to all eligible people. The resources are distributed fairly. All, regardless of their social standing, get access to opportunities. We are addressing systemic inequalities that had plagued our society. We focus on outcomes and not on outlays so that the social economic transformation is achieved. As our Prime Minister firmly believes, we need to focus on 4 major castes. They are Garib, Mahilaye, Yuva, and Annadata. Their needs, their aspirations, and their welfare are our highest priority. The country progresses when they progress. All 4 require and receive government support in their quest to better their lives. Their empowerment and well-being will drive the country forward. Garib Kalyan, Desh Ka Kalyan. We believe in empowering the poor. The earlier approach of tackling poverty through entitlements had resulted in very modest outcomes. When the poor became empowered partners in the development process, government's power to assist them also increases manifold. With the pursuit of Sabka Saath, in these 10 years, the government has assisted 25 crore people to get freedom from multi-dimensional poverty. Our government's efforts are now getting synergized with energy and passion of such empowered people. This is truly elevating them from poverty. Direct benefit transfer of 34 lakh crore rupees from the government using PM Jan Dhan accounts has led to savings of 2.7 lakh crores of rupees for the government. This savings has been realized through avoidance of leakages prevalent earlier. The savings have helped in providing more funds for Garib Kalyan. PM Swanidhi has provided credit assistance to 78 lakh street vendors. From that total of 78 lakh street vendors, 2.3 lakh have received credit for the third time. PM Janman Yojana reaches out to the particularly vulnerable tribal groups who have remained outside the realm of development so far. PM Vishwakarma Yojana provides end-to-end support to artisans and craftspeople engaged in 18 trades. The schemes for empowerment of Divyangs and transgender persons reflect firm resolve of our government to leave no one behind. Welfare of Annadata. Farmers are our Annadata. Every year under PM Kisan Samman Yojana, direct financial assistance is provided to 11.8 crore farmers, including marginal and small farmers. Crop insurance is given to 4 crore farmers under PM Fasal Bima Yojana. These, besides several other programs, are assisting Annadata in producing food for the country and for the world. Electronic National Agricultural Market has integrated 1,361 mandis and is providing services to 1.8 crore farmers with trading volume of 3 lakh crores of rupees. The sector is poised for inclusive, balanced, higher growth and productivity. These are facilitated from farmer-centric policies, income support, coverage of risks through price and insurance support, promotion of technologies and innovations through startups. Empowering the Amrit PD, the Yuva. Our prosperity depends on adequately equipping and empowering the youth. The National Education Policy 2020 is ushering the transformational reforms. PM Schools for Rising India, PM Shri, are delivering quality teaching and nurturing holistic and well-rounded individuals. The Skill India mission has trained 1.4 crore youth, upskilled and reskilled 54 lakh youth, and established 3,000 new ITIs. A large number of institutions of higher learning, namely 7 IITs, 16 triple ITs, 7 IIMs, 15 AIMS, and 390 universities have been set up. PM Mudra Yojana has sanctioned 43 crore loans aggregating to 22.5 lakh crores of rupees for entrepreneurial aspirations of our youth. Besides that, Fund of Funds, Startup India, and Startup Credit Guarantee schemes are assisting our youth. They are also becoming Rozgar Data. The country is proud of our youth scaling new heights in sports. The highest ever medal tally in Asian Games and Asian Para Games in 2023 reflects a high confidence level. prodigy and our #1 ranked player Pragyananda put up a stiff fight against the reigning world champion Magnus Carlsen in 2023. Today, India has over 80 chess grandmasters compared to little over 20 in 2010. Momentum for Nari Shakti, the empowerment of women through entrepreneurship, ease of living, and dignity for them has gained momentum in these 10 years. 30 crore Mudra Yojana loans have been given to women entrepreneurs. Female enrollment in higher education has gone up by 28% in 10 years. In STEM courses, girls and women constitute 43% of enrollment, one of the highest in the world. All these measures are getting reflected in the increasing participation of women in workforce. Making triple talaq illegal, reservation of 1/3 seats for women in the Lok Sabha and state assemblies, and giving over 70% houses under PM Awas Yojana in rural areas to women, and giving over 70% houses under PM Awas Yojana in rural areas to women as sole or joint owners have enhanced their dignity. Exemplary track record of governance, development, and performance. Besides delivering on high growth in terms of gross domestic product, the government is equally focused on a more comprehensive GDP, that is, governance, development, and performance. Our government has provided transparent, accountable, people-centric, and prompt, trust-based administration with citizen first and minimum government, maximum governance approach. The impact of all-round development is discernible in all sectors. There is macroeconomic stability, including in the external sector. Investments are robust. The economy is doing well. People are living better and earning better, with even greater aspirations for future. Average real income of the people has increased by 50%. Inflation is moderate. People are getting empowered, equipped, and enabled to pursue their aspirations. There is effective and timely delivery of programs and of large projects. Economic management. The multi-pronged economic management over the past 10 years has complemented people-centric, inclusive development. Following are some of the major elements. 1. All forms of infrastructure, physical, digital, or social, are being built in record time. Number 2, all parts of the country are becoming active participants in economic growth. Number 3, digital public infrastructure, a new factor of production as if in the 21st century, is instrumental in formalization of the economy. Number 4, goods and services tax has enabled one nation, one market, one tax. Tax reforms have led to deepening and widening of tax base. Number 5, strengthening of the financial sector has helped in making savings, credit, and investments more efficient. Number 6, GIFT, IFSC, and the Unified Regulatory Authority, IFSCA, are creating a robust gateway for global capital and financial services for the economy. Number 7, proactive inflation management has helped keep inflation within the policy band. Now, the global context, Honorable Speaker, sir. Geopolitically, Global affairs are becoming more complex and challenging with wars and conflicts. Globalization is being redefined with reshoring and friendshoring, disruption and fragmentation of supply chains, and competition for critical minerals and technologies. A new world order is emerging after the COVID pandemic. India assumed the G20 presidency during very difficult times for the world. The global economy was going through high inflation, high interest rates, low growth, very high public debt, low trade growth, and climate changes. The pandemic has led to a crisis of food, fertilizer, fuel, and finances for the world, while India successfully navigated its way. The country showed the way forward and built consensus on solutions for those global problems. The recently announced India-Middle East-Europe economic corridor is a strategic and economic game changer for India and others. In the words of Honorable Prime Minister, the corridor, and I quote, will become the basis of world trade for hundreds of years to come, and history will remember that this corridor was initiated on Indian soil. Unquote. Vision for Vikasit Bharat. Our vision for Vikasit Bharat is that of prosperous Bharat in harmony with nature, with modern infrastructure, and providing opportunities for all citizens and all regions to reach their potential. With confidence arising from strong and exemplary track record of performance and progress, earning Sabka Vishwas, the next 5 years will be years of unprecedented development and golden moments to realize the dream of developed India by 2047. The trinity of demography, democracy, and diversity backed by Sabka Prayas has the potential to fulfill aspirations of every Indian. As Honorable Prime Minister in his Independence Day address to the nation mentioned, I quote, there is no dearth of opportunities, as many opportunities as we want. The country is capable of creating more opportunities. Sky is the limit, unquote. Strategy for Amrit Kal. Our government will adopt economic policies that foster and sustain growth, facilitate inclusive and sustainable development, improve productivity, create opportunities for all, help them enhance their capabilities, and contribute to generation of resources to power investments and fulfill aspirations. Guided by the principle, reform, perform, and transform, the government will take up next generation reforms and build consensus with the states and stakeholders for effective implementation. It is an important policy priority for our government to ensure timely and adequate finances, relevant technologies, and appropriate training for the micro, small, and medium enterprises, MSMEs, to grow and also compete globally. Orienting the regulatory environment to facilitate their growth will be an important element of this policy mix. Aligning with the Panchamrit goals, our government will facilitate sustaining high and more resource-efficient economic growth. This will work towards energy security in terms of availability, accessibility, and affordability. For meeting the investment needs, our government will prepare the financial sector in terms of size, capacity, skills, and regulatory framework. Aspirational Districts Program. Our government stands ready to assist the states in faster development of aspirational districts and blocks, including generation of ample economic opportunities. Development of the East. Our government will pay utmost attention to make the eastern region and its people a powerful driver of India's growth. PM Awas Yojana Gramin. Despite the challenges due to COVID, implementation of PM Awas Yojana Gramin continued, and we are close to achieving the target of 3 crore houses. 2 crore more houses will be taken up in the next 5 years to meet the requirement arising from increase in the number of families. Rooftop solarization and Muft Bijli. Through rooftop solarization, 1 crore households will be enabled to obtain up to 300 units free electricity every month. This scheme follows the resolve of Honorable Prime Minister on the historic day of consecration of Sri Ram Mandir in Ayodhya. Following benefits are expected. Savings up to 15 to 18,000 rupees annually for households from free solar electricity and selling the surplus to the distribution companies. Charging of electric vehicles. Entrepreneurship opportunities for a large number of vendors for supply and installation. Employment opportunities for the youth with technical skills in manufacturing, installation, and maintenance. Housing for middle class. Our government will launch a scheme to help deserving sections of the middle class, and I quote from Honorable Prime Minister's words, living in rented houses or slums or chawls and unauthorized colonies, unquote, to buy or build their own houses. Medical colleges. Several youth are ambitious to get qualified as doctors. They aim to serve our people through improved healthcare services. Our government plans to set up more medical colleges by utilizing the existing hospital infrastructure under various departments. A committee for this purpose will be set up to examine the issues and make relevant recommendations. Cervical cancer vaccination. Our government will encourage vaccination for girls in the age group of 9 to 14 years for prevention of cervical cancer. Maternal and child health care. Various schemes for maternal and child care will be brought under one comprehensive program for synergy in implementation. Upgradation of Anganwadi centers under Saksham Anganwadi and Poshan 2.0 will be expedited for improved nutrition delivery, early childhood care and development. The newly designed U-Win platform for managing immunization and intensified efforts of Mission Indradhanush will be rolled out expeditiously throughout the country. Ayushman Bharat. Healthcare cover under Ayushman Bharat scheme will be extended to all ASHA workers, to all Anganwadi workers and helpers. Agriculture and food processing. The efforts of value addition in agriculture sector and boosting farmers' incomes will be stepped up. Pradhan Mantri Kisan Sampada Yojana has benefited 38 lakh farmers and generated 10 lakh employment. Pradhan Mantri Formalization of Micro Food Processing Enterprises Yojana has assisted 2.4 lakh SHGs, and 60,000 individuals with credit linkages. Other schemes are complementing the efforts for reducing post-harvest losses and improving productivity and incomes. For ensuring faster growth of the sector, our government will further promote private and public investment in post-harvest activities, including aggregation, modern storage, efficient supply chains, primary and secondary processing and marketing and branding. Nano DAP. After the successful adoption of nano urea, application of nano DAP on various crops will be expanded in all agroclimatic zones. Atmanirbhar Oil Seeds Abhiyan. Building on the initiative announced in 2022, a strategy will be formulated to achieve Atmanirbharta for oil seeds such as mustard, groundnut, sesame, soya bean, and sunflower. This will cover research for high-yielding varieties, widespread adoption of modern farming techniques, market linkages, procurement, value addition, and crop insurance. Dairy development. A comprehensive program for supporting dairy farmers will be formulated. Efforts are already on to control foot and mouth disease. India is the world's largest milk producer with but with low productivity of milch animals. The program will be built on the success of existing schemes such as Rashtriya Gokul Mission, National Livestock Mission, and infrastructure development funds for dairy processing and animal husbandry. Matsya Sampada. It was our government which set up a separate department for fisheries, realizing the importance of assisting fishermen. This has resulted in doubling of both inland and aquaculture production. Seafood exports since 2013-14 has also doubled. Implementation of Pradhan Mantri Matsya Sampada Yojana will be stepped up to 1. Enhance aquaculture productivity from existing 3 to 5 tons per hectare. 2. Double exports to 1 lakh crore rupees, and 3. Generate 55 lakh employment opportunities in the near future. 5 integrated aqua parks will also be set up. Lakpati Didi. 83 lakh SHGs. 83 lakh SHGs with 9 crore women are transforming rural socio-economic landscape with empowerment and self-reliance. Honorable Speaker said, their success has assisted nearly 1 crore women to become Lakpati Didi already. They are an inspiration to others. Their achievements will be recognized through honoring them. Buoyed by the success, it has been decided to enhance the target for Lakpati Didi from 2 crores to 3 crores. Technological changes, new age technologies and data are changing the lives of people and businesses. They are also enabling new economic opportunities and facilitating provision of high quality services at affordable prices for all, including those at the bottom of the pyramid. Opportunities for India at the global level are expanding. India is showing solutions through innovation and entrepreneurship of its people. Research and innovation for catalyzing growth, employment, and development. Prime Minister Shastri, Prime Minister Lal Bahadur Shastri gave the slogan of Jai Jawan, Jai Kisan. Prime Minister Vajpayee, Atal Bihari Vajpayee ji, made that Jai Jawan, Jai Kisan, Jai Vigyan. Prime Minister Modi has furthered that to Jai Jawan, Jai Kisan, Jai Vigyan and Jai Anusandhan, as innovation is the foundation of development. For our tech-savvy youth, this will be a golden era. A corpus of 1 lakh crore rupees will be established with 50-year interest-free loan provided. The corpus will provide long-term financing or refinancing with long tenors and low and or nil. I repeat that sentence. The corpus will provide long-term financing or refinancing with long tenors and low or nil interest rates. This will encourage the private sector to scale up research and innovation significantly in sunrise domains. We need to have programs that combine the powers of our youth and technology. A new scheme will be launched for strengthening deep tech technologies for defense purposes and expediting Atmanirbharta. Infrastructure development. Building on the massive tripling of the capital expenditure outlay in the past 4 years, resulting in huge multiplier impact on economic growth and employment creation, the outlay for the next year is being increased by 11.1% to 11,111 crore rupees. This would be 3.4% of our GDP. Railways. 3 major railway corridor programs will be implemented. These are energy, mineral and cement corridor. Number 2, port connectivity corridors. And number 3, high traffic density corridors. The projects have been identified under the PM Gati Shakti for enabling multimodal connectivity. They will improve logistics efficiency and reduce cost. The resultant decongestion of the high traffic corridors will also help in improving operations of passenger trains, resulting in safety and higher travel speed for passengers. Together with dedicated freight corridors, these 3 economic corridor programs will accelerate our GDP growth and reduce logistic costs. 40,000 normal rail bogies will be converted to Vande Bharat standards to enhance safety, convenience and comfort of passengers. Aviation sector. The aviation sector has been galvanized in the past 10 years. Number of airports have doubled to 149. Rollout of air connectivity to Tier 2 and Tier 3 cities under UDAN scheme has been widespread. 517 new routes are carrying 1.3 crore passengers. Indian carriers have proactively placed orders for over 1,000 new aircrafts. Expansion of existing airports and development of new airports will continue expeditiously. Metro and Namo Bharat. We have a fast expanding middle class and rapid urbanization is taking place. Metro rail and Namo Bharat can be the catalyst for the required urban transformation. Expansion of these systems will be supported in large cities, focusing on transit-oriented development. Green energy. Towards meeting our commitment for net zero by 2070, the following measures will be taken. Viability gap funding will be provided for harnessing offshore wind energy, potential for initial capacity of 1 gigawatt. Coal gasification and liquefaction capacity of 100 metric tons will be set up by 2030. This will also help in reducing imports of natural gas, methanol, and ammonia. Phased mandatory blending of compressed biogas in compressed natural gas for transport and piped natural gas for domestic purposes will be mandated. Financial assistance will be provided for procurement of biomass aggregation machinery to support collection. Electric vehicle ecosystem. Our government will expand this and strengthen the e-vehicle ecosystem by supporting manufacturing and charging infrastructure. Greater adoption of e-buses for public transport networks will be encouraged through payment security mechanism. Biomanufacturing and biofoundry. For promoting green growth, a new scheme of biomanufacturing and biofoundry will be launched. This will provide environment-friendly alternatives such as biodegradable polymers, bioplastics, biopharmaceuticals, and bioagri inputs. This scheme will also help in transforming today's consumptive manufacturing paradigm to the one based on regenerative principles. Blue Economy 2.0. For promoting climate resilient activities for Blue Economy 2.0, a scheme for restoration and adaptation measures and coastal aquaculture and mariculture with integrated and multi-sectoral approach will be launched. Comprehensive development of tourist centers. The success of organizing G20 meetings in 60 places presented diversity of India to global audience. Our economic strength has made the country an attractive destination for business and conference tourism. Our middle class also now aspires to travel and explore. Tourism, including spiritual tourism, has tremendous opportunities for local entrepreneurship. States will be encouraged to take up comprehensive development of iconic tourist centers, branding and marketing them at global scale. A framework for rating of the centers based on quality of facilities and services will be established. Long-term interest-free loans will be provided to states for financing such development on matching basis. To address the emerging fervor for domestic tourism, Honorable Speaker, sir, projects for port connectivity, tourism infrastructure, and amenities will be taken up on our islands, including Lakshadweep. This will help in generating employment also. Promoting investments. The FDI inflow during 2014 to 23 was $596 billion, marking a golden era. That is twice the inflow during 2005 to 14. For encouraging sustained foreign investment, we are negotiating bilateral investment treaties with our foreign partners in the spirit of First Develop India. FDI is First Develop India. Reforms in the states for Vikasit Bharat. Many growth and development enabling reforms are needed in the states for realizing the vision of Vikasit Bharat. A provision of 75,000 crore rupees as 50-year interest-free loan is proposed this year to support those milestone-linked reforms by the state governments. Societal changes. The government will form a high-powered committee for an extensive consideration of the challenges arising from fast population growth and demographic changes. The committee will be mandated to make recommendations for addressing these challenges comprehensively in relation to the goal of Vikasit Bharat. Amrit Kal as Kartavya Kal. Our government stands committed to strengthening and expanding the economy with high growth and to create conditions for people to realize their aspirations. Honorable Prime Minister in his Independence Day address to the nation in the 75th year of our Republic said, and I quote, "We commit ourselves to national development with new inspirations, new consciousness, new resolutions as the country opens up immense possibilities and opportunities. It is our Kartavya Kal." Unquote. Every challenge of the pre-2014 era was overcome through our economic management and our governance. These have placed the country on a resolute path of sustained high growth. This has been possible through right policies, true intentions, and appropriate decisions. In the full budget in July, Honorable Speaker, our government will present a detailed roadmap for our pursuit of Vikasit Bharat. Revised estimates of 2023-24. The revised estimate of the total receipts other than borrowings is 27.56 lakh crores of rupees, of which the tax receipts are 23.24 lakh crore rupees. The revised estimate of total expenditure is 44.90 lakh crore rupees. The revenue receipts at 30.03 lakh crore rupees are expected to be higher than the budget estimate, reflecting strong growth momentum and formalization in the economy. The revised estimate of the fiscal deficit is 5.8% of GDP, improving on the budget estimate, notwithstanding moderation in the nominal growth estimates. Budget estimates for 2024-25. Coming to the year 2024-25, the total receipts other than borrowings and total expenditure are estimated at 30.80 and 47.66 lakh crore rupees respectively. The tax receipts are estimated at 26.02 lakh crore rupees. The scheme of 50-year interest-free loan for capital expenditure to states will be continued this year with an outlay of 1.3 lakh crore rupees. We continue on the path of fiscal consolidation, as announced in my budget speech of 2021-22, to reduce fiscal deficit below 4.5% by 25-26. The fiscal deficit in 2024-25 is estimated to be 5.1% of GDP, adhering to that path. So the gross and net market borrowings through dated securities during 24-25 are estimated at 14.13 lakh crore rupees and 11.75 lakh crore respectively. Both will be less than that in 23-24. Now that the private investments are happening at scale, the lower borrowings by the central government will facilitate larger availability of credit for the private sector. Vote on account. I'll be seeking vote on account approval of the Parliament through the appropriation bill for a part of the financial year 2024-25. I will now move to Part B. Honourable Speaker, sir, over the last 10 years, the direct tax collections have more than trebled and the return filers swelled 2.4 times. I would like to assure the taxpayers that their contributions have been used wisely for the development of the country and welfare of its people. I appreciate the taxpayers for their continued support. The government has reduced and rationalized tax rates. Under the new tax scheme, there is now no tax liability for taxpayers with income up to 7 lakh rupees, up from 2.2 lakh rupees in the financial year 2013-14. The threshold for presumptive taxation for retail businesses was increased from 2 crores to 3 crores. Similarly, the threshold for professionals eligible for presumptive taxation was increased from 50 lakh rupees to 75 lakh rupees. Also, corporate tax rate was decreased from 30% to 22% for existing domestic companies and to 15% for certain new manufacturing companies. Honourable Speaker, sir, in the last 5 years, our focus has been to improve taxpayer services. The age-old jurisdiction-based assessment system was transformed with the introduction of faceless assessment and appeal, thereby imparting greater efficiency, transparency, and accountability. Introduction of updated income tax returns, a new Form 26AS, and pre-filling of tax returns have made filing of tax returns simpler and easier. Average processing time of returns has been reduced from 93 days in the year 2013-14 to a mere 10 days this year, thereby making refunds faster. Indirect taxation. By unifying the highly fragmented indirect tax regime in India, the GST has reduced the compliance burden on trade and industry. The industry has acknowledged the benefits of GST. According to a recent survey conducted by a leading consulting firm, 94% of industry leaders view the transition to GST as largely positive. According to 80% of the respondents, it has led to supply chain optimization, as elimination of tax arbitrage and octroi has resulted in disbanding of checkposts at the state and city boundaries. At the same time, tax base of GST more than doubled, and the average monthly gross GST collection has almost doubled to 1.66 lakh crores this year. States too have benefited. States' SGST revenue, including compensation released to states in the post-GST period of 2017-18 to 2022-23, has achieved a buoyancy of 1.22. In contrast, the tax buoyancy of state revenues from subsumed taxes in the pre-GST 4-year period of 2012-13 to 2015-16 was a mere 0.72. The biggest beneficiaries are consumers, as reduction in logistic cost and taxes have brought down prices of most goods and services. We have taken a number of steps in customs to facilitate international trade. As a result, the import release time declined by 47% to 71 hours at inland container depots, by 28% to 44 hours at air cargo complexes, and by 27% to 85 hours at seaports over the last 4 years since 2019, when the national time release studies were first started. Tax proposals. As for tax proposals, in keeping with the convention, I do not propose to make any changes relating to taxation and propose to retain the same tax rates for direct and indirect taxes, including import duties. However, certain tax benefits to startups and investments made by sovereign wealth or pension funds, as also tax exemption on certain income of some IFSC units, are expiring on 31/3/2024. To provide continuity in taxation, I propose to extend the date to 31/3/2025. Moreover, in line with our government's vision to improve ease of living and ease of doing business, I wish to make an announcement to improve taxpayer services. There are a large number of petty, non-verified, non-reconciled or disputed direct tax demands, many of them dating as far back as 1962, which continue to remain on the books, causing anxiety to honest taxpayers and hindering refunds of subsequent years. Honorable Speaker, sir, I propose to withdraw such outstanding direct tax demands up to 25,000 rupees pertaining to the period up to financial year 2009-10 and up to 10,000 rupees for financial years 2010-11 to 2014-15. This is expected to benefit about 1 crore taxpayers. 1 crore taxpayers would benefit out of this. Economy then and now. In 2014, when our government assumed the reins, the responsibility to mend the economy step by step and to put the governance systems in order was enormous. The need of the hour was to give hope to the people, to attract investments, and to build support for the much-needed reforms. The government did that successfully, following a strong belief of nation first. The crisis of those years has been overcome, and the economy has been put firmly on a high, sustainable growth path with all-round development. It is now appropriate to look at where we were then. I repeat, it is now appropriate to look at where we were then till 2014 and where we are now, only for the purpose of drawing lessons from the mismanagement of those years. The government will lay a white paper on table of the House. The exemplary track record of governance, development and performance, effective delivery and Jan Kalyan has given the government trust, confidence and blessings of the people to realize whatever it takes. The goal of Vikasit Bharat with good intentions, true dedication and hard work in the coming years and decades. With this, Honorable Speaker, I commend the interim budget to this august House. Jai Hind.
Item number 2, Srimati Nirmala Sitharaman ji.
So, with your permission, I rise to lay on the table the following statements. Under Section 3(1) of the Fiscal Responsibility and Budget Management Act 2003, medium-term fiscal policy cum fiscal policy strategy statement and macroeconomic framework statement.
Item number 3, श्रीमती निर्मला सीतारमण जी.
Sir, with your permission, I rise to move for leave to introduce the Finance Bill 2024.
प्रश्न ये है कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए. जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें. मेरे विचार में निर्णय हाँ वालों के पक्ष हुआ. हाँ वालों के पक्ष हुआ. माननीय मंत्री जी विधेयक को पुनर्स्थापित करें.
So I introduce the bill.
सभा की कार्रवाई शुक्रवार दिनांक 2 फरवरी 2024 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है.
Well, that was the finance minister there. Quite a short and sweet speech, we would say, just about 1 hour that she took there in the Parliament House. But let's bring you up to speed with all the key highlights of that speech that we have there. Very, pretty much in lines with what is already priced in or penciled in by the market, one would say. If you have to look at firstly the capex plan, now that was something that was pretty much on everyone's mind, and what would be that figure? Well, it is coming there at just about 11.1% hike that we are seeing in FY25, coming in at that 11 lakh crore mark or so. So no much big changes there. We were I remember talking about some big push coming in then, especially ahead of election year. That was what we wanted. But Street might be a little disappointed on that one. But nonetheless, there is a hike. There is focus, at least for the government, towards infrastructure through what the FM speech is. The other number is the big one coming in there for the fiscal deficit. And that number coming in at 5.8% of the GDP. This is the revised estimate that they've put in. Lower, so that is definitely going to be something that is going to cheer the street, one would say. The FY24 fiscal deficit target has been lowered to 5.8% versus the 5.9% that was there earlier. In terms of the other numbers that we are seeing, the big numbers that she did mention was that of the tax receipts, and we know that we have been seeing quite a robust collections, not just from personal income tax, but also the indirect taxes. We just got the GST numbers for the last month that came in. So pretty robust that tax number as well, coming in at 26.02 lakh crore rupees in terms of the tax estimates, the revised estimates that they have for FY24-25. But that final, what you would say, the nail in the coffin, if you had to, that everyone had their hopes pinned on, well, those have kind of been dashed because the finance minister was very categorical and very straightforward in saying there will be absolutely no changes in any of the direct taxes as well as the indirect taxes. She did mention, the other changes that will be there, and those will perhaps be in the fine print of the budget document that we'll get into. But let's quickly also listen into some of those reactions that we're getting in from different quarters on what they're making of the budget speech that was just read out by the finance minister.
Ayushman Bharat. Healthcare cover under Ayushman Bharat scheme will be extended to all ASHA workers, to all Anganwadi workers and helpers. Agriculture and food processing. The efforts of value addition in agriculture sector and boosting farmers' incomes will be stepped up. Pradhan Mantri Kisan Sampada Yojana has benefited 38 lakh farmers and generated 10 lakh employment. Pradhan Mantri Formalization of Micro Food Processing Enterprises Yojana has assisted 2.4 lakh SHGs and 60,000 individuals with credit linkages. Other schemes are complementing the efforts for reducing post-harvest losses and improving productivity and incomes. Despite the challenges due to COVID, implementation of PM Awas Yojana Gramin continued, and we are close to achieving the target of 3 crore houses. 2 crore more houses will be taken up in the next 5 years to meet the requirement arising from increase in the number of families. Rooftop solarization and Muft Bijli. Through rooftop solarization, 1 crore households will be enabled to obtain up to 300 units free electricity every month. This scheme follows the resolve of Honorable Prime Minister on the historic day of consecration of Sri Ram Mandir in Ayodhya. Following benefits are expected. Savings up to 15 to 18,000 rupees annually for households from free solar electricity and selling the surplus to the distribution companies. Charging of electric vehicles. Entrepreneurship opportunities for a large number of vendors for supply and installation. Employment opportunities for the youth with technical skills in manufacturing, installation, and maintenance. Housing for middle class. Our government will launch a scheme to help deserving sections of the middle class, and I quote from Honorable Prime Minister's words, living in rented houses or slums or chawls and unauthorized colonies, unquote, to buy or build their own houses. Matsya Sampada. It was a government which set up a separate department for fisheries, realizing the importance of assisting fishermen. This has resulted in doubling of both inland and aquaculture production. Seafood exports since 2013-14 has also doubled. Implementation of Pradhan Mantri Matsya Sampada Yojana will be stepped up to 1. Enhance aquaculture productivity from existing 3 to 5 tons per hectare. 2. Double exports to 1 lakh crore rupees, and 3. Generate 55 lakh employment opportunities in the near future. 5 integrated aqua parks will also be set up. Lakpati Didi. $83 lakh SHGs with 9 crore women are transforming rural socio-economic landscape with empowerment and self-reliance. Honorable Speaker, sir, their success has assisted nearly 1 crore women to become Lakpati Didi already. They are an inspiration to others. Their achievements will be recognized through honoring them. Buoyed by the success, it has been decided to enhance the target for Lakpati Didi from 2 crores to 3 crores. Technological changes, new age technologies and data are changing the lives of people and businesses. They are also enabling new economic opportunities and facilitating provision of high quality services at affordable prices for all, including those at the bottom of the pyramid. Opportunities for India at the global level are expanding. The multi-pronged economic management over the past 10 years has complemented people-centric, inclusive development. Following are some of the major elements. 1. All forms of infrastructure, physical, digital, or social, are being built in record time. Number 2, all parts of the country are becoming active participants in economic growth. Number 3, digital public infrastructure, a new factor of production as if in the 21st century, is instrumental in formalization of the economy. Number 4, goods and services tax has enabled one nation, one market, one tax. Tax reforms have led to deepening and widening of tax base. Number 5, strengthening of the financial sector has helped in making savings, credit, and investments more efficient. Number 6, GIFT, IFSC, and the Unified Regulatory Authority, IFSCA, are creating a robust gateway for global capital and financial services for the economy. Number 7, proactive inflation management has helped keep inflation within the policy band. The fruits of development started reaching the people at scale. The country got a new sense of purpose and hope. Naturally, the people blessed the government with a bigger mandate. In the second term, our government, under the leadership of Honorable Prime Minister, doubled down on its responsibilities to build a prosperous country with comprehensive development of all people and all regions. Our government strengthened its mantra to Sabka Saath, Sabka Vikas, and Sabka Vishwas. Our development philosophy covered all elements of inclusivity, namely social inclusivity through coverage of all strata of the society, and geographical inclusivity through development of all regions of the country. With the whole of nation approach of Sabka Prayas, the country overcame the challenges of once in a century pandemic, took long strides towards Atmanirbhar Bharat, committed to Panch Pran, and laid solid foundations for the Amrit Kal. As a result, our young country has high aspirations, pride in its present, and hope and confidence for a bright future. We expect that our government, based on its stupendous work, will be again by the people with a resounding mandate. Inclusive development and growth. Our humane and inclusive approach to development is a marked and deliberate departure from the earlier approach of provisioning up to village level. Development programs were thus provisioned. In the last 10 years, however, have targeted each and every household and individual through housing for all, Har Ghar Jal, electricity for all, cooking gas for all, bank accounts and financial services for all in record time. The worries about food have been eliminated through free ration for 80 crore people. Minimum support prices for the produce of Annadata are periodically increased appropriately. These and the provision of basic necessities have enhanced real income in the rural areas. Their economic needs could be addressed, thus spurring growth and generating jobs. Social justice. Our government is working with an approach to development that is all-round, all-pervasive and all-inclusive. Sarvangin, Sarvasparshi or Sarvasamaveshi. Inclusive development and growth. Our humane and inclusive approach to development is a marked and deliberate departure from the earlier approach of provisioning up to village level. Development programs were thus provisioned. In the last 10 years, however, have targeted each and every household and individual through housing for all, Har Ghar Jal, electricity for all, cooking gas for all, bank accounts and financial services for all in record time. The worries about food have been eliminated through free ration for 80 crore people. Minimum support prices for the produce of Annadata are periodically increased appropriately. These and the provision of basic necessities have enhanced real income in the rural areas. Their economic needs could be addressed, thus spurring growth and generating jobs. Social justice. Our government is working with an approach to development that is all-round, all-pervasive and all-inclusive. Sarvangin, Sarvasparshi or Sarvasamaveshi. It covers all castes and people at all levels. We are working to make India a Vikasit Bharat by 2047.
Welcome back then. We are here live on Moneycontrol and you are watching what we are calling the Election Budget 2024. Well, after going by that speech, we can say at least the equity markets, pretty much losing out on those gains or losing steam, one would say. No big surprises they're coming from the finance minister either, pretty much sticking to her guns and, just giving out the numbers that we perhaps, or rather the streets had already factored in there. But markets pretty much flat, I would say, at this point. But let's see, the budget now becoming pretty much that no-show. I have with me on the show Satchidanand Uttekar. Thanks so much for joining us, firstly. And, let's give us your first take on what did you make of that short budget speech by the finance minister.
Well, actually, the expectations were very low, and she had already made a statement that there may not be any big surprises. So I think overall, even if you look at the first half of the market performance, Nifty has been very range bound, and probably we may see this range bound action getting continued. So technically, 21,830 remains a important price point. Unless we don't see the Nifty scaling above that particular level, there may not be any meaningful recovery. But on the short side, I think even if you look at the developments here, I think 21,700, 21,600, the put writing action has been very significant for at least for the day. So probably we may see the Nifty oscillate within this particular range itself, and it may be a no-show kind of a day.
Right.
But when it comes to Nifty Bank, probably we may see a surprise here. So this is something which.
What you're talking about banks, but let me just go back to a couple of those numbers that the finance minister has put out in terms of, if you look at the borrowing number, that one coming in at 14.1 lakh crore rupees. If you're talking about what we are getting in terms of tax receipt, that she's pegged at 26.02 lakh rupees, lakh crore, beg your pardon there. But so we seem to have met that balance in terms of the deficit number also there, coming in pretty much in line, we would say, with what already the streets have penciled in. Given these macros, now the budget is out of the way. For the market, what would be the next cue then?
Well, I think right now, if you look at the major price points, the anticipation was there that there may not be any significant development. And rightly so, if you look at the current expiry itself, the way Nifty started scaling above that 21,000, 21,100 mark, there's a clear-cut range which has been defined. We don't see markets immediately scaling about 21,900, at least when we look at the options data here.
Yeah.
And on the lower side, as I said, 21,600 may be an important level for today. But going forward, in case if Nifty starts trending below 21,400, then probably we may see a decent decline. So the next Q it will be very difficult. But as of now, just going by the data, it looks more range bound. So probably we may see a time and price
and we are on expiry, weekly expiry as well. So we could have, expiry was last Thursday, I beg your pardon. But that's what we're seeing. So in terms of the range, we are pretty much stuck, we would say, in that 21. We were hoping to go above that 21,700. That's where we started this morning. But, pretty flat, I would say, right now is what we're trading in. In terms of the sectors or stocks that we could be looking out in such a market, of course, the finance minister didn't give any of those, hints even we could to look at any particular stock, but any kind of traction that you're seeing in particular stocks in terms of the charts that are really changing today after the speech, perhaps?
So I think there was an expectation on the PSU side, and I think PSU banks have been relatively stable. Even going ahead in the budget, we saw most of them, consolidating. We did not see any meaningful corrections in them. So I think within this particular space, one stock which we are highlighting and we are recommending to our clients is SBI. So from a long-term perspective, we have already seen the stock consolidating very well within the 600, 660 zone. And we may see one particular move on the upside which may trigger that large scale up move.
Okay.
So I think SBI is one particular stock which can be accumulated from a portfolio perspective. We may see eventually the stock scaling towards 720. But from a trading perspective, one can chase momentum longs in case 650 level is breached in today's sessions. Unless that is not done, it is better not to add on to any aggressive long positions.
Right.
If you look at Nifty again, it is again drifting down. So probably we may see that oscillation here.
Yeah.
So
what about the bank Nifty also? I think that one perhaps has just turned a little bit in the positive, and maybe because of counters, like you were saying, some of those PSU banking names that were seeing some bit of action there. So what should be the strategy for the bank Nifty at least?
Even here, I think it is better to take a level-based trade. We may see a surprising move in case Nifty Bank starts trending above 46,300, and I think that will be a significant breakout point. But on the lower side, the kind of supports that have been met at around 45,600, 700, I think these particular support levels may sustain. Okay. But I think the surprise may only come in once the Nifty Bank starts trending above 46,300.
Well, those were the technicals, but let's also talk a little bit about the broader markets now.
we've seen that this one being almost a no-go in terms of giving a trigger. We also heard from the Fed, overnight, wherein they have just, in fact, dampened hope, saying that March rate cut perhaps is not coming any time in March, like how we were penciling in, or at least what the street was penciling in. Crude oil prices for us have somehow, been at least not so much of a worry at this point, one would say, because we are at those $75 and $80 per barrel and moving between those ranges. So we still have all of our pieces, the positive pieces, pretty much in place for us. In such an environment, is it like, what should one really play? What should be the strategy in terms of, should we be looking at large cap stocks? Okay, people have said, those are the ones making the comeback. But what should really be the play in terms of a long-term portfolio in that sense?
See, the major trend for the market remains healthy until unless we don't see the Nifty, trending below 20,500. This is where the weekly gap support area is defined. So until unless we don't see it, closing that gap, the major trend structure remains very healthy. But if you look at the near term, especially the February and the March series, now these are seasonally series wherein a lot of consolidation happens, and probably we may see the Nifty respecting this data point. So we are not really very confident that we may see a immediate rally in the market, but probably after a month of consolidation, we may see the overall resumption of the up move. But as of now, I think in case if we get declines, those declines would be very healthy, and the expectation is that within a span of around 6 months or so, we may see Nifty again scaling towards 23,000, 23,400 kind of a level. So I think it's a good consolidation after a healthy up move, and probably one more month of consolidation, then probably we may see a good strong rally on the upside.
Right. Now, if you're talking about sectors, I would want your perspective on the auto sectors. Today, among our top gainers, at least, come from the auto pack for today's session. But overall, we didn't hear much. We were hoping there would be some announcement in terms of EVs or some kind of, leeway there, but none of those announcements either. So, as a whole for the auto sector, what would be your take at this point?
So the sector trend has been very strong. In fact, on its monthly and weekly scale, we have already seen a bullish breakout from a continuation pattern, which is a flag formation. So there are no signs of any exhaustion here. We expect that this particular trend momentum can continue towards 21,000, 21,300. And within this pack, what we have recommended even on your sister channel is a stock like Maruti. Now the stock was underperforming, and it formed a very strong base at around 10,000 levels, where its 200-day exponential moving average was placed. And from that level itself, we have seen a fresh bullish up move. So we expect that there has been a fair amount of consolidation for the last 2 months or so, and from that consolidation, we have seen a fresh up move getting triggered. So on a broader structure, we are anticipating that the stock may scale towards 11,800 eventually. So in case if we see some declines or consolidation, from a trend perspective, one can accumulate this counter, keeping a stop loss somewhere close to around 10,000, and on the higher side, we may see it scaling towards 11,800.
Interesting picks there from the auto pack at least. Thanks so much, Sachitanand, for joining us in this session. But we have a lot more packed up for you. All the big voices right here on Money Control. Don't go anywhere. We'll be right back.
Inclusive development and growth. Our humane and inclusive approach to development is a marked and deliberate departure from the earlier approach of provisioning up to village level. Development programs were thus provisioned. In the last 10 years, however, have targeted each and every household and individual through housing for all, Har Ghar Jal, electricity for all, cooking gas for all, bank accounts and financial services for all in record time. The worries about food have been eliminated through free ration for 80 crore people. Minimum support Minimum support prices for the produce of Annadata are periodically increased appropriately. These and the provision of basic necessities have enhanced real income in the rural areas. Their economic needs could be addressed, thus spurring growth and generating jobs. Social justice. Our government is working with an approach to development that is all-round, all-pervasive, and all-inclusive. Sarvangin, Sarvasparshi, or Sarvasamaveshi. The fruits of development started reaching the people at scale. The country got a new sense of purpose and hope. Naturally, the people blessed the government with a bigger mandate. In the second term, our government, under the leadership of Honorable Prime Minister, doubled down on its responsibilities to build a prosperous country with comprehensive development of all people and all regions. Our government strengthened its mantra to Sabka Saath, Sabka Vikas, and Sabka Vishwas. Our development philosophy covered all elements of inclusivity, namely social inclusivity through coverage of all strata of the society, and geographical inclusivity through development of all regions of the country. With the whole of nation approach of Sabka Prayas, the country overcame the challenges of once-in-a-century pandemic, took long strides towards Atmanirbhar Bharat, committed to Panch Pran, and laid solid foundations for the Amrit Kal. As a result, our young country has high aspirations, pride in its present, and hope and confidence for a bright future. We expect that our government, based on its stupendous work, will be again by the people with a resounding mandate.
Hello and welcome back. Well, we have with us Shankar Sharma, market veteran, for his first take on the budget. It was a no surprise budget for me. Whatever we discussed in the morning in terms of nominal GDP growth, 10.5%, that has come. We were talking about market would have easily taken 5.3 to 5.2% in terms of fiscal deficit. It came in at 5.1%, which is a bit of a surprise. It's a positive surprise nevertheless. I was personally thinking that capex growth will come in at 10 to 12%. It has come in at 12%. Some sections of the market were still expecting 15 to 20% in the morning. That might be a tad of a disappointment. I think it's reflected in some of the stocks today, but more of the same thrust on roads, metros, railways, power, green energy, and so on. Really, not so much has changed, but let's go to Shankar Sharma for his take. Shankar? Your first reaction?
So, I mean, it's just a vote on account. So there is nothing much, Mahalakshmi, that we could have expected in terms of a big bang thing. They've just kept the same sound bites, the same terms, which markets love. And, you know, if there is one thing that I like about this government is that it's a very stock market driven government. It knows exactly the language and the lingo that the stock market likes, and it uses it liberally during all such budget or policy announcements. So to that end, it seems pretty much like like a continuity of what the policies have been. Fiscal deficit coming in, the projected numbers coming in at 5.1. I'm not so sure if they can manage that. I mean, it looks a bit aggressive,
right?
But we'll see how the year pans out. But otherwise, it's just a very straightforward, simplified exercise, being a vote on account.
Right. So I like that term, aggressively conservative on the fiscal deficit number, right? So now coming back to markets, I mean, market is obviously not taking to it very positively in the sense that this is more of the same. So does this just tell us that, everything that had to be factored in, this whole story of next year, another 12% capital expenditure, public spending in the same areas, is that factored in to the stock prices and therefore we shouldn't look at it as any further trigger?
Exactly right. That's the whole point. So I think the upsides of the capex spend are factored in, Mahalakshmi. I do not think the market has factored in any slippages on the capex front because the fiscal deficit number seems quite aggressive in terms of the reduction. A 0.7 or 0.8% reduction seems a big deal, and the reduction will necessarily have to come from two counts: better revenues or lower capex, or a bit of both.
Yeah.
The reality will obviously pan out over the course of the next 12 or 13 months. If the numbers on the revenue front kind of do not come through, then to meet the fiscal deficit, capex will have to be cut back, right? It's very simple. It's household, level, sort of budgetary balancing that you need to understand the fiscal, situation. That I think is what is going to weigh on the mind of the market, that if revenue numbers don't come through as much as anticipated, and the cut will have to come from capex in order to meet the fiscal deficit target, which I believe is fairly aggressive, to be honest with you. And I think that's what is right now playing on the minds of the market.
Sure. And so the fact that it is flat, at least, Nifty, you see, is flat. And one would have expected, especially after yesterday's FOMC narrative, that market should have been a tad weak today, isn't it?
Yes, I agree. I mean, so at least we will take the positives. But remember, as far as I can tell, there is still 3 hours of trading left. So,
I know it's not unusual to see, the market absolutely taking a U-turn by the end of in the last hour of trade. Last half an hour, we've seen that many days.
Actually, we have seen it. We've all been around 25, 30 years. And whatever starts out hardly ever ends the same way, whichever way it is.
Correct,
so,
correct.
let's hold our horses right now. All I can say is that if it is flat, I will be very happy with that.
Right. So where do we shift our focus now, Shankar? Because now the markets, obviously, last FOMC meeting, there was a lot more optimism around the fact that, rate cut could happen much more quickly. People were also thinking that, by March, we should start to see rate cuts, which is now, out of question. Do you see the global cues being positive from here on? What will be the triggers that we can focus on from here on for stock prices to go up?
I mean, I think, Mahalakshmi, it was ridiculous for Wall Street to factor in, 4 or 5 rate cuts in, 2024. I mean, when I used to read these kinds of embedded Wall Street estimates, I used to laugh that, Wall Street, I've never had great respect for in terms of their forecasting ability. And we've seen it even last year, a big recession was forecast and it didn't actually turn out that way in the US. So I think there's a total garbage that they put out, but this was high level of garbage to expect 4 or 5 rate cuts when the Fed itself has lost a lot of credibility in the preceding couple of years by being too easy with money, too sanguine about inflation. Remember, inflation is transitory. The phrase that can haunt a central banker for a long time to come, right? Remember that?
Yeah.
So given that it has not covered itself with glory, to expect it to make that kind of U-turn all within the space of one calendar year was being optimistic. I think, the realism is that it would not go as far as cutting 4 or 5 times. And the first one has been missed, obviously. So I think we need to be a little circumspect on that front. That being said, we narrow it down to India. I think India's growth remains a small cap market. That's really what I am really focused on, because nothing in the budget tells me that the large caps are going to do well. Capex is going to be necessarily reduced in order to meet fiscal deficit. And if the glide path to the fiscal deficit of, 4.5% in 26 is to be met, the growth on capex cannot remain at this kind of breakneck speed. It cannot be. Which means that if the capex numbers are dialed back even next budget, whether this government, the same government, another government, a coalition government, whatever formation, if they dial back on capex, the effect on large caps is going to be dramatic. On small caps, not so much. So I continue to believe India remains a fantastic small cap market and an average large cap market.
So that is an absolutely contrarian call, because most fund managers are obviously betting that, with this turn in, global trade setup, you will have FII money coming in and that will start to support large caps. So you're saying both from a growth perspective, now also from a fund flows perspective, large caps should not be our focus area.
Fund managers obviously make most of their money from larger AUMs, and larger AUMs necessarily have to be in the larger companies. So it is which side the bread is buttered. That is also
a challenge, Shankar, because most of the money is now coming in small caps. So the money itself is flowing into small caps more than large caps.
I agree. So that's why I'm not interested in doing a mutual fund business where I have to deal with such problems. All I can say is on the personal investing front, it's a fantastic time to be in small caps, as it has been the last couple of years. I see nothing changing, Mahalakshmi. I'm inundated with fantastic opportunities of small cap companies. I'm not sure all of them are going to be doing well, but I think 50-60% of the portfolio, even if it does well, we are all going to be laughing to the bank. So I don't have, fortunately, the same problems as a small cap mutual fund manager or a large cap mutual fund manager. For most people in the stock market, I'm not talking fund managers, being in small caps is going to be, as it has been, is going to be extremely rewarding.
Usually, Shankar, fiscal deficit is really the number that most foreign investors look at, right? Like to take a call. That's a very important number, at least as far as the budget is concerned. That's the biggest takeaway foreign guys take from the budget. All things being equal, would you say today, because China also, a lot of investors are saying now China is really bottoming out, so fund is actually flowing back, funds are flowing back to China and may prioritize China over several other markets, including India. Does this put us in a position where you are saying growth could moderate over the next 2 years? It might be difficult to meet this fiscal target that we have set out. Does that put us on a back foot?
Like I said, the back foot is really for the large caps because they need larger tailwinds in order to grow. They're already large size companies. If you look at the quarterly numbers of our larger companies, you're talking like 3,000, 5,000, 10,000 crore profit numbers, which are like 40, 50,000 crore annualized numbers, $3, $4, $5 billion profit numbers for any number of companies. You cannot move the needle for such sizes so easily. These are giant, these are behemoths. For relatively still a small size country like India, they have become an outsized part of the economy. And therefore, they need very solid capex and domestic growth numbers. And remember, not real GDP growth numbers. They need strong nominal GDP growth numbers because large caps necessarily derive growth, which is broadly a mirror of the nominal GDP growth numbers. And that's where the nub of the problem lies. We are going to be projecting a 10-11% nominal GDP growth. Real GDP growth is different because with the deflator, we have read about this, we know about it, is faulty. Okay, we are using the WPI, which itself has gone into negative territory. So therefore, the disconnect between the nominal and the real is becoming a real problem.
Correct.
Real problem for large cap companies, Mahalakshmi. And that is the nub of the problem for large cap companies. If nominal was 15%, they were a screaming buy. Nominal at 10%, not so much.
Fair enough. And where do you see interest rates going this year? The projection is one thing, but what the market wants to believe and what will actually happen, like you pointed out earlier, where do you see interest rates going?
So my view is, you're talking about Indian interest rates.
India, yeah.
Yes. On that front, I don't think the RBI will be profligate. I think it will remain very, very conservative in any dialing back. It will obviously take cues from the West also, which again has said that we are not in any huge rush to dial back on interest rate, cuts. The interest rate hikes. We are going to stay put, watch how the scenario pans out. I think RBI under Shaktikanta Das has been a very prudent RBI, and I think it will continue to be conservative, not aggressive. And there is no need to be, frankly speaking. Things are actually probably a bit more under control given the nominal GDP growth numbers, which are actually probably a tad lower than what any of us would want it to be. So why on earth would you want to, really, tinker around with something that is broadly okay so far?
Sure. Give us a flavor of the kind of, small caps, mid caps that you're really looking at, Shankar. We know some of your stocks, but you tell me, where are you focusing? Because a lot of those, the stocks that have really run up are to do with, some kind of government intervention, whether you look at railways, you look at, smart metering or, anything related to power. So that is all one part of the story. But where are you looking?
I'm not at all interested in anything to do with the government, Mahalakshmi.
Yeah, right.
I mean, I look very dated in that thinking, given the run-up in...
But the kind of stocks you look at in the private sector, small mid-cap space, definitely optically look very, very expensive.
Yes, I agree. I've always believed that valuation, Mahalakshmi, is an overrated tool in investing because... extreme of valuations, can be ignored, but in the middle, whether 15p is good or 20 is not good, or 25 is too expensive, is all very subjective. I mean, a lot of the companies, at least I invest in, or I'm planning to invest in, or I have invested in, the numbers have been eye-popping last 12 months. So what they look like as being expensive turned out to be not so expensive, because these are companies with profit numbers of maybe 25, 50, 100 crore numbers where the needle can move very quickly, unlike for a Larsen & Toubro, or unlike for a Maruti, unlike for a HDFC Bank. So my companies are the younger legs, the fresher legs. They can move much faster. They can take away market share from the larger companies. They can have niches which are fairly protected, and they don't fortunately rely on government intervention. So I'm quite happy in my neck of woods. You can call them expensive, but I don't think on a growth basis they look very expensive.
Fair enough. One last question on Paytm. What's your take on Paytm? Does this, obviously the fintech industry is quite shell-shocked about this RBI circular. What is your take? Where does the stock go from here? Does it pose a serious threat for, a certain group of financials?
I mean, I've just read what has been printed, I've read it on Twitter, but I am no expert on the regulations that they have contravened or supposedly contravened. I'm sure there is an appeal process. I'm sure they will go back to RBI and, submit whatever they are trying to submit. I believe that is how a regulatory problem is resolved. There is a legal process to it. And I don't want to jump to conclusions. All I can say is that, and I have a lot of respect for RBI, broadly, unlike I don't have a lot of respect for some other wings of the government. But RBI typically has remained a fairly neutral organization. When it says something, it usually has good basis to say these things. Paytm has been a problem child of the new listing markets, in the last couple of years. The others have come back. They have done reasonably well, but Paytm has remained a struggler. I mean, I wish it well. I mean, I don't like seeing any company in trouble of this kind, and I'm sure the leadership will deal with it.
Sure. So, Shankar, quickly, next 3 months, what do you see as key triggers for markets? Next, in fact, I would say up until the budget, so up until the elections.
Okay, the budget is a long way away. Till elections, there will be a lot of noise coming out of exit polls or opinion polls and stuff like that. That will keep the market very, very interested, very, very frisky. But broadly speaking, I don't see the trend changing dramatically. I do not see any big change in the theme that has played out, which is large caps being tepid and small caps being on an absolute roll. I don't see much of that changing.
Sure. Thank you so much, Shankar.
Thanks for having him, Mahalakshmi.
Thank you so much.
Thank you.
So we have with us Saurabh Mukherjee. Marcellus, Saurabh, your first take.
I think delighted to see the fiscal consolidation. I mean, honestly, without any views on, without getting into market specifics, it's remarkable to see this sort of fiscal consolidation in an election year. And given that this is the year India is making its debut in the global bond markets, I think this will do a power of good for our reputation. It will bring down the 10-year bond yield. It will strengthen the rupee. it'll embellish India's credentials as a market. So I was expecting 5.2 fiscal deficit target for 25. The FM has said 5.1.
Yeah.
4.5 was something I was sort of in a way dreaming about for FY26, but
Right.
she's promised that, and naturally, therefore, she's pulled back public sector capex. Public sector capex has grown at around 30% per year for the last 3 years.
Absolutely.
She's pulled it back to 11%. But I think that for me was the highlight. What was also interesting was the focus on energy transition. EV charging stations, rooftop solar, EV buses at the state government level. I think there's plenty more there on EV. My reckoning is after the elections, we'll hear plenty more on this theme. And the third theme, which I think has been a popular theme for them, and I think they want to run with it, is affordable housing. So both the PMAY Grameen version and middle class housing. She didn't specifically say what we can expect there, but it looked like they're going to keep on re-emphasizing the housing theme. So from our investments perspective, we've invested plenty in this space, the building material space, in affordable housing. Hopefully we will make more money from that. We've begun our investments in energy transition. So hopefully by the time she spells out the details on the other side of the elections, we'd have made more investments there. And the general fiscal consolidation, that means more space for the RBI governor to cut rates, hopefully relief on the liquidity front for our private sector bank investments.
Sure. Definitely this 5.1% is quite a surprise, because, most people were expecting 5.3, 5.2, 5.1, and that too in an election year is a surprise. I was just talking to Shankar, and he was saying that, he doesn't believe that it will be met. So do you have concerns like that? I mean, is that... So I was doing the quick maths. So I have to confess, I haven't sat down in front of an Excel spreadsheet just yet. And obviously, when I heard the 5.1, instinctively, I also was a little worried. But then what she said was 45 trillion spending in FY25. So most people, including myself, had sort of thought of a spending figure closer to 50 trillion, 48 trillion, 49 trillion. So if the spending figure is indeed 45 trillion, then 5.1 should be doable. I don't think she has to have unrealistic assumptions on revenue intake. I think the revenue growth numbers will be in the... So there is overall contraction in the
That's right. So 45 trillion, a sub 50 trillion number, well below 50 trillion number. If she is able to deliver the 45 trillion spending figure and keep it at or below, then I think 5.1 is very doable.
Okay. And this 12%, of course, like you rightly said, in an election year, I mean, how else will you manage a fiscal consolidation path without cutting down on capital expenditure? That should be. Did you see anything in the budgets that could trigger, consumption? Because that is the weakest part of GDP so far. One would have expected that, she would have fixed that part so that at least, over the next 1 year, you would get consumption up, then private capex could also accelerate, and it becomes easier for us to go a little easy on public spending and rein in fiscal deficit.
So I think what was interesting was she, upfront in her budget speech, she was very clear that we don't want to give entitlements to the poor, right? So this is very similar to a Margaret Thatcher type doctrine, right? Reagan-Thatcher doctrine. And over the last 3-4 years, especially after the FY19 elections, NDA2 has been very clear that this is not going to be handouts and SOPs. This is more about direct benefit transfer where it's required. She was emphatic about how successful they've been with DBT, and rightfully so. Where I think they want to drive the consumption pieces through job creation. The EV charging piece, she seemed to suggest there'll be announcements which make it easier for entrepreneurs to start EV charging stations. I think they expect to do some job creation there. The whole self-help group thing, and then easy financing on easy terms through PSUs, through quasi-governmental organizations. I'm not so sure the NDA2, given how strong they politically feel, is going to resort to standard welfare spending. I think NREGA, from what I understand, in the small print, there is a modest uptick in NREGA spending, but nothing in the budget which suggests that there will be helicopter drops of cash. It seems more around the lines of, we'll give DBT where it's necessary and required, but beyond that, we'll create schemes which make it easy to create jobs rather than do helicopter drops of cash.
Sure. So you talked about EV transition, you talked about affordable housing, and you said you're invested. So Are there any direct plays around these, or it's in and around ancillaries? That is how you bet.
So let's start with the housing piece, right? So FM is talking about middle class housing. There'll be both benefits or encouragement given for build and for buy.
Yeah.
And the PMAY Grameen piece, where I think they're talking about 2 crore more dwellings to be created over 5 years, right? So there's obviously the entire building material space, and I think for several years we've been invested in names such as Pidilite, Astral Poly, Asian Paints. More recently, we have purchased Serra Sanitary Ware in our small cap portfolio. So there's a whole host of well-run building material companies. I think the affordable housing financiers also are going to become increasingly relevant. If you noticed, Mahalakshmi, over the last year or so, mainstream mortgage finance has grown at around 25%, whereas affordable housing finance has only grown at 15%.
Right.
I think that flips on the other side of the election if this scheme that FM is talking about has legs in it, because as I travel around the country, I meet auto rickshaw drivers, vegetable store owners, barbers, rickshaw pullers who are buying houses using PMAY. Right, so in affordable housing, we have Awas as our main investment, but there's a whole bunch of affordable housing plays. I think more will list, and I think people should look out for this theme. I think this will become a defining theme in the years ahead. Affordable housing using a PMAY. PMAY gives you typically 2 lakhs to the buyer, and then the rest of it comes from a AHFC. UPI means even a rickshaw puller can now show a 30-page bank statement. On the energy transition theme, we've invested in Eicher Motors because I saw that Volvo Eicher, the stock market didn't have appreciation for it, and Volvo Eicher was steadily gaining share in the heavy end of the CV space. Volvo Eicher has also set up a new plant in MP for EVs. Beyond that, whilst we don't have Tata Motors, TAM also has a well-developed EV program, and I'm sure in due course the two-wheeler companies will also start focusing more on EV than on ICE. There's a whole host of ancillaries to look at in with regard to EV. We haven't invested in any as yet, but I think the ancillary space will also become interesting, because ancillaries, remember, will not just supply Indian auto OEMs with EV parts, but potentially supply the global auto majors with EV parts as well. So I think plenty more to come here. The more support the government gives to the energy transition now, the more benefits we get in the years ahead, right? And looking more generally beyond these two themes, right? The whole theme around women empowerment.
Yeah.
It's interesting. The FM, the PM, the Chief Economic Advisor, they're all focusing on the theme. Why are they doing it? Because more women vote in elections now than men, and I don't think that's going to change at least in the rest of my career. So I think we can safely look forward to the July budget having even more emphasis on putting money in women's purses, whether through job creation schemes or through direct benefit transfer. Historically, so far we've invested in Nestle, Trent and Titan. These have been, Nestle and Titan have been long-standing investments. Trent has been a more recent investments. Rainbow Medicare in South India is in our small cap portfolio. It's a maternity and childcare hospital focused on 17 locations in South India. But I think the woman theme will also become very big. So therefore, if I look at the next 5 years, right, energy transition, women empowerment, and affordable housing become 3 big themes to invest into. Quick disclaimer, I'm invested in all of these stocks through our PMS schemes. So are my parents, and so are our 9,000 clients.
Right. So in housing finance, so you will not play it through mainstream financials. You're talking about essentially.
That's right, because mainstream financials focus on more affluent people,
right,
whereas the FM's focus is, the government's focus is on low income housing. So 10 lakhs, 10 to 30 lakhs, I would say, is the home loan ticket size that the government would be focused on.
Right. Would you bet on any developers, for example, Macrotech? I mean, they do a bit of that, right? So
the only challenge with developers as a play on affordable housing is there's no barriers to entry there, right? Almost anybody with a little bit of land and a wherewithal to get the relevant regulatory clearances can become a developer. And if you notice, even today, even in the middle of this crazy boom in real estate developer share prices, you open the cash flow statements of the developers, they're not making any money. And the reason they don't make any money in terms of cash flows is there are dozens of them in any location. pursuing the same customer. The customer obviously benefits, but investing in real estate developers in India is a very tricky task because of the lack of barriers to entry.
And EVP push, again, you're saying you will go through the auto ancillary route.
So we've done one OEM. We've done Eicher Motors as an OEM. We're looking for more ANC plays because, as I said, on the OEM piece, the challenge is you invest in a OEM, you got to also deal with the fact that the ICE piece will die, and the EV piece will rise, and you're constantly trying to juggle the two.
Yeah.
Whereas if you focus on auto ANCs who specialize in EV ANCs, then you don't have to worry about the ICE piece dying on them. Now, there aren't that many, but there are a few, and I think that will go public.
Yeah.
And therefore, EV through ANC might be a better way to go about it than EV through OEM.
Right. And this green energy push, do you play this at all? She talked about, increase in viability gap funding. She talked about a huge expansion plan, coal gasification, and so on. So
look, I think rooftop solar will potentially become a very interesting thing. It's almost similar to building materials. Just as a Pidilite or an Astral Poly has been able to build barriers to entry in its, in adhesives and in pipes, a well-managed rooftop solar company could potentially do the same. We haven't spotted any in the stock market yet, but I think if there's a big scheme around rooftop solar, given that much of the country is drenched with sunshine for much of the year, this looks like a potent theme. And I'm sure there'll be private equity investors who are right now looking for, or perhaps making rooftop solar investments, which will debut in the stock market in the next 2 to 3 years.
Right. So this is pretty much the story of today, Saurabh. But overall, if you were to just look, a little out, maybe the rest of the year, how does the market look to you? What are the forces? What are the counter forces? What are the triggers you are watching over the next 3 months?
I think 3 big things to look out. Firstly, the situation in the Middle East is tricky, and I don't think there's any other word around it. People that we have never heard of have blocked the Red Sea and the Suez Canal.
Yeah.
They seem to have it's not a situation where Washington DC can call up a government and negotiate with them. These are basically wild people, rebels who are hijacking ships, sending drones with missiles on it. Right, so it's a very tricky situation. You're dealing with supranational terrorists basically, and they're blocking the most critical freight route in the world. So I think it's a tricky situation. I don't have an easy answer. If the Middle Eastern situation calms down, I'm pretty sure bond yields will come off, inflationary pressures will come off, you'll see equities rally further, but I'm no expert on whether the Middle Eastern situation will calm down or not. I think the second call, in a way linked call, but let's think of it as a distinct call, is when does the Federal Reserve start cutting? Last night, the Federal Reserve chair said that the rate cuts are going to come later rather than sooner. Yet they have elections to contend with. So if the rate cuts come by the middle of the year in the United States, that makes it easier for the RBI governor to cut, which in turn gives fillip to both our banking sector stocks and to equities in general. And the third piece to look out for is the whole issue around China's economic, there's no other better word. Decline is a polite way to put it. Let's just say call it China's economic decline, and India's filling up that vacuum. I think the NDA too has capitalized on it brilliantly so far. And my reading, Mahalakshmi, is the July budget. There'll be more tangible steps, such as PLI, such as FAME, which will allow India to step into the void, the colossal void created by China's decline. And if China's decline continues and India keeps capitalizing, all power to us. So the fairy tale situation for us will be by Diwali, the Middle East has quietened down, crude prices are at 70, the Indian 10-year bond yield has a 6, perhaps a 6.5 handle to it. The Federal Reserve has started cutting, and China continues to have Evergrande type giant real estate developers going belly up. And that combination could be very powerful for the stock market in our country.
So what is it that you expect could happen in the next budget that couldn't have been done in this budget?
I think naturally,
but it's just that because I'm just thinking about it, backwards, that if you were to keep 5.1% as your target fiscal deficit for next year, then what would you do differently in the next budget?
So my reading is there will be tax changes that will be coming through in July. I think because the elections are around the corner and because the PM has promised a vote on account, the FM held back on the tax announcement. I'm pretty sure there will be announcements on taxes in July. There'll also have to be announcement on disinvestment. There's been several misses on disinvestment for several years. Obviously, before the elections, there's no point trying to disinvest a big PSU, just not tenable. But I think there will be announcements on disinvestments, and I'm pretty sure that early on in the 5-year cycle, the NDA will try to push through whatever disinvestments they can. And I think the third area where we are likely to get announcements in July are with regard to trade treaties. So again, I don't think it'll be likely that the government will sign trade treaties this side of the elections, but it's pretty likely that on the other side of the elections we will get, hopefully UK, I think Switzerland is also around the corner. So those are the three things so tax changes, some tax cuts for the middle class, counteracted with tax hikes elsewhere, trade treaties and disinvestment are the three things that we can consider for the July budget, which there wasn't, the occasion for announcing today.
And your top 3 themes for now, for the next 6 months, in fact, for the rest of the year would be?
I would say the big transition we will see, and the FM alluded to it, actually she actually pointed to it clearly. She's saying that, look, we the government have done enormous public sector capex.
Right.
Public sector capex has gone up 30-35%, 3 budgets in a row. This time, as she announced the 10% hike, she's saying now the focus is on the baton passes to the private sector. So we at Marcellus are trying our best to identify private sector capex plays. So far we made investments, Mahalakshmi, in Shanti Gears, in RHI Magnesita, in SKF, which makes these ball bearings. We've invested for several years ago in Grindwell, Norton and Stay Investment. So private sector capex, theme number 1. Secondly, this whole focus on Nari Shakti. This will run. There's a massive constituency that is aspirational, well-educated, increasingly finding income and employment, and it'll be logical for the politicians to cater to that. As I said, so far we
you're saying Nestle, but is there anything that is more focused, that you could play? Titan definitely is one.
So similarly, Trent, the main engine is women. Rainbow Medicare, it's maternity and pediatric care. We're looking for more such plays, but so far this is what we've identified. In a way, if you were to sort of, think about it, Nykaa, Mamaearth, or FSN Commerce, Mamaearth, these are women-focused plays. I just wish they made a little bit more money and make it easier for us to invest. So if we see more such plays, if a Nykaa starts generating cash flow properly, if a Mamaearth starts generating cash flows properly, those sorts of plays, because what's very interesting is many of the needs of women are being intuited and catered to better by women entrepreneurs than by male entrepreneurs. And perhaps it's obvious to someone like you, but for people, middle-aged men like me, that's a revelation that women entrepreneurs cater to the needs of other women better than middle-aged men can. And we're certainly looking forward to finding more such companies. But I think this will be a structural theme. What do women want to buy? Because they'll have more and more money. By the way, the RBI data now shows women have more money in their bank accounts in urban areas than men, and women have more bank accounts than men. Right? So if we join the two, it's pretty powerful, and I'm sure the powers that be in Delhi have clocked that women have more jobs, more bank accounts, and more money in those bank accounts than men, and we as the stock market are trying to catch up with them. And the third theme, as I was saying, energy transition. Massive theme for our country. We don't have to replicate the mistakes of China and build a huge ICE machine. The quicker we transition to EVs, the better. And if our EV ecosystem is efficient enough to become an exporter, then it also becomes a creator of jobs for the country. As I said there, Eicher Motors so far has been our investment because the VECV piece and the fact that VECV has got an EV piece going. But there are plenty of other EV investments we need to research in Marcellus as we try to capitalize on the energy transition.
All right, cool. That's all. Thank you so much, Saurabh. 3 good themes, and this woman is definitely a new thing, and we'll keep watching this space and looking out for companies that cater especially to women. So we have with us now Prashant Jain. Okay. So he'll join in about 10 seconds by the time. Yeah. Hi, Prashant.
Yes, Mahalakshmi. Hello, how are you?
Very good, thank you. What's your first take on the budget? Surprised by 5.1%, positively surprised?
No, Mahalakshmi, I think I was expecting that because this government has been very steadfastly focused on the target of below 4.5 by fiscal 26. So I think it is good and it's on expected lines.
Sorry, Prashant, I lost you.
No, I think Mahalakshmi, I was saying this was more or less an expected lines because economy is doing extremely well and government has done a great job in front loading the capex, and I think it's time now for some fiscal consolidation. So I think I'm happy and relieved in a way to see that focus on fiscal discipline, fiscal consolidation.
Okay. And do you think the obvious question is that, 12% capex growth does look somewhat realistic, given that, if you were to go on that fiscal path to 4.5%, it is only natural that you will have to bring down capex. But is private sector capex really ready for big bang acceleration?
Actually, that time will tell, but I think all the conditions are very conducive. Corporate leverage is at a 10 or 15-year low. Bank NPAs are hardly there. Corporate profitability is fairly broad-based. Government has played a very supportive role by way of focus on Make in India, PLI, etc. And I think India is also emerging as a viable manufacturing destination for global companies. So I would say I remain optimistic, and if you look at the commentary, the order backlogs, the order flows of engineering companies, it's been growing at a fairly decent pace. So I would say private capex is already happening.
Prashant, if you look at the markets today, it doesn't seem like, they're really rejoicing. So obviously, stock markets have already accounted for what is to come in terms of public spending. And that is perhaps the reason why some of the stocks that you have been pricing in this and have been rallying over the last few months have sort of not really reacting positively. So what is your outlook for this set of stocks, industrials, for the next, at least for the rest of the year? Do you think there is still some more steam left in this rally?
I would say, Mahalakshmi, yes, markets have priced in a strong capital formation for a number of years across sectors. And in many places, these stocks are pretty expensive. So I think growth is there, but I have always said that if growth becomes overvalued, as you have seen was the case with the consumer space, especially the staple space, then don't extrapolate continued business growth into stock market returns. The last 3-year returns in this space have been way in excess of the business growth. So obviously a lot of future growth is being priced in. So I would say one should be somewhat cautious. At least one should tone down one's expectations. Because when you start paying 40, 60, 70 times multiples, you have to be, either very, very sure of sustained high levels of growth, or you should exercise some caution.
Yeah. So do you see these stocks flatlining from here, or would you expect a strong correction?
Hard to say, Mahalakshmi. See, these things, it's always very tough to call. So, but I would say the risk reward is not particularly interesting to my mind.
Okay. Prashant, your call on, 3 things that she talked about. One is green energy and, of course, railways, green energy and EV. Do you like these three pockets?
No, I think India and the world are very focused on green energy and EVs. And I think these are sectors that will grow. EVs will consume a lot of energy over time, and so will AI. So I think India's power demand growth should be on the quite healthy, and I think RE will also grow ahead of conventional. That is very clear, and over time you hope that either through government support or without it, storage also becomes more viable. I think India is firmly focused on increasing its share of RE. So I think these are growing sectors, but we should not lose sight of the fact that profitability is not yet there in EVs. Number one, over time, hopefully it will come, but we have to.
इस बजट में कंटिन्यूटी का कॉन्फिडेंस है। ये बजट विकसित भारत के 4 स्तंभ युवा, गरीब, महिला और किसान सभी को एम्पावर करेगा। निर्मला जी का ये बजट देश के भविष्य के निर्माण का बजट है। इस बजट में 2047 के विकसित भारत की नींव को मजबूत करने की गारंटी है। मैं निर्मला जी और उनकी टीम को बहुत बहुत बधाई देता हूं। साथियों, इस बजट में युवा भारत की युवा आकांक्षाओं का, भारत की यंग एस्पिरेशंस का प्रतिबिंब है। बजट में 2 महत्वपूर्ण निर्णय लिए गए हैं। रिसर्च और इनोवेशन पर 1 लाख करोड़ रुपए का फंड बनाने की घोषणा की गई है। बजट में स्टार्टअप्स को मिलने वाली टैक्स छूट के विस्तार का भी ऐलान किया गया है। साथियों, इस बजट में फिस्कल डेफिसिट को नियंत्रण में रखते हुए कैपिटल एक्सपेंडिचर को 11,11,111 करोड़ रुपए की ऐतिहासिक ऊंचाई दी गई है। अर्थशास्त्रियों की भाषा में कहें तो एक प्रकार से स्वीट स्पॉट है। इससे भारत में 21वीं सदी के आधुनिक इंफ्रास्ट्रक्चर के निर्माण के साथ ही युवाओं के लिए अनगिनत रोजगार के नए अवसर तैयार होंगे। बजट में वंदे भारत स्टैंडर्ड की 40,000 आधुनिक बोगियां बनाकर उन्हें सामान्य यात्री ट्रेनों में लगाने का ऐलान किया गया है। इससे देश के अलग अलग रेल रूट पर करोड़ों यात्रियों में आरामदायक यात्रा का अनुभव बढ़ेगा। साथियों, हम एक बड़ा लक्ष्य तय करते हैं, उसे प्राप्त करते हैं और फिर उससे भी बड़ा लक्ष्य अपने लिए तय करते हैं। गरीबों के लिए हमने गांवों और शहरों में 4 करोड़ से अधिक घर बनाए। अब हमने 2 करोड़ और नए घर बनाने का लक्ष्य रखा है। हमने 2 करोड़ महिलाओं को लखपति दीदी बनाने का लक्ष्य रखा था। अब इस लक्ष्य को बढ़ाकर 3 करोड़ लखपति दीदी बनाने का कर दिया गया है। आयुष्मान भारत योजना ने गरीबों की बहुत मदद की है। अब आंगनवाड़ी और आशा वर्कर, उन सबको इस योजना का लाभ मिलेगा। साथियों, इस बजट में गरीब और मध्यम वर्ग को एम्पावर करने, उनके लिए आय के नए अवसर बनाने पर भी बहुत जोर दिया गया है। रूफटॉप सोलर अभियान में 1 करोड़ परिवारों को सोलर रूफटॉप के माध्यम से मुफ्त बिजली प्राप्त होगी। इतना ही नहीं, सरकार को अतिरिक्त बिजली बेचकर लोगों को 15 से 20 हजार प्रति वर्ष की आय भी होगी और ये हर परिवार को होगी। साथियों, आज जिस इनकम टैक्स रेमिशन स्कीम की घोषणा की गई है, उससे मध्यम वर्ग के करीब 1 करोड़ लोगों को बड़ी राहत मिलेगी। पिछली सरकारों ने सामान्य मानवी के सिर पर दशकों से ये बहुत बड़ी तलवार लटका कर रखी थी। आज इस बजट में किसानों के लिए भी बहुत महत्वपूर्ण और बड़े निर्णय लिए गए हैं। नैनो डीएपी का उपयोग हो, पशुओं के लिए नई योजना हो, पीएम मत्स्य संपदा योजना का विस्तार हो और आत्मनिर्भर ऑयल सीड अभियान हो। इससे किसानों की आय बढ़ेगी और खर्च कम होगा। मैं एक बार फिर सभी देशवासियों को इस ऐतिहासिक बजट के लिए शुभकामनाएं देता हूं। बहुत बहुत धन्यवाद।
So we go back to Prashant. So Prashant, we were talking about, actually I lost the thread, but let me ask you a fresh question. You have been pretty optimistic on power. Your portfolio is full of power, PFC, I mean the NBFCs, REC, PFC, NTPC, Power Grid, all of them. And you've been a systematic contrarian. Now this is no longer a contrarian stock. This is momentum. Are you staying invested? Sorry, can't hear you.
Prashant, are you on mute by any chance? I think, Prashant, we can't hear you. You'll perhaps have to unmute yourself. Okay, we'll just get back to Prashant in a minute, just getting that audio right. There are very big takeaways for Prashant's favorite stocks. As you can see, the one that's up and away booming are the PSU bank stocks, and that's obviously because there's a huge bond market rally. This is, don't mistake me, it's not as if it's bad for the stock markets. Whenever the cost of capital falls for corporates, it's always good for stock markets as well. And I'll tell you why the cost of capital has fallen. It's obviously because the cost at which the government will borrow has fallen. Yeah. Why is it falling? Because the government is going to borrow less. Out of, for an expected 12 lakh crore, they're going to borrow 11.7 lakh crore. And they have underestimated the tax collections, both for the current year and for the next year. So it's possible that there will be even less borrowing. Well, I think we've got Prashant back. Prashant, Mahalakshmi was asking you whether, are you juiced out completely on PSU banks, or do you think that this lower deficit is going to give a fresh lease of life to your favorite stocks?
But before that, if you can conclude that question on power. So what's your take on power now?
Mahalakshmi, I think, the undervaluation in power to my mind is largely gone. But as you appreciate, it is a growing sector. And I think it should give you returns now broadly in line with the earnings growth. I think for the NBFCs, there could be some more re-rating left, because what has happened after the last corporate NPA cycle, most banks have defocused on that capital formation space, the big ticket capital formation. So I think the opportunity for growth for that space is quite large. The ROEs are very attractive. And I think the growth as capital formation will grow faster than GDP. I think those businesses can grow faster. So there is some more re-rating left out there.
There's actually, 1 crore households to get 300 free units of power because of rooftop solar. That was a very, very specific announcement. So rooftop solar companies, as well as, perhaps discoms being relieved a bit from having to subsidize power for these kinds of households. Prashant, how do you see that? Is there something to go in rooftop solar companies? I think Tata Power makes them, but there may be others. How do you parse this from an investor point of view, Prashant?
So I don't think this will overall make much difference to the utilities, because the time frame, the contribution of these, the residential consumption is not a very large part, especially at the low end. So I don't think it makes much difference. Anyway, utilities are a controlled ROE business. I mean, on the supply chain side, I think there could be some opportunities, but I am sure the scale at which this government is planning this, there'll be a lot more players and this field should get extremely crowded. I would doubt if any investment opportunities will arise in that space.
Okay. So now, one final question on, on PSUs. Again, you have been through and through bullish on PSUs, and they've seen a strong rally. Now, I'm just seeing the disinvestment figure for next year is projected at 50,000 crores. Okay, we don't know what that piece is going to look like, what is going to get sold, etc. But considering that PSU valuations are high, there is premise to believe that government could actually cash in on this opportunity and sell down a lot of stake in companies where they can still come down to 51%. Don't go for privatization, don't go for stake sales, and you can still get a lot of money in. Would that worry you about the PSU pack, the amount of supply that could come in? A repeat of what happened from 2016, selling down through the ETF route. Would that worry you?
Mahalakshmi, I think ETFs are unlikely to come back, and that hurt this sector. And I think it has been that realization is truly there. So I don't think there is any challenge in doing an OFS and keeping a reasonable gap in the OFS of the same company, two tranches of the OFS. So I don't think that scenario should come back. I think PSUs are reasonably valued now. They are valued like normal businesses. In some cases, multiples are probably a bit too rich. So I would not worry about that. And
Prashant, 1 minute. PSU banks, for instance, look at the moment, as I speak to you, IOB up 5.5%, UCO up 4.8%, Union Bank up 4.5%, Canada 4.2%, PNB 4%, Bank of India 3.75%. Is there some juice left in PSU banks more because I don't know if their credit costs have entirely been juiced out, and now because they all hold more SLR than they need to? Is there some more sweeteners for them in that space? Would you buy?
So I think, Lata, these banks have some advantages. One, as you mentioned, their CD ratios are low.
Very comfortable.
And therefore, in this deposit constrained environment, they have a comparative advantage. And also banks in India have underperformed. So I think banks in general outlook is quite good for me. And for these banks that are carrying excess SLR, there could be some element of capital gains on that, though I don't think that fundamentally impacts the values of these banks, but clearly it can turn sentiment positive in the near term.
Okay, more generally, when the cost of capital falls so much, it looks like it will, right? The government is borrowing at 7.05 or something. To that sort, the yields have fallen to a good 10 basis points. One would like to call it a semi-rate cut, 10 basis points lower. So, Prashant, does that make generally corporate India, benefit because interest costs can go down?
No, I don't think so. This is a fall in cost specifically for the governments because their borrowings are coming off. But I don't think this will take pressure off the deposits because liquidity is tight in India and credit has been growing faster than deposits. So I don't think this should translate into any cost of funds advantage for corporates.
Sure. Thank you so much, Prashant, for joining in. We go to Aditi Nayyar from ICRA. Aditi, thank you so much for joining in.
Thank you.
Quickly, were you surprised at the 5.1 figure?
Well, I must say the intent of fiscal consolidation that has come through in today's budget is better than what we expected, both in terms of the revised number for FY24 and the budget estimate for FY25. We had penciled in 5% for next year, so 5.1% is a fair bit better than that. CapEx, for FY24 RE, we've seen a little bit of a cut. And on top of that, there is quite a high growth that has been assumed in the BE for FY25, which is good news. But I think, the couple of things on the non-tax revenues front, I think we really need to wait and see whether those assumptions turn out to be credible or not. Nominal GDP growth is a little higher than what we would have expected for FY25. Tax revenues otherwise seem okay. For the disinvestment, I think 50,000 crore is a fair number to start with. Of course, we'll have to wait and see how that turns out. Just one specific item on the states. I don't know if you would have noticed, when we look at the RE versus the BE for gross tax revenues and for the tax devolution, there's actually quite a large increase in the tax devolution to the state governments. And I think that is something that is going to lead to a downside as far as the bond issuance from the states in this quarter is concerned. And for next year, the amount for the interest-free capex loan scheme has been kept at 1.3 trillion, which is again positive for the state governments. Overall, I will still say that FY25 will be an easier year to show fiscal consolidation than FY26, because any major announcements made after the elections and the final budget will really have an expenditure impact in FY26, not so much in FY25. So I'm glad to see that a larger amount of fiscal consolidation has been penciled in for FY25 than what we were originally expecting.
Yeah, but Aditi, can you repeat what you were saying about state government borrowings likely to be less? They're getting more transfers from the center. Is that what you're saying?
Right. So, Lata, when we looked at the percentage of tax devolution to the gross tax revenue in the budget estimate, and what our forecast was for the revised estimate for the tax collections and the tax devolution. Compared to that, it's really interesting that the tax devolution number is much higher. So, the percentage is higher than what it would have been in the budget estimate. Okay. So, the states are going to get more money than what they would have thought.
You said percentage. Is the aggregate amount flowing to states more?
Yes.
Okay.
Yes, it is.
All right. So they'll borrow less.
More than what we expected it to be.
Okay. No, that's a fair point. So they will borrow less. So that becomes a double sweetener for the market. Already the fiscal deficit is going to give a sentimental boost, and you have actual borrowing less, is what you're saying, from state governments.
So the indicative amount for Q4 from the states was 4.1 trillion, which we said straight out seemed far too high. We were working with 3.5 trillion for this quarter. And I would say after today's revised estimate for the tax devolution, there's a downside even to 3.5.
Okay. Oh, that's very big. 70,000 crore less in terms of borrowing. Aditi, I wanted your view on even the tax assumptions. If I read the budget at a glance right, they have assumed actually a lower tax revenue in the current year. The original number was 23.3 lakh crore. They have assumed 23.27 lakh crore. I mean, it's just a minor amount, some 30,000 crore less. But actually, if you looked at the first 9 months, the collection is 14% higher. The government is not assuming that in the RE. Am I missing something, or is it a conservative assessment?
No, Lata, this is what I'm saying, that they've increased the amount that they will be giving to the state governments beyond what we were penciling in and what they had said at the time of the budget. This is the missing.
So that is why the net tax revenue is lower. Okay, got that. Do you think
this surprise on 5.1% is taken, but how concerned are you that the number is actually 5.1% and will not be met?
Look, I think there are two factors over here. One, I am skeptical of the non-tax revenue number, as on date. Let's see how that turns out. Second, I also don't think that the capex number can be met. We will have the full budget only on July 1, presumably. And after that, we will get into the monsoon season, which is when capex tends to be quite tardy. So if capex is going to be quite back-ended next year from Government of India, then, it's possible that any shortfall in non-tax revenue will automatically get absorbed by lower capex. So in that sense, I'm not so worried about the 5.1%, but there are lots of bits and parts to this. Subsidies at least seem to be quite fairly budgeted. Even the NREGA amount is higher than the current year's budget estimate was. So there again, there shouldn't be too much of an upside required. But there are some other parts of revenue expenditure where we're just going through the fine print to figure out what it is that seems to be a little bit under budgeted. So I would say that we, as of, the very cursory glance that we've had at the numbers, not an in-depth view yet, non-tax revenue seems optimistic. Capex seems optimistic, and revenue expenditure may need a little bit more of an allocation as the year goes on. So that's broadly where I am on the 5.1. I'll be really pleased if 5.1% does end up getting achieved, because I think that will take us a very good measure towards that medium-term target of 4.5%.
Okay, but I'm a little surprised at you being surprised. Aditi, look at the way in which the bond yields have fallen. The market is obviously underestimation on taxes. Look at the tax growth. Their assumption is only 11.9%. Now, this year we have the 9-month evidence. Taxes have grown by 14.3%. Why should you not assume that it will be at least, 13% next year? So it looks like an underestimation on the tax growth, 11.9%. And even the nominal GDP, 10.5%, you think is an overestimation. That's the average I got, actually.
Actually, we've penciled in 9.5% for next year on the nominal GDP. And as of now, broadly, tax collections, I don't have too much of a quibble with the numbers. I think only for this quarter, the implicit numbers seem a little lower on corporate tax and a little higher on personal income tax. So hopefully that will just sort of even itself out. That's the only thing that I found so far. Nominal GDP definitely, I think, will not be as high next year unless we have a bigger turnaround on the WPI and the deflator goes up on that account. Because we are expecting CPI to fall back to 4.6% next year from about 5.3% this year. So the entire nominal GDP, a lot of the deflator play will depend on what happens in the WPI. We are also a little, I would say, possibly below consensus in terms of our expectation for real GDP growth for next year, predicated on a couple of things. One, the monsoon, agri, reservoir situation is generally not looking so great. So having a very well-distributed monsoon will be quite critical for rural sentiment to pick up. And that is something, again, which will have a back-ended impact. You will not get good news on that front early on in the year. This is something that we will get to know only beyond August, let's say. Second thing, budget coming in around July. That is, again, something that will lead to a back-ended pickup in at least Government of India's capex. Now, I'm not sure whether state capex will continue at a decent pace even during the election months. Okay, so if that happens, then there will be an upside to my expectation on the real GDP growth. So that's again a wait and watch that we have right now.
Okay. Well, actually, the state capex should do well. They are not confronted with elections, and therefore ongoing projects should do well. And I am not even very skeptical about the non-tax revenues, because PSU banks are likely to post reasonable profits. Their credit costs, their provisioning is still coming down, and they will make some bond book profits because bond prices have risen. And profit from the Reserve Bank is definitely going up. They have been selling and buying dollars, which is how they, make their money, as well as interest rate from the government, as well as gains on the bond book. So I would assume that a tidy Reserve Bank dividend, like in the current year, is par for the course. So it looks like a fairly positive scenario as far as government revenues are concerned. Yeah, but we are all open to question on that. I believe Ajay Srivastava is also with us.
Yeah.
Hi, Ajay, if you can hear me. First thoughts.
Hi, Lata.
Are you happy with the budget?
Oh, yeah, I'm really very happy, because whenever government spends less money, I'm the happiest person in the world. And I think the fact that it's 5.1% next thing, I think excellent. The worst place to park your money is the government to spend it for you. And if they can bring it down to 5.1%, I think it's a great thing. And no new schemes, no new handouts. I think on balance, one couldn't have asked for more in an election year.
So Ajay, budget done and dusted, the buzzwords that were spoken in the budget, railways, green energy, EV transition, anything that excites you as a theme now? Because the market doesn't seem to have taken it too well, in the sense that, it looks from today's markets that a lot has already been priced in. Would you agree?
You are absolutely spot on. The fact is that the capex theme, the railway theme has been overbought in the market in the last 1 year, and so on. The stock prices have gone up, and therefore the growth expectations of these stocks actually factored in more than 11% what has been provided for. Right. I presume some more would come their way in the normal budget, but as of instance today, if it's going to be only 11% increase in the capex budget, and with the inflation where it is today, really speaking, de facto, the real increase is maybe a couple of percentage points here or there. And that's not augurs well for these stocks. These are overbought. They have been expensive stocks right across. Everybody owns capex, everybody owns railways, and all have bought at expensive prices this point of time. So disappointment is that, we were really expecting maybe they will follow a 30% instead of 20-25% path. But, well, the fiscal deficit took priority over it. So disappointment for investors that factoring in huge growth spends on infrastructure into these stocks and the railways is not going to come through. Therefore, the expectation of these stocks to keep performing is now paired. So I would really wonder whether we will see any more buying, at least for the next 3 to 6 months, in any of this category of stocks, which is the capex stocks, which is the railway stocks. These two bundles, I think, are done and dusted for some time now.
What about PSU banks? I mean, they are the toast of the market today, obviously because the bonds that they are sitting on have gotten pricier. There is a 10 basis point fall in yields. Is that a space that you're attracted to?
Lata, it's very good. And I think more than just the bond yield, I think two things are important. One is the relative valuations of the larger PSU banks are much, much lower than what the market is. That is one. Number two is no new schemes in this budget. Typically the government election year would say loan scheme would come, or MSME loan scheme, or farmer loan scheme, or something like that, which gets into the in the financials of the PSU bank. Nothing at this point of time. So I think not the bond yield, the fact that nothing has been put as a burden on these PSU banks is, I think, a great story out there building. Now these banks can, at least for the time being, do what they're supposed to do, lend prudently. So I would be, from our side, my surprise has not been just the bond yield, but also the fact that these banks got away clean without any burden. And that is a great thing.
So, Ajay, you're obviously alluding to the fact that, momentum is going to shift now, right, away from, the pockets that have been running up over the past few months. Where does it shift?
It doesn't shift anywhere. The case story continues for India. The hotels are going to do well. The airlines are going to do very well. The premium parts of it are going to do very well. And I don't think one needs to re-alter our investment strategy. Just only one thing. I think the government has become prudent. You also become prudent to expect to out of the stock market. I think that's more important. Last point, more important. This is maybe the last opportunity to capture higher interest yields in the market. So if you want to invest in fixed income, this is the time to do it at this point of time, because from now onwards, if government is not going to borrow, government net borrowing is now 11 lakh crores, which is even lower than last year. You should not be reasonably expecting to get higher interest rates from what you have today. So I would say this budget tells you one path, that lock into your fixed income instruments today, whether it is you invest in gilt mutual fund, or you want FDs, or you want senior citizens plan, whatever you want to do, this is the time to do it now. You won't get this chance again.
Why don't you rank it for us? What's the best fixed income? We always ask you to rank stocks and sectors. Why don't you rank the best fixed income investment?
And another question I want to add, so you can take both together, is, as a corollary to this, are high net worth individuals actually looking at moving away from equities, putting more money in debt to lock into higher yields? What does that mean for fund flows? Because a part of the discretionary fund flows that comes either into PMS-AIF or into mutual funds, do you see that being tepid? Will it weigh on the markets in the absence of FIIs not coming in?
See, one is, to answer, Lata, my favorite has always been the power transmission REITs as the best fixed income product. It's a quasi fixed income, but it's really a fixed income product. It gives an yield of almost 10.5%. And if you get any upsides, that's apart from it. So if you look at that one, number two is medium range gilt scheme would be the number two. And number three, of course, is if you're a senior citizen, go into the plan, that's a very attractive instrument. So I would say power transmission REITs, gilt funds, and senior citizens, I think fixed deposit, those in that order of it. And if you really can't do any of them, a much larger quantum, then there are enough NCDs available of AAA rated NBFCs, which you want to go into and lock into your 3 to 5 years. I think if this four, you should cover your fixed income requirement. Okay, sorry, what's the second point you made, ma'am?
So I was just asking, so is this sort of shift already underway? Are HNIs really looking at moving money from equity to debt? And do you see that play out in terms of, domestic fund flow slowing, etc.?
Oh, slowing, I tell you something, slowing I don't think will happen, but any prudent high net worth has reason given to high net worth only because 90% of them have a reasonable fixed income portfolio. I can tell you by experience, I can tell you by people we know, we work with, everybody has a reasonable fixed income. In the last 6 months, if you've noticed, so many bond issues have come in the market, oversubscribed by a multiple, just like equity issues. Lata, you will remember, we don't see them anymore, but this time, the first time, NBFC bond issues got oversubscribed for multiples. And I think that tells you the story that a lot of money is going there. Now, will there be a shortage of money for equity markets? I don't think so, because very simply, between the Provident Fund and the NPS scheme, they bring in hell of a lot of money to the ETF market for the equity. So they alone bring a huge corpus. Number two, unfortunately in India, MSME is a dying business today. So anybody who wanted to set up a factory now says, why should I work harder? There are other people doing harder work for me, which is the people in the stock market, other companies. So the big movement of money you're seeing today is not necessarily savers, is also people is to reinvest money into smaller factories, shops, establishment. All are going to the stock market. Typically the business family would say, if the son-in-law comes in or son is born, let's put a factory for him, let's get a shop for him. No, now this says, might as well put the money in the mutual fund. So I don't think there's shortage of money between RPF, NPS, and these kind of money flows. I don't think there's shortage. There are no genuine savers. Are investing in the market is very small. Believe me, it is the higher net worth which is saving. Otherwise, we won't have credit loans of the magnitude we see today.
Okay, Ajay, let me swerve away from the budget for just a bit. Paytm, your thoughts? Those who are holding it, those who want to think that at lower levels it's a buy. What advice? Okay,
I'm holding it. So to that extent, it's you read in the morning and you get up and it says, what the hell is this going on? Okay, but I think, more than that, I think losses, we make money losses and all is not the point. I think the critical issue is, are we going back to the era where banks were being protected? Full decade of money made by HDFC banks, I say the bank was because of the protection of RBI. I wonder whether things could have been done better. You could have sacked the CEO, you could have removed the CEO, done something to the compliance if they're genuinely not complying, if they're not. Because with great difficulty, we have an iconic payment system company in this country. It is so sad to see that you had to slap it so hard and causing dislocation, companies, small traders, and these are all dislocation to small businessmen, small people. This time, it doesn't, sometimes doesn't sound well, Lata, that RBI governor had multiple choices to enforce compliance, not to come to this point. And I'm not speaking as an investor, okay, we lose some, it may come back again, eventually it will come back, that's not the point. But the dislocation caused, and the India story, which we used to tout about everywhere as you travel in the world, we used to quote it as an example. Now that has now suddenly shivered. So I somehow have a feeling that, is it coming more from protecting the banks, which are losing literally the mojo at this point of time compared to the fintechs, or it could have been handled a lot better without dislocating the economic system. Paytm is systematically important to a lot of small traders, businessmen, vegetable sellers, all kind of kirana stores, etc., etc. So to me, more than stock price, the dislocation I think should have been avoided. Still, there is time to do it, and I think I would expect RBI to do something which is more proactive than coming and just banning it at the end of the day and saying, the guy doesn't listen to me. Come on, who can afford not to listen to RBI governor in this country?
Fair point. Ajay, thank you very much indeed for joining us. Take your point about the dislocation. But I'm not very sure Paytm is such a big threat to the banking system. Banking system payment is threatened by Google Pay. Yes. I don't know whether Paytm really took away much business. But anyway, dislocations can always hurt. Sure. Go ahead. We have another guest ready for us.
Sandeep Tandon, founder and CIO of Quant Mutual Fund. Sandeep, thank you so much for joining us. Your first take.
Thanks, Malashmi. See, I tell you, my personal view is that the market has become much more mature now, and the relevance of budgets and this interim budget has diluted significantly the way it happens globally, because you keep on getting so much data points on regular basis, policy announcements. So relevance as a budget, as a phenomena which used to seen in last many years has reduced, which is a good step. But overall, I think despite election year and a lot of people were expecting a lot of popular stuff, I think it's a very, very mature budget and focus on fiscal deficit aspect to 5.1. The only disappointed, I was saying, the market was expecting much higher capex. Okay, the spending aspect has reduced considerably as compared to what we have seen. We're talking about a growth of 11% versus 30% what we have seen in last 33 years average. That's the only disappointment which market has more from a capex point of view. Otherwise, broadly, reasonably good budget.
Yeah, Sandeep, I take your point that the expectation, there were outlier expectations of a 20% rise in capex to about 12 lakh crore. At 11.5, I think 11.1 lakh crore, those people, I guess you will be in that group, would be disappointed because that was the only thing that was working very well for India. Sandeep, is there any disappointment on the FMCG front? The expectation was there will be bigger transfers. The PM Kisan Samman Nidhi was expected to go up from 6,000 rupees per year to 8,000. That was a big buzz. And some people were hoping that that would be positive for rural facing stocks. You don't see that as a disappointment?
When it comes to expectation, obviously this expectation was there. But I don't think we should get disappointed up to that extent, because overall post-COVID, what a phenomena we have seen. We are seeing now overall rural demand is picking up post-COVID, and then the logistic challenges which we have seen and courtesy inflation also. I think things are looking, we are more optimistic on the consumption as a cycle. I think from this quarter onward is coming back. So overall consumption theme anyway looks good. That's one of the reason we launched our consumption fund very recently. It's linking with the this thesis.
Are you moving away from industrials, Sandeep?
No, we are not moving away because what our thinking is that the easy phase, like I'm talking about, easy phase of market is over, easy phase of expectation which we got, that is largely over. But we remain very constructive from India perspective. I always say this decade belongs to India, this maybe half century belongs to India. So the manufacturing as a thesis which is building up, a new thesis which people never thought of, that India will emerge as a key player in the manufacturing side. I think that segment is evolving. Look at the smaller companies. Sorry, I have a viral, so my throat is...
No, we wish you well, but we're able to understand you very well, Sandeep. So no problem in
from SME point of views and the mid-sized company, we have never seen this sort of order book position. We have never seen this sort of excitement in the entrepreneurs, which we are seeing in last 6 months or 12 months. I think so that is a very constructive background which we have from a longer term perspective. Okay. And obviously, which means that mid and small cycle has not peaked out as compared to a lot of people who are expecting that market is peaking out in this space. I think it's a new beginning. Maybe sector rotation, stock rotation will continue, but India looks amazingly good. And so it remains a very buy on this sort of strategy for us. Okay.
Sandeep, I've not asked you about the sector of the moment, public sector banks. This huge rally that we have seen in the bond markets, yields have fallen from 7.18, I think overnight, now 7.07. An effective half a rate cut, so to speak, 11 basis point rate cut coming. Is that making you more attracted to any sector, public sector banks, banks in general, NBFCs, just anybody?
So obviously, this is more constructive of the public sector bank versus private sector bank. And we as a house has been bullish for last 2-3 years in this space. So it remains very constructive from a longer term perspective also. But if you look at Lata, yields have peaked out globally, in somewhere in September, October of 2023. So it is on the declining side. But we have to keep in mind that from a very near term and medium term perspective, yields has potential to correct. So maybe we can expect maybe closer to 6.7, 6.75. That's what the yields which we expect maybe in a year's time. So it's a very constructive space for the private public sector banks.
Do you think NBFCs are more advantaged when the market yields fall? See, it's not a rate cut. So banks don't get the advantage of perhaps lower deposits. There is still such a scramble for deposits. There is nothing in the budget which eases the liquidity crisis in the interbank market. But with the market yields going down, do you think NBFCs are more likely to benefit at all?
So sentiment point of view is yes, and they will be a beneficiary of that. But we have to, if I look at from the market perspective, I think this sector has been trading in the most admired territory for a while. So from a market perspective, whether people will make money out of NBFC stocks looks very, very difficult versus private bank and versus even public sector banks.
That the finance minister talked about today, the EV segment, the green energy segment and housing. Does any of that sound exciting to you at this point?
See, green energy as a thesis, we think is going to stay there for a longer term perspective. But the challenge from the market perspective is that you don't find many companies and some of the larger groups who are implementing this green energy thesis or the hydrogen, or if you talk about on the renewable side also, it's a time consuming process. So one has to be slightly patient, it will take 6-7 years to really build something what Mr. Modi is talking about. So maybe 2028 till 2032, maybe we'll see some meaningful numbers in this segment. Otherwise, right now, if I look at the stocks, obviously they looks very expensive, what is happening, but somebody has that vision, which we have. I think this is the area, it should be your core position, it should be a strategic position, or what I call a decadal view sort of thing. Some of the stock one should look into.
Okay.
But in all these categories, for example, green hydrogen EV itself, most of the stocks that you find are, blended stocks where some part of the business is getting disrupted, some part of it is, in expansionary stage. How do you navigate that? Would you ignore them and, go only for pure plays?
I think yes, I agree with you. That's the reason pure play also, whichever pure play is available, either they are very small or they are too expensive.
Exactly.
Okay. So as a house, we have taken a conscious call not to get into these smaller names and look for a larger thesis. Some of the conglomerate sort of companies who are implementing these larger projects from a longer term perspective. But again, I say they all also look slightly expensive right now. But if you have patience and vision for next 8-10 years perspective, I think these are the areas where you will get exponential returns.
Two or three sentences from the budget, and I just want to know if there is a stock market play on it. One is that they are going to increase rural houses by 20 million. That is 2 crore more rural houses in the next 5 years. Then solar rooftops are going to be extended to, I think, 1 crore houses. And that will mean free 300 units of power for these 1 crore. But importantly, rooftop solar. That's another independent announcement. Will you play these as stock related announcements? I mean, will you go for, say, cement because of rural housing finance companies? I don't know, HUDCO. Of course, it's rural, it's not urban housing. Any of these, do they give you stock ideas?
Yeah. So frankly speaking, Lata, as I said, smaller names are anyway very expensive. So I will play with larger thesis like infra. If I talk about the construction companies, you want to talk about the cement companies, you want to talk about metals company, but pure play solar panel sort of thing are very limited names. So I will play a larger thesis as a fund house rather than playing for the smaller names, okay, which is hardly have any liquidity and they have rallied a lot.
Okay. Well, just one final question, Sandeep. There is also an announcement of this 40,000 bogies, which will be converted to Vande Bharat. BML or anyone a likely candidate here?
Yeah, definitely, Lata. Some of these names looks very interesting, but the only thing we have to see up to what extent this has been priced in. If you look at the runaway moves which we have seen in the railway stocks and the railway related companies, moves has been extraordinary. They have, multiplied in last maybe in 1.5 years or so, or multiple times return they have already given. So if somebody has that vision from that longer term perspective, yes, very good. But I will not like to react on instant basis because this announcement has come, because up to large extent it was on the expected lines and it has been factored up to large extent.
What is your prime hunting ground today?
So if you really look at nothing new has emerged out of this thesis.
Correct.
So same if you look at from the government perspective and from a market perspective. So larger thesis, power energy thesis continue, PSU as a themes continue, PSU as a bank's themes continue, larger infra projects continue. So I don't think, Mahalakshmi, that anything new has emerged out of this budget. As I said, these budget or interim budgets they have lost their relevance. So I think the traditional thesis which we are talking about in last many months, I think those themes will continue from a longer term perspective.
So can you recount that for us? Because in all of it, like we spoke, in many of these segments, I mean, budget is done and dusted. Now, from here on, where do we go? What is your main hunting ground? That's what I wanted to ask, because all these things that you mentioned, many of them, again, have priced in. And today's market is really a giveaway that a lot of good news is not really impressing markets.
So beginning of 2000, let's say from September 2021, we have been talking about the that this decade belongs to value as a thesis. Okay? And the growth stock or the stocks which were in the admired territory, they have peaked out. This is a thesis I have been talking for a while. I think I would like to extend the same thesis that value as a thesis has potential. Then if you look at the value, where's the value? Obviously, large public sector banks, which are in public sector enterprises, which are in a unique situation, there's still deep value in some of these companies. So we obviously remain very constructive on the PSU as a thesis. Okay, I'm not talking about a smaller name, but larger conglomerates of the government. Those are the names which we like. Then if you look at other areas, the larger inference, obviously cement looks good to me. Even it has to be linked with the metals as a whole, both precious metals, both base metals and ferrous and non-ferrous, both space you look at. So metals looks very good, cements, metal, PSUs. And up to a certain extent, I will say, the construction companies, EPC companies, because ultimately leads to that. Maybe with some disappointment, which we have seen on the capex cycle, so maybe the capital goods stocks might peak out or they may stagnate from a medium to near term perspective, but long term perspective, they also looks very good. So I would like to remain focused on the energy, power energy as a theme, PSU as a theme, metals and cement as a theme. These are the larger themes which I would like to stick with that.
Summary of what investors and traders should watch out for. Sandeep Tandon, thank you very much indeed for joining us with your thoughts on the market and the budget. Okay, we have an expert waiting patiently with us in the studio. Rajesh Palvia, the technical expert, is with us. Rajesh, thank you very much indeed for your patience. Well, the market at this point in time not able to break out. I guess it's also a global phenomenon. So what are the ranges you are playing at this point in time? Is there any BTST trade, any buy today, sell tomorrow trade?
So we have weekly expiry for Nifty today, and Nifty is at this moment it's showing very muted kind of behavior at this moment, both Bank Nifty and Nifty. Though volatility was there throughout the day, but still we feel that if he holds 21,700 level, then possibly we may see some more uptick from the current level, and possibly Nifty may attempt to move further higher towards 21,800. That's the major supply zone for the day. As you were discussing about the most of the PSU banks, and I think the post-budget this speech, the major traction was seen in the most of the PSU banks, be it Canara Bank, be it Punjab National Bank, Bank of India, Union Bank. All these banks have shown good buying interest. So I think one can look to buy Canara Bank at this moment. A very strong set of buying interest is taking place. This is the 5th consecutive month where stock is forming higher high low formation. That clearly shows that there is a sustained buying action is happening in Canara Bank. So I think one can look to buy this stock for upside target of 520 to 530 with stop loss of 480. And another stock from that basket is PNB. Very strong buying action throughout the day. And I believe that this momentum can continue further, and possibly we can see target towards 128 to 130 in the Punjab National Bank with stop loss of 112. I think another theme which is playing out post budget, that is insurance stocks, that we have seen some buying interest in most of the insurance stocks. Private insurance, like we are seeing
I'm
that
seeing SBI Life
yeah,
3% right now.
Yeah. So SBI Life is showing good traction, as well as ICICI Pru. These two stocks are.
Life, yeah.
So all these insurance stocks are also showing good traction post this speech. So I think one can look to buy these stocks because a lot of consolidation action is already done in most of the PSU this insurance space. And almost most of the stocks are now recovering from their important multiple support area. So SBI Life is our preferred choice at this moment, and the kind of breakout which we are seeing on the daily chart, falling trend line breakout is already there. So we believe that SBI Life can continue further more upside towards 1480 to 1500. So one can buy this stock with stop loss of 1400.
Even Maruti, Maruti is up 4% in Nifty top gainer. That stock has not been doing particularly well. It's sort of been struggling and been in a range for quite some time.
Motors, 9% higher for the week. So any trades in auto stocks in general?
Yeah. So most of the auto stocks like Tata Motor, Maruti, Hero Motor, these all stocks are enjoying their upward momentum, and now Maruti is approaching to its all-time high trajectory. Looking at the breakout again above 10,500 mark, I think Maruti is the stock where one can look to buy. possibly we can see a target towards 11,000 to 11,200 in the continuation of this up move. So possibly yes, one can look to buy this stock with stop loss of 10,400. Tata Motor is clearly a winning stock from this automobile space, and the kind of traction which we are seeing since last couple of months, that clearly shows that now this stock is going to move further higher towards 1,000 level also in coming months. So I think one can look to buy this stock for positional perspective. Buy and dip should be your strategy to accumulate this stock. Stop loss one can keep around 830 and possible target 950 to 1,000 we can see in Tata Motor also.
Do you watch Power Grid? What's happened to that stock? You just pull up the chart. I mean, it's crazy. Just in the last few days, that stock has gone from some 230 to 270. Well, I don't know if there were any specific announcements. We did have Ajay telling us that transmission.
Yeah, but the whole thing, generally. I mean, the whole power pack, I mean, Power Grid definitely, even REC, I mean, even NBFCs like REC, PFC, I mean, one day it's up 6%, next day it's down 7%. I mean,
but Power Grid, you look at the chart. It's just a one-way street.
Yeah.
Anything? I mean,
it's almost enjoying its all-time high trajectory, and the kind of buying interest which we are seeing since last couple of months, that clearly shows that now we can see further more traction towards 300 kind of zone on a positional basis. Very strong buying action is happening, though stock is in F&O universe also. So a lot of built up is there on the data also. That clearly shows that strong buying action is taking place. For trading perspective, 285, 290 is the target. So one can buy Power Grid with stop loss of 250. I think from power space, one can look to buy this NTPC also and Tata Power. These two stocks are also looking promising. So I believe Tata Power and NTPC is also can show good traction on the higher side. NTPC we are projecting target towards 345 to 350. So NTPC is buy and Tata Power is also showing good traction. So I think these three stocks are looking promising from the power space, and one can hold their long position.
Also, what's your take on oil marketing companies, Rajesh? Because HP, BP, all of these companies have seen such sharp spikes again.
Yeah, most of the oil marketing companies are trading about to their near-term, short-term breakouts level, and the kind of momentum which we are seeing since last couple of months in BPCL, HPCL, that clearly shows that we may see furthermore upside momentum. HPCL is now approaching to its 2017 swing high, so that is going to have a multi-year breakout on the chart. So if stocks crosses above 470 mark, then possibly next target we can see for Hind Petro towards 530 to 540. So I think yes, one can hold a long position in HPCL with stop loss of 435. And BPCL is also looking promising. Now stock is penetrating to its multiple supply zone on the long-term chart. Now stock is approaching towards its July 2021 swing high. So I think that this is again multi-year breakout is taking place on the BPCL. So possibly yes, once stock crosses above 520 mark, then possibly next target we can see towards 600 to 620 for BPCL. So oil marketing companies are also in the limelight, and I think buying interest is there. And looking at the derivative setup also, we believe that this long built up can take these stocks to further higher trajectory.
Any other pocket that that seems to be shifting in terms of momentum?
So I think one can look to buy and accumulate IT stocks. Though there is no as such relevance to this budget, but yes, IT stocks are showing good traction, and a lot of accumulation activities happening in most of the large cap IT stocks. Though the price range is still it's in consolidation, but looking at the overall structure and the kind of accumulation which is happening, I believe that TCS and HCL Tech, these two stocks one can look to buy at this moment, and we believe that these two stocks can do well in coming weeks. So possibly IT is the sector where one can look to buy and accumulate at this juncture.
Okay, you have a view.
So the heavyweights, Reliance. Last week we saw, earlier this week, last week, so whatever, the day we saw this big spike in Reliance. HDFC Bank, the spike the other way around. TCS again speaks. So these are all heavyweights which have seen like 5-10% move in a day too. How do those charts really look to you? I mean, are they shifting trajectory?
So I think yes, as you pointed out, Reliance very strong buying action is happening in the stock, and the kind of breakout which we have seen in the recent past, that clearly shows that now Reliance can move further higher. Like we are projecting target towards 3,000 for the Reliance and on a positional basis. Though HDFC is not participating in this up move, but stock is now trying to attract some buying interest at the lower level. So HDFC Bank, if it continues to hold above 1400 kind of mark, so then possibly some buying interest we can see in the near term basis, and possibly stock may start recovering from this oversold trajectory. So already stock is in oversold trajectory, so some buying traction would be there. So most of the large cap stocks are now holding the ground, and we believe that these large cap stocks can continue furthermore compared to the mid cap space. So I think in a near term perspective, one can look to buy large cap rather to focus on the mid cap. So our preferred choice would be from automobile, Tata Motor, Maruti, these two stocks. From Reliance Industries looking promising. From oil marketing company BPCL, HPCL is looking promising. From banking space, ICICI Bank, SBI is looking promising. So these are all large cap one can look to buy for near term perspective.
Sure. Thank you so much,
We'll take a break from technicals. Thank you very much for handling so many stocks.
So we have our another guest. Yeah, another guest, Madhu Khela. Madhu?
Yeah.
A big day for your best hunting ground. Big spike in PSU stocks. So let's talk about that first.
Yeah.
Banks especially, and your favorite Canara Bank.
Mahalakshmi, I would say that, it was an event which was in a way a little special because we were in an election year, and, it would have been expected that they will be far more populistic than what they have been. But their intent to curtail the fiscal deficit this year and also give a 2-year guidance that it will be at 4.5% is actually very, very heartening from a overall market and as well as from a country perspective, because this will lead to reasonable amount of borrowing. This will lead to reasonable amount of liquidity being left for banks and private sector companies to look for their requirement of capital. So that is one very positive thing which I could get from this budget. The other thing is basically continuation of all the good work which has happened in the last 10 years, whether it is on the housing front, whether it is on the infrastructure, whether it is on power. So basically continuation. And third, when I looked detail into numbers, they are all very credible numbers. So it's like any corporate which has done well, under promise and over perform. I think they've got the formula right. So they are actually really outperforming whatever they are saying for last 3-4 years. And fourth, I would say, is stability of taxes, which again is very important that, for last few years, there is no tinkering, and wherever there is a tinkering, it is only positive. So all in all, as event passed by, that the importance of budget from a market perspective is diminishing. So this is an event which will last for 2 days, and we are back to basics.
I agree, and that's how it should be, right? In mature economies and markets, you shouldn't have too much policy tinkering. But is there a lot of juice left in banks now, with the with the yield curve itself falling sizably, about 10 basis points? Will you prefer still only the PSU banks? Banking in general, your thoughts, and in particular HDFC Bank?
Lata, I would not comment on a particular bank person, but I would say my 30 years of market, if you look at last 3-year performance of the overall bank Nifty, as well as a lot of private sector banks, right? What has happened? PSU banks by margin have outperformed, by margin I'm saying, significantly as compared with their private sector peers. So that's point number one. I am a big believer in markets and its trends. Like, my opinion has a very finite value, but what market is doing has infinite value. Second, when I look at public sector bank, are they overvalued today? A lot of public sector companies are trading at 30, 40, 50 PE multiple. Public sector banks are still below 5 PE. If I take a 2-year forward view. So either that portion of the market is significantly overvalued and that has to correct significantly, or they have to correct to come to some median level. I'm not trying to compare a defense company with a public sector bank in terms of PE multiple, but still there has to be some resemblance, right? Third, all the worries vis-a-vis which was there vis-a-vis public sector banks, whether it is governance, technology, credit cost. Lata, I meet these people very often. It's actually a delight to go and meet them. They are talking the language which any other good private sector bank is talking, whether it is in terms of technology, whether BCG and people like them advising them. So I think these banks are not peaked out at 4-5 PE multiple. There is still some way to go for them.
Okay, that's extremely
Madhu,
positive for those who haven't come in.
divestment number has come in at 50,000 crores. And of course, we don't know, where this money is going to come from, what stakes will get sold down, etc. This is a question that has been confounding me. I mean, if we were to have a lot of supply from the government, and that comes through the OFS route or gets sold down from the ETF route, do you see some kind of value destruction or a threat of any sort that could abort the PSU value? I mean, we have experienced this before, so I can't not ask that question.
No, please ask. Mahalakshmi, let's put things in context. 3.5 years back, the value of all public sector companies put together was less than 13 lakh crores. Today, it is more than 50 lakh crores. I repeat, more than 50 lakh crores. This is the only sector which has actually gone up 4 times. Sector as a whole, right? And they are clearly the leader of this bull market. Mahalakshmi, 50 lakh crore rupees mein, if you divest 50,000 crore rupees, do you think it is going to make any impact? Or any meaningful, long-lasting impact? In fact, I obviously don't have any information, but my judgment tells that, the government somewhere has understood that if they truly unlock value of this public sector enterprises, that is what can give them enormous animation to do good things, whether in infrastructure or housing. Today, the government wealth has gone up on let's say 13 lakh crores if you owned 60%. The value of your holding was 7 lakh crores. On 50 lakh crores, if you own 60%, the value of your holding is 30 lakh crore rupees, right? So if the government comes with a full majority and they decide to divest, couple of these companies, then I think this number in 2025, 26 and 26, 27 will be much, much larger. If not, at least the dividend income itself will be much larger. So I do not think the divestment of 50,000 crores will have any meaningful impact or there will be any re-rating in public sector companies.
No, do you see value in any of the other PSUs, Madhu, apart from banks?
So Mahalakshmi, we are carefully examining. We find value in some oil companies. Right, they are quite attractively valued. I obviously feel in the short term there is a little bit of valuation discomfort in railway and even in select defense stock. But I think there is still value in some pockets in the PSU. And if what my judgment is, if they truly come and divest even 2 or 3 companies in the next 12 months, I think there is still long leg. And obviously we will all change our opinion, including me, and we'll start looking at PSU companies from a different lens.
It's a long tangle. They have not been able to bring the PSU banks under the Companies Act. So at the moment, it's still a huge 51% held by the government, and therefore the CVC, the courts, the whole attitude is different. The CVC looks at them, the CAG looks at them. So it will take a bit of legal changes before the PSU banks can be divested. So we have to, I think, distinguish the PSU bank story from the divestment story.
Correct.
No.
Exactly, I take your point. Exactly.
I did not mean that public sector banks will get divested, but it is entirely possible that shipping corporation may get divested, may get divested, and which has been pending for last 5 years.
No, I take your point. I take your point that we should not attach it to the banks. The banks are attractive as good businesses that are undervalued.
So you were saying railways is you're not comfortable with valuations in railways. Is that
what about one of the companies I want to add to her list, BEML, because there is an announcement of 40,000 bogies to be converted into Vande Bharat style bogies. Would you make a distinction on some of the railway stocks? Are all of them overvalued?
No, I am not comfortable, Lata. I manage my own money. I am finding a lot of value in other pockets in the market. I am not comfortable investing at these levels in railway stocks.
Okay. Which other? You are finding value in other pockets. That was a great giveaway question. Which others?
So I think we are still looking at a lot of infrastructure companies, specifically in the EPC space.
Okay.
We are positive in select financial stocks. Even we are looking at 2-3 private banks which are very attractively valued. Smaller private banks. We are looking at pharma companies. I think if you look at the pharma companies' result in the last 2-3 quarters, distinctive improvement, and all large cap pharma companies have made their life high, and it is one sector which in a way has kind of underperformed. So I think on a bottom-up basis, Lata, there is still a lot of opportunities in this market. And what the new change which we have brought in, Lata, I'll just take a minute. When we do research and when we execute, these are two completely different timings. So we have to completely do our research and be ready. And markets keep obliging because of volatility. And you keep getting your entry points.
Okay. Is IT an entry point?
Selectively, yes. Oh. We have invested in 2 or 3 mid-sized IT companies, and surprisingly, Lata, it has done far better than what I would have expected they will do.
Okay, that's good.
What's your take on Paytm, Madhu? Not a question we can't ask today.
No, Mahalakshmi is a regulatory issue. What can I comment on it? Let the regulator and the company come and clarify. I don't think it is something, it's fair on my part to comment on this.
Okay, then can I give you a related stock, PB Fintech? Well, not related, it's not a bank, but PB Fintech has reported fairly decent numbers. Any thoughts?
It's a company which has done well, and I think they have delivered on their promise. Lata will refrain from talking on individual companies. I'm sorry, from a compliance perspective, I would stick to the broader themes.
So, in terms of all the segments the finance minister talked about today, for example, I think dairy we didn't pick up at all. She sort of talked about the dairy sector and expanding capacities in the dairy sector. Do you care for some of those stocks, Dodla or Heritage?
The only point which I picked up, Mahalakshmi, today, obviously it looks like a really large inclusive growth. If you look at her opening statement, what all is being achieved in the last 10 years, it makes you really bullish on India, right? Because when you look at year on year, you don't realize what is the kind of quantum of work which has happened. But the only statement which I could pick up, there seems to be tremendous potential on the tourism sector, right? And they are starting to talk about religious tourism now. Whether it is Ayodhya or Ujjain or going now to Vaishno Devi or, to southern parts. I think there might be some hidden jewel out there in the tourism side, whether it is on a services or on the asset side. We will look deeper into this sector.
Okay, fair enough. Sorry, you talked about pharma, Madhu. You've always been very bullish on pharma. Now, as an overall opportunity, pharma, we've talked about this multiple times in the past, as a longer term trend, it continues to be a very small portion of the index. Do you see that expanding? Do you see that story finally changing? Do we have the conditions for that to happen?
No, it is already happening, Mahalakshmi, compared to where we were 10 years back. Let me give you a context. When we became bullish in pharma sector in 2009, the value of the entire pharma sector was half the valuation of DLF. DLF was 2 lakh crore rupees, and the entire pharma sector was 1 lakh crore rupees.
Correct.
that 1 lakh crore market cap, now we have moved to more than 10 lakh crore market cap, right? So in a way, it has done well in a medium long term, and I remain very, very positive on the sector, given that what is happening geopolitically, our ability to prove in the COVID time that we can actually do something like a vaccine for such a big disease in matter of 12 or 18 months. So I think there will be pockets of opportunity, including the domestic opportunity. So it's a very large basket, Mahalakshmi. Trust me, there are lot of companies where money will be made here.
Sure. And just quickly, your top 3 bets today from from this year's perspective.
My biggest bet is India in markets, Mahalakshmi. I think
that is not going to change ever. So,
as my guru Rakesh Jhunjhunwala used to say, that this is a buffet out here. You eat what you want to eat. Just remember that you don't overeat, right? So it's a market which is not like, you can't say top 1 or 2 or 3. It's a market which is bottom up. We have to do our work. The opportunity is wide. And I repeat again, which I said it in your channel, to my mind, it's an Amrit Kal for the next 5 years for equities. So obviously there will be some corrections in between, and the correction is the only hope for investors now. That if someone has not bought equity, correction is the only hope.
Sure. That's all really, Madhu. Thank you so much for your time. We'll quickly go over to. Okay, so we have 2 other guests at the studio, Jigar Mistry from Buoyant Capital. Jigar, your quick take. Right here, we were, last year discussing insurance companies, and it was a big blow, and they were amongst the top losers. True, ICICI was the top loser last year. Today, I see the biggest gainer, not the biggest gainer, but the first, the second name in Nifty that is showing a 3% gain is SBI Life. So it's a bit of a, reversal. So life insurance companies in focus, what's your take on that sector? And then we'll go to, other broader views.
No, I think, Mahalakshmi, first of all, thanks as always for inviting to the studio. But I think, effectively, for the sector per se, there is nothing, for neither sectors, I think there is anything to take away. The broader take is that no news increasingly is becoming good news, right? In a 38 lakh crore budget, all they are doing now is tinkering with the 11.5 lakh crore personal income taxes. And even within that, the corporate taxes are more or less decided. The GSTN decides the GST rates. And if I just take the numbers from this budget, they're going to make 3 lakh crores more on the revenue side, of which interest takes away 1 lakh crore. Capex is hiked by 1.5 lakh crore. And fiscal deficit is reduced by 50,000 crores. So this is broadly the sum and substance of things. 5.1% looks great, but from a peak fiscal deficit 2021, we sort of had a fiscal deficit of 18 lakh crore that comes down to 17 lakh crore in 5 years.
Right.
So I think that is where it is, but the nominal GDP grows up so that 9.1 starts looking like 5.1. I think this budget will more or less be remembered by the confidence of the government in not doing anything which is loosely considered as, sort of populist.
Right.
So I think from that standpoint, making it more boring every passing year is the best we can hope them to do. Yeah. So
right.
Very, very happy with this.
5.1% number itself, I mean, do you think it is achievable? One, positive is that they have contracted the, size of the budget itself. You look, the revenue and expenditure, both numbers have come down. So that makes the 5.1% number also smaller and therefore more achievable. But would you still see greater risk of that not being achieved this year versus achieving?
Not really. So if you look at the revised estimates of the budget, I don't think they are accounting for the fact that we are running a little ahead on the tax collection. So unless something dramatically wrong happens in the fourth quarter, which is unlikely, then the revised estimates itself is going to be higher. So the actual is going to be higher than RE.
Right.
And on top of RE, they are assuming like a 12% growth on taxes, broadly speaking. So I think most of them is along the expected lines. The only place I thought, if you remove the non-negotiable items, so defense, subsidy and interest, if you remove them, then the other sort of revenue expenditure goes up from some 16.1 to 16.3 lakh crore. So maybe there is something there, it just rises by 12,000 crores, maybe that is a bit of a misnomer. But everything else is cleaned up, right? Earlier you had IEBR, if you remember, railways, part of spending was out of the budget. So start 2017, they bring GST, take care of that. 2019, corporate taxes, take care of that. Then 2022, you actually bring the capital spending within the budget ambit and no longer the extra budgetary sort of support.
Right.
So from that standpoint, I think they want to make it a very clean statement. And as I said, that's great news for somebody who is just looking at numbers the way we are. So not unachievable is the way we sort of look at this.
Right. So what do you think of this, 50,000 disinvestment number? Usually, the track record so far has been, fairly disappointing. And many people now count the disinvestment figure like a, balance of sorts. You put all the items on both sides and whatever remaining, you plug it as disinvestment. But truly speaking, do you think that could happen? Could there be positive or negative surprises? Not positive, but definitely negative surprises.
So I think given the time, there may be a question here and now. So 56,000 this year, maybe 79,000 is what they pencil in for the next year. But I think as you look at the overall scheme of the available supply that is out there. Now, from one standpoint, look at India as an economy, right? We would want a lot more supply of paper given the rising demand. From a household savings standpoint, equities is still not more than 4 or 5%. India in the early 90s used to be 20, Western countries are at 50. So if all that money is going to be channeled into India, and assuming FIs are also likely to put in a lot more money going forward, then if you don't want to risk serious inflation in the asset prices, then demand supply has to be matched.
Right.
So from that standpoint, there will be some new listings, some old promoters selling out, etc. But I'm hoping that once the sort of until now hated PSUs come out of their, towards their fair valuation, then I hope there will be, for a lot of companies, it's not even meeting the 75% limit, right?
Right.
So government at least needs to do that in order to make it at par.
Yeah.
So I think hoping for a lot more supplies into the market so that at least some semblance of pricing is remained.
Sure. So we will come back to talk more, but before that we go over to my colleague Sonal Mehrotra Kapoor for MC takeaways from the budget. Sonal?
Well, thanks ML for that. 58 minutes of absolutely no surprises. Is that a sign that the government is absolutely confident of what's coming in the upcoming elections? Or is that a sign that this is not the time to rock the boat? What exactly were the implications coming out of this budget? So what we've got for you over the next couple of minutes is takeaways. We've condensed all the points, looked at it from a political lens, from a personal finance lens for you and I, Aam Aadmi. And then we've also looked at one of the key emerging themes, which is women. Nari Shakti came out one of the key themes from this budget as well. But let's start by first giving you the key political takeaways that come from this 58-minute speech of Nirmala Sitharaman, one of the shortest we've seen from her at least. To start with, confident Modi chooses a prudence ahead of polls in a no-surprise budget, really. That's what everybody is talking about. What was there, really? Is that now the political party, the BJP, would like to say that this is a sign of confidence. Prime Minister, shortly after the speech, also came out to say this is one for the masses. He also said this is one when he is looking to benefit all. The second point, really, is the focus that came on 4 key groups: women, poor, farmers and youth. The word, as the BJP we know, and the government loves to play with lots of little words out there, has been Gyan. We'll come to all those updates in a bit as well. Also, if you look at the political takeaway, it has been 2 crore homes to be built under the PM Awas Yojana. These are 2 crore more, remember, than what came in last year. Also, the new terminology that we spoke about, that is of 3 terms that actually came in. One of FDI, that is the finance minister called it First Develop India. The second was GDP, governance, development and performance. And the third, the one that has become a major pillar for the government this election and this budget, at least ahead of election, has been Gyan, Garib, Yuva, Ananda and the Annadata, beg your pardon, and Nari Shakti. Now those were typical and your key takeaways coming from the political world. Let's go to the next one, the next set of graphics that we have, which will talk about implications for the Aam Aadmi and the Aam Aurat, people like you and me. Let's talk about taxation. No changes in the income tax rates or slabs that came, as many would say, almost expected from the finance minister. So nothing changing. Remember, the last year's budget was all about personal finance, the new tax regime, etc. So this time, the FM felt there was no reason to rock the boat. There was no reason to change slabs at all. Second point there that we condensed for you was, and this is going to make some people happy, old and pending cases of petty tax demands will be dropped, came the statement from the finance minister, got resounding thumping there in parliament as well. The third point is of new schemes for building or buying homes for those living in renting chawls and slums. Remember when she said it is for the poor, this is where it is coming from. And then, of course, no clarity on the tax collected at source. This is TCS, remember, on international credit card spends. This has been an area which the government has seen criticism for, and what we are trying to decipher is that there is no clarity yet. This will sort of be a bone of contention as we move forward as well. With that, let's move to the third set of graphics we've got for you, and one clear theme that's emerging this budget, which will underline a lot of political movement that you see in the coming months as well, and that is the key takeaways for Nari Shakti, or what the budget had for women. So, the finance minister talked about Lakhpati Didi a lot. Now, what is Lakhpati Didi for our viewers? It is a government scheme that enhances targeting women who can take loans from other sources. These are schemes that help women to start their businesses by connecting them to self-help groups. The finance minister talked about how this has been a major success for the government in the past couple of years, and they plan to enhance it further. Let's move to point number 2 then. The cervical cancer vaccination, another real populist move, if one can really call it that. The government has said that it will encourage vaccination for girls in the age group of 9 to 14 years for prevention of cervical cancer. Remember, this has been called a miracle. It has been called a major leap that one has taken in terms of medicine, and that being incorporated in the budget, also getting a resounding one. And we've noted that in our MC takeaways. Let's move to the third one, Ayushman Bharat scheme. Now, this is key because so far the Asha workers and the Anganwadi workers were not covered in this scheme. So now they have been brought under that umbrella as well. Again, going back to this large network of women, Anganwadi and Asha workers, but also the women voter base. Let's move to the next point. That is coming to us on the maternal and child health care. Now, schemes under these, there are several. The question before the government was that they had not been able to implement it very well. So now what the finance minister has done in this budget is they've got several schemes that run for mothers who are expecting and for little kids. They have been put all under one umbrella, and this is to enhance sort of the implementation of all these schemes as well. And number 5 on that list, what we have is upgradation of these Anganwadi centers on the whole. Now, so far, you know that Anganwadi workers, these centers that have been talked about, the network is pretty strong. But the feedback that the government got was that there needs to be upgradation of how these centers are built on ground, on basis of infrastructure, on basis of investments as well. So on that, the finance minister says that they will be making some solid changes. So that is emerging as a major theme. Well, we can go back to the, we're all right. All right, I'm told we can go across to Delhi, our Delhi studio, our political desk over there. My colleague Shweta Punj joins us from there. Shweta, some would say not a very blockbuster budget, but some would also look at these emerging themes, the acronyms that are coming up, the women-centric policies that we often, the announcements that we've heard of. Is that the sense you're catching up in Delhi as well?
Right, Sonal. So there was a lot of buzz, a lot of expectation that this budget would set the tone for 2024. This is going to be a precursor to the 2024 elections, because we've seen the Modi government in the 2019 budget, when Mr. Goyal announced the interim budget. There were a whole host of things for everybody. But in this budget, a very tepid increases in social sector schemes. The flagship centrally sponsored schemes have seen marginal increase in allocations, and some have not seen an allocation at all. For instance, Pradhan Mantri Kisan Samman Yojana, which is the Prime Minister's flagship scheme of giving a monthly allowance of 6,000 rupees to the farmer. There was an expectation that allocation will go up substantially, but it has remained the same. Even in Manrega, the allocation has not been substantially hiked. So clearly, as you said, and as we've been saying, that a very confident Prime Minister ahead of 2024. They have delivered a budget that's clearly making the market watchers, the economy watchers happy. They've stuck to fiscal prudence. They've, in fact, even in terms of infrastructure spending, the quantum of increase has been brought down to 11% from what it was last year. So a very focused budget. I have with me my colleague Meghna Mittal, who's going to be joining us from CII in Delhi. Meghna, what is it that you're picking up? What's been the response on the budget?
Yes, so here I have spoken to a number of industrialists. In fact, we have had a conversation with ITC MD Sanjeev Puri as well. And all the industry people, they have given a thumbs up to this budget. They have said that the government has really restrained from announcing any kind of populist measures ahead of the general elections, which does indicate definitely that the government is very confident of coming back to power. In fact, Finance Minister Nirmala Sitharaman in her speech itself also mentioned that in July the government will be putting forth a detailed plan of Viksit Bharat 2047, which does indicate that the government is confident, and that is why it is not announced any kind of populist measures like any kind of tinkering in the tax slabs or any kind of direct cash transfers to the
Meghna, if I could come in there, you know, you've been speaking to industry leaders. I wanted to get a sense on what are they saying about demand, because that has been that's been fairly lackluster. Also, private investments have not picked up to the levels one would have hoped. So what's the feedback that you're getting on these two? Does the budget look at rural incomes? Does the budget give a fillip to consumption in any which way?
Yes, so we have spoken to a number of industrialists in the FMCG sector, in the real estate and infrastructure sector, and also renewable energy sector. All the industrialists are of the view that government has kept its focus on where it was warranted in the agri sector, farming sector, like the Lakpati Didi scheme that has the allocation has been enhanced substantially. So all of this, that they are expecting that the rural demand will get a substantial fillip during the course of this year because of the focused announcements that the government has made. Even in the infrastructure sector, due to the capex increase allocation and the airports announcements that has been made, the affordable housing announcements that have been made. So infrastructure and real estate sector are also very happy. They are saying that it will give a good fillip to the demand in the sector. The renewable energy sector, again, they have announced a number of schemes in that. In fact, the rooftop solar schemes to 1 crore people, the incentive that has been announced. So that also the industrialists are of the view it will give a substantial fillip to the demand in all these sectors, which is a very good factor indicating that the demand was a little low, and demand increase is likely to be seen in the real estate, infrastructure, renewable energy sector, FMCG sector.
Any specific sectors, Meghna, whose CEOs seem much more exuberant than the others? Any specific sectors where you get a sense the CEOs and the industry leaders are much more exuberant than the others?
Yes, definitely. So that is why the FMCG sector is really happy because the agri and farming has been kept in the focus. The real estate sector, infrastructure sector are also very happy because of the various announcements that have been made. We have spoken to the Renew company head. So that's what she said, that she's very happy with all the announcements and which will give a big demand boost in the sector. The real estate, FMCG and the renewable energy, these three sectors are very happy with the focused approach that the government has taken with the schemes in these three sectors.
Okay, all right. Thanks so much, Meghna. I'll hand it back over now to our Mumbai studios where Mahalakshmi is getting us a check from the equity markets. It's over to you, ML.
Thank you so much, Shweta. So back to markets. Mildly negative, Nifty 50, 0.06%. Jigar, so back to you. What is your hunting ground now? I mean, I think the market's pretty much flat. Headline number, Nifty 50 is flat. We're just seeing some stray cases of 4-5%, but really not much to speak about, right? Does anything change from here between yesterday to today? Is there any change that you see in any particular pockets, in particular sectors or stocks?
No, Mahalakshmi, I think if you look at from a budget standpoint, nothing really changes, right? So as I said, the sort of, it's like watching paint dry, always fun. But you take a step back and look at what's transpired since March, end of March, right? So between 1st April and end of December, we have had some 327 companies whose share price had gone up more than 100%. These are more than 500 crores. I'm not talking about penny stocks. 80% of this have been small cap companies. Now, if you take one step back further and say who really owns the small caps. So if you look at the free float analysis, FIs own 42% of large caps, but retail investors own 49% free float in small caps. And every single time a rolling return, 3-year rolling return number, comes to the more than 30% zone, the next 2 years have not really been great. So it has happened before in 2013, 2017, 2020. And the time to buy small and mid caps as a genre per se is when you see a 3-year rolling dip in the negative. So I think as a fund, what we are trying to do is we have had great exposure since March. We are almost 65% in small and mid cap by March. Given the rally that has transpired, I think large caps as a cohort looks a lot more attractive. And there are some stocks which are like now one step away from being meme stocks. So I think that's always great to own. Finance, pharma companies, some of them are interesting. Right. There are some small and mid caps which may still make the cut because 30% of the fund is still small and mid caps. But I think predominant focus has to be to some extent capital protection given the run up that we have seen. And within that, I think finance and pharma makes a lot of sense to us.
Okay, so memes is your magic mantra.
Yes.
It's the new filter.
Yes, one step away from meme is always a great time to invest.
Okay, cool. So we also have Raja Venkatraman from NeoTrade. Raja, so from morning till evening, what has changed? Technically, are there stocks that seem like they're shifting orbit? Is there anything that is visible to you that is unexpected?
Yeah. First of all, thank you for inviting me to the show. So while we were expecting that nothing much is going to happen and everything played alongside. So what has really happened is that the market continues to remain in that flattish zone. Yeah. So everyone were expecting. One of the takeaways which I felt was there was nothing, the tax rates were not disturbed. Yeah. So that has kept the market more firmer on the upside. And looking at the overall trends, right, tracking since the last 6 months, the overall trajectory has been to the upside. And when you are looking at the overall markets, the trend is continuing to remain positive. And like Jigar rightly said, the mid and small caps continue to find flavor even at higher levels. So the overall trend is not disturbed. And looking forward, everyone is anticipating the July budget now. And with nothing much, no clear takeaways from here right now. Except that the government borrowing may dip and eventually if it percolates to the private sector, it could be a big surprise. And all that could factor in more upside only from here on. So looking at today's trends, the trends have been on the flattest side, and those who were expecting an upside may actually sell here. Otherwise, there is no room to panic at the moment. And looking at the overall trends, I feel that Bank Nifty has been a non-performer. So what I am looking forward is with the kind of offtakes which has emerging from the budget, I could see a move in Bank Nifty that could trigger the next round of rise. And I feel that the private banks would take lead. Amongst them, I feel that Axis Bank, ICICI Bank would definitely be the leaders who will actually see some good participation.
Okay, HDFC Bank?
HDFC Bank, it's not done and dusted,
right?
But it will definitely be on the sidelines for now.
Okay, cool. So we'll go to two more guests who are joining us. Siddharth Bhaiya from Aquitas. Siddharth, your first take on the budget and what has changed?
For years, we've been saying that budget has to become a non-event. And for the first time in so many years, I felt that the budget is a non-event. And hats off to the bureaucracy and the government machinery, which works 24/7. I think it's not just once a year. Like today, before the budget, I opened the newspaper and I saw that the government has cut custom duties on, mobile phone parts. So this was typically earlier a once in a year phenomenon where all the tax adjustments were done at the time of budget. So now it's 24/7. So one, I think in that sense, it tells you that we are progressing. A lot of policy decisions are happening outside the budget. Second, I think overall, so it was just about the numbers. And I think it was a very prudent and a sensible budget.
Sure. In terms of, sectors that she mentioned, I heard dairy, which, she talked about some stuff. She mentioned rooftop solar. She talked about EV transition. She talked about affordable housing. Any of these themes excite you? Are these hunting grounds for you?
A lot of these things have already been there. It was just mentioned as part of the budget, right?
Correct.
The news on rooftop solar came a few days back.
Yeah.
The initial part of the budget speech was a lot about what the government has already been doing and which is already factored into the stock prices.
Agreed.
So to me, the bigger thing was that the fiscal deficit number has been, has been brought down. So we are seeing fiscal consolidation. And more importantly, a lot of the assumptions that were made in arriving at this 5.1% is also very reasonable. So in fact, if I look at it, the government has, considered a 12% increase in tax receipts. I think the number could easily be higher than that.
So you're saying even at 5% fiscal deficit, it is easily achievable? You wouldn't associate any risk with it?
No, I don't think so. As of now, the way given the way things are, okay, if at all there is any increase or decrease, typically it will get reflected in government capital expenditure. So I think the number as far as the government capital expenditure, while they have revised the number down a little bit for the current year from 10 lakh crore to 9.5 lakh, the number for next year, if you look at 9.5 lakh, is still a very decent growth that you're talking about.
How do you see this industrial space pan out, Siddharth? Because my takeaway for today from just looking at the stock movements is that, market is just shrugging off some of these counters because like you said, this is just reiteration of what the government has been saying and doing for past 2 years. The same old stuff. You have more capex towards railways or metros, and many of these things have been announced, the allocations have been made, and there is something incremental that is happening. And a lot of it is already reflected in the stock prices, which is why I think we are not seeing any huge reaction in the market today. So from here on, are there triggers for these stocks to rise? Where do you stand on this entire, economy-related capex basket?
The small cap index or the mid cap index have rallied more than 50% in the last 1 year.
Right.
So it reflects a lot of the good work that the government has done in the last 1 year. So again, as I said, I don't know what people were expecting going into the budget, but the budget has been fantastic. Overall, all the economic policies have been very favorable. So I won't look at just a 1 day, and this is how a budget.
No. I'm not questioning that at all. I'm just saying that, in terms of stock prices, because growth can continue, but if the stock prices are front-ending some part of that growth, then obviously stock prices can plateau. So my question is more
100%. A lot of the growth for the for the economy and the companies is already factored into the stock prices. So I think there is more room for disappointment if things go wrong, or if there is any slippages as far as inflation or any of the other monsoon is concerned. So my sense is that yes, stocks are two different things. The budget is fantastic.
Yeah.
Again, I said, I just don't want to look at budget as per se, because a lot of the policy initiatives that the government has done over the last year and a half are already reflected in the stock price.
Sure.
Going forward, yes, I'd be a little cautious.
Going forward, you'll be, so that is for overall markets or just this pocket of stocks? Are there any pockets that look attractive at all?
I think I'm a little worried overall.
Even with respect to large caps, first of all, where do you stand on this debate on large cap versus small caps?
Mahalakshmi, I've always been a small cap investor, so जीना यहाँ मरना यहाँ.
नहीं, अब स्मॉल कैप इन्वेस्टर्स भी काफी लोग बोल रहे हैं कि भाई अब वैल्यू लार्ज कैप में ज्यादा है, तो हम nothing's cast.
Right now, I'll be honest with you. Right now, yes, large caps look more attractive than small caps at this point in time.
Sure. And in terms of segments, is there anything that is looking attractive? The last time we met, we talked about media stocks. And even after that, I think some of the stocks have run up. You mentioned one, but many others have also run up now. So do you see any, isolated or even small pockets of value which will be good hunting grounds?
It's a roaring bull market, and everything is, everything gets discounted very, very quickly in these markets. So no, I really don't find a lot of value in these markets, to be honest with you.
Okay. Anything you would like to short then?
I don't short. So, I don't do derivatives. So, no, sitting on the sidelines, taking a little bit of profit off the table and, waiting for a little, for correction to come in.
Okay. So this is the patience game.
Yes, it is.
Okay.
Investing is always a patience.
Oh, absolutely. Oh, absolutely. So thank you so much, Siddharth. We'll go over to Amit.
Thanks a lot.
Thanks so much.
Thank
Amit,
you.
Sure. Amit Jeswani from Stallion joins us. Amit, are you positively surprised? Okay, he's taking time to join. So back to you, Jigar. What is your hunting ground now?
So as we discussed, Mahalakshmi, see, increasingly we run a flexi cap strategy, right?
Yeah.
So there are times, and that's true to name. So there were times when we are almost 65-70% in small caps, but then we don't really mind getting into large caps when the opportunity presents. Looking at, I think I completely agree with Siddharth as well, that if you look at a lot of the small and mid caps from a bottom-up standpoint, A, the lack of sort of free float within those companies, B, the lack of institutional coverage, right? A lot of people cover these names, but then you don't really, you are then go around projecting a 20, 30, 50, 100% hike over the next 2 years in EPS. It's very difficult to understand as to how much, you should actually be building in for a lot of these companies. And then because of the absolute low free float, one is the percentage, but let's say of a 3,000 crore company, 10% is only 300 crores. Now you have a buyer for say 150, 200 crore worth of stock, then actually you can, a lot of these stocks just go off the handle. So the only time that we have found you can sell a lot of the small cap businesses is when the time is great. As soon as something or the other hits, let me remind you, right, 2018, you had this scenario where two in and of itself events which were not that great, right? You had a long-term capital gains budget, which grandfathered all gains till 2018. And then you had a mutual fund realignment in around May or June 2018. Now combined, the large cap index was still up, driven by HDFC, Infosys, Reliance and TCS. But the small cap index was down 39% in the run up to August 2019.
Right.
And there were 47 stocks that fell more than 80%. There were 250 stocks which fell more than 60%. So then as soon as something or the other, sort of whatever is unsustainable eventually will find a way to topple.
Right.
Right, exactly. So then you will find something, the liquidity immediately evaporates, and then you realize the music has stopped and you are holding the ball. So it's better to pass it along till the time market provides that opportunity. And as I said, in large caps, large banks are trading at 12-13 times PE. Correct. Madhu earlier was saying 5-6 times for PSU banks, but the largest private sector bank is at 12.5 times P. Sort of for the first time in, I think, 7.5 years that we have been running this fund, it features even in the top 10. So I think, there's a lot of value with, these businesses which people think are...
So banks is definitely one, and I'll ask you some questions around that. So banks is one. Any other pockets?
Pharmaceuticals. See, I think we wrote a piece in Moneycontrol in April.
Yeah.
Suggesting that there were a few reasons why a lot of this generics business did so well in the run-up from 2002 until 15-16. But all those things that led to them doing so well were reversing.
Right.
So you had a sort of complex generics taking place. At the buyer side, there was a lot of consolidation. The GADUFA fees had increased, so a lot new players were coming in. And then it all came crashing down. You obviously found the fact that, like a lot of unwanted water was seeping into factories, etc., was not a great headline for the Indian pharma guys. So all combined, you had a complete crash there. And now I think incrementally, or at least in April, we thought incrementally a lot of things were falling into place. Now, since then, a lot of stocks have, I think, more than doubled. The few that we owned are also up 60, 70, 80%. Right. So I think we need to take a sort of review on the valuations and what they might be implying. But as a space, it is interesting because these are not, this doesn't, when these changes happen, it's not that it goes away in 2-3 years. Yeah, they're here to stay. So very interesting.
But this you're talking about Indian generics.
Yeah, Indian generics.
Generics focused companies, right?
Yes.
So, but then that is, this has been like, it's been up and down constantly, except for that period where, all this consolidation of US vendors, etc. happened. Then you had a number of years where they were underperforming. But every time they outperform, the life of outperformance has been a lot shorter than life where they have underperformed.
But so look at this, right?
What gives you the confidence this time is different?
You look at, we might be having a very different conversation, say, if we were in 2012 or 2013, because I think it was Ranbaxy who launched the Lipitor generic in 2002. They announced it. And after that, you saw a lot of these Indian players realize that we can actually now go ahead and crack this para 4 filing. And then the rally that continued, that started around 2003-04, although the Lipitor generic got launched only in 2008, you saw all of these companies go up dramatically until 16 and 17, right? And we have highlighted the kind of growth in that article. But then over the next 3-4 years, as all of these things combined, like the largest is, for example, the Israeli manufacturer, the largest one, Teva. That fell 90%, Lupin here fell 70-80%. So I think a lot of these stocks have come down, and increasingly few of them may provide great opportunities as we go ahead.
Would you also be bullish on specialty chemicals, for example? I think was Divi's one of your favorites?
Yeah, we continue to own that.
Again, I mean, this kind of destruction in stock prices, one wouldn't have imagined for a company like Divi's. But finally...
But I think, see, the management doesn't really say out a lot. And what I think people wrongly assume that once the molnupiravir came off, they were hoping that a lot of the other molecules where they have 50-60% share will actually come up and, take care of that. I think that is slightly sort of myopic to view that the timelines will completely converge. Sort of Molnu was known to be an opportunity which is a finite lifetime. And therefore, the investors were wrong in attributing a PE multiple to that. If at all, it should have been discounted on cash flows.
Right.
And if not, then I think these great businesses, I think the way we look at that is that once they are institutionalizing a capex program, then they do it only after having have had firm discussions with their end investor or their end clients. So I think it's a good time to own these places. But again, we don't have a license to recommend stocks. So I'm just communicating what we have held and published in our fact sheets as what we own.
So pharma, you're saying, is a good hunting ground for you. Specialty chemicals, you're saying.
No, not
anything?
specialty chemicals.
So disease in particular.
Right. Specialty chemicals, I think, is a misused word in India. I realize because
I think it's a motley bunch of companies with commodity chemicals to APIs to. Everything.
I think the heuristic we use is that if you sell by the kilo, then it's a specialty. If you sell by the ton, then everything is commodity. Right. So those companies are actually facing some amount of trouble because a lot of people, while they were looking for Europe plus one, assuming China plus one is there, you talk to a lot of these companies, they say there is no, forget Europe plus one, there is not even China plus one, there is only China.
Correct.
Right. So now the onslaught, and given the way their own consumption markets are slowing down, one needs to be rather sort of cautious about what they go around exporting. We have seen this with, so specialty chemicals, etc. is late in the cycle, but look at what they've done with steel, right? What they've done with aluminum, with having no bauxite, no iron, no alumina, no coal to make power, and they are the largest exporters of aluminum. So I think their manufacturing prowess, given whatever sort of state support, etc., is difficult to beat. So until we know for sure that there is China plus one, or some investors are coming and contacting these companies that we want your product, it's difficult to just sort of build a bet on these names.
Okay, cool. So Raja, what is looking good on your charts? I mean, if you were to pick 3 segments, what would they be? And any stocks that are looking particularly outstanding from a trade perspective?
Yeah. So from the sector's perspective, what I find is that the oil and gas space, which has been overlooked for quite a while, has been really thriving over the last 6 months.
Right.
And I continue to believe that this space would see more traction in the coming months. So one should definitely look at that. And from the oil and gas space, I have been tracking Hinpetro. It continues to do well. And the other stock which I would like to suggest from the oil and gas space is ONGC, because ONGC has been overlooked for quite a while, and plus it has got a major share in HPCL as well. So I feel that HPCL and ONGC would be 2 stocks which would suggest from the oil and gas space. The other sector which I would like to highlight is the automobile sector, because considering the kind of the Gen Z which is coming up and the kind of salary growth which is coming up, you can see that almost every major car launch is having a book waiting for around 6 to 8 months. So which clearly says that there is income in the hands of the people, and I feel that the auto sector will definitely move up, and with the continued patronage by the government to the EV theme, and we have seen a good the FAME 2 has managed to meet its target. Now they might come out with FAME 3 in July as well. So all that will promote the automobile sector. So automobile sector is number 2, and in that automobile sector I continue to believe Tata Motors is a key stock which all of us should own, because if you see Tata Motors, it is present in almost every segment, unlike any other stock. So Tata Motors would be one, and the other stock I would say definitely is Hero Moto. Hero Moto was underwritten for a very long time, and if you see over the last few months, Hero Moto has been clearly outperforming its two-wheeler peers. So that would be the second stock.
So these are looking good on your charts?
Yeah, on the charts as well.
Okay, cool. So we'll just go back to, we have another guest, Achila Jethmalani, economist from RBL. Achila, thank you so much for your time and patience. Your first take.
Thank you so much. I think it's a positive surprise, and I think the government estimates both for FY24, FY25 on the fiscal consolidation, very positive news coming by. When we look at the borrowing figures as well, it is what the market was expecting, at least on the net borrowing front at 11.7 lakh crore. But on the gross borrowing front also, we are seeing that the number is much lower. So overall, from the rates perspective, it is definitely auguring well. So our initial thoughts are that of the budget being fiscally prudent, but not at all fiscally austere in nature.
Sure. So thank you so much, Achila. Jigar, Anything else to add?
No, I think last comments are just that, the way in which this is increasingly becoming a non-event. I think the key number that even in my estimate the FM would be looking at is, you look at the reverse repo and the FFTR, right? So sorry, repo and the the Fed fund target rate upper bound.
Right.
That differential now is 100 basis points.
Correct.
That's the lowest we have been in 23 years.
Correct.
Now look at what in 2013 we were fragile 5. That difference was 800 basis points. Look at what does to that economy. Now I think the cue they are taking is of the 40 lakh crore sort of budget that we talk about, only 11.2 lakh crore is what they are actively dealing with from a taxation standpoint.
Right.
Everything else they have institutionalized.
Right.
They have cleaned the balance sheet. So if I liken this government to a great corporate governance mechanism, then I think everything is falling into place. No extra budgetary borrowing.
Yes.
Do everything, announce at top, and then market is. I mentioned those numbers, right? 2021, when we are at 9.1% fiscal deficit, we were borrowing 18 lakh crore. Today, this budget, we're saying we are borrowing a little shy of 17 lakh crore. But because the nominal GDP has grown, the market is forgiving of everybody else is sort of monetizing. They are okay with us monetizing as well. But then, the sort of corporate governance grades go up, and all of us at the end of the day come back happy looking at these numbers.
Yeah, sure. Absolutely. Point well taken. So, Raja, you were, apart from OMCs and autos, you were about to add something when I cut you off and went to Anshula.
Yeah. So, the other sector which I would definitely like to track is the specialty chemical, because like we have seen over the last few years, specialty chemical had done well, and then again it had not got a following. Now, if one has to look at great valuations emerging, so I definitely feel that in the coming months, specialty chemical could definitely see some upside, and the likes of SRF, GNFC again will see some upward traction. So these are two stocks which I'm tracking from the specialty chemical space.
Okay. So that's all for now. We'll take a short break and see you on the other side in a few minutes.
Inclusive development and growth. Our humane and inclusive approach to development is a marked and deliberate departure from the earlier approach of provisioning up to village level. Development programs were thus provisioned. In the last 10 years, however, have targeted each and every household and individual through housing for all, Har Ghar Jal, electricity for all, cooking gas for all, bank accounts and financial services for all in record time. The worries about food have been eliminated through free ration for 80 crore people. Minimum support prices for the produce of Annadata are periodically increased appropriately. These and the provision of basic necessities have enhanced real income in the rural areas. Their economic needs could be addressed, thus spurring growth and generating jobs. Social justice. Our government is working with an approach to development that is all-round, all-pervasive and all-inclusive. Sarvangin, Sarvasparshi or Sarvasamaveshi. It covers all castes and people at all levels. We are working to make India a Vikasit Bharat by 2047. For achieving that goal, we need to improve people's capability and empower them. Previously, social justice was mostly a political slogan. For our government, social justice is an effective and necessary governance model. The saturation approach of covering all eligible people is the true and comprehensive achievement of social justice. This is secularism in action, reduces corruption, and prevents nepotism, prevents Bhai Bhatijawad. There is transparency and assurance that benefits are delivered to all eligible people. The resources are distributed fairly. All, regardless of their social standing, get access to opportunities. We are addressing systemic inequalities that had plagued our society. We focus on outcomes and not on outlays so that the social economic transformation is achieved. Cancer vaccination. Our government will encourage vaccination for girls in the age group of 9 to 14 years for prevention of cervical cancer. Maternal and child health care. Various schemes for maternal and child care will be brought under one comprehensive program for synergy in implementation. Upgradation of Anganwadi centers under Saksham Anganwadi and Poshan 2.0 will be expedited for improved nutrition delivery, early childhood care and development. Metro Rail and Namo Bharat can be the catalyst for the required urban transformation. Expansion of these systems will be supported in large cities, focusing on transit-oriented development. Green energy. Towards meeting our commitment for net zero by 2070, the following measures will be taken. Viability gap funding will be provided for harnessing offshore wind energy, potential for initial capacity of 1 gigawatt. Coal gasification and liquefaction capacity of 100 metric tons will be set up by 2030. This will also help in reducing imports of natural gas, methanol, and ammonia. Phased mandatory blending of compressed biogas in compressed natural gas for transport and piped natural gas for domestic purposes will be mandated. Financial assistance will be provided for procurement of biomass aggregation machinery to support collection. Electric vehicle ecosystem. Our government will expand this and strengthen the e-vehicle ecosystem by supporting manufacturing and charging infrastructure. Greater adoption of e-buses for public transport networks will be encouraged through payment security mechanism. Matsya Sampada. It was our government which set up a separate department for fisheries, realizing the importance of assisting fishermen. This has resulted in doubling of both inland and aquaculture production. Seafood exports since 2013-14 has also doubled. Implementation of Pradhan Mantri Matsya Sampada Yojana will be stepped up to 1. Enhance aquaculture productivity from existing 3 to 5 tons per hectare. 2. Double exports to 1 lakh crore rupees, and 3. Generate 55 lakh employment opportunities in the near future. 5 integrated aqua parks will also be set up. Lakpati Didi. $83 lakh SHGs. 83 lakh SHGs with 9 crore women are transforming rural socio-economic landscape. with empowerment and self-reliance. Honorable Speaker sir, their success has assisted nearly 1 crore women to become Lakpati Didi already. They are an inspiration to others. Their achievements will be recognized through honoring them. Buoyed by the success, it has been decided to enhance the target for Lakpati Didi from 2 crores to 3 crores. Technological changes, new age technologies and data are changing the lives of people and businesses. They are also enabling new economic opportunities and facilitating provision of high quality services at affordable prices for all, including those at the bottom of the pyramid. Opportunities for India at the global level are expanding. Import release time declined by 47% to 71 hours at inland container depots, by 28% to 44 hours at air cargo complexes, and by 27% to 85 hours at seaports over the last 4 years since 2019, when the national time release studies were first started. Tax proposals.
So hi guys, welcome back to this Moneycontrol live stream. Of course, we have been getting you the live extensive budget coverage, and of course a surprise budget, so to say. Of course, no big bang announcements, and we've had a battery of experts who've said that it's pretty much on expected lines. But the positives would be the likes of the fiscal deficit at target at 5.1%. That's slightly aggressive, and of course the lower net borrowing figure has also is also being looked upon as a positive surprise. We have been, of course, getting a battery of experts. They've said that the government has this track record of under promising and over delivering. And that's what, according to experts, has panned out this time around as well, because the Modi government, looks fairly confident given the fact that it has chosen prudence over populism. Let me also introduce my co-anchor, Santosh Nair. Santosh, just give us your initial take of what you make out of the announcements in the budget. Unexpected lines, but there has been some bit of positive surprise as well, right? Capex, figure, of course, slightly above estimates. That is also being looked upon as a positive. What is that one thing that you would say is a positive out of this budget?
Well, while most people won't say it, I think one big concern market had to some extent going into this budget was probably some tweak with the tax structure, which is STT and long-term capital gains. There was some fear, at least till a couple of weeks back. The second was that there's also some concern that it could be slightly populist given that we are heading into a budget. So rather, I think the absence of negatives more than anything else is a big positive for the market, which is how I would put it.
All right, that's Santo's take. But on that note, let me also bring on board our guests for today. Joining me in the studios is Mihir Vora, CIO Trust Mutual Fund. There's Siddharth Bhamre, Head of Research at Religare Broking. Thanks a lot for joining in this afternoon, gentlemen. But let me come to you, Mihir, first. If you look at the markets, they haven't really moved at all since the announcement of since the budget announcements, right? So. Is it okay to now say that this is perhaps, budgets perhaps now would be a non-event for the market?
It should be, right? I mean, it's really a sign of a developed economy, a developed process and system that, we don't have to tweak around with taxes and stuff like that every year. Yeah. As it is, we've seen progressively, the budget is becoming a non-event, and for good reasons. And if Madam's speech is anything to go by, less than 1 hour this time, so that minutes. Yeah, exactly, 58 minutes or something like that. So I think structurally, if you really break it down, the main tax component, say GST, it's decided by the GST Council. You don't really do it in the budget, right? So there's nothing on that to be expected. On the corporate taxes front, you had 25% corporate tax rate, which is amongst the lowest in the world, competitive and pretty much simplified. So nothing much to do there. On the personal income tax side, you have the new regime which was introduced, which is far more simpler. I think about a third of tax filers have moved to the new regime. 2/3 are still in the old regime, but I think they'll incrementally make the new regime simpler and easier, and keep removing the
make it more attractive,
and keep removing incentives from the old regime. So that transition to the new regime should continue. So progressively, I think the complications in the budget are reducing, and I think it's a sign of a maturing market.
So Mihir, bank stocks, particularly PSU bank stocks, are the only ones which have done fairly well in today's market. So what exactly is the reason for that?
One of the very big positive surprise in the budget was, as you mentioned, the fiscal deficit number. Market was expecting around 5.5, down from 5.9, but Madam has really up the ante, and the government is targeting 5.1. 5.1 fiscal deficit means that you're really going to curtail your expenditure, which means that your borrowing program is much lesser than expected. Market was expecting a borrowing of about 15 lakh crores for FY25, but the target is now 14 lakh crores. So that's a big positive for the bond markets, and we did see government bonds rally quite a lot. Interest rates, when the 10-year GSEC I think is down from 7.14 to almost 7.04, almost 10 bips rally in the bond markets. That has a good implication on the treasury portfolio of banks. Typically, PSU banks tend to have a longer duration portfolio, and that's the reason why you see PSU banks rally. Second is banking in general had been underperforming for quite some time, and that was again because of the tightness and liquidity squeeze that we have seen in the system for the last many months. Now that yields have sharply corrected at the longer end, the hope is that even the liquidity situation will incrementally improve. So that's again positive for banks in general.
But Siddharth, now with railway, there was a couple of announcements about the freight corridors, also a conversion of about 40,000 odd standard wagons into Vande Bharat wagons. Now, on the whole, you've not seen much of action in railway stocks today in general, and that's been the case with most other capital goods companies as well, despite the fact that there's a modest increase. It might not have been as high as what the market was expecting. So what do you read into this, that the market not really reacting to this announcement?
So it's just like, instead of buying a new home, I'm doing an interior change, and that's not a big capex, and that's the reason we haven't seen whether it's capital goods or railway stocks reacting to that. And at the same time, there's no expenditure number attached to it, and I feel that's the reason we are not seeing much of reaction. And over a period of time, we have seen, Santosh, that railway stocks actually react a month prior to budget, and during budget we don't see much of action. But I believe the announcement of railway corridors, that is something which we need to see, and I think there would be more concrete steps and measures which probably FM would announce in July budget. That's my takeaway on that sector.
Do you expect changes in the tax structure in the July budget, Siddharth?
I think that's anybody's call that there would be any changes, but the way ma'am spoke about that what she has done for corporate, Minister also mentioned that the rates are one of the lowest in the world. I don't think that they would do too much of tinkering, because to move from 5.1 to 4.5 by 25-26, to be very honest, the fiscal deficit achievement of 5.1 or 5.8 for this year is predominantly because of rise in tax collection, and any tinkering over there would lead to deficit number not being achieved. But again, it's something which maybe if just economics, then probably not, but if anything else, then it's anybody's guess. But I believe I'll go on the side that there may not be any changes in tax structure, at direct taxes at least.
Right. Mihir, in terms of disinvestment, government has not had a very good track record, right? And this time also, the kind of figure that has been announced, where do you see that proceed coming from?
See, I think the government can disinvest pretty much any amount it wants, given the market situation, frankly, especially the way PSU in general have read in the last 1.5 years. So I think selling is not a problem. Frankly, I think the issue has been on on the debate on privatization versus divestment. Privatization may be politically a bit more complicated, but divestment I don't see any problems. And there are enough companies that the government has 70% stake, 75% stake, in which they can easily raise 30 to 50,000 crores. I don't see any reason why they should not be able to do it, frankly.
And one more thing the finance minister mentioned was that giving more elbow room to private sector because government will cut back on borrowing. How much of that has really been a problem for the private sector right now?
See, private sector is doing its bit, I would say. Maybe it's not yet visible in the sense that you don't see mega projects being announced. But if you look at the order books of construction companies, capital good companies, the infrastructure companies, they are pretty full. So there is stuff happening on the ground which probably we'll see the impact of now, and it's not those mega projects. It's not a 1,000 megawatt power project fired by coal or gas. It's not a big new steel plant, greenfield capacities coming up. I think it's more debottlenecking and incremental brownfield projects that are coming up, and which is visible in the order book of a lot of the capital good companies. So my guess is this PLI scheme, for which a lot of sectors were opened up in the last 2-3 years, are now beginning to roll out in the physical terms. And this we should be seeing in the next few years, that the private sector capex should pick up.
One of the concerns about the banking sector also is that the corporate loan book has not been growing enough, that most of the corporates have been all this debottlenecking or whatever expansion they have been doing, largely it has been funding through internal accruals. So do you see this trend changing anytime over the next 1 year?
Certainly, because we are hoping that the government does achieve its target of 7% GDP growth rate. Without private sector capex and real estate kicking in and infrastructure. So we need government infrastructure creation, we need private sector to kick in, and we need real estate to kick in. Without all these three kicking in, I don't think we can achieve 7%. Only consumption growth can take you to probably 5.5% or 6%. That 1.5% extra has to come from physical asset creation, and that's the hope now.
Right, I think we are just setting the stage for market close, but let me also bring on board Amar Dio Singh of Angel One, who's joining us this afternoon. Great to have you on the show, Amar. As we can see, markets haven't really moved much. We have had a volatile week, but today it's largely been flat, right? So going into tomorrow, how should one really position themselves now that the interim budget is out of the way?
Yeah, so thank you for having me on the show. So, see, markets have, I would say that, looked at the budget more from a not a very neutral perspective, but yeah, I would say slightly with positive bias, because otherwise we would have witnessed some sharp correction. And as you rightly said, banking stocks have performed well today, and we are seeing some sort of movement there. And also, if you look at across the board, major indices contributors, so we see good traction in the auto space. Some of the auto names have done well. Banking has done quite well, and also some of the government undertakings in terms of power grid, so they've also performed well. So going forward, I would say if you look at the markets from a technical perspective.
Right, hold the thought, Amar, we'll come back to you. But of course, market close, look at the Sensex and Nifty largely flat. Nifty just about below that 21,700 mark. Sensex also just about 130 point lower. Mid and small caps, 0.5% kind of a downtick coming in there. Nifty Bank Index, of course, has held up in the green, 0.5% kind of gains coming in there. But the PSU Banking Pack, that index up 3.5%, hit a fresh record high today as well, given the fact that government has announced a lower borrowing figure, and that did see the yields, kind of lower by 10 basis points or thereabouts, and that has brought about some bit of cheer for the PSU banking lot. Among the top gainers today, Maruti 4.5%. And some of the power stocks like Power Grid, you have NTPC, some of these counters doing well. Adani Ports, Tata Consumer, from the pharma pack you have Cipla among the top gainers. Life insurers, SBI Life, clocking in gains of somewhere around 2.5%. HDFC Life as well. Some of the other private banking names like Axis Bank, gaining somewhere around 2% or thereabouts. SBI, banking behemoth, of course, numbers will be coming out on Saturday. Stock up 1.5% or thereabouts. TCS, ITC, some of the other gainers. On the flip side, L&T continues to languish. Margins were a disappointment in the third quarter. Yesterday as well, the stock was a top loser on the Nifty on a day when the Nifty was up 200 points yesterday. But today, of course, top Nifty loser 2.5%. Dr. Reddy's, yesterday it was among the gainers, but today came under a fair bit of profit booking. JSW Steel, Titan, ONGC, Bajaj Finance, of course, below that 6,800 mark. Nestle, India, Tech Mahindra, all of them among the losers. If you look at the broader end of the markets, from the Nifty 500 index, Paytm, of course, how can one not mention this stock? Down 20% after RBI crackdown. You have India Bulls Housing, other cement names like India Cements and Ratnamani Metals, Aurobindo Pharma, Magma India, some of the notable losers. On the flip side, Hudco, that stock was up 20%, NBCC India, BEML, of course, on the, the announcement of 40,000 wagons by the Finance Ministry has, triggered a 9% kind of an up move on BEML. Infibeam, another up move coming in today. Go Rich Consumer numbers came out and the stock is up by 7.5% or thereabouts. So all in all, big day, but market moves not so much, largely flat, hardly moved after the, budget announcements. For tomorrow, Amar, close your thoughts as to what you were telling us about how one should position themselves now that the budget is out of the way.
Yeah, I would say that still the bias, short-term bias remains, I would say, in favor of the bulls. We've seen some sort of consolidation. We've seen some pullback there. But for Nifty on the upside, 21,750, 800, that's an immediate zone of resistance. Whereas on the downside, 21,350, 21,400, that's a zone of support. If you look at the long-term charts, intermediate-term trend, that continues to remain strong and positive for Nifty. So as I said, being on the side of the bulls makes would be more appropriate. Also seeing the broad-based rally across the board. However, from a short-term perspective on the daily charts, we are seeing some sort of consolidation. So that's what we've been witnessing in the markets on a daily basis. Till the time we don't see Nifty sustaining over the 21,750, 800 mark consistently and trading above that level, we would continue to witness sideways movement. Also, we've seen some short build-up happening today. So we'll have to watch out for these levels.
Well, Siddharth, one question here. Now, given that the rural sector that's still been struggling a bit, expectations were that there would be some SOPs there or some higher allocation of funds. That really hasn't come through. Does that come as a bit of a surprise, considering that it's also, general elections are just a couple of months away from now? Maybe the government should have done something there. Also from a FMCG perspective, where most of them, if you see the rural part, that's where they've really not been able to grow their numbers.
So I'll just give explanation in bit lengthy way. What we thought, we also thought on same lines that there might be some soaps for this space, but I believe politically this government is in very sound space in terms of their confidence of winning the election, and economically this government has done fantastic job, be it through RBI inflation management. It was not just RBI, it is also some of the measures which government took, which FM clearly mentioned, proactive inflation management, which they have done. So for next 3 months, if there are no announcement, doesn't mean that it may not come in July. I think all of us and ministry is also cognizant of the fact that rural economy needs some boost. So I think it's not end of the story. I strongly believe that in July we may see some or lot of things rolling towards this space. If I have to mention, if I have to come to the stock market point of view, then there are a lot of stocks, especially in FMCG space, auto space, where we have seen that stocks have not performed well because of rural economy not doing well. Santosh, if you remember, we were talking about few months back about IT, when the story of IT was not that good, but the valuation was very supportive, and we were very optimistic on IT despite strong headwinds. Same sort of story is building in FMCG space and some of the auto names as well, where we have seen that because of headwinds, stocks are trading at relatively cheaper valuations, and people are talking about the concerns. If I have to take few names, then HUL is one stock which has corrected substantially. Today it's available at 43-44 times 1 year forward earning, whereas stock has traded much above 55-60 times 1 year forward earning. This is a story where you can think of, or your investors can, viewers can think of putting in money. If I may stretch my answer a bit and talk about Maruti, that is also though it's not totally rural theme, but now we are seeing that Maruti is again one stock which is available at 7-year low PE multiple of 23-24 after today's run up. So if you see the numbers, volume numbers have not been very strong for Maruti, but because of premiumization, the margins for Maruti are increasing. So I believe, coming to the original question, that yes, it has been missed out, but you have to see it from two contexts. One is that there is no story for now, probably for next 3 months, but are valuations compelling? Yes. So there are few names which we can nibble into and accumulate, Maruti and HUL being among them.
We also have, Dheeraj Relly, who's joining in this afternoon. Dheeraj Relly of HDFC Securities. Great to have you on the show, Dheeraj. I want to get in your initial reaction on, how would you rate this budget on a scale of 1 to 10? No surprises, but, rating-wise, how would you look at it?
This was the 6th budget for the finance minister. I think she has hit the sixer out of the ground. And the budget proved to be a non-event for the market. But I think we'll have to look at from a non-market point of view. I believe that, this reflects clearly that the finance minister and the government are very confident about the general elections ahead. And that's why very prudent budget, I think consistent. It is consistent with what they are looking forward for. To an extent, it is visionary also. I think we were not expecting much from the budget in terms of a taxation changes and all, but we were expecting that maybe some tinkering finance minister can do to leave some money with the low income taxpayers also, but that hasn't happened. So to that extent, it would delay the some kind of an upside we were looking in the from a rural consumption or so. But otherwise, if you look at it, I think walking the path of light path of fiscal consolidation, 10 out of 10. I think this actually put our case very strongly for a rating upgrade also. So I think if we are able to deliver these numbers, and there are a lot of shock absorbers also. Let me tell you, this is one of the very conservative estimates I have seen in any budget, whether it is tax buoyancy, whether it is tax numbers, or even nominal GDP numbers also. I think they were all very conservative numbers, and the finance minister could build in a lot of shock absorbers also. In case we get any kind of a shocks, internal or external, it can deal with it very easily.
When it comes to a fiscal deficit, would you be concerned whether the government will be able to meet that 5.1% fiscal deficit target? Would you be concerned, or would you, or do you think it's comfortable?
I think the maths is in favor, so it may not be a cakewalk, but it's possible to deliver. On capex also, they've been prudent. We have to look at it. How I think the market and some participants were expecting more higher allocations to the capex, around 12 lakh crore, but we got some 11.11 lakh crore. But we need to look at that from the point of view that they have also revised the current year capex number also from 10 lakh to 9.5 lakh crore. So which means that again we are seeing a 17% kind of an upside. With the tax buoyancy and nominal GDP at 10.5%, I believe there is a room for doing better than what has been committed in the budget.
But Mihir, over the last year, we've been seeing a very strong participation from retail investors, and there's also evident from the kind of SIP inflows across the sector. Now, what is the sense that you're getting speaking to small investors as well as distributors? Is there the typical feeling of the fear of missing out, or is that there's some bit of concern because the market has run up so much and they would want to step back for a while? So could you give us some color there?
I think nobody is looking to exit the market.
Okay.
So that's very sure, and a little bit of fear of missing out may be there. But my guess is people are still looking at the markets very positively. The SIP flows, as you can see, continue to increase every month. And that's that's the benchmark for stability of flows. I think you should look at the SIP flows very closely, and that's not stopping in a hurry. They're not even slowing down as we speak. One good thing that has happened probably is, as we mentioned, the bond yields have corrected sharply, and now decisively probably we have seen the peak of bond yields, which means that you will see bond markets also perform quite well. They have been doing well. Returns for the past year have been decent, but when interest rates trend down, you can play a bit of duration there. So you might see some revived interest in the bond funds, which have not been getting that much money.
And what is the investor preference that you are seeing more towards mid, small cap funds or large cap funds?
As of now, it's more towards small cap and flexi cap. That's where the bulk of the flows are.
Sid, IT stocks, has your view changed post the third quarter earnings? Would you be now more tilted towards mid cap IT, or would you say that there's room for upside in large cap IT, given the fact that Street believes that revenue wise, the bottom may be in place?
Yeah, so as I was mentioning in my previous reply that we spoke about IT some 6 months back when market was not comfortable with that story, but valuations were compelling. As most of the IT management are talking about that, how the attrition level, high attrition level are behind them. Front page news that how companies are downsizing now. I think this would only increase margins from here on. If you listen to Fed, then they also mentioned that they would still wait for inflation to subside because and they are waiting. This pause is mainly because the growth numbers which are coming, the job data which is coming, is giving them confidence to hold on. So that augurs well for IT. Having said that, that doesn't mean that IT is pretty cheap right now. It was very cheap 6 months back. But does that mean that there's no headroom on the upside? Are they expensive? No, I think there's still some more room. But will that be a preferred space now for us? No, we are liking some of the auto space. We are liking some of the FMCG names. We are broadly bit cautious on market because some of the large cap retail names they have not given their earnings so well. So we are expecting some sort of slowdown kind of scenario going forward. But IT would outperform. So buy on dips I would suggest in IT, but I would stick to large caps, mid caps I would shy away.
Okay. On that note, let me also bring on board Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, joining in this afternoon. Vaishali, want to get in your thoughts on what one should be doing with the PTM. 20% downtick today, of course, post the RBI crackdown. If somebody has positions in this stock, how should one really go about it?
Well, good afternoon, all of you. As far as Paytm is concerned, well, it's very, I can't say because, of course, it's showing a lot of weakness. And if one gets a chance to exit, one should exit because I think this is ready for further downside. Maybe if there is no clarity, this stock can fall towards 500 levels also. So I would say for now, if one gets a chance, one should exit for now.
All right, exit is the call. What about some of the pharma names, the likes of Cipla? Dr. Reddy's also reported a good set of numbers. Of course, today it saw some bit of profit booking, but any trades here? And if yes, which among the three, Cipla, Dr. Reddy's, Sun Pharma?
So, well, Sun Pharma continues to do very well, but post-result, it is just showing some sideways movement. But I would say that, yes, the trend is so strong that it would be a good buy at around 1360, 1380 levels. So wait for some dip and get into the stock because we have higher projections coming towards 1460 to 1480 levels right now. And likewise, even Cipla is picking up. So Cipla is also a good buy, what we saw from today's move. So now I would say that the new round of momentum has begun from 1320 levels. Today it's closed at around 1370. So I think this is also poised for a target of 1450 to 1480 levels. So Cipla too is a good buy. And talking about Dr. Reddy's, I think we have already seen a good run up and it has also given a breakout. So it would be a good buy, but let's wait for some dip to occur. We have seen this at 59, the close is at 59.90. Wait for some more dip, maybe at around 5800. That would make a better trade for a target of 6300 to 6500 from here on. So overall, all these stocks look positive and the trend continues to show strength.
Dheeraj, hi, this is Santosh here. My question to you, so we saw some fair bit of action in the renewable space today. Any stocks that you are tracking in this segment?
So I will not be commenting on individual stocks, but the whole space, renewable space, looks very interesting at this juncture. I think the government has demonstrated unprecedented focus on energy transition. So we've seen some commentary from the finance minister, even for the rooftop solar also. Focus on renewable is huge. So my take is that this particular space will continue to do well for next many years. So it's a long-term theme. It's not a short-term opportunity. Of course, you will see some action in the stocks level also in the short term also, but it is a long-term theme, and one can really look forward to allocate quality names in the renewable space.
Right. Coming to you, Amar. Going into trade tomorrow, anything that's looking attractive, from the perspective of 1 or 2 weeks?
Yeah, I would say amongst one of the stocks, housing and urban development, HUDCO, that continues to remain very strong on the charts. And today we've seen some significant breakout happening in the stock. So if I look at it, currently it closed around 200 odd, 205 odd level. So this is one stock one can definitely look at, because the stock now has got a strong base around the 180 odd zone. So any pullback in the stock can be used as a buying opportunity. Upside target would be around 240, 45 levels, whereas the stop loss needs to be below 180 level.
All right, that's the view. With that, Amar, thanks a lot for taking out time and joining in this afternoon. Mihir, coming to you, now that the interim budget is out of the way, in the run-up to the general elections, do you think it's a good time to rebalance your portfolio? And if yes, would you take a very, PSU or PSU or government-owned stocks in your portfolio? Would you say that have a higher tilt to that side?
See, I don't think there's any reason to change the portfolio post the budget. So we were positive on the domestic economy in any case. So all the domestic cyclicals, plus there was some hope that the discretionary and the staples consumption would also come back. Because of a low base and maybe some help from the budget. So budget doesn't have much for the consumption piece. So that's kind of neutral, I would say. Not that people are expecting something big bang. But in general, if the government does achieve a 7% GDP growth rate for FY25, I think it's good enough, and we stick to the course of being more on domestic cyclicals, the domestic financials, and underweight on the global commodities and, I would say IT and those kind of sectors which are more linked to global demand.
Siddharth, any thoughts on the cement sector that's been again seeing some fair bit of activity of late?
Well, I'm glad you asked me that. We are quite optimistic on cement space, but then stocks have run up substantially, especially Ultratech Cement, which has been the leader of the pack. So we maintain our bullish stance over there, but valuations are not very cheap. But that doesn't mean that you sell and you move into some other space. So maybe there might be some time stock might spend over here. Reason being, as FM also mentioned, that there's going to be unprecedented development in next 5 years. And we all are talking about capital goods space, but then a lot of infrastructure development is going to happen. Real estate, she mentioned about how it's going to be much more than what it is now. So cement space is going to be buzzing. One interesting thing which she mentioned after unprecedented growth, that the East India is going to contribute a lot, in next 5 years. And in cement space, mid-cap space, there's a stock called Novoco Cement. It's quite cheap, and we believe that from current levels it offers good risk-adjusted returns. At EV to EBITDA front, it's trading around 7 to 8 times, which is pretty attractive compared to other frontline and other mid-cap names. So yeah, we are optimistic with orientation towards some of the mid-cap names.
Mihir, a broader question to you. You've seen quite a few market cycles by now, and every time market sees this kind of a bull run, there's always this thing that this time it's different. So what is your argument for that this time is different?
It's never different, frankly, and I typically focus on the sustenance of the earnings momentum. So as of now, as we speak, we are still coming off the COVID impact. So there is still a low base to catch up to. If you look at the GDP trend line, it has been broken. We still not come up to the pre-COVID trend line, so to say. So there is some steam left as far as growth is concerned. And so next 1 or 2 years at least does not seem to be a problem. That coupled with the fact that the rest of the world is in deep trouble. While the US has been stimulating its way out, I think the best of the stimulus is over and the best of the liquidity and interest rate cycle is also over. You might see gradual easing, but that will come with much more moderate growth than what we have seen in the past. So India's position versus the rest of the world has never been better, and India's premium over the rest of the world is not at all-time highs. So I would say this can continue for a while, because in general I see easy global liquidity conditions going forward, because the globe is not going to overheat, which means that countries like India, which are growing faster nominally, should relatively look much more attractive, and that premium will continue.
Vaishali, one question for you. Are you tracking the cement space? If so, which are the stocks on your radar right now?
Well, of course, Ultratech would be a no-brainer. That would be the best pick right now. But I would also say that whole of Adani Pact, so including Ambuja Cement, ACC, they both are doing very well. So also is the case with Dalmia Bharat. So these are all the stocks which are having a good trend. And well, I am focusing more on Ambuja and ACC. They have, after a long time, they've given a breakout. Like we talk about Ambuja Cement, above 560, it made an attempt to go towards 590. But my long-term target projection comes to around 620, 650 levels also. So I do like Ambuja and ACC besides Ultratech Cement.
All right. With that, Vaishali, thanks a lot for joining in this afternoon. Was a pleasure interacting with you. Sid, before we wrap this conversation, would you still be constructive on HDFC Bank? Of course, the numbers have been disappointing. Low liquidity coverage ratio that had come in as a big disappointment, margins under pressure. So would you say that the era of premium margins for HDFC Bank is, a thing of the past, at least for some time?
HDFC Bank is such a vast thing to talk about. But then, it's not that something is going wrong with this bank now. It's been like 2-3 years that some other issues have been happening. First, ban on issuing the credit cards and merger. Obviously, the regulation changes when NBFC merges with a bank, and that's the reason NPAs have shot up. We keep seeing on social media the service standards have been falling. Some of the ex-management selling the stakes. So there are a lot of overheads or headwinds for HDFC Bank. But then ideally an investor should compare HDFC Bank with other options available in banking space. See, you cannot be bullish on India and not be bullish on banking space. So now if I see the valuation gap between ICICI Bank, Axis Bank and HDFC Bank, which previously used to be pretty high in terms of price to adjusted book value. In fact, HDFC Bank is trading at discount to ICICI Bank now. I believe stock may not perform for a certain period of time, but looking at the valuation, looking at other things, I think the downside to HDFC Bank is limited and it should be part of your portfolio.
All right, that's the view then. Downside limited and it should be a part of your portfolio. With that, gentlemen, thanks a lot for taking out time and sharing your insights with us. Always a pleasure interacting with you, Sid and Mihir.
Thanks.
But with that, we've come to the end of this leg of the coverage. Of course, we will be getting you more on the other side. So it's a goodbye from me and Santo. But of course, Sunal Mehrotra Kapoor will take the action forward. Thanks a lot for tuning in.
Inclusive development and growth. Our humane and inclusive approach to development is a marked and deliberate departure from the earlier approach of provisioning up to village level. Development programs were thus provisioned. In the last 10 years, however, have targeted each and every household and individual through housing for all, Har Ghar Jal, electricity for all, cooking gas for all, bank accounts and financial services for all in record time. The worries about food have been eliminated through free ration for 80 crore people. Minimum support Minimum support prices for the produce of Annadata are periodically increased appropriately. These and the provision of basic necessities have enhanced real income in the rural areas. Their economic needs could be addressed, thus spurring growth and generating jobs. Social justice. Our government is working with an approach to development that is all-round, all-pervasive and all-inclusive. Sarvangin, Sarvasparshi or Sarvasamaveshi. It covers all castes and people at all levels. We are working to make India a Vikasit Bharat by 2047. For achieving that goal, we need to improve people's capability and empower them. Previously, social justice was mostly a political slogan. For our government, social justice is an effective and necessary governance model. The saturation approach of covering all eligible people is the true and comprehensive achievement of social justice. This is secularism in action, reduces corruption, and prevents nepotism, prevents Bhai Bhatijawad. There is transparency and assurance that benefits are delivered to all eligible people. The resources are distributed fairly. All, regardless of their social standing, get access to opportunities. We are addressing systemic inequalities that had plagued our society. We focus on outcomes and not on outlays so that the social economic transformation is achieved. The multi-pronged economic management over the past 10 years has complemented people-centric, inclusive development. Following are some of the major elements. 1. All forms of infrastructure, physical, digital, or social, are being built in record time. Number 2. All parts of the country are becoming active participants in economic growth. Number 3, digital public infrastructure, a new factor of production in the 21st century, is instrumental in formalization of the economy. Number 4, goods and services tax has enabled one nation, one market, one tax. Tax reforms have led to deepening and widening of tax base. Number 5, strengthening of the financial sector has helped in making savings, credit, and investments more efficient. Number 6, GIFT, IFSC, and the Unified Regulatory Authority, IFSCA, are creating a robust gateway for global capital and financial services for the economy. Number 7, proactive inflation management has helped keep inflation within the policy band. Globalization is being redefined with reshoring and friendshoring, disruption and fragmentation of supply chains, and competition for critical minerals and technologies. A new world order is emerging after the COVID pandemic. India assumed the G20 presidency during very difficult times for the world. The global economy was going through high inflation, high interest rates, low growth, very high public debt, low trade growth, and climate changes. The pandemic has led to a crisis of food, fertilizer, fuel, and finances for the world, while India successfully navigated its way. Matsya Sampada. It was a government which set up a separate department for fisheries, realizing the importance of assisting fishermen. This has resulted in doubling of both inland and aquaculture production. Seafood exports since 2013-14 has also doubled. Implementation of Pradhan Mantri Matsya Sampada Yojana will be stepped up to 1. Enhance aquaculture productivity from existing 3 to 5 tons per hectare. 2. Double exports to 1 lakh crore rupees, and 3. Generate 55 lakh employment opportunities in the near future. 5 integrated aqua parks will also be set up. Lakpati Didi. $83 lakh SHGs. 83 lakh SHGs with 9 crore women are transforming rural socio-economic landscape with empowerment and self-reliance. Honorable Speaker sir, their success has assisted nearly 1 crore women to become Lakpati Didi already. They are an inspiration to others. Their achievements will be recognized through honoring them. Buoyed by the success, it has been decided to enhance the target for Lakpati Didi from 2 crores to 3 crores. Technological changes, new age technologies and data are changing the lives of people and businesses. They are also enabling new economic opportunities and facilitating provision of high quality services at affordable prices for all, including those at the bottom of the pyramid. Opportunities for India at the global level are expanding. Ayushman Bharat. Healthcare cover under Ayushman Bharat scheme will be extended to all ASHA workers, to all Anganwadi workers and helpers. Agriculture and food processing. The efforts of value addition in agriculture sector and boosting farmers' incomes will be stepped up. Pradhan Mantri Kisan Sampada Yojana has benefited 38 lakh farmers and generated 10 lakh employment. Pradhan Mantri Formalization of Micro Food Processing Enterprises Yojana has assisted 2.4 lakh SHGs and 60,000 individuals with credit linkages. Other schemes are complementing the efforts for reducing post-harvest losses and improving productivity and incomes. Cancer vaccination. Our government will encourage vaccination for girls in the age group of 9 to 14 years for prevention of cervical cancer. Maternal and child health care. Various schemes for maternal and child care will be brought under one comprehensive program for synergy in implementation. Upgradation of Anganwadi centers under Saksham Anganwadi and Poshan 2.0 will be expedited for improved nutrition delivery, early childhood care and development. Import release time declined by 47% to 71 hours at inland container depots, by 28% to 44 hours at air cargo complexes, and by 27% to 85 hours at seaports over the last 4 years since 2019, when the national time release studies were first acted. Tax proposals. As for tax proposals, in keeping with the convention, I do not propose to make any changes relating to taxation and propose to retain the same tax rates for direct and indirect taxes, including import duties. However, certain tax benefits to startups and investments made by sovereign wealth or pension funds, as also tax exemption on certain income of some IFSC units are expiring on 31/3/2024. To provide continuity in taxation, I propose to extend the date to 31/3/2025. Inclusive development and growth. Our humane and inclusive approach to development is a marked and deliberate departure from the earlier approach of provisioning up to village level. Development programs were thus provisioned. In the last 10 years, however, have targeted each and every household and individual through housing for all, Har Ghar Jal, electricity for all, cooking gas for all, bank accounts and financial services for all in record time. The worries about food have been eliminated through free ration for 80 crore people. Minimum support prices for the produce of Annadata are periodically increased appropriately. These and the provision of basic necessities have enhanced real income in the rural areas. Their economic needs could be addressed, thus spurring growth and generating jobs. Social justice. Our government is working with an approach to development that is all-round, all-pervasive, and all-inclusive. Sarvangin, Sarvasparshi, or Sarvasamaveshi. It covers all castes and people at all levels. We are working to make India a Vikasit Bharat by 2047. For achieving that goal, we need to improve people's capability and empower them. Previously, social justice was mostly a political slogan. For our government, social justice is an effective and necessary governance model. The saturation
Hi there, you're watching Money Control. I'm Sonal Mehrotra Kapoor. Well, what a day we've had. 58 minutes and the political bugle for 2024 has clearly been blown. This budget has been seen not just with an economic lens, but mostly with the political lens as well. The election budget, as we've also called it over here. In 58 minutes, the finance minister went on to talk about loads of things. But some said that perhaps it's the lack of what she announced that is giving us the true sense of where this budget stands and where the sentiment of the government also stands. So we'll be decoding over the next hour and a half with you over here on Money Control what exactly were the political indications, the hawa, the litmus test of sorts that came from this budget. What does it tell us about what's in the mind of the government and specifically what's in the mind of the finance minister as well? I'm Sonal Mehrotra Kapoor and these are the headlines before we get started. It's a no surprise budget. Confident Modi brings no surprise budget ahead of the general elections. No change in tax slabs. Finance Minister Nirmala Sitharaman proposed to retain direct and indirect taxes, including the import duties. Women find a central theme this budget. Lakhpati Didi, cervical cancer vaccination, maternal and child healthcare schemes announced in the budget. It is a budget of terminology. GDP, FDI, Gyan now have a new meaning. And it is also the shortest budget speech by Finance Minister Nirmala Sitharaman. Less than an hour, only falling short of one ever presented by Hirubhai Patel back in 1977. All right. Right, so those are the key headlines, and that also tells you the major themes. But like I said, we'll shift our gears through the day on Money Control. We've been giving you we'll be giving you economic analysis, what's happening in the markets as well. But we'll take a political turn now. Joining me in studio now is Hitesh Jain from the BJP. Joining us shortly will be Rajiv Gowda, spokesperson of the Congress, and we'll be joined by Professor Apurv Javadekar, Nalin Kohli, and several other opposition leaders as well. We have with us Nasir and Apurv Javadekar as well. Hello, gentlemen. Welcome to the program. Very nice to have you all. Let me give the first word to Apurv. Apurv, as we look at this budget, let me just quickly go through the panel once and understand what were the key takeaways for you. I've clearly outlined mine.
Thanks for having me on your program. Many feared that it would be a populist budget, just given that it is coming right before the elections. But given how strong how strong a position government is, they really resisted the temptation to go populist. In fact, the fiscal deficit is scheduled to come down to 5.1% from 5.9% this year. So finance minister really held on to the path of fiscal prudence, which is absolutely essential, given that many other countries have, sharply recovered from the fiscal deficit states of that they had during pandemic. So I thought overall the budget was very responsible. Government had already increased the capital outlay capex to 10 lakh crores last year. On base of that, there is again a 10% increase, taking it to 11% increase, taking it more than 11 lakh crores. So in 2 years, that's roughly 45% increase in the capex from where we were. And so I thought government again retained the direction in which they want this country to progress, which is by providing heavy infrastructure and capital development, rather than some of the type of budgets we have seen in the past when really the thrust was on social security systems, social security net, rather than capital expenditure. So I think government has shown tremendous consistency in the way they have carried forward the agenda and not presented a budget which is which is keeping election in focus. This is absolutely responsible way to present the budget. So those are my a short take on how I looked at the budget.
Yeah, Nasir, let me come to you. Key takeaways, like I said, women were a central theme for us. The Prime Minister, the Finance Minister, in fact, I loved Gyan, the way she sort of put it together. It said Garib, Yuva, Annadata and Nari Shakti. Those were clearly the 4 key areas. But on the whole, how are you seeing, apart from these, any other key highlights?
Good evening, Sonal, and I'm logging in live from Dubai, thanks to you and your team. I had to prepare today for you guys. So Sonal, here are 2-3 key takeaways. I think number one, a lot of thrust has been given, though the Honorable Finance Minister had a very small speech, but a lot of thrust has been given on the multiplier impact of jobs, in my opinion. I think she did touch upon a very important factor called religious tourism or tourism broadly, which is talking about iconic tourist centers to attract business and promote opportunities for local entrepreneurship as well. Long-term interest-free loans to be provided to states on tourism. So I think the G20 meetings in 60 places presented diversity of India to global audience. I think one of the key factors, takeaways, was multiplier impact through tourism and iconic places of tourism. So that's one big takeaway. And that's going to create an impact on multiplier of jobs, as I said to you. The second quick one, I think, is, there was a very interesting, she touched upon taxation. And direct tax collections, as you know, have trebled in the last 10 years as far as India is concerned. But, she did give benefits of tax dues, which were there up till FY 2010. And up till now, certain tax benefits have been given tax dues which were supposed to be collected up to the extent of 25,000 crores. Now, I think that's again a big number to be looked at. It also, I can say this can also be said because of, it is an election year. Sonal, we can't ignore that. So I think that was again announced on the, so as to ensure a feel good factor. We see what is happening in the Sensex and Nifty. Sonal, we are at all-time highs. So I think, this feel-good factor of, and good noise will ensure that, it does give a set of a good momentum to build on the elections coming up. And
Nasir, just hold that thought. I'm intervening because we're just getting live pictures from the Finance Ministry. This is Finance Minister Nirmala Sitharaman, and as in the protocol is, she comes and addresses and takes question and answers with journalists right after that. So we are just moments away to kickstart that. We'll of course be dipping into it as well. But by now, let me bring in Hitesh at this point. By now, the market has digested the budget. The Finance Minister has also got a lot of details. What do you think is running on her mind right now? She sits down to take some questions.
Well, I think there is a sense of calm, there is a sense of confidence, and there is a sense of continuity. So she's aware about all the 3 C's: calm, continuity, and confidence. And that was reflected in the morning. And I'm sure when she will address the press, you will see the same thing today again.
All right, I think it has started now. I also have Sabah Naqvi joining me. Sabah, I'll request you to sort of hold on. We'll just listen into the Finance Minister and get right back to you.
I just want to give the overall perspective, so I'll take a bit longer than I desire. See, this is an interim budget presented just before the election, obviously. The 4 large things that I want to draw your attention to is GDP. You get the numbers, you see it and so on. But I want to bring in this dimension, that governance, development and performance. On all these 3 heads, I'd like to say what actually we have achieved, because that forms the backdrop. So on governance, this budget speaks from a position where we have delivered on development, we better manage the economy with correct intentions, correct policies, and correct decisions. So it's a governance with care, conviction, and confidence. If that stood for the GDP's G, the D stands for people living better, earning better, and having high aspirations for the future. And if I move to the P, the performance, 3 consecutive years of 7% growth. Fastest growing economy in G20, all parts of the country participating in the growth. Price stability and inflation management. Handling the health and economic fallout of COVID. Build out of physical, digital and social infrastructure. DPI as a factor of production almost for formalization and financial inclusion and growth of the economy. Cleaning up the banking system, GST, One Nation, One Market and One Tax, the IBC. So if you were to look at governments, I've listed some of them. So your GDP, as we look at governance, development and performance, I have something to say on each of these. So this budget, vote on account, is getting presented with the GDP that we want to speak to you about. And in that, the fiscal management actually is something which I would like you to spend some time, even as you go through the budget. But I'll flag it here. Bringing down the fiscal deficit in spite of very challenging times, as per the announced consolidation path, and with transparency and prudence. So in fact, I was just remarking to my officers this morning, most of you all had already calculated the figures RE revenue, RE expenditure, this is what it is. Because every month you get the reports coming out. So you don't need to wait till the budget statement. Every month you get the accounts, and so budget process has become absolutely transparent and questionable. If there are any, you're there to question, we are here to answer. But we set in the process of keeping everything brought on budget and nothing kept aside from it or underneath it. So with that, the budget deficit, fiscal deficit, 5.8%, which is much lower than the 5.9 which was at the BE. Similarly, for the 24-25 budget, we've given 5.1 as the fiscal deficit, so clearly indicating that we are on track to meet the glide path which was set in 2021-22, and that we are well on track to meet the 4.5% fiscal deficit, on or below 4.5 even by FY26. If this is the background with which I'm talking and the presentation of the budget happened, I want to very clearly put some things under the heading, if you want to call it that, Disha Nirdeshak Baatein. You must have heard the Honorable Prime Minister speak before the Parliament session, well before the sessions commenced. His usual customary remarks. He said the budget will be presented tomorrow and you will have some Disha Nirdeshak Baatein in it. So, what are those Disha Nirdeshak Baatein? There are about 5 of them I highlight. Social justice as effective and necessary governance model. So it's not just a slogan for us, social justice, we'll have to work for Nyay. No. We've shown you that it is a governance model and a successful one at that. So social justice as an effective and governance, necessarily a governance model. Then 4 major caste groups, as we call it, as Prime Minister has emphasized, the poor, the women, the youth, and the Annadata. So Disha Nirdeshak Baatein, you have the second point. Third, focus on infrastructure. This year again, massive increases of capex happened in the last 4 years. This year too, there is 11% increase, resulting in a very recallable number, 11,111 crores. So continuing the trend of the last 4 years, where capital expenditure has been the route, one for revival earlier from COVID, and now for sustained growth towards towards the Vikasit Bharat goal. Fourth is the using of technology as a huge opportunity. DPI as almost a new factor of production. So it is actually bringing in the value addition to the economy. It is facilitating every sector to bring in the value addition which is so required and improves on our productivity. And the last Disha Nirdeshak Baatein is high-powered committee for extensive consideration of challenges arising from population growth and demographic challenges. So if these are Disha Nirdeshak Baatein, what were the major announcements? I'll recall very quickly 12 of them. I'm not spending any time except for reading out what those 12 are. 2 crore more homes under the PM Awas Yojana. We already completed nearly the 3 crore. Housing for middle class. Rooftop solar for at least 300 units of power generation every month, which will be muft bijli for the households. There will be some assistance and some kind of a funding which will be extended. So you're generating renewable energy, providing the renewable energy generators the free, that which will they they would want to use, and over and above that, the surplus that they produce can be used for selling and earning money out of it. Enhancement of target for Lakpati Didi from 2 crore women to 3 crore women. Preparing and empowering the MSMEs to grow and compete globally. Aligning regulatory environment for them. The 6th is making sure that the eastern region, and when I say eastern region, I'm not talking about northeast. Northeast will get the attention that they've been getting all the while. They will still continue to get it, and they will be on the top of our priority. But when I say the eastern region, I'm talking about Bihar, Jharkhand, Chhattisgarh and Orissa, making sure that they'll become the engines of growth for the new Amritkal India that we are trying to use as a bridge towards leading to Vikasit Bharat 2047. And Eastern India, I've missed out on West Bengal, please add it. Bihar, Jharkhand, Orissa, Chhattisgarh and West Bengal. Next generation reforms will be carried on, building consensus with states and stakeholders for reform, perform, transform. 3 major corridors, which are programs for railways, for logistics efficiency, and they have been explained. The important point that I want to highlight there is to make sure for Vikasit Bharat, you just don't need to build for better passenger convenience, you need to build for better passenger convenience. You need to give them safety. You need to shorten the traveling time for them. So one of the corridor is going to give emphasis for high density routes where passengers traffic is very high. We need to bring efficiencies and better safety in those areas. But for Vikasit Bharat, passengers need to move as they wish. But equally, materials, raw materials, building goods, cement, rare earths, minerals, we need them to move efficiently as well. So the corridor will take care of that as well. So the synergy between movement of people and movement of goods is what is being highlighted in the 3 corridors that we're talking about. Ninth announcement, that is urbanization, looking at Metro and Namo Bharat. One of the railway related things which I missed out on telling you, 40,000 bogies are going to be improved in the standards with which they can be effective rolling stock and also give the convenience in the passenger experience inside the bogies as well. So 40,000 coaches are going to be brought up to the level of Vande Bharat standards. Metro and Namo Bharat I did mention, so that urban transformation through transit-oriented development can happen. The 10th announcement which I draw your attention to is 1 lakh crore corpus for research and innovation by private sector. So that's coming in at the 10th. 11th is boost to tourism, including spiritual tourism. Interest-free loans will be given to states so that they can build on iconic tourist centers. And the 12th one is supporting reforms in state. They are separate from the development of tourism centers, and therefore I want you all to have the clarity that help to centers are supporting reforms in state is slightly different from boost to tourism. There will be a white paper on economic performance of the last 10 years compared with the previous 10 years. The 12th announcement is so much a statement that I would like to make, which is what I made in the budget speech as well. Government has got the trust and the confidence and the blessings of the people based on its exemplary track record of GDP, as I said, governance, development and performance, effective delivery, and also on Jan Kalyan. So highlighted points have been realized as goals of Vikasit Bharat till now, and they are the realizable goals also continuing to be so, because what we want to underline is we govern with good intentions, true dedication, and hard work in the coming years. And that's why Amrit Kal is also now called Kartavya Kal. In short, that's a budget. Thank you very much.
Yeah. The Finance Minister has just now encapsulated the key highlights of the budget. We'll now open the floor. We can begin with the front row here. Please go ahead, 53. Please hand over the microphone here.
Hello, ma'am. This is Priyashmita from Informist Media. Ma'am, I wanted to know about the projections in your tax collections. So tax collections are seen currently growing at about 14.4%. Your April to December data shows. However, the projections in your budget are lower than that. So a back of the envelope calculation shows that you're going to get about 55,000 above your revised estimate if the collections continues. So your estimates are conservative, would you say that?
I'll certainly ask Somanathan to come in on that. Estimates are always realistic with us.
So let me clarify this. If you look at page 6 of the budget, you can look at it later. I'll just explain it to you. We are projecting that gross tax revenue. Now, this gross tax revenue in this sheet is net of refunds. So, net of refunds, we are projecting that in this financial year, it will grow by 12.5% with reference to last year's actual. So, from 30.54 lakh crores last year to 34.37 lakh crores this year is what is presented in our revised estimates. However, the sharing of taxes with the states is different for different taxes. Not all taxes are shareable in the same ratios. What has happened this year, if you look at the number, and they are given on page 6, union excise duties have actually shrunk. They have not increased. Most other taxes have grown at, as you say, 14%, etc. Union excise duties have grown minus 5%. That reduction is almost entirely on the account of the center, because the same way that cesses are not shared, reduction in cesses is entirely borne by the center. So as a result, the state's share has increased by 16.5% in our revised estimates. Between the state share in the revised estimate and the state share last year, there's an increase of 16.5%. So taxes are growing 12.5% net of refunds. State share is growing 16.5% net, and therefore net to center is growing only 10.8% approximately. So there it is not. There is no expected further, padding or anything here. This is our realistic, but slightly conservative estimate.
Yeah, the next question, please. 65. Please go ahead.
Hi, ma'am. Yeah. I'm Kriti from Informist Media. So you mentioned that CAPEX, there has been a push towards CAPEX. However, the CAPEX jump for this year is 11%, right? Which is lowest in last 4 years. So are we moving towards a place of moderation in CAPEX? And secondly, while the budget, this is another unrelated question, while the budget clearly says that you are committed to your 4.5% target, you have also been recommended to bring down your debt to GDP ratio to 40% level, which still stands above 50%. So how are we looking towards moving towards that target? Thank you.
First of all, I'm on the second, your second bit was on the debt to GDP. What was your first one on? CAPEX. 11% growth in CAPEX. You've got used to about 30%, 23% from a low base. And today 11% on a high base appears low. Informist. 11 lakh crores going for capital expenditure. And you're seeing also that the private sector is coming in with their investments. So one has to have a clear understanding that when the government wants to spend through capital investment, it can be for one, triggering the economy so that private sector also comes in. At a time when private sector didn't come in, we still fully came in. Now we are seeing also
signs of private sector also coming in. So it's only natural for two reasons, therefore, for you to look at. One, on what base are you saying 11% is less? Growth it is. And second, please do look up if private sector is coming in or not. Does that answer you?
Yeah. The next question will take it.
Wait.
Still?
On your 40% of, first of all, that was a figure that was set before COVID. Its relevance today is something that has to be looked at completely afresh. And in fact, in 21-22, the finance minister had set out a particular fiscal consolidation glide path, which is the post-COVID glide path. I would only point out that today India's debt to GDP ratio is one of the lowest in the G20 apart from other countries. So we have to look at things in today's context, not based on a historical relic of a report which was prepared long ago before COVID happened.
Yeah.
And again, our external debt also is something which you should notice is never been high, not high even now.
Yeah, second row, I would request you to confine to one question, please, because there are many questions coming up. Yeah, thank you very much. Please go ahead. Yeah. दूसरा दे दीजिए. Give this another
नमस्कार
mic.
मैम, आलोक प्रियदर्शी हूँ मैं CNBC आवाज से. मेरा सवाल मैम ये है कि एक कंज्यूमर के नाते, एक टैक्स पेयर के नाते हमेशा लोगों की ये उम्मीद रहती है, या इस देश में कैसे कह सकते हैं कि चुनाव इतने ज्यादा आते हैं कि लोगों को लगता है कि जब चुनाव आएंगे तो उनकी जो मांगे हैं वो पूरी हो जाएंगी, टैक्स के मोर्चे पर कहें, या फिर जो पॉपुलिस्ट मेजर सरकार लेती है. लेकिन क्या इस मिथ को क्या ये सरकार तोड़ना चाहती है कि जब चुनावी साल होगा तो पॉपुलिस्ट बजट नहीं देंगे? जिस तरह से फिस्कल प्रूडेंस की आपने बात करी, आपने फिस्कल प्रूडेंस को लेकर काफी जोर दिया है इस बार बजट में, तो ये इस बात का कॉन्फिडेंस सरकार को ज्यादा है कि वो अगली बार पूरी तरह से आके और जनता के जो इसी तरीके से जिस तरह से फिस्कल प्रूडेंस का जो रास्ता है उसको अख्तियार करेगी और उसी हिसाब से चलती रहेगी, और चुनाव के मौके पर लोग आम आदमी एक्सपेक्ट ना करें कि कोई पॉपुलिस्ट बजट आ सकता है.
आप डिस्कशन जैसे प्रश्न पूछ रहे हैं भाई. मैं पहले से बोलते आई हूं और माननीय प्रधानमंत्री जी भी इस विषय में बोलते थे, कल परसों भी उनका बयान है. वोट ऑन अकाउंट क्या है, कैसे है, आपको मालूम है. सो वी लार्जली केप्ट vote on account as vote on account, but also showed how the economy will be moving forward and what's our plan for it. Who are we going to aim at when in July, when we come back to present a budget? Who are the sections who will be addressed? What are the kind of investments we'll make? However, very clearly showing that on capital expenditure, we are showing an increasing growth. More money is being put in for that, for innovation, and so on. So announcements भी है, ये नहीं है कि वोट ऑन अकाउंट है इसमें कुछ और नहीं है. Announcements है, दिशा निर्देशक बातें भी है. So वोट ऑन अकाउंट एंड इंटरिम बजट को कैसे, किस हद तक उपयोग कर सकते हैं, और वो भी कॉन्फिडेंस सरकार, उस हद तक हमने यूज ही किया है.
Yeah, Z Business, and after that you hand over the microphone to your right. Yeah.
मैम, आपने दो बड़ी स्कीम्स का ऐलान किया, एक अर्बन एरिया के अंदर हाउसिंग स्कीम का, दूसरा रूफटॉप सोलर के लिए. मैम, इसका बजट एलोकेशन कितना है? एक सवाल. दूसरा सवाल मैं मैम पूछना चाहूँगा डाइवेस्टमेंट के ऊपर. मैम, पिछली बार 51,000 करोड़ का टारगेट था, वो टारगेट नहीं मीट हो पाया. इस बार
All right, so that was a press conference and we were hearing the finance minister over there along with the secretaries, addressing some of the questions there. Let's go back to the panel. Let's have all of them up on screen as well and take this discussion forward. We've heard, like I said, through the day, lots of bits that came in about what had to be said on economy, what had to be said on markets, etc. Now, over the next couple of minutes, we will be focusing purely on what was the political impact of this budget. I believe Rajiv Gowda is also with us, spokesperson for the Congress party. Rajiv, it was a very short speech by the FM. By her standards, it was also one where, a short speech, a no surprise budget, a very sort of, as journalists say, that kuch breaking news nahi tha is pure budget mein. And stuff like, in a speech like that, there are two ways to look at it. One, to say that we've said that, there weren't many surprises and opportunity lost. The other way, as we are hearing more and more from the BJP, is that they're so extremely confident of what's coming in the coming months that they didn't want to rock the boat at all. What are your thoughts?
Well, it's always a pleasure to hear a shorter budget speech, because budget speeches, especially by our current finance minister who likes to set the record, a new record every time, it gets very tedious. The point is that this particular budget speech is devoid of, of various major announcements, and that's appropriate. It is an interim budget, a vote on account, and in that sense, for a change, the government has not, broken some traditions. So in that sense, it's perfectly fine. What shall we say? But if you actually look at the content, it continues to, the same patterns that have been there in the past. Bombastic statements. See, the budget is really a one-way kind of an exercise, budget speech, right? The finance minister makes a speech, makes all kinds of assertions and announcements. India will be a developed nation at the end of Kali Yuga or something like that, and everyone will clap and say, fantastic, in 50,000 years we'll be developed, whatever, right? There's no ability for anyone to question any of these statements. And in any case, the budget speeches are so long that even those of us who are supposedly specialists in these kinds of things, have to show up on TV within an hour or two and act as if we've read every word and understood every, double-checked every fact.
But today you had the opportunity, I'm sure. It wasn't much. If I can break down the speech, the first half was spent around, I think she spent about 10-15 minutes as if showcasing a government report card. She talked about stuff that has happened so far and then went into one of the key pillars. Like I've been highlighting, it's also been a budget where they had 4 major pillars. She's talked about Gyan as a central theme. She again highlighted that. You were convinced with the push that has happened so far?
No, not at all. Because if you look at what happens is, there are announcements and then there are implementation challenges, right? So, for example, every year they've been announcing 100 lakh crore infrastructure investments. Have you ever bothered to check how many of these projects are actually being implemented? What are the delays? What are the cost increases? All of those are the realities that we ask in parliamentary questions and get the answers to. Similarly, across the board, when announcements are made, I'm just giving you the one on infra. It's that way. There are there's no fact checking that happens in real time, right? So essentially, that's one of the things that all of you need to be doing when you do the scrolls. She said this, and there should be something which not only come up with a counter. The only time I saw something like that happen was the day after the COVID relief announcements, right? They announced 10% of GDP, world record, etc. And the next day, a whole bunch of economists, including from various investment banks, came forth and said, sorry, it's all about 1%. Everything else is a loan or something else.
But Rajiv, let me just intervene there and say that this also perhaps says, politically in the circles, the sense one gets is that you had an opportunity like this right before the elections to make an announcement which you did not make use of. That does talk about incredible confidence that the government is going into this election with. Otherwise, why would they let go of an opportunity like this?
Yeah, that you need to ask them. The basic point is whether it is confidence or cockiness will be revealed when the election results come out. Basically, it does seem like an uncharacteristic, budget speech in that sense, because there is always a pattern of, in fact, of even delaying the announcement of the actual election calendar until the Prime Minister finishes announcing all kinds of new programs and initiatives. So that's how it normally happens. So this was a surprise. But as you said, she herself said that she will be back in July. So I wish her well. But I have no intention, or neither has my party or the India Alliance, of making her wish come true.
Right, we'll come back to India Alliance and how this is going. But another key aspect for me, and we also have Arvind Gupta, the head for Digital India Foundation, joining us now. Hi Arvind, welcome to Moneycontrol. Another observation one has looking at this budget is the allocation that has happened in the specific zones in the country. We all now, political watchers, have looked at this budget. If you look at it zone-wise, you see that BJP typically solid in the northern belt, the western belt also, has sort of tried to make a lot of, especially the schemes that have gone out to woo the voters at the lower end of the pyramid and to woo the voters in the eastern western belt as well. I'm not pretty much sure if south got covered there, but is that your sense? What exactly were your key takeaways for you?
Sonali, thank you for having me, and I will give some comments on Professor Gowda's remarks on the budget, but I think the budget, was a very, very confident budget, which basically shows the government's intent and the clear vision that they have, and confidence that they will be presenting a full budget in July 2024 and many budgets after that. So it's a clear, it's a very strong signal. It was not a budget that was filled with a lot of sops and knee-jerk reactions, and still maintained a lot of policy continuity while maintaining a lot of fiscal discipline. It's a budget that has, when you're saying serving the bottom of the pyramid, it explains the report card of what it has done and what it will continue to do for people who are marginalized, whether they are women, the farmers, the youth of this country, who is going to be the powerhouse for the Amrit Kal, and research and development. So there is a lot that is being done, and the accelerator has been, the vision has been shown, and the accelerator has been pressed on a few schemes, which basically continues that the Lakpati Didis, and they have been expanded from, the target from 2 crores to 3 crores. So it is, this is a budget which is interim budget, as we all know, is really telling you that what we have done over the last 5 years, and that policy continuity is going to be
but Arvind,
on the political economy. Let me just complete.
No, we've discussed the reason. The reason, Arvind, I'm interjecting here is that we've discussed these points before you sort of joined in as well. But I want to specifically look at, perhaps we're all talking about the hits that were made as well, but let's look at some of the misses as well. One particular one that pops up is the government cuts and allocations that have come in major schemes under Startup India as well. It's been such a flagship program for the government. We didn't see anything happen there. I also want to highlight about the manufacturing companies that have faced sort of uncertainty, as budget had no mention of any extension towards any tax rate cuts towards them as well. So both manufacturing and startup did not find any mention. Isn't that a concern?
Well, I disagree completely. Number one, the finance minister mentioned that they will keep ensuring three things. The inputs, that is research and innovation, gets a lot more attention, a lot more budget allocation. Two, the fund of funds, that is a national fund of funds, which I am also associated with, is funded and actually gets accelerated. And there is that money has already been allocated and it will continue to get allocated. And three, that the PLI schemes that the finance minister talked about will be continued, and that is how the manufacturing and the China Plus strategy of supply chain resilience is going to be growing. So I don't see that to be any alarm bells for them. But let me add the two ways of measuring. And Professor Gowda is here with due reverence to him. I can say that the whole, mathematical and the ways of presenting budget, that was the old era of showing a large picture and really not spending, or a lot of money leaking through the pipes, is all gone. Now the money that is spent, whether that's through DBT or any other PLI schemes or anything else, is actually an outcome based. PLI itself is a proof of that. So all monies that are being spent are preventing leakages and really generating output, economic output, infrastructure build out, and jobs. So I think
what specifically in jobs?
Well, manufacturing. Actually, the lot of PLI. I mean, if you see electronic manufacturing from 2014, where there were 2 units in India, is now 300 plus units in India. Each of them employ a lot of people. And if you see that in India, digital has been a backbone for this whole new ecosystem of creating jobs. The whole startup ecosystem. You have almost 100,000 registered startups, and if they employ a few people, also on an average 4 to 5 people, that's 500,000.
But that's exactly my point. We did not see allocations there. Let me bring in Hitesh also on this point. On the bits that we've seen, no further allocation. I'm not talking about any new big measures that would have come up, but the fact that Startup India did not get say, and we're now beginning to sort of hear, get some news. Of course, it takes time to sort of digest this sort of news and look into the fine print. That and manufacturing both.
See, when you look at the continuity and the fact that this is a vote on account, it's a reiteration of the certain policies. When the government speaks about the innovation fund and they have earmarked something like 1 lakh crore fund towards the innovation fund, the major beneficiaries are going to be the startups over here. So I don't see any concern. And as regards job creations, now the capital expenditure has been increased. Like last year it was 10 lakh crore, and if you are taking at 11%, it comes to some 11.1 lakh crore. Now, what happens when you create massive infrastructure? It leads to generation of employment and it attracts the investments. So, once there is a huge capital outlay, it will lead to innovation, it will create the jobs, it will create other aspects. Now, we are talking about 40,000 bogies that will be replaced. You are talking about 149 airports and more airports that will be developed in the future. The construction of roads will continue to do. So, every aspect has been covered. And the thrust has been, as the Prime Minister clearly said, on Gyan, that is Garib, Yuva, Annadata and Nari. So all 4 are going to be undoubtedly the beneficiary of this Viksit Bharat budget.
Right. All right. We also have Priyanka Chaturvedi, Rajya Sabha member for the Shiv Sena, joining us now. Priyanka, hi. Welcome to Moneycontrol. We were just discussing some of the key hits and misses perhaps that this budget has had. But what were the key highlights for you and where did this budget stand for you?
No, I think the budget stands nowhere. I was listening to a previous spokesperson right now who said it will have a huge benefit for Nari Shakti, for Annadata. How? I want to understand how. In the past 10 years, I still remember clearly the sloganeering for Prime Minister Modi's campaign in 2014. What were the issues that he had raised? Bahut hui mehengai ki maar, ab ki baar Modi sarkar. Right now, we have a record-breaking, stint of inflation in our country. Nobody is even addressing that. Income has become almost stagnant. People are saving the lowest amount of savings in 50 years has been reported during this tenure. So what have they promised? They said farmers' income will double. Then we saw the black laws being passed by an ordinance and then they were forced to take it back. Talking about Nari Shakti, what have they done in terms of Nari Shakti in this budget? Have they announced any bigger budget for women and child welfare schemes? Have they spoken about bigger budgets for women nutrition, women health? Nothing. And that is the unfortunate part. So while she was giving Gyan on Gyan, which is as per them Garib, tell me any one policy that they initiated in their 10 years that would benefit the poor. Yuva, 2 crore jobs promised 10 years ago, still not being able to fulfill it. Annadata, I've already told you what they've done to the Annadata. And Nari Shakti, I still remember the Jantar Mantar protest that happened and the Member of Parliament Brij Bhushan Singh continuing to occupy his chair. So what are they talking about? This is all fluff, all political gimmick, and it was more a political speech than a budget speech. I was hoping some of these issues would be addressed. Unfortunately, nothing of that has been addressed besides getting some new acronyms as GDP, as FDI.
All right. I know a lot has been talked about the women thing already and Hitesh wants to come in, but specifically talk about the issue that Priyanka has raised on inflation.
Can I tell you something? These are the comments of the hopeless and the hapless opposition. Even if they will come in 2029, they will have... I'm talking about specific. Even if I will give them good wishes, because in 2029 also they will come as an opposition member. They will have same comments. And I will tell you why. I'm not being sarcastic. I will tell you why. when we are talking about a $5 trillion economy, when we are talking about $7 trillion economy, the country will be moving at the pace. They can have their comments. The country will be moving. The country will not stand for such such kind of comments.
Let's
I'm not leaving politics. I'm not leaving politics.
Sonal, can I just say one thing?
This is the happiest, hopeless opposition. They will continue to crib. They will continue to cry. I'll tell you, she spoke about women health. Now, cervical cancer related issues are there. When we are talking about increasing 1 crore Lakpati Didis, when you are talking about housing is concerned, we have delivered 4 crore houses. We are talking about 2 crore more houses for them. I mean, building construction additional 2 crore. The confidence, we set higher target, we achieved that, and after achieving that, we set further higher
But you still not answered my question
I've
on inflation.
answered the question.
Inflation you've not answered my question on inflation.
Inflation is in control, absolutely. The rate at which the RBI had mentioned, the inflation levels are absolutely in control. Don't worry. I mean, these are the comments of hapless and hopeless opposition.
I'll give Priyanka a chance
in 29.
I'll give Priyanka a chance
I will give chance Priyanka to come in 29 again, make same comments.
Got it. Priyanka.
Sonal, I do not even want to give him the dignity of responding to such comments. If they were just so confident, they wouldn't be using the language which I've just heard from this spokesperson. I can't see who the person is, but whatever he's speaking,
it's Hitesh Jain.
I think speaks of a very, Mr. Jain. For Mr. Jain to use the language he is speaking over comments which are genuine issues of the people of this country speaks of their unwillingness to understand what people are going through. Now, let me just make it very clear. Whether I come in 2029 to fight, whether I come to 2024 to fight, we will continue to speak in the voice of the people of this country. And the unfortunate reality, whether they accept it or not. So, yes, you can keep talking about $5 trillion economy. You can make it $100 trillion economy. You can say whatever you want. We are a nation of 1.3 billion people. And then you say, oh, we built 1 crore homes? 4 crore homes? 1.3 billion nation. Poor have become poorer, rich have become richer. Those who took massive bank loans are now living off happily in foreign countries. And while the small businessmen continue to suffer the consequences of wrong policy making. So you can keep talking whichever language you want to. If that makes you happy, please be happy. But we will continue to speak for the people of this country, whether you like it, dislike it, because we know you will dislike the language of the Aam Janta simply because you will have worked only for that 2% rich people of this country.
But Priyanka, let me ask you this. The fact that a lot of people are sensing at the moment is that the reason the government did not feel the need to even come out with any big blockbuster announcements at the moment talks about the confidence with which they're going into this election season. This is almost the election bugle that has been blown with this election, with this budget, the election budget as we've called it. Isn't that a cause of worry for the opposition as well at the moment? This is coming exactly at the time when every day there's a new headline on how we see alliances falling off within this India alliance of sorts. Isn't that a point of concern?
So, firstly, there is no alliance that has fallen off. I think this narrative which is being built is absolutely incorrect. There's one Palturam who chose to be with them, then Palturam came to us, then Palturam went back to them. Who's the bigger Palturam in this context? And that Palturam is Shri Amit Shah. Shri Amit Shah in every single rally in Bihar and Patna and whichever part of Bihar, he said just one thing, that the doors for Mr. Nitish Kumar are shut. What is the sense of desperation if they are so confident about getting 400 plus seats? What was the sense of desperation to lay out the red carpet for Mr. Nitish Kumar? If he was a Palturam, you're a bigger Palturam. So that's one. About TMC, I think TMC is very clear they're part of the India Alliance, even if seat sharing has not been concluded with the Congress party. Fine. She's in a confident space that she can beat BJP hollow in her bastion. She will beat them hollow. That's the confidence she's exuding in the India Alliance and being a part of the India Alliance membership. Now, talking about big ticket announcements. 80 crore people in this country are not Atmanirbhar. 80 crore people are living off the rations which have been declared as part of the welfare measures of the central government. Isn't that a big ticket spend already? What is the fiscal deficit that we are seeing? It's at 5.8%. It has always been above 6%. What was the target? 4.5%. What is the new target? 5.1%. So you are already spending way beyond our means. You're already having to, because of the lacunas of your policy, having to announce these kind of ideas of having to give free rations. And you're coming and telling me, oh, hatash opposition, nirash opposition, 2029 mein bhi aakar hoega. हाँ आएगा, रोएगा, जनता के लिए रोएगा क्योंकि जनता रो रही है. So that is the only difference. We will continue to speak for the people, and India Alliance is strong, and we will continue to fight on the issues of the people.
I want to shift focus to something again which hasn't found enough mention, but I'm really looking forward to listening to everybody's views on this. There was, for the first time perhaps, mention of Lakshadweep also that has happened in the budget. And everybody who's been looking at the budget for quite some time, we've never seen a mention like that. Was that a snide remark? Mr. Gowda, I'll begin with you. And what did you make of that comment by the Finance Minister, and then we can go around the panel?
Of an ecosystem that requires very careful handling. Just because we want to have some fight with the Maldives or something like that, doesn't mean you can expose that fragile ecosystem, like we're doing in Nicobar, to all kinds of development pressures, which could make that fragile ecosystem get destroyed. So it's all very well to make these kinds of posturing and to do this kind of posturing and statements. The tourism there has to be very carefully done and in a manner that is respectful of that ecosystem. So I'm not sure that bringing it in is going to make any dramatic change. You're not going to be. I have been to Lakshadweep on a parliamentary delegation myself. I've seen the state of affairs. It's going to take quite a while before things can change, and it's going to be done very carefully. So I would just urge caution rather than to turn this into some other kind of international crisis reaction and action reaction.
Let me bring in Apurv Javadekar on that point. Apurv, you've been quiet for a while. I want to understand your comments on what did you make of that special mention on Lakshadweep that was made?
That got talked earlier. One, in terms of inflation, after COVID, India is one of the few economies which have been able to bring down the inflation in the acceptable range, when US and UK are still struggling to get it down just now, but India has been able to get it down from last year almost. So about that. Second, tourism. Coming to your question about tourism, I think Finance Minister made it very clear that tourism will be a focus going ahead, both in terms of spiritual tourism as well as other type of tourism. And Lakshadweep, and it might take a bit for things to develop there, but you have to start somewhere. And so I think if you ask somebody from, especially I'm right now in the US, if you ask somebody from here, I think everybody would talk about coming to India to visit, but is there enough ecosystem for them to come, and so on and so forth? Those would be some of the questions. So I think tourism is one sector which we would all like to see more development in, and a lot has been done. But here the cooperation of state and state governments is also quite important. So FM highlighted that point very nicely, that we encourage state governments to sort of be a partner in this development. And in fact, these are not just words. Central government is going to provide interest-free loans, long-term loans for this, to the state governments to carry out these developmental projects which would aid in tourism. So I think special mention of Lakshadweep might have been on the backdrop of what happened last month, but this month rather. But I think overall the thrust on tourism is quite well received.
Well received, but also just to sort of the political implication of it and the statement that was being made, how you read between the lines when Lakshadweep was mentioned, cannot be missed as well. I'm going to quickly go around and take closing comments now from everybody. I'll start with Rajiv Gowda this time. Rajiv Gowda, again, we've spoken about certain hits and misses, and economy, jobs not finding enough mention in the budget, the fact that inflation wasn't mentioned enough, Startup India, etc. All these have been discussed. But do you see implications, happening? And majorly, since we're discussing politics here, what is this a wake-up call of sorts for the opposition at the moment? Because the messaging that seems to be coming from the NDA government is very clear.
It's really a wake-up call to the Garib, the Yuva, the Annadata, and the Nari to pay attention to the reality that they're experiencing and not to pay attention to the slogans that they've been dished out. Okay, so if you just look at youth unemployment, okay, it's about upwards of 40% right now. Okay, that is the state of affairs for youth. It's not just the skilled youth. Even our IIM MBAs are not getting placed at this point, right? So there's something going on there that really is very, very worrying. When it comes to farmers, rural distress, farmers are still committing suicide. All of those are incomes have not doubled. They should have doubled years ago. That MSP promise has never been what was actually supposed to be implemented in terms of Swaminathan formulae. None of those have happened. Women, there is distress, employment increase, participation in the labor force. So lots of real challenges in a country that's increasingly unequal. The consumer confidence survey from the RBI just came out, and there you see how the poor, this is just the urban poor, forget rural India, they're not covered in that survey. They basically are very despondent about what the future holds. So those are the realities. The rest are all slogans. And that's what we need to look at. And you need to use this opportunity to look back at the last 10 years and remember that these are the geniuses who gave us demonetization, who brought that economic engine that we had sort of started to pick up. They brought that to, it just kept the economic growth kept decreasing and decreasing until COVID hit. And that gave them an excuse to hide their own mismanagement, right? So that's really the state of affairs. And this is a country that requires a lot more genuine, sincere attention to, for example, for all the fastest growing economy, as Priyanka also pointed out just now, 80 crore people need to be given free food. If that is their idea of the greatest economy in the world, I really think that they need to take a very, very hard look at the reality that exists.
Right. Priyanka, I also have a question for you on the white paper and how, all corruption earlier one and the white paper that the finance minister has constantly talked about, she emphasized on it as well. You're smiling on that comment. I want to understand your thoughts.
I'll tell you with regards to corruption, how they have managed to corporatize the idea of corruption. On one hand, you have the Prime Minister saying, na khaunga, na khane dunga. I'll give you a very small example. It's actually not a small example. Mumbai Municipal Corporation has a budget which is more than 5 state budgets of this country. We've not had an election there for 2 years. Recently, in Maharashtra, we saw a split in our party and in the NCP. How are they officiating corruption? How are they getting people to move to their side? They are passing contingency funds which are reserved for emergencies, for health emergencies, for pandemic-like situations, for flood-like situations, are being used to fund and sponsor horse trading triggered by the Bharatiya Janata Party. Everyone who switches over their party loyalties is paid a royal sum, the corporators, at 5 crores. There's no elected body right now. Everything is being handled by the Bharatiya Janata Party and the traitor gang of Maharashtra. Everything is being officially done. Up to budgets up to 25 crores are passed in a single day for one single MLA of the state. What does it speak of? If this is not corruption, now I'll give you the second idea of corruption. So I'm really waiting for this white paper, that where have they created those 2 crore jobs? Where have they created employment opportunities? What have they done with terms of inflation? We are living in a situation where amdani 98 hai, kharcha pura rupaiya hai. So that is lowest savings, which I've already told you. So corruption is officiated now, corruption is corporatized now, and they talk about bringing out a white paper. We would take that white paper across the length and breadth of this country to show them the extent of jumlas that this government is capable of giving to the people of this country.
Since you've made those allegations, I'll give Hitesh a chance to respond.
Well, I think the opposition has been reduced to making such kind of comments on the studio. They have lost the connect with the ground. They are not aware that the numbers don't lie, they inspire. When you talk about the 7% growth of GDP, in the world where the economies are struggling, India is printing at the rate of 7% growth rate. And the numbers are there to see. The trust and the confidence of the people will be demonstrated during the coming election. Good luck to Priyanka Chaturvedi. I'm sure on the day of election day, result day, we will be speaking. The only question that is left is, are we crossing 400? That's the only question. And they will be reduced in a single digit. So good luck to them. And
yeah, but this
we will be happy
400
to
figure,
speak.
how does...
I didn't know he's an astrologer as well. I didn't know we have astrologers instead of political
in 2019 also I debated with you and I said that we will be crossing 300 during the time of interim budget.
I'm not here going to be debating with you,
cross the 300
with someone
mark.
who's just making some prophecies. And while showing desperation by bringing in alliances last minute, 42 alliance partners, you've got the 43rd one. We also still don't know what your narrative to the country would be and how many seat sharing discussions you'll have had with your partners. So before you talk to me and what you're going to do, please thoda gireban mein jhank lijiye.
All right, let's cool down the tempers here a little bit and let's go to some of the graphics that we've got for our viewers as well at this point on how is it looking, because the 400 number has been brought up again, to see how exactly is that really panning out. So let's go and see which states are first going to polls and where are all these numbers really coming from. As we do that, I'm told we also have Nalin Kohli joining us. So let's go across to that, but keep playing. But while we wait for that, let's put those graphics up on the screen to really understand how this is going to pan out. I know Hitesh has to leave, but let's quickly see those numbers up. That gives us a full picture of which zones are we really looking at. If BJP really indeed wants to cross that 400 number, where will that number really come from? Let's look at first up the states that are going to polls, and then we will talk specifically on how the allocation has happened in these states as well. Now in this year 2024, we've got Haryana, we've got Maharashtra, we've got Sikkim, Jharkhand, Odisha, Arunachal Pradesh, even Jammu and Kashmir going to polls. Now this is interesting. Why? Because remember, in J&K this would be the first one after the whole shift that we've seen. In Andhra Pradesh also we're going to see something interesting. Arunachal Pradesh as well. So these are the states going to polls specifically. Now this, just to give you a perspective, let's look at how the BJP government had performed in these states last time around. In 2019, what exactly was the picture here? Let's put that graphic up on the screen to give you an idea of how BJP and where BJP stood there really. Overall, okay, we've got the overall picture there. Now, Hitesh, now the reason I'm asking you to stay back is to look at this number and to reflect how exactly are you talking about that 400 number. So, the 272 is the halfway majority mark. We got 303 for BJP, 47 others. Where exactly is the gain? Which areas, which zone, which states are you looking at? Because if the last few elections are anything to go by, there are regional parties that can spring a surprise.
Well, frankly speaking, such numbers do not come like, for example, in Gujarat, we crossed 152. If somebody will look at region by region and then start looking at the arithmetic, numbers don't come from arithmetic. Numbers come from the ground. Numbers come from the connect with the people. We are confident that,
but that translates into seats only.
Well, they have translated. People were surprised in 2014 about 282. People were surprised about 303 in 2019. And we will again surprise with the 400 number in 2024.
No, but specifically on Odisha.
Well,
how do
I'm telling you, don't go by such arithmetics. Don't make the studios don't decide the number. The connect with the people on the ground decides the number.
The studio is not deciding the number. We're just putting numbers in context.
You can't just sit and start scribbling, okay, this is the number.
No, we're not doing that. We also have Nalin Kohli joining us now. Hi, sir. Good evening. Welcome to Moneycontrol. Thanks so much for speaking with us. I just want to start by understanding a couple of key points. Now, we've had, this has been a budget where there has been a lot of focus on Gyan as the finance minister spoke about. We also got some really nice nomenclatures. There was GDP that stands for governance, development, performance. We got FDI as well. But in all of this, perhaps what's been highlighted is the missing allocation or perhaps a reduced allocation for Startup India. Do you see that as a concern in the coming years, or would you say this is to start with a budget, which I'm sure this is going to be on your mind in the first statement as well, that this is a budget that talks about confidence for the upcoming polls?
Well, first of all, I must say thank you for having me on your program. Nice to see several colleagues and friends there. I mean, Hitesh and Priyanka and Rajiv Gowda, all of them are known well. We know each other well. So it was a nice debate that I was seeing Arvind is there. So many of us have been colleagues and friends for a while. Let's come back to your question. I don't see Startup India or any reduced allocation as any concern for three reasons. First, there is also an announcement of 1 lakh crores as an interest-free, long-term, 50 years interest-free for funding youth onto projects. There's recognition that 430 million or 43 crore people have got or taken the benefit of Mudra. 3, we must recognize that Startup India as a program has borne results. There are approximately 112,000 or 113,000 startups, and every 1 out of every 10 unicorns in the world, and over 100 unicorns from India globally. So it has borne its results. So I think we should look at what is the good work done of the program, and a continued funding to it is a good idea. We shouldn't see it from the prism that it has been reduced, because I think if a project or a program is doing well, it's picked up momentum, you keep assisting it or funding it, but you may also shift your priorities to other programs.
Right. But sir, the fact that, again, I'm just looking at stuff that has been highlighted now, and, several panelists were talking about earlier on the lack of emphasis on jobs and employment that has, that perhaps did not find as big a mention. We heard the finance minister, she's talked about how this is a Disha Nirdeshak budget, right? It gives you a direction. It's supposed to provide you on which way the government is going. So by that logic, shouldn't employment and inflation have caught the highlight?
That's a good question, by the way. And let me address both the different aspects to it. Inflation broadly is under control. It hasn't gone anywhere close to the crazy spikes we have seen, say, a decade ago, where, on an average it used to be 8 to 10%, it has gone up to even 12. So inflation is broadly under control. And I think the Reserve Bank, along with the government monetary policy, as also other initiatives on the supply side, demand side, have kept inflation in a range that is manageable. Let's come to the employment question. I think what we need to see is that there is a structural, as the budget talks about transformation, it talks about progress. In that sense, there's a structural change of how we are approaching India's economy under the Modi government over the last 10 years with a vision to be Viksit or developed by 2047. When we do 100 years as a democracy, as an independent nation. In that context, we need to see other things. So we have one side, the demand for what is called government employment, which shows up. The other is self-employment, which is employment for self and also leading to employment for others. So if you have an 11 lakh crore outlay for, say, infrastructure, you are securing employment in a very large sector. Any economist and anyone who studies economy would say that there are certain areas which are high employment. One of them is the construction or infrastructure industry. Mining is another. Mining often runs into issues with environment. But nevertheless, from an employment perspective, it's a very high employability sector. So the third is on self-employment. When I was saying, startup is one successful program on it. If I look at the figure that comes out of 83 million or 83 crores or 83 lakhs or 8.3 million self-help groups by women, which is called the Lakpati Didi, which means you are actually taking women and recognizing their contribution, giving them wings to fly in a rural context. We've had the Prime Minister speak of examples where a lady working in this manner proudly bought a two-wheeler scooter for her husband. Now, that is employment that doesn't get counted often, but it is employment. And I think the test of the pudding remains in, does a government finally get rewarded for its efforts, or does a government not get rewarded for its efforts and gets booted out of office? And I think the Modi government has been in office twice, 14, 19 with a higher majority. And generally, people believe that 24, we should go even higher than that. So this would be a good indicator, finally, that people are satisfied. If you had a youth focus, if you had a lack of focus on youth, women, and the farmers, this budget is saying, obviously, we'd be at the receiving end of that. And any political party worth its salt would be at the receiving end of that.
Right. But Mr. Kohli, you talked about how it should go higher. Give us a sense of which all places do you see these numbers actually coming from? We were discussing right before you joined us on India, on the southern region, eastern region looking, the western region also looking slightly weaker, right, for the BJP. It is a challenge there. Is that where you're looking at higher numbers? What exactly is on the mind?
So let me draw on three of us are active political people. I don't exclude Arvind out of politics, but Arvind wears the additional hat of someone who's worked in the IT sector. So let me draw from all four. I think everyone who's on groundwork for politics understands that chemistry is something that you cannot bring into mathematics per se. So numbers, and in two elections, whether it is 14, when no one believed there would be a single majority government under Prime Minister Modi, and this was after 30 years, or 19, that it would enhance, the numbers would enhance, but they have. So I think what you need to understand is that in any election, that X factor is the chemistry. And that X factor does not follow pure mathematics. Now, if you look at numbers of, say, the opposition party, let's say Karnataka, Rajiv is from Karnataka, the BJP's numbers have come down dramatically in the state election. But the BJP's vote share per se is not dramatically down. It's down by a fraction of a percent. But the Congress, for what it managed to bring the numbers, which is one part of arithmetic, and what their appeal was obviously before the voters, got them a very good majority in Karnataka. So now in Madhya Pradesh, an argument was taken after the elections that in overall votes, we have polled more. But arithmetic didn't work. So I think we need to look at elections with a little more broad-based view. And
I take
I'll
your
give
point.
one third argument, and permit me to use the example of, say, IT and social media, because Arvind is also there. From that perspective, I recall after demonetization, we were in a meeting where a survey had been done, a very large one, and the figures were unbelievable. Everyone said the BJP will lose Uttar Pradesh. And the figures that were telling us that we will win Uttar Pradesh enormously. Now, no logic was going around with it, but eventually we won with a majority, which was absolutely phenomenal. So let's look at the chemistry factor. That's the sum and substance of what.
The chemistry factor. But I like how you said that in every election there's an X factor. Can I go? I just want to go around all my panelists now to understand what exactly will be that X factor according to you in the upcoming elections. Rajiv Gowda has his hand raised up, so I'll go to you first, sir.
Yeah. This is just a simple matter of the number of seats that exist in each state, right? You've got 20, what you've maxed out in Gujarat, you've maxed out in Rajasthan. It's that sort of a situation that we are looking at. And so where are those additional seats going to come from? You're going to see a reduction in Bengal. You're going to see a reduction in Bihar, believe it or not. You're going to see a reduction in Maharashtra. You're going to see a big reduction in Karnataka. So where are these? How are you going to get even a majority? That's the real question that even Sonal is asking you. All this talk about chemistry and feel good, we heard that in 2004 also. Oh, okay.
Okay, but what according to you is that X factor for, say, I want to understand what's the X factor for the India alliance according to you?
The ground reality of the fact that all the jumlas that were promised in 2014, it's been a decade. They've given Modi Sarkar a decade, and he's not created the jobs. He's not solved rural, distress. He's not transformed the futures of women. Youth are still really, really struggling. These are the realities that everyone is experiencing. Instead, just because Gautam Bhai and others are doing extremely well, stock market is booming, that does not mean that the real India is experiencing growth. It is in distress. And that's what we will remind the people about, and that's the basis of which we expect them to vote.
Arvind Gupta.
Yeah, of course, I've worn many hats, but let me be a very neutral commentator on this, and to give you a perspective which everybody is talking about, but nobody is commenting very fiercely on this. A couple of things: state elections and national elections. Somewhere I saw you putting the state election chart for India, and then trying to see what are the state elections happening in 2024.
I was just trying to understand. I was just trying to understand where is the scope. I was just trying to understand where is the scope, because Rajiv rightly said you've maxed out in the Hindi heartland. So where are the next set of numbers going to come?
What I'm trying to give you a point perspective is state elections vote very differently from national elections, and we've seen that many times in the past. So while parties have done badly or well in a state election, does not translate into national votes. Two, the jobs unrest or whatever Priyanka and Rajiv are talking about, If that is a reality, then the elections will show. But I disagree with that, because I don't think so. That's a reality, because as whether Nalin explains or Hitesh was explaining before, there's a lot of infrastructure build out. There's a lot of self-employment. There's a lot of other things going on, and mathematically, there is a lot of other schemes and benefits that the 80 crore that Priyanka talks about. They are not only recipients of the PDS benefits, but they are recipients of some of the other benefits, which could include a scholarship, a vaccination program, and which is the part of the safety net that the government has always promised.
Okay.
So now coming to the last part, which you call the X factor, I think the opposition may deny this, but as a neutral commentator, the trust and the whole image that the Prime Minister has, and the whole terminology of Virasat bhi, Vikas bhi, or Modi ki guarantee, I think for somebody who visits a lot of ground and urban and local voters across India, I can tell you that that is really the X factor right now, and that is really going to translate into votes. It's a strong feeling in the favor of the Prime Minister, and his personal image is at stake. I think even if there is regions of certain distresses, if they are, I think the image and the guarantees that the Prime Minister carries, the trust that it comes along with that, will make BJP cross a very sizable number. Where that number would be, whether it's between 320 BJP itself or 350, and with the NDA 400, is remaining to be seen. But in my opinion, that the body language of the Finance Minister and the Treasury bench today really communicated that thing that you are talking about. That I started my thing is it's a budget which really vote on account technically, which clearly says we will come out with all these policies, all these things that you're talking about in a detailed manner in July when we meet you.
So Priyanka, what Arvind is also saying is precisely this, that this question of who against the Prime Minister, Modi, and versus who, that still stands, because for BJP the question is that the Prime Minister is the X factor very clearly, and what we are trying to find out from the opposition is then who, that India alliance, is that the one, or what exactly? Again, the question is simple. If you had to answer in like 30 seconds, what's the X factor for the India alliance?
For India alliance, there's the truth, the reality check. The reality check of Modi guarantees in 2014 still not being met with in 2024, and I've already in detail explained it to you, so I will, within 30 seconds, I've given you the X factor. X factor is the truth and a reality check of what was promised and what has been achieved, and the hollowness of Modi guarantees. That's it.
All right. On that note, thank you all very much. Rajiv Gowda, Priyanka Chaturvedi, Arvind and Nalin Kohli, thank you so much for joining us here on Money Control. It's been a fascinating day of budget. It was a short speech. There were no surprises. There was no so-called breaking news, as we keep talking in the world of newsrooms. But so far, it has had an underlining thought, that is of a political message that comes with it. We'll be watching out for everything that pans out from here all the way to these elections as well, and giving you and decoding everything, that the crunching of the numbers, all those details on our website as well. So do log in. For now, it's bye from the team. Stay tuned. There's lots more coming up on Money Control.
$55 lakh employment opportunities in the near future. 5 integrated aqua parks will also be set up. Lakpati Didi. $83 lakh SHGs. 83 lakh SHGs with 9 crore women are transforming rural socio-economic landscape with empowerment and self-reliance. Honorable Speaker said, their success has assisted nearly 1 crore women to become Lakpati Didi already. They are an inspiration to others. Their achievements will be recognized through honoring them. Buoyed by the success, it has been decided to enhance the target for Lakpati Didi from 2 crores to 3 crores. Technological changes, new age technologies and data are changing the lives of people and businesses. They are also enabling new economic opportunities and facilitating provision of high-quality services at affordable prices for all, including those at the bottom of the pyramid. Opportunities for India at the global level are expanding. Following benefits are expected. Savings up to 15 to 18,000 rupees annually for households from free solar electricity and selling the surplus to the distribution companies. Charging of electric vehicles. Entrepreneurship opportunities for a large number of vendors for supply and installation. Employment opportunities for the youth with technical skills in manufacturing, installation, and maintenance. Housing for middle class. Our government will launch a scheme to help deserving sections of the middle class, and I quote from Honorable Prime Minister's words, living in rented houses or slums or chawls and unauthorized colonies, unquote, to buy or build their own houses. I wish to make an announcement to improve taxpayer services. There are a large number of petty, non-verified, non-reconciled or disputed direct tax demands, many of them dating as far back as 1962, which continue to remain on the books, causing anxiety to honest taxpayers and hindering refunds of subsequent years. Honorable Speaker, sir, I propose to withdraw such outstanding direct tax demands up to 25,000 rupees pertaining to the period up to financial year 2009-10 and up to 10,000 rupees for financial years 2010-11 to 2014-15. This is expected to benefit about 1 crore taxpayers. 1 crore taxpayers would benefit out of this. Economy then and now. In 2014, when our government assumed the reins, the responsibility to mend the economy step by step and to put the governance systems in order was enormous. The need of the hour was to give hope to the people, to attract investments, and to build support for the much needed reforms. The government did that successfully, following a strong belief of nation first. The crisis of those years has been overcome, and the economy has been put firmly on a high, sustainable growth path with all-round development. It is now appropriate to look at where we were then. I repeat, it is now appropriate to look at where we were then till 2014 and where we are now, only for the purpose of drawing lessons from the mismanagement of those years. The government will lay a white paper on table of the House. The exemplary track record of governance, development and performance, effective delivery and Jan Kalyan has given the government trust, confidence and blessings of the people to realize whatever it takes, the goal of Vikasit Bharat with good intentions, true dedication and hard work in the coming years and decades. With this, Honorable Speaker, I commend the interim budget to this august house. Jai Hind. Fruits of development started reaching the people at scale. The country got a new sense of purpose and hope. Naturally, the people blessed the government with a bigger mandate. In the second term, our government, under the leadership of Honorable Prime Minister, doubled down on its responsibilities to build a prosperous country with comprehensive development of all people and all regions. Our government strengthened its mantra to Sabka Saath, Sabka Vikas and Sabka Vishwas. Our development philosophy covered all elements of inclusivity, namely social inclusivity through coverage of all strata of the society, and geographical inclusivity through development of all regions of the country. With the whole of nation approach of Sabka Prayas, the country overcame the challenges of once in a century pandemic, took long strides towards Atmanirbhar Bharat, committed to Panch Pran, and laid solid foundations for the Amrit Kal. As a result, our young country has high aspirations, pride in its present, and hope and confidence for a bright future. We expect that our government, based on its stupendous work, will be again by the people with a resounding mandate. Cancer vaccination. Our government will encourage vaccination for girls in the age group of 9 to 14 years for prevention of cervical cancer. Maternal and child health care. Various schemes for maternal and child care will be brought under one comprehensive program for synergy in implementation. Upgradation of Anganwadi centers under Saksham Anganwadi and Poshan 2.0 will be expedited for improved nutrition delivery, early childhood care and development. Honorable Speaker, I present the interim budget for 24-25. The Indian economy has witnessed profound positive transformation in the last 10 years. The people of India are looking ahead to the future with hope and optimism. With the blessings of the people, when our government, under the visionary and dynamic leadership of Honorable Prime Minister Shri Narendra Modi, assumed office in 2014, the country was facing enormous challenges. With Sabka Saath, Sabka Vikas as its mantra, the government overcame those challenges in right earnest. Structural reforms were undertaken. Pro-people programs were formulated and implemented promptly. Conditions were created for more opportunities for employment and entrepreneurship.
Hi there and welcome to Moneycontrol. My name is Ashwin Mohan and you're watching a brand new edition of our ongoing live non-stop post-budget coverage. Over the course of the next 1 hour, we are going to take a deep dive into the impact of the Interim Budget 2024 on the investment climate in India and also Deal Street. I have a stellar panel with me today in our Mumbai studios as well as our Noida studios. Let's start off by introducing the private equity viewpoint, which is going to come in from Divya Sehgal, partner at homegrown private equity firm True North. We have the legal eagle over here, Shiva Mandal, partner at Anagram Partners.
Thank you.
And joining us also from our Noida studios, and this is the Big Four viewpoint coming in from Vivek Gupta, partner at KPMG. Gentlemen, thank you so much for taking out time and joining me on the show today. Thank you. This is an interim budget. So, of course, one thing has to be clear. No big bang, earth-shattering announcements were expected. But nonetheless, there are a few indications of the strategy that the government has in mind. And there is a tone that has been set in place. So, let's kickstart with one of the key announcements that has come in. And this one is something that is perhaps likely to put a smile on the faces of many of the pension funds and sovereign wealth funds, the likes of Temasek, CPPIB, and Ontario Teachers Pension Plan, the Canadian investors, right? Let's address that question with you, Divya. What the budget has done is that it has extended the tax benefits for these funds. Now, these tax benefits for investments in the infrastructure sector specifically, they're going to expire on 31st March 2024. The budget has now extended that by an additional year to next year. What do you think is the impact of this move, and how important is it? Because at the end of the day, tax swaps are always welcomed by PE funds, right?
Yeah, of course. And again, Ashwin, thank you for calling me. I think if you first, before I respond to the specific question, I mean, at least the big theme in the budget, to my mind, is stability and simplification.
That's right.
Right? And just continuing that theme, right, for some of these funds which have been investing in the infrastructure space, given that this is a vote on account for a certain period, right, it did make sense that their tax benefit should not fall in between the cracks. So I think a short-term decision of extending it by a year has been taken, which allows the government to take a longer-term decision when the main budget is presented in July. So sounds like a very sensible next step. And again provides a degree of stability, which is the large thesis in literally no other tax changes, right, whether it's direct or indirect tax. So at least from that perspective, it's quite consistent.
Certainty is what investors want, right? Nothing unpopular, nothing too controversial.
Yes.
And I guess on that front, this budget has scored full marks. Shubha, why don't you weigh in your preliminary comments on this aspect, the tax breather of sorts that has been given to this pocket of investors, sovereign wealth funds as well as the pension funds, and as you're well aware, they are participating in several M&A scenarios in India.
Correct. Thanks, Ashwin, for having me. And I think what Divya mentioned is key. That this seems to be a window, a short-term window being given, so that they can formulate a more long-term strategy in the more full-term budget that will be coming out post the elections. But I think the key point that all of us need to bear is that this is I would still use the word carefully, it's still a very narrow exemption. It's limited to the infrastructure space.
That's right.
So where does it really bring in amongst the more, the more populist investing companies? It's probably telecommunications, data centers, where some of these really come in. I think for the next round, the challenge will be how do you expand this? You've given this exemption to certain types of investors, the long-term pension, sovereign wealth, stable capital, with geopolitical angles, given they are a lot of them from sovereigns. I think the key issue will be, will you extend this to a broader set of investments? So I think that the jury is still out on that.
Right. Vivek, why don't you weigh in as well? I was speaking to one of your peers and he was telling me that this could also be a shot in the arm as far as the national monetization pipeline is concerned, and some experts believe that this move in terms of a tax breather could also lead to more investments or fresh bets in a few sectors like warehousing and data centers. What's your take, Vivek?
So I think Divya captured it beautifully. This is a budget that has indicated stability and simplification. I don't think as an interim budget we were expecting too much more. But what is critical to note is I read this interim budget statement as a statement from a very confident government, a government that's in command. Insofar as the specific pension fund, sovereign wealth fund exemption was concerned, actually the widespread expectation on the street was that the extension of the tax holiday will happen in the 23 budget. When it didn't happen in the 23 budget, knowing that 24 was always going to be uncertain because this was going to be a vote on account, it was always dicey. in some respect as to whether it will happen or not. I think the government, by signaling an extension till 2025, has very elegantly filled the gap, allowing the main budget to take a call on what should happen on this going forward. My read is the fact that they've extended it till 2025 means that the government welcomes, respects this capital that is coming in, and therefore the government will look to do a larger scale extension when the budget finally happens in post-elections in July or August. So I view this as a very positive signal. I also view this as a in some ways a courageous signal, because in a vote on account, normally you would not expect any tax changes. So the fact that they've heard the investors means that the government has signaled that they welcome and respect capital. And in light of that, what you say about this category of investors becoming more involved with the Indian economy in terms of actions such as the National Monetization Program or investing in specified infrastructure sectors, certainly it gives them far more confidence. It was hugely uncertain whether this gap will be filled or not. We were talking about the fact that there will be 3 months or 4 months where there will be significant uncertainty. The fact that on Feb 1, even in a vote on account, the finance minister could stand up and extend it till 31st March 25 is hugely positive the way I look at it.
Vivek, very quick take on what are some of the sub-sectors in infra which you think would benefit in terms of M&A activity and further bets from these funds. Infra is a big broad umbrella, right? Can you tell us about some of the sub-sectors that could benefit from a deal point of view before I move on to Shubha and Divya?
No, sure. So look, in infra, I think last 3 years have been very active in infra deal making. A lot of these investors themselves, sovereign and wealth funds, sovereign and pension funds have been supremely active in that space. In terms of the sub-sectors, the sectors that have been interesting have been renewable energy. A lot of investments have happened in the renewable energy sector, roads, ports, even conventional power. I think a bunch of investments have happened in the whole infrastructure space as a whole. The thrust that this government has is very clearly to say, fix the infrastructure, make that pool of capital super strong, and that becomes then the bedrock for further development and prosperity to happen around the infrastructure space. You create roads, you virtually create new cities, you create a whole prosperous cycle, you create employment. So infrastructure by nature is long-term stable capital with a lot of follow-on impact. Which is why I think the government has propelled all these subsectors, and this category of investors has stood up and put its hands up in terms of investing in the country.
Sure, Vivek, hold on to your thoughts. Divya, would you like to add to what Vivek was saying?
Yeah, I would. The one area that I would say there could be some further doubling down is obviously the entire data center space.
Right.
The government is quite focused on it. I think our data needs are shooting through the roof. And to that extent, this actually amplifies the ability for a lot of these funds to continue investing in that space. The one other element that has been raised in the budget, which I think is a very pressing need, a space that we've looked at very carefully, is the post-harvest agri space, specifically the agri warehousing. So if you go around the country, the quality of warehouses where a lot of the agri goods are stored, both wet and dry, they could be far better and far more in terms of numbers. And those cold chains, dry chains are a pressing need as we move forward. So I think this could potentially do that. I think a lot of warehousing investment has come in the non-agri space. In the agri space, it's an area where post-harvest agri where there is further requirement for this.
Right. So that's an area we'll keep a lookout for. Shubha, sometime back, and this is during the G20, right, in New Delhi, that's where there was a mention of the ambitious India, Middle East, Europe economic corridor, right? And that corridor found mention in FM Nirmala Sitharaman's budget speech today, where she said the corridor is going to be a game changer for India, clearly meaning that they want to back this project seriously. You work with a lot of funds, right? This corridor, of course, includes UAE, Saudi Arabia. Give us a sense of the kind of involvement or participation that you have seen from the Middle East bloc when it comes to M&A activity in India? And what does this corridor mean if you were in their shoes?
Thanks. I think, Ashwin, on a lighter note, it was not just the G20 announcement. If you just go back, even President Biden made a remark that one of the root causes of the conflict in Gaza happened to be this particular G20 announcement. He does allude to that in one of his statements. So on a more, if you really see, and I think the second important fact that has happened is what has happened today. India has ratified, or the cabinet has approved the bilateral treaty with UAE. So these are all building blocks. So I think if you see what some of the investors tell us and what is the long-term plan, I think the kind of infrastructure growth that's happening in the Middle East, you've got NEOM, they've formed their own funds, it's a whole city being developed there. You've got Abu Dhabi, you've got Dubai. So
Mubadala.
Yes, amongst all the investors.
Yes.
So there's a massive corridor, and it's also got to do with geopolitics that's evolving. So if you ask me, the interest from Middle East is huge. And let me even go to the extent of saying, even some of the funds that you would otherwise characterize as European or North American or larger Asian pools of capital are significantly back-ended by Middle East funds. So if you really take all that coming together, it would probably be, certainly in the world's top 5 centers where capital is focused on.
So all these moves augur well as far as Gulf capital flows into India is concerned across sectors.
Yes. So potentially, right, there is capital and oil, right, which is something that they are rich on. There is talent, services, agri-products, right, which you would argue we are 1/6 of humanity. We are rich on. So it's sort of a little bit of a marriage made in heaven, and to the extent people, talent can move, and obviously UAE is a great sort of entry point for the larger Middle East for India, and it's been a very good partner for a very long period of time. So that matters. I can tell you a lot of private equity funds, have historically and in the future will lean on Middle East capital to be invested via them into India. It's a fairly rich source of mature capital that does come and comes with a long-term point of view.
Right, fair enough.
And just to add to what Divya was saying, even the green, if you may put the green capital source. So look what's happening in India. It's going to be the only country in the world where conventional power will become half because without growth, because the replacement power that's coming up will be in renewables, and that will make conventional power half, unlike other countries where they are going to be faced with shutdowns to grow renewable. So we are going to continue with our conventional power, but renewables will make conventional power 50%.
Right, fair enough, fair point.
And for that, you're seeing, is what Vivek mentioned, you're seeing a lot of the Middle East corridor capital coming in, because that's an easy picking in the green movement that they have to participate.
So clearly right tone set by the government. I'll come back to you, Shiva, because this is a topic on which I know you have views. Vivek, another aspect which is being welcomed by the investor community is the fact that the FM spoke about how India is negotiating bilateral investment treaties with several foreign partners, and the whole strategy seems to be that all this negotiation is being done in the spirit of FDI, which is first develop India, right? Clearly that means that they're looking at reciprocal arrangements. What do you make of the fact that this found space in the budget speech? Because at the end of the day, if you strike these bilateral treaties, and we have a few with many countries, do you think this perhaps opens the gate for a few more countries to be part of such pacts with India? What does this sort of mean as far as progress is concerned on fair and equitable treatment as far as foreign investors vis-a-vis domestic investors is concerned? Your thoughts on this statement by the FM, Vivek?
So Ashwin, a very good pick. I think the FM, by indicating this, has demonstrated one core tenet on which this government has worked. So if we sort of rewind back, last 10 years has been a period where I think this government has very clearly said, we welcome capital. We welcome capital in most areas. So now today most areas in India, except for really politically sensitive ones, are open for foreign investment fully. The other thing this government has said very clearly is, we will try and give you certainty. So no retrospective changes. If you earn money in India, and of course there have been tax litigations, but if you earn money in India, the government's view is pay 10% tax on your gains, which is a very reasonable tax rate, and be done with it. So the government has said, come into India, invest in India, for India, as you say, FDI, for India, and earn your profits, pay your taxes, and be happy. Bilateral investment treaties is a part of that entire system of this government to say we are capital focused. The fact that we will offer you a fair and equitable ground to invest in India, as Divya mentioned, we have 1/6 of humanity, so a large consuming class. We welcome you to invest in India and partake in its growth story. So as the world slows down, from a macro perspective, the way to look at it is, as the world slows down, but India still has power to go on for the next 20 years, come in, invest your capital fairly and equitably in this country, and make your returns fairly and equitably. I think that's been the mantra of this government over the last 10 years. And the fact that the FM mentioned this in her speech indicates that they will continue to go down that path. Which is why I said this sounds very much like a statement made by a government which is fully in command, by a dispensation which believes it's firmly and surely headed for a return for a third term.
Right, we'll have to wait and watch for that, but point taken, Vivek. Shubha, first develop India, the new FDI, so to say. What does the FM mean by this in terms of striking bilateral treaties with other countries? And also, does this also offer an opportunity perhaps to address areas and aspects like arbitration, which have been tricky? We know of a few controversial cases in the past. Your thoughts?
So I think, I'm at a slight variance from how Vivek has put it on this. I think, look, in the last 6 years, India has cancelled 77 BITs. Wow. Okay. So approximately it's around 70 to 77 BITs.
Big number nonetheless.
Yes. So why? Because there was a view in the government that these were not correctly negotiated. But be that as it may. At the same time, there have been a few litigations which partly were honored, partly were not honored, were challenged. So there was a lot of controversy in this space. I think the statement was made in the budget more to give out a signal that there was a lot of tonality in the market that India wants to do away with BITs. I think the message is coming out, at least was being indicated,
we're sticking to it.
That we're sticking to it, we're renegotiating it. Right? And this is becoming important because, whether we like it or not, we're not the only economy in the world. I mean, we like to think, we are the center of the world, but look, there are competitive economies and various countries go through different growth phases. Japan is a relative hotspot today, which it wasn't even 2 years ago. So amidst all this, we have to be a little mindful of, if you really want to attract FDI, if that is the discussion you really want to have, you have to be comparative in many ways. And we can't forget, as much as we would like to shed, we still carry an emerging economy tag, as much as we would like to shed it. So given all these dynamics, I think it was very important for the government to indicate to the world that they are renegotiating.
They are serious about this mechanism.
But again, there's a lot to be, when you say first develop India, again, with due respect, it's a bit partisan, the statement, it is a treaty, it requires a two-way conversation. And, global investors are not in the charity business. So let's put it straight out there. It has to be negotiated like any global equity principle has to be, in terms of most favored nation clauses, in terms of what is a look-through investment, and there are several such litigations pending today. So very sophisticated investors will tell you today they're pretty scarred on this approach.
So what do you think the big signal is from the FM to the rest of the world?
That we haven't forgotten BITs. We will come back with a new version.
Right. Divya, you want to come in over here and add to what Shiva was saying?
If you look at it between two countries, right, what are the big things? There is trade, there is capital, and there is people exchange. I think a lot of these, at least the treaties, investment treaties that are there are already there, and the bilateral ones that are being built are built around trade. And I think India appropriately leans in that the people part of it, right, say the visa delays and so on and so forth, needs to be a key component of what gets negotiated between us, because that is a critical part of what India offers. So to that extent, yes, and India has sort of walked away from the multilateral ones to bilateral ones, and on bilateral it is saying that we are in business and we are happy to work. There is a little bit of a statement that we would like to do it on our terms. Of course.
We'll negotiate, but we'll negotiate in a tough manner. Right. All right. Vivek, now let's shift focus to the government's thrust behind the entire EV ecosystem, right? And that also found space in the FM's budget speech today, where she said that the government is looking to expand and strengthen the entire EV ecosystem by supporting the manufacturing and and the charging of infrastructure, EV infrastructure, because that's core, right, to the entire ecosystem. And they're also batting for greater adoption of e-buses for public transport systems. So sentimentally and directionally, they clearly are backing this space. They want this space to grow. Now, as you would be aware, and some of the other panelists here also would be aware, fundraising in the EV space has been rather tough in the last 6 to 12 months, right? There have been a few fundraisers that have been put on the back burner. They have been deferred due to certain changes on the policy front. But with this renewed focus and intent that has been displayed in the budget, do you perhaps think that this sort of augurs well for a few fresh stake sales in the EV space that perhaps may not be really active right now, but may kick off soon?
Look, directionally, I think it is every government's intent to further green growth. EV is a significant component of that entire program. Till now, I think the fact that EV deals, there have been some EV deals, of course, but that EV deals have been fewer is a function of the fact that the scale in the industry for individual players has been limited to a few. Each time the government indicates more commitment towards a sector, the signal it sends to me is the government is saying more and more scaled players will come in the sector, either that or the existing players will become more scaled, and the moment they become more scaled, Divya will tell you that instantly they're more investable. Instantly, as they attract more capital, they will then be able to reap the follow-on benefits of even more capital, even more growth, and so on and so forth. So the prosperous cycle starts. So I don't know whether just this announcement in isolation will cause more deals to happen in 2024 in the short term.
Sure.
But in the long term, as we build scale in the sector, will there be investment and will there be global capital allocated to the sector in India? I think the answer is yes. Are there investors who are looking to invest their pools of capital into the space? The answer is yes. Are they looking for scaled investable targets? The answer to that is yes too. And I think moves like this develop that scale and develop those investable targets.
Fair enough. Right. Divya, there have been a few investors like Vivek was pointing out that have struck deals in the EV space, notably TPG with Tata Motors, BII, Mahindra and Mahindra, right? A few more are in the works. True North doesn't have exposure to this space, right? What's your view on this space? It's a niche space. It's an upcoming space.
Yes.
And your key takeaway on the FM's push behind this segment.
Yes. So I think the way we would look at this is obviously market attractiveness and the stage of the development of that market. Without doubt, the future is in the direction of EVs, sort of green growth, the vocabulary that Vivek used. In that context, it's obviously an emerging area, and it's something that people like us would like to invest. I think the key yardstick that some of us would apply, Ashwin, is that is the industry in the venture stage, or has the industry matured where it is now approaching a private equity stage? Because again, within our industry, there are shades of capital, right? There is venture, there is growth, and then there is more mature growth or a buyout.
So
right?
which stage do you think the Indian EV segment is right now?
I think globally, different countries are in different stages. But, we would call, what's the yardstick? Let me say, what's the threshold at which it goes from venture to private equity? One is the industry size, and the second is unit economics being established. So industry size is that large number of people are now adopting it, and it's become a double-digit percentage of the overall industry. Say two-wheelers, right? Is it now 15%, of the industry? And second, are the unit economics sort of working out minus the government incentives at some level? Because in the long term, one has to assume that any business model has to be able to stand without the government incentives, in a manner of speaking. So I think those are the two things. So right now, obviously, different parts of the EV industry, you could argue, are in different stages, but they are more venture-ish than private equity-ish. Now, obviously, there are pools of capital globally, right, which have been raised to invest in these segments, and that is their investment thesis. So many of them, therefore, have focused on some of this, and they've invested. While someone like us, for example, would struggle today because we would just find that the stage of that industry yet is more on the venture side than where we would like it to be. Of course, people like us are tracking it. We would like to come into it before it becomes so mature that it gets ready to get listed. Right? Ola Electric is now jumping into listing. So to some extent, they've jumped forward the entire private equity stage of life. And so, but they are not the only player. There'll be a whole ecosystem that would get built out, Ashwin, and we are tracking, therefore, different players in that ecosystem.
Shiva, as a corporate terminal lawyer, how excited are some of your clients about this space? And let me stretch this, not only EV, the entire sustainable investment space. What are you, what kind of response are you getting from them? Is it actually as active as it is globally, or is it just a buzzword which is yet to catch up seriously?
Look, I wouldn't say it's a buzzword. I wouldn't call it it's active. I'll just put it this way. Look, I'm not qualified to get too much into the dynamics of the space, but what we see is a lot of the investments are quasi-equity. They are growth, but there are also assurances around some of these equities. So I think even investors are not taking in a full bet yet. It's a very broad statement I'm making, but that is how I think some of them look at this sector.
Right. Vivek, you're the corporate tax expert on the show. If you look at the interim budget, no surprise, no unpopular moves, nothing controversial as far as the tax rates are concerned, both on direct taxes as well as indirect taxes. So status quo over there, and many would believe that perhaps status quo means something positive because it's not been tinkered with. Your take on this strategy by the government? Are they warming up for something more in the fuller budget later this year? What do you think?
No, so two things. One, this was an interim vote on account. We did not expect any major change in the tax rates. By convention, the government would not change tax rates in an interim budget. So to that extent, not a surprise.
Okay.
The one thing that I do note though is that the finance minister noted the fact that taxpayers in a sense have become more compliant, have rewarded the government with higher revenue receipts. She therefore spoke about simplicity. She spoke about the measures that the government itself has taken. She spoke about the exemption limits going up. She spoke about the fact that the number of days taken to process an income tax return has come down, and so on and so forth. So there was this little bit of, let's say, positive commentary on the fact that the government has done stuff for the taxpayers, and the taxpayers have equally, if I may use the word, rewarded the government by being more compliant, and so on and so forth. I do think, I would like to believe actually, I don't know whether I do think or not, I would like to believe that This indicates that if this government were to come back, we would see stability and continuity insofar as tax rates are concerned. I think our tax to GDP ratios, I think our fiscal deficits, etc., have shown that there is no dramatic or urgent need to tinker with rates in terms of increasing them. I think the government has also said over the last 7-8 years that they will follow a stable tax policy. So I do not expect any large-scale negative surprises on this count, even in the full budget.
Right. Since we're on the topic of taxes, Vivek, very quickly, what tax move would you perhaps think is corporate India or the investor community most looking forward to? We have a budget coming, a fuller budget coming in later this year. What would you pin that on? I want you to stick your neck out in terms of the corporate tax ecosystem. What's that one big change that investors are really looking forward to and are hoping that the FM will deliver on that front?
Look, there's always a slew of tax demands that the investors have, right? Or corporates have.
Yeah.
I don't want to really view this from that prism. I think directionally the government is headed down the right track from a tax rate standpoint, from a GST standpoint. I think there's some rationalization of GST rates that will happen, and that will be welcome. That's already sort of in some ways factored in by the industry. The one thing that I think investors and corporates really want is fair and equitable treatment and certainty in the tax policy. I think there are still 2 or 3 areas within our tax code where there is discretion in terms of how it's applied, where one could argue that is it all completely fair to an investor, completely fair to a corporate. These are sections which are, let's say, sections which deem incomes in certain situations, sections which create artificial income connotations, which are meant for specified abusive use, but which then in their sweep get applied in a wider way to corporates. I think the one consistent expectation as we talk to investors, as we talk to corporates, is this government should try and weed out those sections, or at least provide mitigants in those sections, such that we align ourselves with how globally developed economies tax those kind of abuses. So I would therefore say some bit of rationalization, some bit of simplification and fairness, but I think directionally I don't see much demand from a tax rate or any fundamental perspective from either investors or corporates on the tax side.
Right. Divya, any sort of pending demand on the tax front from the PE or VC community? Something that perhaps you think the FM could address in the next budget, not this one, but something that's sort of burning, which you want to highlight here?
Yeah, no, the point that I would make, just taking a slightly long view, and I'll come to the, what's the potential, some of the changes that we could think about, right? I mean, I think there are 5 things that the government has sort of managed very well over the past 10 years. Infrastructure, physical and digital, stability. And we spoke about stability, but if you look at interest rates, right? Volatility in India versus volatility globally. We've been a haven of stability. Exchange rate, right? Even fiscal consolidation that is now happening, which is behind the tax rates, right? Each one of them denotes stability. Then we spoke about simplification as a theme, right? We've spoken about income tax simplification. We've spoken about GST. We've spoken about what happens in our income tax, officer interactions, customers, a lot of changes by SEBI, by RBI, IRDA that are customer positive. So that's a very big theme in my mind for the simplification side. The financial sector cleanup, whether it's the bankruptcy law, whether it's the balance sheet cleanup. I think today the entire financial sector is in a very, very different place. And then last but not the least, I think how we are viewed globally. India is no longer punching below its weight, right? So now if you were to extend this, it's actually a lot which is very similar, if I may say, that at least would be our request. So one of the first things that my industry would argue, today we are investing nearly entirely equity. Is there a possibility that we can also get some degree of leverage? which goes along with actually debt capital market reform, ability to get some leverage. Vivek spoke about the deemed income concept more sharply. I think the whole concept of FMV, while defined in many places, still lends to a certain degree of grayness. To the extent that could be simplified. I think in the last 5 to 8 years, again, thanks to the government effort, the domestic fundraise market has really come up for alternative sources. Now, how can we find a way, because that's increased and sort of stabilized to a certain level, to take it to the next stage is a potentially third and large segment that I would argue that in our industry would love. Because if you now look at public markets, we were just discussing offline, right? 10 years ago, most of the money coming in used to be FII. And today it's the domestic mutual funds and institutions, right? Which are as or more important. Similarly, while we welcome and love our foreign money which is coming in, and it's $50 billion a year now of VC and PE investment into India, but likewise being able to raise long-term capital from India also to invest, which is something which was nearly zero 10 years ago, but is now standing on its own feet. So how to get that to the next horizon?
Right. No, that's quite a long list, and I hope the finance ministry is tuning in. Shiva, let's speak about some aspects on which the interim budget was silent on. Maybe perhaps we can expect the second budget later in the year to address some of these aspects. Last year there was a roadmap that was expected that didn't really sort of come out of the budget, and that is the eagerly awaited roadmap for direct overseas listings of Indian companies. Right now, of course, we have the ADR and the GDR route. The intention has been made clear by the FM in announcements earlier. There was also an amendment to the Companies Act late last year, right, which spoke about the fact that certain select companies in certain specified jurisdictions could operate, right? Then, of course, very recently, we had the floodgates opening for Indian companies to list in GIFT City exchanges, right? Now, that is being seen as a precursor to perhaps eventually coming out with that detailed framework. So the detailed framework is what people are looking for. What are the kind of shares that can be listed? What are these jurisdictions wherein we can sort of look at, right? Your take on the overseas direct listing aspect and the potential it has to find mention later in the year.
Sure. Thank you. Look, I'll put it a little differently. It's much ado about nothing. Direct listing for Indian companies in offshore jurisdictions, keep aside IFSC and a few regulated jurisdictions, is actually changing the very foundation of FEMA, the foreign exchange law in India, because that means there's full capital convertibility. So that's a decision which the Reserve Bank has to take, the Finance Ministry has to take. So that has to happen first. We are still capital controlled. That's first. Second, for direct listings, we are talking direct listings in a few mature jurisdictions without getting the technical jargon on whether it's FATF, what type of jurisdictions, mature stock exchanges.
Yes, NASDAQ, yeah.
The subset of Indian corporations that will actually hit those markets in the foreseeable future, I would say, look, I don't have a vision more than 3-4 years, is a very small subset of less than 10 companies, perhaps.
That's agreed. And those are the tech startups, right? Some companies like
May
SaaS
not be
companies.
tech,
Right?
tech startup.
Mostly tech companies.
No, it could be the EV subsidiary of a major corporation.
Whatever helps the company find a better valuation abroad, they'll be tempted, right?
That's right. Actually, it's a function of two things. It's a function of acceptability of some of the companies also in global markets. It's not that every Indian company has raised a ADR, GDR program. Only few can, in a meaningful way. So I think there are many angles to this.
I'm just speaking about it from an option point of view. Not that the Indian capital markets are not deep enough to absorb them.
Exactly.
They are.
Exactly.
I'm just speaking about from an alternate point of view.
Correct. So I think it will open up, but it will be in a very controlled manner. And I think what the challenge will then lie is, what does it actually give you? Ultimately, people are listing for valuations.
Valuation, a diversified global pool of investors.
Well, the global
probably
pool
better
exists.
corporate governance.
Which you could argue, which at some level you could argue.
Exists today in India also.
Okay.
So I think Yes, I mean, these are all stories and these are all news. But what does it really offer? If you really go through down that thing, I think it will finally rest down a path where, yes, there will be interest. There will be interest for some companies, and we're talking about the large conglomerates who would want to list some of their entities in global jurisdictions, where there's not enough appreciation in Indian markets. But it is not meant for the wider Indian listed companies.
Agreed. It's a niche universe. Agreed. That's absolutely...
Either niche or the super large. The two arguments, right, for global listing is that the investors, investing in the Indian capital market may or may not understand our business model.
Yeah, that's right.
That's argument one, which to some extent, given what's happened, like the Indian primary markets have been open for listing while globally they've been closed, sort of goes against that logic partly. And I think the Indian capital markets are also maturing. The second argument is that now if a large corporation like Reliance Jio was to think of listing and the amount of money that would come in, right, that they would need for a 25% listing, how would, the Indian capital markets manage it? Now, obviously, LIC sort of found a way to list and there is a pathway. So there is an argument for the very large corporations and the depth of the Indian capital market. I think that's also changing. So I think these are the two sort of different reasons at different ends. One for consumer internet businesses and second for some of the very large corporations.
And it also depends perhaps on, familiarity, right? If your products are familiar overseas as compared to India, I mean, it's all about recall value as well, right?
Yes.
I mean, you don't want to list in a country where the people don't know you. Yeah.
But in India today, other than the IT services company, which are predominantly global market oriented, we are a domestic economy.
Fair enough. No, absolutely.
We don't doubt about that. We don't have global corporations in that sense emerging out of India.
That's true. That's true. You mentioned RBI, also SEBI and Income Tax Department. Perhaps there will have to be coordination between these.
Look, they have tweaks, but the fundamental shift is with the RBI and FEMA. The rest is tweaks.
All right, Vivek, very quickly, Shubha's point on the RBI angle.
So look, I think I largely agree with what Divya observed in terms of commercially, where does it make sense to do overseas listing? Much has happened with the government over the last 2-3 years. Ever since in the COVID May press conference, the finance minister made a remark around overseas listing. I think actually the notification that came out last week, 24 January, which talked about overseas listing for IFSCs, effectively, to me at least, makes it clear that the proponents of those who say Indian domestic companies must largely list in India have won. Even though the notification talks about international stock exchanges and allows the government to notify some of the developed stock exchanges at a later point in time, I do think that directionally the government is headed down the track of saying we must add to depth on our exchanges. Of course, they want to push IFSC, and to that extent, they've brought in the overseas listing norms in the notification last week.
Yes.
But fundamentally, the government's direction seems to be we want to push in depth in our local exchanges, and therefore, to Divya's point, of the companies at two ends of the spectrum, either the niche ones who are more appreciated by the global markets, or the truly large ones. I think the government view is for the truly large ones, just like LIC, the large corporates should also find a way to entice the necessary investor pool to come in and take a stake of 25% dilution in a very large economy. They'll be happy to consider 10% dilution and so on and so forth. But I think the government's current thinking to me indicates, and I know I'm sticking my neck out a little bit, but my read of the situation is the government wants to add more depth to the domestic stock exchanges, and therefore, while there have been many conversations with the government over the last 3 years on overseas listing, somewhere the government has steadfastly continued to reserve its judgment in a manner of speaking on this matter, other than the notification that we saw on the IFSC overseas listing a week ago. Of course, the Companies Act has been tweaked to the point, Ashwin, that you make on SEBI, tax laws, corporate law, and FEMA to come in. So the company law has been tweaked to allow this to